Are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you.
Thank
It's been
you,
fascinating. Yeah. Thank you for taking the time.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source, in the academic literature, and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. Without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
Are we talking about superpowers, Clash of the Titans sort of stuff? It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff, and it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US. I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
What could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in.
Everyone, good morning to all of you. Welcome once again to this live analysis. Start करते हैं आज का commodity session. If you look at this right now, yesterday I already informed you, Telegram इंडिया में कुछ टाइम के लिए बैन हो गया, तो वहाँ पर कोई अपडेट नहीं है. जो भी अपडेट देंगे लाइव में वो यूट्यूब पर ही है फिलहाल के लिए फॉर फ्यू डेज. कल देखोगे क्रूड ऑयल ओपन हुआ था, नीचे सपोर्ट पे आया था, वहीं पर थोड़ा बहुत बाइंग करते करते साइडवे चला गया था, थोड़ा बहुत आज फ्लैट ओपन हुआ है. ऊपर एक पॉइंट ऑफ इंटरेस्ट रहेगा, कल की लेवल है, लास्ट ट्रेडिंग सेशन है, याद रखना आज यूएस मार्केट क्लोज है शायद. फॉरेक्स तो ओपन है, यूएस मार्केट का शायद क्लोज है, मुझे पता नहीं, कंफर्म देखना पड़ेगा. बैंक हॉलीडे रहता है वहाँ पे, जून 19 या बैंक हॉलीडे है, तो यूएस मार्केट बंद है या फिर वॉल्यूम कम रहेगा. बंद तो नहीं है शायद, क्लोज तो नहीं है. जून 19 है तो जैसे बैंक हॉलीडे है तो वॉल्यूम कम ही रहेगा. मोस्ट प्रॉब्ली मेजर बैंक्स आर क्लोज. सेम हेयर एज वेल. इंडियन मार्केट देखते हैं आज कैसा ओपन होता है. कल आईटी सेक्टर में देखोगे यूएस में एसेंचर काफ़ी ज़्यादा गिर गया था, तो उसका एक इम्पैक्ट देखने के लिए मिल सकता है इंडियन आईटी स्टॉक्स में. नेचुरल गैस ऑल्सो फ्लैट था कल, काफ़ी देर तक साइडवेज एक मोमेंट अपसाइड किया था, अभी फ्लैट ही ओपन हुआ है. विल नीड टू सी अपसाइड जाता है और या फिर वापस कल के डे लो पे आ जाता है. कोई मेजर न्यूज़ फिलहाल के लिए और तो है नहीं. सेंसेक्स की एक्सपायरी थी, अच्छा मूव आया कल. 3 बजे के बाद एक बड़ा मूव आया था. वैसे तो पूरा दिन भर देखोगे साइडवेज ही था, कल एक्सपायरी भी थी. आफ्टर 3 PM एक सडन मूव आया था, मुझे याद है अभी भी. 77,200 का कॉल, आई थिंक 330 से 200 या 240 या 250 के आसपास चला गया था विद इन 10 मिनट. ठीक है, रेयरली होता है बट वो देखने के लिए कल मिला. उस समय प्राइस आई थिंक चल रहा था 77,000 180 या फिर 150 के आसपास. आई डू ऑप्शन सेलिंग, तो मुझे ज़्यादा कुछ उसमें फ़र्क नहीं पड़ता, बट जो लोग ऑप्शन बाइंग करते होंगे, इफ़ यू वांट टू कैप्चर दोज काइंड ऑफ मोमेंटम, अच्छा मोमेंटम हुआ होगा. ठीक है, इंडियन मार्केट जस्ट ओपन ही होने वाला है, इन फ्यू मिनट देख लेते हैं. आज मुझे लग रहा है आईटी सेक्टर आज बड़ा गैप डाउन ही दिखाएगा. फिलहाल अगर मैं गिफ्ट निफ्टी को देखूं, गिफ्ट निफ्टी को क्या नॉर्मली देख लेते हैं मार्केट क्या कर रहा है फिलहाल के लिए. बाकी देखो नेचुरल गैस एक्सपेक्टेड है, थोड़ा सा मुझे लग रहा है शायद और ऊपर जा सकता है. इसके लेवल थोड़ा सा मैं अपडेट कर देता हूँ, ये अब लेवल नहीं है इसके. कल का लो अप आप सपोर्ट एक्सपेक्ट कर सकते हो, दैट विल बी अ नाउ नेक्स्ट मेजर सपोर्ट. ये कल पूरे दिन बस साइडवेज ही था नेचुरल गैस. सेकेंड हाफ में मोमेंटम आया था, इन्वेंट्री बुलिश थी, बट कुछ खास उसके बाद हुआ नहीं. थोड़ा बहुत ब्रेकआउट दिया था 8 बजे के बाद, 8:30 पे अप्रॉक्सीमेटली. फॉरेक्स में देखोगे करंट कैंडल ओपन इक्वल टू हाई है, लास्ट 3 कैंडल ओपन इक्वल टू हाई है फॉरेक्स की। इसकी एक्सपायरी भी है नेक्स्ट वीक ट्यूसडे को शायद, आई थिंक 26 23 26 को तो फ्यूचर की है, ऑप्शन की 23 को है शायद, 23 जून। मुझे लग रहा है शायद 320 के ऊपर तो शायद ही क्लोज करेगा। ओके, इंडियन मार्केट ओपन, निफ्टी एज एक्सपेक्टेड 190 पॉइंट, 200 पॉइंट डाउन, सेंसेक्स 683 पॉइंट डाउन, बैंक निफ्टी 240 पॉइंट डाउन, मिड कैप निफ्टी 90 पॉइंट डाउन, ऑलमोस्ट एवरी इंडाइसेस राइट नाउ इन नेगेटिव, 0.85%, निफ्टी 0.93, सेंसेक्स 0.44, बैंक निफ्टी। मेजर इंडाइसेस देखोगे फिलहाल के लिए करंटली लूजिंग एज एक्सपेक्टेड, all IT sectors are in red, heavily red. Tech Mahindra 5.91% down, Infosys 7.24% down, TCS 5.58% down, HCL Tech 5.41% down, LTM 5% down, Wipro 4% down. Wow. Muthoot Finance 2.81, Hindustan Zinc 2.44, Vedanta 1.50, Indian Railway, Hindalco Industries, इसमें कोई न्यूज़ है शायद, आई थिंक। ठीक है, मेजरली आईटी सेक्टर हैवीली गिरे, इन्फोसिस तो कुछ ज़्यादा ही गिर गया 7%। बाइंग किस में आ रही है, वरुण बेवरेज 0.65% अप है, टाटा मोटर्स, अडानी ग्रीन एनर्जी, अडानी कल भी पॉजिटिव ही था, अडानी के सारे स्टॉक पॉजिटिव ही चल रहे हैं आजकल। अडानी ग्रीन एनर्जी पॉजिटिव, अडानी इंटरप्राइजेज, अडानी एनर्जी सॉल्यूशन, सिप्ला पॉजिटिव है, डिवीज लेबोरेटरी, एबीबी इंडिया, आईसीआईसीआई बैंक। देखिए विप्रो ने, याद रखना 50, विप्रो, इन्फोसिस और टाटा टीसीएस तीनों के स्टॉक 52 वीक लो पे चल रहे हैं, साल के लो पे बिल्कुल ऑलमोस्ट। विप्रो 52 वीक्स का लो बना चुका है, इन्फोसिस भी 52 वीक्स का लो बना चुका है, टीसीएस भी 52 वीक्स का लो बना चुका है। विप्रो में और टीसीएस में आई थिंक न्यूज़ भी है। Accenture's weak guidance impact Infosys and Wipro ADRs, causing a decline. कैंडल ही गैप डाउन है, ऊपर से ओपन इक्वल टू हाई इन इन्फोसिस। 2020 के लेवल पे आ गया है इन्फोसिस, सितंबर 2020 का लेवल। मोस्ट 50% करेक्शन के आसपास इन्फोसिस। ये सारे के सारे आईटी स्टॉक्स ऑलरेडी ओवरसोल्ड पोजीशन में है, तो अब और ज़्यादा मेरे अकॉर्डिंग तो शॉर्ट मत करना प्राइस को। 50% करेक्शन भी मिल चुका है, हो सकता है और गिर जाए, बट बहुत रिस्की है अब इस एरिया से बहुत बड़ा और फॉल हो। इवन 70% तक भी जा सकता है जाने को, 20% और पॉसिबल है मंथली और वीकली में। मंथली में तो कोई सपोर्ट नहीं है, वीकली में एक छोटा सा सपोर्ट दिख तो रहा है। जिस हिसाब से गिर रहा है, अगर मान लीजिए यूएस मार्केट में भी कोई बहुत बड़ा सेल ऑफ आ जाता है, एआई बबल बर्स्ट हो जाता है, so it might possible it will go towards pre-COVID level. in that case, it might possible it will go towards 600 again. That is, I think, April 2020 level. So current levels से approximately in that case 40% more. Total 80% all time high से 70% total all time high से. बाकी इन्फोसिस को देखोगे डेली टाइम फ्रेम पे एक मेजर सपोर्ट फिबोनाची के अकॉर्डिंग 0.618 का था, उसके नीचे गैप डाउन ओपन हुआ है 1084. अगर इसके नीचे सस्टेन किया तो फिर 0.786 का लेवल रहेगा 837 एंड देन अल्टीमेटली 600 का जो लेवल है हो सकता है वहीं पर आ जाए सीधा प्राइस. ठीक है, बिल्कुल भी अच्छा नहीं चल रहा है टाइम आईटी सेक्टर्स के लिए. 40% डाउन है ऑल टाइम हाई से, 30% और गिर सकता है ऑल टाइम हाई से, ओवरऑल 70% इतना जा सकता है. बट या 800 नेक्स्ट मेजर सपोर्ट रहेगा अगर कंटिन्यू फॉल करता है. Currently Infosys now 8% down, TCS 6, Tech Mahindra 5.5, LTM 5.42, SL Tech 5.27, Wipro 3.40. और Infosys की तो कुछ ज़्यादा ही सेलिंग आ गई है. Gainers Adani stocks all over there. Adani Power now 1% up. Prices Adani Enterprises 0.85. NTPC almost 1%. Adani Energy Solution 0.83. Solar Industries 80. ABB India 0.81. दिख रहा है निफ्टी में. बैंकिंग स्टॉक्स भी गिरे हैं बट इतना नहीं. एचडीएफसी बैंक थोड़ा बहुत डाउन है. ठीक है, सेंसेक्स को देखोगे कल क्लोजिंग होते होते बाइंग जरूर आई थी बट वापस नीचे आ गया. पहली कैंडल सेंसेक्स में भी ओपन इक्वल टू हाई है. सिमिलरली लाइक इन्फोसिस स्टॉक, निफ्टी की भी पहली कैंडल ओपन इक्वल टू हाई एज वेल. लगता है कल क्लोजिंग होते होते बाइंग आई थी, उसमें भी शॉर्ट करके गए हैं सब लोग. नेचुरल गैस एक्सपेक्टेड है, हो सकता है अभी और ऊपर जाए या एक बार पुल बैक के लिए अगर नीचे आता है कल के लो के नीचे। हमारा मार्केट कल जब क्लोज हुआ था क्रूड ऑयल में, ये इसके बाद एक अच्छा मोमेंटम इस पॉइंट ऑफ इंटरेस्ट से करके आया है डाउन साइड पे। इंडियन मार्केट तो क्लोज था, तो देखते हैं दोबारा अगर उस एरिया पे जाता है। कंसोलिडेशन हो चुका है वहाँ पर, फॉरेक्स चार्ट में अगर देखूं मैं। अप्रॉक्सीमेटली $75.80। बाइंग में है तो अब ज़्यादा रिस्क मत लेना, यहाँ पर दोबारा बाइंग तो नहीं है अब। विल सी, ये यहाँ से एक सेलिंग का प्लान करें या फिर ये ब्रेकआउट करता है 76.24। निकलता है $76.25 के ऊपर क्रूड, तो ऊपर और जा सकता है इजीली। $76.25 in New York Mercantile Exchange, US crude oil। ऑफ इंटरेस्ट में सिर्फ 15 मिनट का नहीं है, यहाँ पर और भी हायर टाइम फ्रेम के सारे रेजिस्टेंस हैं, 15 मिनट में भी है, 4 आवर में भी है।
Hasnain, looking at the deal as it stands right now, what to you is the biggest risk there? What to you could cause the biggest unraveling of the whole peace accord?
I think the first most important thing is to what degree Iran wishes to twin its deal with an end to hostilities in South Lebanon between Israel and Hezbollah. Because Israel doesn't appear to show any willingness to withdraw from South Lebanon, and Hezbollah is still seeing benefit in demonstrating its ability to fire rockets at northern Israel. So if Iran continues to twin its security with the end of that conflict, I think that's the number one risk to this ceasefire. Number two is just the fact that, remember, this was just an agreement to stop fighting. This was an agreement to resolve any of the intractable issues around nuclear, around regional proxies, around what has transpired through the war now around the control of the Strait of Hormuz, let alone the regime, the nature of the regime in Iran. None of those issues have been resolved by this deal. All of that remains still to be negotiated. That could take a very long time, with many obstacles along the way, not least obstacles within each country, within the US, within divisions within the Republican Party and within Iran, around how the hardliners and the pragmatic conservatives behave, and of course within Israel, which, as I say, appears to have no interest in a cessation of hostilities in the first place.
Yeah. All right, Hasnain, we'll have to leave it there. Hasnain Malik, Managing Director for Emerging Market Equity and Geopolitical Strategy at Telemer. Now, for a look at some of the other stories we're following, Bloomberg has learned that U.S. Commerce Secretary Howard Lutnick is concerned that an ASML extreme ultraviolet lithography, or EUV machine, may have reached China. This would violate U.S.-led export restrictions, and sources say Lutnick raised the issue with ASML leaders in recent meetings. The machines make processors for the likes of NVIDIA and Apple. ASML says it has never shipped an EUV machine to China. Bloomberg has learned that the bankers for SpaceX are preparing to hold calls with investors to discuss a potential bond offering of at least $20 billion. Sources say those calls could begin as soon as Monday. Elon Musk's rocket satellite and AI conglomerate has received ratings in the BBB tier from all three major bond graders, paving the way for cheaper borrowing after its record IPO. And coming up, TenCap tells us why they don't expect the Fed to cut or hike rates this year and what that means for equity markets. Our interview is next. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abir Abamar in Dubai. Global stocks are retreating as investors weigh whether a 60-day diplomatic push between the United States and Iran could yield a nuclear accord and a more durable peace agreement. Joining us now is TenCap founder Junpei Liu. Junpei, thank you for your time this morning. I want to start with the latest, the deal, the truce, the talk of the week. Do you think markets have completely discounted the risk of this coming back? We've already seen risk assets generally rallying even before the truce had arrived. But do you think the market has completely moved over the risk of geopolitical tensions flaring up?
Absolutely. Look, I think actually the market is a little bit bifurcated. For the risk asset, particularly across tech and others, you are seeing massive rally, and across travel, across all the cyclical sector that's been impacted, it is absolute rally. However, on the other parts of the market, for example, the oil, the energy sector, they have not fallen as far as they should be as pre-war. So our view is that the market is a bit bifurcated. For the risk asset, investors willing to take on some risks and to say that, you know what, we move past the worst. And then on the other hand, still buying a little bit of hedge just in case something might, turn out to be disappointing or disruptive. So I do think the market investors hedging their bets at this point.
So you prefer the picks and shovels of the AI trade, not the macro story. We've been seeing what's been happening across the AI trade and the rally in semis and the chip makers and all the positive news that's coming out of the United States. What's the rationale you have when positioning when it comes to artificial intelligence?
Yeah, look, I do think that artificial intelligence is changing the world. And the challenge is here that there's been so much investment into it that we just harder for investors to call who's going to be the ultimate winner. Well, of course, there is the momentum investor where you invest and, in all of the top names, and surely at some point you will generate return. But our view is that a lot of them, you are paying a lot for future earnings and future expected bullish earnings. So the way to play it is really actually play in the whole supply chain. Play in the companies generating earnings today and is benefiting from the increase in spending, which is saw the Goldman Sachs prediction for the investment into the AI is up 40% for 2027. That's an enormous amount of money going into the whole supply chain. Our view is that you play the supply chain, play the picks and shovel, and there the return is much easier to put your hands on.
So do you think then that SpaceX plays into your narrative as well? It's been, I'm looking at the stock's performance. It's dropped for a second day in a row. What do you think of that performance so far?
I think it's been incredible performance, but that's nothing short of, it's really, the vision of what it could be. I know my 12-year-old son tells me he wants to invest in it. And however, for investors, for general investors, that at IPO price, it was close to 100 times revenue. What stops it from going 100 times to go to 200 times revenue? There's no measure of it. It's a lot of hype. Now, my view is that it does generate a lot of excitement into the stock market, into the equity market, and the investors, naturally, we want to look for the next winner. Or and also the whole supply chain that supplies SpaceX, because these are the company really making the money. SpaceX, are they going to generate return? Look, I have a lot of faith, but it is a very high price tag to pay for it at this point.
Junpei, it's not just AI though, right? There are other sectors that could be seen as pockets of opportunity given the current circumstances. What are you looking at? Financials, perhaps?
Yeah, look, financials, absolutely. Again, it's almost a result of all the raft of activity that is happening in the US. We know there's 2 more major listings coming through. All the investment banks are going through enormous amount of periods of activity. And this is almost unprecedented. Even in the small markets here in Australia, we're hearing the investment banks have a huge amount of pipeline in the next 12 months. Look, I think the environment for financials are very, very strong. And in turn, for the entire equity market is actually very strong. Now, just being mindful the areas where you put investment into, but I do think that we are really marking, once we pass the Iran war, energy shock, we are moving into an environment where, we can definitively see market moving higher.
And moving from one political crisis to another region, the UK. I mean, this morning we just had the news about Andy Burnham. What do you think the political disruptions that are happening in the UK? What do you think the impact of those are on risk assets generally within the country?
Sure. Look, the view is that generally, if we see a political party moving from far left to more central left, is better for investor sentiment. It's better for risk asset. It's better for businesses, if you like, in terms of policies. Now, reading through his policies, some of the key policies, tax the rich, be tight on regulation on tech companies, and all of that. It almost seems as if a playbook out of, a target towards Gen Z. I do think it's very populist. I don't think it changed all that much in terms of global investors' perspective of the UK. But I do think that some of those policies are now actually moving into more far left than it is.
All right, Junpei, we'll have to leave it there. That was TenCap founder Junpei Liu. Now, coming up, Zimbabwean lawmakers have approved a constitutional amendment that will lay the ground for President Emmerson Mnangagwa to extend his rule by 2 years. That is coming up. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Kuwait has started boosting oil output and plans to exceed 2 million barrels a day within a week. The country has carried out enough repairs to damaged energy infrastructure to quickly increase output and reach pre-war levels earlier than previously thought. Kuwait said all force majeure notices that were issued during the war will be lifted with immediate effect. At least 4 Saudi oil supertankers that had been idling in the Indian Ocean for weeks have set sail towards the Gulf of Oman. The vessels, all owned by Saudi Arabian tanker giant Bahrain, made sharp turns early on Thursday. Coming up, Vice President J.D. Vance slams Israeli criticism of the U.S.-Iran deal. We'll discuss the strained relationship with Meirav Zonzin from International Crisis Group. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Nuclear countdown. The U.S. and Iran have 60 days to reach a nuclear agreement and a more permanent peace deal. But face-to-face talks in Switzerland are already delayed, with Vice President J.D. Vance not leaving Thursday as expected. Oil is headed for a substantial weekly drop as ships are now back sailing through the Strait of Hormuz, with the U.S. declaring an end to its naval blockade. And Andy Burnham wins a contest for an open UK parliamentary seat, paving the way for the Greater Manchester mayor to challenge Prime Minister Keir Starmer for the top job. It has just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take a quick look at where equity markets are this morning, starting with U.S. futures still tilting a little bit lower, 0.5% lower now. The S&P 500 will be closed in the U.S. today for Juneteenth. And what we're seeing in the futures picture is really trimming the gains that we saw yesterday. The S&P did rise 1.1%, led yet again by semiconductors, those chip makers leading the SOX index to rise over 100% since the start of the year. Yesterday's story was driven by Intel, with President Trump essentially saying that Intel will be working with Apple to start manufacturing those chips in the United States. Moving on to Asian equities, 1% lower this morning. Some markets in Asia are closed. China, Hong Kong, and Taiwan are closed in Asia. And so we're seeing lower volumes trading today. But again, some trimming. It was set for a sixth straight session, but that doesn't look like it's going to happen anymore. And then Brent crude prices are at around $79 a barrel. We await to see what further details emerge on the MOU and whether Vice President J.D. Vance does indeed go to Switzerland later. But for now, Brent crude prices are reacting very positively to the news of traffic coming back to the Strait of Hormuz. Cash trading on U.S. Treasuries is closed today, a public holiday there, but the Bloomberg Dollar Spot Index is gaining for a third straight session. We've been seeing how the USD was behaving as a haven throughout this war in the Middle East, so something to keep an eye on over the next few weeks. Now, with the interim U.S.-Iran peace deal now in effect, President Trump has stated that it includes a ceasefire on all fronts. The deal has been widely and vocally panned in Israel, with many rejecting a declaration of a permanent truce in Lebanon. In response, Vice President J.D. Vance warned against attacking its, quote, only powerful ally, firing back that Trump is the only head of state sympathetic to Israel right now. Let's discuss further with Meirav Zanshine, senior analyst for Israel at the International Crisis Group. Meirav, thank you for your time this morning. Look, let me start with what we saw this morning. J.D. Vance saying to Israel that the U.S. is its only friend at the time being. We're also hearing some Israeli officials coming back to those statements. What does the political atmosphere look like at the time being in Israel?
Good morning, Abir. It's good to be with you. I mean, in the history of U.S.-Israel relations, the types of things we've been hearing come out of Trump's mouth and J.D. Vance's mouth are quite unique things that maybe some presidents have thought but haven't said, and administrations. A real frustration that Israel is currently the wrench in their plan to get the economy back in motion. So this is something that I think in Israel the feeling is, I mean, right-wing hawks are appalled by this deal. They feel betrayed by Trump. And I think the majority of Israel is just kind of a headless chicken right now, trying to understand how Netanyahu is going to deal with a president who, you know, has been his kind of campaign buddy, his best friend, the guy who has asked Netanyahu, asked the president of Israel to give Netanyahu a pardon, and Netanyahu has not delivered on any of his war promises. So it's currently a very weird and precarious time.
So where does that leave Prime Minister Netanyahu when it comes to his political standing and the upcoming elections, about 4 months away at this point?
It doesn't look good for him, but Netanyahu is a very politically resilient politician. He's been around for 20 years. I mean, the elections are slated for sometime in the fall. There's still no date, and a lot can happen until then. But there's no doubt that, you know, everyone's kind of waiting to see how is Netanyahu going to spin this. And you currently have ongoing conflict in Lebanon. Israelis are not happy with that, and I think they are looking for a direction, and nobody in Israel is giving it to them. So what will happen in the election is hard to predict, but at this point, it's very hard to see how Netanyahu is going to just avoid, losing a lot of votes from this current predicament. Then again, the right-wing base in Israel is very much supportive of more and more military force and more war. And so that's going to be their line, and they're not necessarily going to betray Netanyahu on that specific issue.
So how do the two things square up? How do you square up the relationship with the United States, Israel's biggest ally, but also achieving those goals in southern Lebanon, bearing in mind that Lebanon was a sticking point in the MOU, but also for Iran?
Yeah, I mean, this has been the major, I think, fault line right now between Trump and Netanyahu and between the U.S. interests and Israel interests. I mean, it's very clear that the U.S. currently has put the Strait of Hormuz and the economy in the front seat. That's the priority. And in Israel, that's really not even on the agenda. Israel wanted to remove this regime in Iran. It wanted some kind of, nuclear program completely obliterated. It didn't get any of those things. So again, where Netanyahu is going to go with this is unclear. He has campaigned on being the best friend of the United States, of Trump, so he might have to pivot and say, I'm the only one who knows how to stand up to a U.S. president. But that would be a very difficult position for him to take, as, again, he has gotten so much from Trump in his first and now his second term. So it's hard to predict, but I think this makes Netanyahu extremely dangerous. He might very well try to inflame what is already a very dire situation in Gaza, in the West Bank. And Lebanon remains an active front. And right now we're seeing that this signing, this the beginning of negotiations, whatever they're trying to get started, is currently in some kind of jeopardy, in part because of Israel's refusal to withdraw or to at least cease all fire in South Lebanon. And so that is going to remain, I think, the most pressing issue right now. And Netanyahu, I think, is going to keep going on that line that this is something that he cannot give up on. He cannot, after almost 3 years of war, just decide to leave Lebanon. That's something I don't see happening.
So, Meirav, sitting where you are now, what would you say is the biggest risk for Israel and Netanyahu? Is it the regional threats from abroad or internal polarization?
I mean, Israel is, has open fronts in, several places. It still has troops in Syria and Lebanon and all that. But are any of these, posing existential threats? Can Iran pose an existential threat? No, and Netanyahu has been boasting that even if he hasn't achieved everything he wanted, he has removed the existential threat that Iran posed. So I think the main issue here is the U.S.-Israel relationship and the question of aid. And, we've seen hints both in the European Union and from the U.S. that there might be a change in how they support Israel. It hasn't happened yet. Israel still acts with a lot of impunity. But the big question going forward, and I think for national security experts in Israel, is even if you've gotten a lot of military achievements, if you've lost the U.S. as a real, genuine partner, that's the biggest national security risk to Israel right now, if they don't get the same kind of weapons and aid. And of course, there is now a very vibrant discourse about what kind of U.S.-Israel memorandum of understanding on aid is going to, what is it going to look like? I think that is really something that most Israeli national security experts are going to be preoccupied with in the coming weeks.
All right. Meirav Sunshine, Senior Analyst for Israel at the International Crisis Group. Thank you for your time today. Now, Andy Burnham has won a UK parliamentary seat, paving the way for him to challenge Prime Minister Keir Starmer for his job. Burnham won the contest in northwest England, defeating anti-immigration party Reform. The Greater Manchester mayor has made clear his desire on Starmer's office. For more, we're joined by Bloomberg's Roz Mattison. Roz, what does this whole thing mean for Prime Minister Keir Starmer?
Well, certainly it puts Keir Starmer under further pressure. He's been under pressure for weeks after a poor performance by Labor in local elections in May. He's been pressured over his policies. His Defence Secretary quit last week in a dispute over funding. And now Andy Burnham has got a seat in Parliament, and he's done that convincingly. The outcome for him was very striking. He did see off the candidate from the far-right party, Reform UK, quite well. And that enables Andy Burnham to say, well, look, I'm the only Labor figure who's got the ability to really try and dilute the impact of Reform UK across the country and into the next national election, which is some years away, and to argue that he's positioned as the one who'll be able to counter Reform UK in that election. So what does that mean for Starmer? Well, he said he wants to fight on. He said that going into this by-election, he'll be under pressure to step down immediately, but he may not. And if he doesn't, then Andy Burnham is positioned to launch a leadership challenge, which would take several months through the summer, potentially be quite messy for Labor as a result. But certainly this starts the clock, some would argue, on Starmer's leadership.
And this is also disappointing for Nigel Farage. He himself wants the top job.
Well, that's right. And of course, just again in May, Reform UK did very well in these local elections, really chipping away at Labor heartlands and with their message, amongst other things, of being against immigration. And so Farage was probably feeling this was also going to be a chance in Makerfield to show that his party can still pull votes, and they did come second. But given the extent of the victories they had just in May, it must be a disappointment. Some of the people who voted in Makerfield potentially for reform only recently have possibly now already switched sides to vote for Labor again. So for Nigel Farage, some disappointment there. One upside for him is that the splinter far-right party called Restore Britain, which split from his own group, didn't perform that well. So we didn't see a split vote on the right. So at least all that right vote seems to be coalescing around Reform UK for now, but certainly not a terrific night for Nigel Farage.
All right, Rosalind Matheson with the latest on those details. Now, coming up, Zimbabwean lawmakers have approved a constitutional amendment that will lay the ground for President Emmerson Mnangagwa to extend his rule by 2 years. That is coming up next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Zimbabwean lawmakers have approved a controversial amendment to the constitution that will lay the ground for President Emmerson Mnangagwa to extend his rule by 2 years. The proposal to extend presidential terms to 7 years was backed by 216 lawmakers, while 42 opposed it. Joining us now to discuss further is our Chief Africa correspondent, Jennifer Zapasaja. Jen, how did this vote to amend the Constitution really come about?
Well, Abir, this really dates back to a few years ago and a few actions that were seemingly kicked off by the ZANU-PF ruling party that has been in power since democracy back in 1980. Now, really what we saw at the time was a proposal by the ZANU-PF party to extend the president's rule because of what they said. They were pleased with the progress he's made in a short space of time. What we saw after that was back in about 2024, late 2025, the resolution was eventually taken taken up, and it was ordered for the government to take the necessary steps to enact the decision, despite the fact that really some of these proposals are supposed to be put up for a referendum. But again, ZANU-PF party has been in power for a number of years, and so they continue to push this forward. Now we are at the point where you were just mentioning there, late on Thursday, we did see a majority of lawmakers approving this decision. And really the question now is, will the president sign this into law? The expectation is that this will move forward, laying the groundwork for his term to be extended into 2030. But still a lot of questions about what this means for Zimbabwe and really what this means again for the continent more broadly, where we're seeing a lot of similar actions being taken about.
And so the reaction to this, both internally and externally, what is the expectation of that to be?
It's going to be twofold, Abir, and we're already seeing that play out. If you take a look at the African continent, a number of leaders across the continent are among the oldest leaders in the world. Of course, we can look at a number of countries globally that make up the top 10 list if you were to look at that. But still, what we've seen over the past few years is really a number of countries have chosen to amend their constitutions, extending some of these leaders who have been in power for a number of decades. And I'm talking about presidents such as the president of Togo, Cote d'Ivoire, and also Malawi. That, of course, coming on a continent, across a continent that has among the youngest populations in the world. And so it's going to be taken, depending on which population you're talking to, it's going to be taken a bit differently. From an investor perspective, and I've even anecdotally heard this from a few leaders, if you do see some of these older leaders staying into power, and on one hand, it is a sense of continuity for investors. Perhaps it reduces election risk. But on the other hand, for Zimbabwe in particular, that has been shut out from global markets for a number of years, it could continue to raise questions about governance, accountability, and really what protections and safeguarding of the economy and the government more broadly looks like going forward. But still, we'll wait to see whether or not President Mnangagwa will sign this into law.
All right. Bloomberg's Jennifer Zapasaja in Johannesburg with those details. Now for a look at some of the other stories we're following, Nigeria's tax revenue surged 49% in the first 5 months of the year, exceeding government projections. The revenue bump was largely driven by an overhaul of the tax system and new levies on industries, including petroleum and mining. Last year, Nigeria enacted sweeping changes to its tax code as part of a plan to raise revenue to 18% of GDP by 2030. Kenyan lawmakers watered down a slew of tax proposals fronted by the Treasury that would have raised nearly $1 billion. The National Assembly rejected measures including a 25% excise duty on imported mobile phones. Kenya has been under pressure from the IMF to collect more revenue, spend prudently, and eradicate corruption. Kenya expects to spend no more than $1.19 billion on the construction of a new passenger terminal and the rehabilitation of existing facilities at its biggest airport. Kenya's Transport Secretary also said the bidding process for the upgrade of Jomo Kenyatta International Airport was open to all qualified local and international firms. Coming up, Lithuania's president says the European Union should not rush into peace talks with Russia. We have that interview next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ula, Saudi Arabia, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Abir Abomar in Dubai. Lithuanian President Gitanas Nausėda says the European Union should not rush into peace talks with Russia because Putin does not want to see the EU at the table. The Lithuanian president spoke with Bloomberg's Oliver Crook in Brussels.
I always say that the moment or appropriate moment for such kind of activities is when Russia understands that they have to make some concessions too. If they will show some willingness or some positive signals that they want to start the peace negotiations, then it might be probably the right moment to start these activities. And another very important factor is that European Union have to speak one voice. We had a lot of the efforts and attempts of different leaders of individual member states to start to talk with Putin, and they all failed. So I think this time we have to learn those lessons of the past and to speak one voice, and it would be much better for European Union.
Do you think it would be wise then for the Europeans to establish who that voice will be, what that voice will be? Because we've had some suggestions. It could be someone like Angela Merkel, Mario Draghi. Do you think there are any sort of serious contenders in order to get that process moving?
Well, I cannot say the name, but it might be. Of course, this person should play an important role in international politics. Maybe this might be the former politician, but I don't think that right now it's a time to start the negotiations with Putin, because Putin does not want to see us at the table. Putin respects the strength. Putin respects and is afraid of United States. Is he so afraid of European Union? I have my doubts. Yes, we imposed 20 packages of sanctions. Yes, we have certain leverage to make harm for Russian economy. Is it enough for Putin to see us at the table? I have my doubts.
And thinking about sort of the other geopolitical event that has really dominated the world for the last few months, obviously it's the war in Iran, the great many consequences that has had over the across the world, including the energy prices and inflation here in Europe. I'd like to just get your assessment on kind of where we stand now. It seems there is this memorandum of understanding. How active do you think this will be a conversation at the Council, particularly around what Europe's role could be in the Strait of Hormuz in securing it and to make sure there is a free passage of ships?
We have to support United States efforts to find a solution, diplomatic solution. I hope we are at this point where we can find sustainable solution and free the traffic in the Hormuz Strait. And for Europe, of course, we have to support the United States activities, and probably there is no need to talk about the war, which does not affect us or something like that. For us, it's very important to keep this region stable, to keep the traffic, maritime traffic stable. because, as you rightly mentioned, it has huge impact on the oil prices, on inflation, and probably there's another lesson they have to learn from this.
Lithuanian President Gitanas Nausėda speaking to Bloomberg's Oliver Crook. Now, before we head into the weekend, let's take a quick look at where equity futures are. Everything is in the red. A correction from yesterday's performance. S&P futures 0.6 lower. The S&P is going to be closed today for a public holiday. We're seeing similar performance across the Nasdaq and Dow Jones. Euro Stoxx 50 also 0.7% lower. And oil prices are also tilting lower because of the movement in the Strait of Hormuz. Brent is at $79.6 a barrel. Now that's it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stick around with us for Daybreak Europe. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Greater Manchester Mayor Andy Burnham secures a seat in Parliament after a special election victory, setting up a potential leadership battle with Prime Minister Keir Starmer. The US, meanwhile, lifts its blockade of the Strait of Hormuz, but Vice President J.D. Vance delays a trip to Switzerland for talks with Iran. Stocks tread water, with markets, including the US, closed for holidays. And Bloomberg learns that the US government has told ASML it believes one of the company's top chip-making machines has made its way into China. we'll bring you our scoop. Well, a very good morning. Happy Friday, everybody. Here is the picture in markets to end the week. The stock rally on pause, but these are lighter volumes given the Juneteenth holiday stateside. We've had a 5-day winning streak for Asian stocks, but it's turned negative now. Sentiment souring as we head into the weekend. You've got China, Hong Kong and Taiwan also on holiday. European futures also pointing lower, down 0.7% for Euro Stoxx 50 futures. FTSE futures, though, not quite so bad, perhaps because of the Germany-targeted US tariff probe weighing down the continent more by comparison, but also you've got the FTSE's more defensive sector mix giving it a buffer against the hawkish Fed. Now, let's flip to the cross-asset picture. We've got Brent below $80 a barrel again this morning, down about 9% this week on the US-Iran deal and as shipping through the Strait of Hormuz starts to return. Goldman actually lopping $50 off its gold target on the prospect of no Fed cuts this year. So gold on track for a third weekly loss as that hawkish Fed outweighs the geopolitical optimism. Now, the pound is very much in focus as well. 131 is where we trade at the moment against the dollar. This, of course, after Andy Burnham's won that special election in Makerfield, paving the way for a bid to replace Starmer in Downing Street. Goldman saying sterling is now the most overvalued G10 currency, and Citi also recommending staying bearish on the pound as political risks persist. Now, let's take a look at the risk events on the docket. At 7 a.m. London time, top of the hour, we'll get the latest UK retail sales data. They're expected to climb from negative 1.3% to 0.5% in May. At 7 a.m. also, we'll get German PPI numbers expected to rise from 1.7% to 2.5% in May. And then at 3:30 p.m. London time, we'll be hearing from the ECB's Philip Lane. He's just said this week that the bank needs to be braced for inflation from the Iran war that's yet to be felt. It's in the pipeline. So we'll see what the chief economist has to say this afternoon. It's a busy day. Let's set you up for it.
But I do say to my own party, this is a final chance to change. This is what people said directly to me on the hundreds of doorsteps that I stood on. We must hear it. We must act upon it, and we must get it right. There will be no second chance.
So that was Andy Burnham, the newly elected Member of Parliament for Makerfield in northwest England. His win in a special UK election paves the way for a challenge to Prime Minister Keir Starmer for the top job. Now, the Greater Manchester Mayor won almost 25,000 votes, well ahead of Reform UK. They came in second. And for analysis, I'm joined now by Rosa Prince, Bloomberg Opinion columnist, of course. Rosa, good morning. Exciting times overnight. How soon could we see Burnham challenging Starmer for Prime Minister? What's next in the leadership race, and could we see Starmer resigning very, very soon, actually?
Yeah, a really stunning victory for Andy Burnham. So a great night for him, a pretty bad night for the opponents, Reform UK, and a terrible night for Keir Starmer. His hopes of hanging on in office, I think, have been badly damaged by the scale of Burnham's victory, because he's really proved that case he was hoping to make, that he can beat Reform, he can stop this drift that Labour has been having, where they've been doing so badly in the opinion polls and become really unpopular in their 2 years in power. So I think that we could see events move quite quickly. Now, the choreography is hard to determine exactly. There's a lot of pressure now on Keir Starmer to go with a bit of dignity, perhaps set out a timetable for his departure that could be a couple of months. But at the moment, he is still saying that he is going to cling on. And that could mean quite a messy fight. We could even see members of the cabinet resigning, trying to force him out, or Labour MPs signing a letter demanding that the Prime Minister go. So I think that in the next couple of days we'll get a bit of clarity, but for the moment it's still quite a fluid situation, but a great night for Burnham.
I know that Burnham didn't win, Rosa, because the right was split between Reform and this new party, Restore. His vote count actually comfortably beat their combined vote. So when you look at it in the round, because it wasn't just Makerfield that had an election, you also had another 2 special elections as well. Where does this leave Reform? You've had wins for Labour, the SNP and the Conservatives, but not them.
Yeah, I think Andy Burnham is obviously the big story, but underneath that, there is also some really interesting developments for Reform UK that I think they will find quite worrying. Momentum is everything in politics. For the last couple of years, the story has been Reform on the march, and the idea that Nigel Farage was going to be the Prime Minister in a couple of years had really set in. And this is the first time that progress has been arrested. They will worry about that challenger party on their right. They, as you say, Andy Burnham beat them both comfortably, but that is a big chunk that Restore took from their support. Also, the Conservatives doing so well to win that seat in Scotland. The Tories haven't had a good story to tell for many months, years really. So the idea that Reform is the main party on the right, they've extinguished all their rivals and they're going on to take over in the rest of the UK, that's really been dampened for them. So I think they're going to have a good hard look, particularly also at their candidate, who, if you'll remember, had made some quite sexist, disobliging comments about women, and women, it looks like, were the big factor for Andy Burnham.
Right, OK, that's really interesting. And, of course, Burnham's victory leaves a vacancy in Greater Manchester as mayor. Is there a role potentially for the former Deputy PM, Angela Rayner? Could this be the opening, actually, for Reform?
I think Angela Rayner quite fancies her chances in a Burnham government. I think she'll be looking for a big cabinet job. Keir Starmer's big argument now, the thing he's going to try, the sort of card he's going to try to play is that, oh, you shouldn't rush me out because we have this election to win in Manchester. That had been looking quite tricky. I think Reform fancied their chances there as well. This changes everything now because Andy Burnham's had such an emphatic win. The momentum that I was speaking about is back with Labour. So Labour will be a bit more confident about winning that election, Reform a bit less confident. My guess would be that Labour's candidate would be the leader of Manchester Council, who's a woman called Bev Craig. She's not really all that known outside of Manchester. But it makes for a little bit of an easier contest for Labour. Definitely not a shoo-in, and I think we will be paying attention to how that plays out too.
OK, all eyes now on Burnham and Starmer. But Rosa, for now, thank you very much. Bloomberg opinion columnist Rosa Prince. Now, you can track all of the political fallout throughout the day on the T-Live blog on the terminal. So do check that out. TLIV Go is where you'll find it. Now, to the Middle East, we have the US Vice President J.D. Vance saying that the clock is now ticking on a 60-day window to work out the most contentious details of the interim peace deal between the US and Iran. Uncertainties remained over Tehran levying tolls in the Strait of Hormuz, a question that was put to Vance by Bloomberg News.
That's not about tolling. That's about ensuring that the straits are never used as a choke point for the global economy ever again. It's frankly not what the Iranians want. It's not what the Omanis want. It's not what the GCC wants either. So what we're going to do, of course, working with our allies in the region, is to ensure that that is reflected in the final deal. And if that's not reflected in the final deal, there's not going to be a final deal.
Let's get more now with our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. Abir, good morning. So Vance there no longer going to Switzerland for face-to-face talks with Tehran. How significant is the delay? What should we read into it?
Good morning, Lizzie. Yeah, Reuters reporting just now, a couple of minutes ago, that the talks, as a matter of fact, in Switzerland are not going to be taking place. They're citing a Swiss government official there. I'm not sure how much we should read into this. Now, bear in mind that the MOU was signed by President Trump in the Palace of Versailles a couple of days ago, and the Strait of Hormuz is now open to movement, slightly open to movement. We're seeing a trickle of traffic back to the waterway with some Saudi Saudi tankers, super tankers coming back. We're seeing Kuwaiti tankers making their way back, and LNG laden tankers from Qatar's side also coming back to the waterway. Both Iran and the United States had said that the Strait of Hormuz is open for business. The U.S. Central Command said that it's lifted its naval blockade. Iran said that the southern ports are functional at the time being, and you're seeing oil prices reacting to this. But just before I was coming on with you, looking at these headlines from Reuters and then the reaction in Brent crude, and you're seeing an uptick slightly. Still no further details about why those talks are not taking place, but we're just bearing in mind that there is still a lot of uncertainties to this MOU, Lizzie. One big part of that is the Strait of Hormuz, how fast movement is going to come back, and then the other sticking part in all of this is Israel and its actions in southern Lebanon. And again, a couple of minutes before I came on with you, we saw these headlines about the IDF striking targets in Lebanon. So that continues to happen despite the fact that Lebanon is an explicit part in the MOU that we got a hold of that says that for the negotiations, the wider negotiations to take place, the hostilities against Lebanon have to cease. Some conflict between Israeli officials in Tel Aviv and J.D. Vance, with J.D. Vance, the Vice President of the United States, telling Israeli officials that the U.S. is their only friend at the time being, and Israeli officials opposing any end to hostilities in Lebanon. So we wait to see, again, some murky details are starting to emerge. Again, we'll have to read a little bit more into what the delay in J.D. Vance, or what the no-going of J.D. Vance, according to the Reuters report, means for this MOU.
79.95 on Brent, up now 0.1%. Abir, thank you for the update. That's Bloomberg's Abir Abu Omar. Well, coming up on Daybreak Europe, Lithuania's president says that the European Union should not rush into peace talks with Russia. We'll get you more from our exclusive interview later in the show. But first, how are investors positioning on the news from the Middle East? Alistair Pinder, HSBC's head of EM and global equity strategy, joins me next. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs. They have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:15 a.m. here in London. Well, global stocks are lower in holiday-thin trading today as investors weigh whether that 60-day diplomatic push between the US and Iran could yield a more durable peace agreement. For analysis, I'm joined now by Alistair Pinder, Head of EM and Global Equity Strategy at HSBC. Welcome to London.
Thank you very much.
Good to have you in town. So you were already an equity bull.
Yes.
Are you more of an equity bull because of the MOU?
I think it's definitely a very bullish outcome. I mean, we have been speaking to investors the last couple of weeks. I don't think anyone was expecting the MOU to come through so quickly. So I think that's a big upside surprise. To me, what it really drives is actually this kind of broadening theme across equity markets here. You've got oil going lower, inflation expectations also coming lower. I think that was a huge headwind for certain sectors like the consumer discretionary. And I think it's kind of game on now. I think it's time for these sectors which have been lagging the big tech AI trade to actually start doing a little bit better. Earnings expectations are very low going into this Q2 earnings season, particularly for these kind of areas. And I think there's room for a big beat. You know, the latest data shows actually the consumer, both in the US and kind of globally, but mainly the US, has held up much better than people have expected.
Is it game on again for Europe? That's where we started the year.
Well, you know, it's a great trade. Unfortunately, I don't think it's that game on for Europe. I'm much more have a preference for the US and emerging markets. But there's some interesting trades in Europe here, like luxury is one, where, again, you know, this reopening of the Middle East will get more tourism from the Middle East into Europe doing luxury spending. There's also sentiment in China seems to be bottoming. And importantly, you know, there's a mini kind of AI spillover, I think, for luxury here, which is that you are minting a lot of millionaires in Korea because they're benefiting from that. And they are going to be spending on luxury as well. So I do think that actually the luxury segment, which has been doing really badly, can start to improve. I think banks are a decent place to be. But I think the overall narrative for Europe is that earnings are still lagging both the US, emerging markets and Japan. And it's difficult to get too excited about the market at this point.
But do you not need to have some caution around, for example, the idea that it could take a while for oil flows to get back to normal through the Strait of Hormuz, that we could return to military attacks within this 60-day negotiation period? I
mean, with all things, that there's risks, and I think that's definitely happening. I think what is really interesting, though, is if you look at the oil market is telling you that these, you know, the risks are probably to the upside, and that supply happens quicker. But it's just interesting to me that the equity market, to me, doesn't feel like it's trading on what oil is doing. Like, if you told me, look, oil will be down at, 80 today, I'd be like, wow, equities and some of the more, oil-sensitive names like the airlines, etc., should be much higher than what they are pricing at the moment. So it feels to me like there's a disconnect between what the equity markets are telling us and what the oil market is telling us. And that's why I kind of favour the equity sort of risk balance at this point.
OK, that's interesting. Just in the UK, of course, we've had the Makerfield special election. JP Morgan's saying buy UK utilities because the nationalisation narrative's overdone. Sell actually the banks and house builders because they're worried about rent freeze policy from Andy Burnham. How do you trade it?
I mean, I think there's, I think the big trade for me would be that in the UK, I mean, I think you're going to see more volatility in the bond market as people are concerned about the loose fiscal policy. I actually would probably take the other side of that. I do think the banks in the UK look pretty interesting from that side. If you get the kind of the steepening trade here, I think that can actually be beneficial for the banks. The Bank of England staying or keeping interest rates, higher for longer, I think that's also a decent trade there. So I don't mind too much leaning into the banks. Interestingly though, particularly for the FTSE 100, I do wonder whether, do the elections even matter too much for the FTSE 100, or is it going to be what happens externally, and particularly with the Middle East, which is the bigger driver here, given its weight in areas like oil and commodities. So I think there's particular segments that can, are going to get impacted by the election, the banks and utilities being one, but the rest of the market and the broader FTSE 100 is really going to be dominated by what happens with oil prices and commodities.
And you talk about the impact of central banks there. What about the Fed? Because we've got a new chairman, Kevin Warsh, and a debate really about whether his hawkishness is going to be a problem for equity markets or whether it's going to give credibility that will help them.
I just think it's priced in. I mean, we're expecting 2 hikes already now for the next 12 months. I mean, I think he was a little bit more hawkish than what we were anticipating going into this. But with 2 hikes priced, I think actually, again, I just think about the risk reward here. Our view is that the Fed pretty much does nothing for the remainder of the year. If that's the case, given where market expectations are, this is probably a good thing for equities. So again, when I think about the setup, I think just a lot of the downside risks about, much more hawkish Fed, the narrative of, well, what happens happens if we don't, we get some re-engagement of, the MOU not holding. All of these risks, I think, seem very much priced into equity still at this point, which is why I think you can, still think that the risk reward is quite attractive. I think, where do I think the hawkish Fed could end up benefiting in terms of the sectors? The banks look like an interesting, play here in the US as well. And of course, they benefit from market volatility and all these IPO deals that are happening on the AI side. So I actually think there's a lot of catalysts for the banking sector right here.
When it comes to AI, do you stick to the hyperscalers or do you move along the AI supply chain?
I personally think the AI supply chain makes more sense to me. I like the picks and shovels. We can kind of, putting a big preference for Korea and Taiwan, and we kind of stick with that. I think, from the marketing that we've been doing over the last couple of weeks, the number one question is around monetization of all of this capex. And the truth is, we're not going to know whether they can monetize this probably for 12, 24, if not even longer at this point. Whereas what we do know is that the downstream are monetizing it today, and they don't have any problem with that. So I like that area.
Alistair, it's nice to see you while you're in town. I hope you'll come back next time. Alistair Pinder there, Head of EM and Global Equity Strategist over at HSBC. Thank you very much. Well, coming up on Daybreak Europe, Bloomberg understands that the US is concerned that China may have one of ASML's top chip-making machines. We'll get to that scoop next. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
When we speak about our digital atmosphere and environment, we want to make sure that it's fair and democratic and safe. And of course, this is benefiting greatly European small businesses if we are making sure that nobody is creating monopolies to our tech environment. And for example, our Digital Markets Act is very much about that. So we don't want that the big tech companies who are having very dominant market position, that they are misusing their market power and blocking new innovations from the market.
EU Tech Commissioner Henna Verkunen there speaking to Bloomberg on the sidelines of the Viva Tech conference in Paris. Now, staying with tech, Bloomberg understands that the US is concerned that China may have got its hands on one of the top-making machines made by Dutch giant ASML. ASML says they've never shipped an EUV chip machine to China. So let's get some analysis from Bloomberg's senior market strategist, Neil Campling. Neil, just bring us some more details on this scoop. How big a challenge is it for ASML?
It's certainly a challenge in that in trying to understand exactly what's happened, because ASML has said that they haven't shipped any of the machines out to China. So if we think ASML has actually had export restrictions to China for their leading technologies since way back since 2019. So it's happened for a long time. Now, if it were true that China had got hold of a machine, now it would obviously undermine Western export controls. And maybe in terms of the bigger picture, this is about the risks of shifting the global balance of AI. And I think the US would be concerned about the threat to the market dominance of the Western, if you like, the US tech giants. So it's very difficult for China to have the most advanced chips, the most advanced microprocessors that they need for the AI tool set. So to produce frontier AI systems, you need the leading edge technology, and ASML really has a monopoly on that. So this situation clearly is of a concern to the US government if it's true. But it's unlikely that obviously that ASML has shipped any of the equipment there. But of course, there is a lot of equipment that's sitting next door to China in terms of Taiwan, given that TSMC is the dominant player in leading chip technology.
Yeah, you kind of wonder what the ideal situation for the Trump administration would be in this situation.
Yeah, I mean, I think this is why, again, like stories yesterday around the US sort of progressing on collaboration of Intel producing more chips at home in the US. The key thing for the US is to stay ahead of the Chinese tech development for the leadership of that position. In terms of supply chains, the dominance around leading edge chips is still very much for TSMC and Samsung. And all the reports suggest that China is still some like 5 years away from catching up. And of course, those companies are not standing still. They're continuing to advance their technologies. So it's difficult to see how China would catch up, even with the technology, if they did have alternative systems in place. But certainly, many stories about domestic Chinese technology trying to accelerate their own systems, but it's difficult to see how they can do it without these really complex tools, which really is ASML's complete monopoly of the technology.
Okay, Neil, we'll watch the stock at the open. For now, thank you very much. Happy Friday. Have a great weekend. That's our Bloomberg senior market strategist, Neil Campling. Well, coming up on the programme, Lithuania's president says that the European Union shouldn't rush into peace talks with Russia. We'll bring you more from our exclusive interview coming up next. This is Bloomberg.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Lisa Abramowitz in Rio de Janeiro, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Greater Manchester Mayor Andy Burnham secures a seat in Parliament after a special election victory, setting up a potential leadership battle with Prime Minister Keir Starmer. The US lifts its blockade of the Strait of Hormuz, but Vice President J.D. Vance delays a trip to Switzerland for talks with Iran. Stocks tread water, with markets, including the US, closed for holidays. And Bloomberg learns that the US government has told ASML it believes one of the company's top chip-making machines has made its way to China. We'll bring you our scoop. Well, a very good morning. Happy Friday if you are just joining us, 6:30 a.m. here in London. And this is the picture in markets this morning. The stock rally on pause, but these are lighter volumes given it is the Juneteenth holiday stateside. After a 5-day winning streak in Asia, you're looking at the MSCI Pacific Index down more than 1% now. So sentiment souring as we head into the weekend, although, of course, China, Taiwan and Hong Kong are also on holiday. But you can see the mood is negative around the world this morning. Euro Stoxx 50 futures down 0.5%. FTSE 100 futures somewhat cushioned because of the lesser exposure to the Germany-targeted US tariff probe. That's weighing down the continent more by comparison. And you've also got the FTSE's more defensive sector mix, giving it a buffer against that hawkish Fed. Now, flip the board over to the cross-asset picture. And we've actually got Brent steady now, but we're still sub $80 a barrel, down about 9% this week on that US-Iran deal, and as shipping through the Strait of Hormuz is starting to flow again. Gold there at $4,138 a troy ounce, on track for a third weekly loss. This as that hawkish Fed outweighs the geopolitical optimism, and Goldman, in fact, lopping $50 off its gold target on the prospect of no Fed cuts this year. So they now see $4,900 by December. Just finally, you've got the pound in focus after Andy Burnham won that special election in Makerfield. Goldman saying that sterling is now the most overvalued G10 currency, trading at $1.31 as things stand, down nearly 0.3%. That's what's happening in markets. Now let's have a look at our front pages this Friday morning, and we'll kick off with the Wall Street Journal. They're leading with what the paper describes as Google's ambitious play for a slice of the chip market, saying that it's looking to use Nvidia's playbook to build a rival business. If we also have a look at the Financial Times, they're focusing on Andy Burnham's special election victory in the northwest of England and the new MP's speech saying that Makerfield voted for change. And finally, if we stick in the UK and look at the Telegraph, their headline says that Burnham's victory will now set up a fight with Keir Starmer for 10 Downing Street. The question is, how soon is that going to happen? But you can get a roundup of all the stories you need to know to get your day going in today's edition of the Daybreak newsletter, which, as ever, terminal subscribers can find by going to D8YB Go. Now, the Lithuanian President Gitanas Nausėda says that the European Union shouldn't rush into peace talks with Russia because Putin doesn't want to see the EU at the table. This as EU leaders gathered in Brussels on Thursday to discuss trade imbalances with China. And we can speak to our Chief Europe correspondent, Oliver Crook, now, who joins us from Brussels. Ollie, good morning. How do EU leaders think that they should be dealing with Russia then?
This is the big question, Lizzie, particularly after the United States basically tapped out of the diplomatic efforts. You'll remember at the beginning of the Trump presidency, and indeed in the campaign trail, Trump said he would end the war in 24 hours. You then had this massive sort of flurry of diplomatic activity from the Trump administration, that summit with Putin in Alaska, really trying to bring things over the line, and then realizing that it was going to be a little bit more difficult than Trump had anticipated, a fact that he has reiterated really throughout his entire presidency. The United States effectively withdrew entirely entirely from the peace process, from the negotiations, from the diplomatic efforts, which left the Europeans then, now we're in the 5th year of this war, asking themselves, what is our position here diplomatically? Is it time for the Europeans to basically re-engage with the Russians so they're not basically at a completely different table, not at the table in terms of negotiations? And that is where you're starting to get some of these conversations about potentially putting forward a single emissary from the European side to deal with the Russians. You had sort of concerted individual efforts by some leaders. You've had Emmanuel Macron. You've had a sort of a bit of an effort from the UK, at times also from Germany, to reach out to talk to the Russians. But there's nothing that has been sort of completely coalesced in speaking with one voice at the European level. And so Antonio Costa, who is the president of the European Council and who really sees himself as a sort of shepherd of the 27 EU member states and really can speak with that voice, did some outreach with sort of some back channeling with the Russians. This is a story that we reported the last couple of days, and in fact has really set the agenda there at the European Council meeting yesterday and in today, where European leaders are assembling. I spoke to 2 Baltic leaders yesterday about this very issue, and as you can imagine, Lizzie, they're on the more hawkish side of things, saying effectively there is no point in engaging with the Russians. Have a listen to what the president of Lithuania had to say, Gitanas Nausėda, yesterday, speaking here in the studio in Brussels.
I always say that the moment, or appropriate moment for such kind of activities, is when Russia understands that they have to make some concessions too. If they will show some willingness or some positive signals that they want to start the peace negotiations, then it might be probably the right moment to start these activities. And another very important factor is that European Union have to speak one voice. We had a lot of the efforts and attempts of different leaders of individual member states to start to talk with Putin, and they all failed. So I think this time we have to learn those lessons of the past and to speak one voice, and it would be much better for European Union.
Do you think it would be wise then for the Europeans to establish who that voice will be, what that voice will be? Because we've had some suggestions. It could be someone like Angela Merkel, Mario Draghi. Do you think there are any sort of serious contenders in order to get that process moving?
Well, I cannot say the name, but it might be. Of course, this person should play an important role in international politics. Maybe this might be the former politician, but I don't think that right now it's a time to start the negotiations with Putin, because Putin does not want to see us at the table. Putin respects the strength. Putin respects and is afraid of United States. Is he so afraid of European Union? I have my doubts. Yes, we imposed 20 packages of sanctions. Yes, we have certain leverage to make harm for Russian economy. Is it enough for Putin to see us at the table? I have my doubts.
And thinking about sort of the other geopolitical event that has really dominated the world for the last few months, obviously it's the war in Iran, the great many consequences that has had over across the world, including the energy prices and inflation here in Europe. I'd like to just get your assessment on kind of where we stand now. It seems there is this memorandum of understanding. How active do you think this will be a conversation at the Council, particularly around what Europe's role could be in the Strait of Hormuz and securing it and to make sure there is a free passage of ships?
We have to support United States efforts to find a solution, diplomatic solution. I hope we are at this point where we can find a sustainable solution and free the traffic in the Hormuz Strait. And for Europe, of course, we have to support the United States activities, and probably there's no need to talk about the war, which does not affect us or something like that. For us, it's very important to keep this region stable, to keep the traffic, maritime traffic stable, because as you rightly mentioned, it has huge impact on the oil prices, on inflation, and probably there's another lesson we have to learn from this.
So for European leaders discussing today, obviously this is going to be a very active conversation about what their approach should be to Russia, what their approach should be in the Strait of Hormuz. But of course, Lizzie, the last topic is going to be the one where you probably actually will get the most division, which is how the European Union should treat China. There's a lot of growing concern about the economic threat that China poses to the European Union. There is, as ever, though, great amount of divisions within the European Council about how to deal with it. The Germans traditionally wanting to keep a very good relationship with the Chinese, an open economy. Some of those threats now rising in the German economy and really potentially shifting their perspective. I doubt we're going to get any sort of conclusion today, but for the Europeans, it's all about devising potentially new trade tools in order to sort of secure their own economy, and of course very concerned about that massive trade deficit, which is now hitting €1 billion a day with China.
Okay. Ollie, thank you so much for bringing us that interview. That's Bloomberg's Oliver Crook in Brussels. Now, Bloomberg has learned that the newly elected UK MP, Andy Burnham, recruited top economists to advise his expected Labour leadership bid. We're told that his team includes former Bank of England chief economist Andy Haldane, ex-Goldman Sachs chief economist Jim O'Neill, and former executive director of the IPPR think tank, Caris Roberts. With me now is Simon French, chief economist and head of research at Panmure Liberum, our King of the North.
Thank you.
Good to see you. Are you talking to Andy Burnham's team?
Talking to part of his team, yes. I think they've been looking like the Labour Party have been throughout the spring here in the UK at different economic models to the one that they've delivered to the country in the first 2 years. And I think also they're very mindful, and we'll probably see in the next few hours, the initial market reaction as investors try and price in what an economic pivot might be, and also what leeway, both politically and within bond markets, a new face at the top of UK politics potentially has.
Well, we're hearing from Starmer's cabinet, we're hearing that there's pressure from within Starmer's cabinet on him to resign.
Yes.
Would markets prefer that to a drawn-out leadership challenge?
Yes, because a drawn-out leadership challenge will lead to the winner's curse of whoever wins having to commit additional spending in order to buy off vote special interests within the party. So the most benign, at least by my analysis, market reaction would be if there's an uncontested transition from Sir Keir Starmer to Andy Burnham. What does that require? It requires those individuals you mentioned, cabinet ministers, perhaps tapping the Prime Minister on the back and saying you no longer have the support of us, the cabinet, the wider party, and you step aside in a dignified fashion. To use a sort of well-worn economist phrase, there's a time inconsistency problem with what the Prime Minister has said, which he's going to fight any contest, and what he may now conclude given the scale of the victory in this special election overnight.
We always say that, don't they, right until the end?
Absolutely.
Do you think that he'd keep Rachel Reeves as Chancellor to please the bond market? Would it please the bond market?
Well, it would, but I don't think that will save the Chancellor. Not because, I mean, I think she's done a decent job, my personal view, but if you are a new Prime Minister, what is the one thing you have at your disposal in order to win patronage and loyalty within your own party? A party who ran the 2024 election campaign without you, so you're going to need to hand out patronage. The way you do it is by handing out ministerial jobs. They don't come more plumb than the Treasury Secretary, the sort of Finance Minister, the Chancellor in the UK. And therefore, if he keeps the status quo, if he keeps Rachel Reeves, he hasn't got that card to play. So I think that's probably the reason. But then who does he pick and how do markets interpret that? There are a number of names being mentioned. I won't go through all of them, but certainly anybody who's associated with quite inflationary domestic policies, either in the energy market, in the housing market, in the labour market, markets would say, well, is that now going to be macroeconomic policy, and do we apply a higher inflation premium on the UK economy? I think that's the risk trade for Andy Burnham, but there are more market-friendly candidates. The one I think probably has the strongest case is Pat McFadden, the current Work and Pensions Minister.
But he was talking about who does Labour tax more to pay benefits.
Correct, and it showed him as the grown-up in the room. I don't think he was at all. What you're talking about is the release of that quote in the Mandelson files. But does that not say that here's a guy who is calling out his cabinet colleagues for quite spendthrift behaviour, handing out benefits and looking who to tax? He sounds like he's the one challenging that, at least behind the scenes. I think that strengthened his hand rather than weakened it.
So let's say that Burnham's changing the top team and he's changing the policy. Surely he'd need to go to the public to get his own mandate at a general election. What would the market think of that?
Well, I don't think the market would particularly enjoy that because that would add in an additional layer of uncertainty. And just for international viewers, I mean, the manifesto and the election of 2024 yielded a big Labour majority, 180 seats. That's a huge political caucus. Now, the current opinion polling, and we can disagree on how close it is to the reality, but it isn't showing anything like a Labour majority. Indeed, even on the basis of a small bounce in popularity, it would still be at best the second biggest party behind Reform UK. Very difficult to see him doing that and not losing at least half of his colleagues. So I think it's, I mean, to the degree that Polymarket tells us what's going to happen, it's got a general election this year as 18%. I think that's about right.
And so do you think that in the end the bond market is going to keep Burnham's policy pretty much similar to Starmer's, and that could be a political risk in itself?
Yeah, I think there are guardrails on either side. I mean, to the right, his guardrail is politics. If he goes too far to the right, then his own party, who are generally centre-left in composition, will challenge him, as they have challenged both the Chancellor and the current Prime Minister when they've attempted to do things like welfare spending cuts. Then on the left-hand side is the bond market. The bond market saying, actually, if you pivot too much to the left, we apply a higher inflation premium, we assume greater issuance. So you're absolutely right. There are narrow guardrails on which he can operate without a fresh mandate. But then the final part of your question is absolutely spot on. Does he look a bit like a continuity candidate with a northern accent and slightly better hair? I mean, that ultimately might be the conclusion the markets take. I think it's very, very difficult, as Liz Truss found in 2022, to take someone else's mandate, in her case Boris Johnson, and try and re-engineer it mid-Parliament without an explicit mandate. I don't think markets like that. I don't think UK politicians like it.
Just finally, lest we let the politics distract us from the monetary policy, of course, we had the Bank of England decision yesterday. Were they right to keep rates unchanged?
They were. I think they were probably vindicated. They, at the end of April, when they produced their last monetary policy report, they talked about the tightening of financial conditions. They laid out a series of scenarios, and their most dovish scenario, the forward curve for Brent, is actually below that. And their dovish scenario, they suggested the market should expect no change to policy rate. That's exactly what they delivered. So, I mean, it's too early for a victory lap. A lot can change in terms of second-order impacts on inflation. The energy price curve may change. But for now, the Bank of England seem to be in the right position. But, of course, it is a counterweight to a hawkish Fed, and we're seeing that in sterling dollar at the moment.
Just finally, the Dove Alan Taylor was saying that if the Iran truce holds, cuts could be back on the table. But you've got a hawkish ECB, now a hawkish Fed. Will that stop cuts coming this year?
Yes. Right. I mean, since the start of the Iran war, we thought no change to policy rate in either direction. My own view is the bar has been set quite high for the Bank of England to move rates in either direction, cut or increase. Not least because in the fourth quarter of the year, almost agnostic of what happens in the Middle East, UK inflation will be running 3.5%, maybe even 4%. And therefore, that's a really difficult environment. Even if you think on a 2-year view, inflation is going lower. The optics of that, with elevated inflation expectations, tough to cut.
Simon, lovely to see you this Friday morning. Simon French, Chief Economist and Head of Research over at Panmure Liberum. Thank you so much. Well, coming up on the programme, how the supply chain of a chocolate croissant sheds light on the US-Iran war's impacts on food prices. More on that next. This is Bloomberg.
In case you missed it on Bloomberg Surveillance.
What is the worst Fed's response mechanism to inflation that is ticking, inflecting upward, given the fact that this Fed has been incredibly dovish? Are they going to wreck the party? I mean, ultimately, it's easy to be a skeptic, but I might as well join the party and not be so, skeptical, because you're not paid to be skeptical. You're not paid to poke holes. You are paid to just go with the mob.
Have we got that breaking news whoosh that drives across the screen? Can we play that now? Sort of breaking news.
It's the job. Come on.
Bramo, I think, Going to look to confirm this, but I think Bremo just turned bullish. Is that what just happened?
I think that it just doesn't pay to be skeptical. You take a look at every single different benchmark.
Okay.
I mean, it's sort of, what are we trading people? We are trading them that you cannot lose, and that seems to be the way to go.
Bulls everywhere this morning, getting very nervous following that.
Don't miss Bloomberg Surveillance, live every weekday.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:50 a.m. here in London. Now, the conflict in the Middle East and the subsequent closure of the Strait of Hormuz sent shocks throughout the global economy, from fuel and fertilizer to wheat and cocoa. Our EMEA agriculture reporter Eleanor Thornberg has been following the ingredients in a chocolate croissant to show how the war's impacts on food prices will linger. Now, Eleanor, they've put these croissants temptingly, painfully too far for us to reach this morning. So as I drool over them, let me ask you, when people hear about the conflict and the Strait of Hormuz impact, you know, they think about oil tankers, they think about energy supplies. Why should they also be thinking about the price of a croissant in London?
Yeah, I mean, I think it's because food and energy are a lot more interconnected than perhaps the average consumer realises. And when we were doing the reporting for this story, what we found is that almost every ingredient and every layer had been touched by the conflict in one way or another. And that took many examples. It could be farmers using fertiliser and diesel. It can be millers, which are very energy-intensive operations. It can be trucks that need to fill up their tanks with diesel. So there's also other things we don't even really think about, like plastic packaging. That's all very connected to petrochemical markets. So yes, a lot of the headlines have been about oil and gas, and rightly so, but that doesn't mean that food supply chains have kind of gotten off from this scot-free. And by the time a croissant reaches a cafe in London or a TV studio in London, you know, there's the effects of a conflict that, yes, is thousands of miles away. It actually feels a lot closer to home because a lot of the impact is going to start being baked into the price.
But we've got an interim deal now. How quickly does the story reverse?
I mean, yeah, it's a good question. It's difficult because food supply chains don't really bounce back in the way that perhaps financial markets can. I mean, yes, you're right. We've got this peace deal. In theory, it's business as usual. The strait is open. Freight's meant to be moving through more easily. But businesses have still dealt with months of disruption, and they've had to make plans based on that disruption. They have to think about planting, especially if you're in agriculture. You have to think about investment, producing. So, yeah, by the time that, you know, it takes time for this to kind of reach food prices. I mean, one economist we spoke to said it could take around 6 to 12 months before all of this finally reaches supermarket shelves. So, yes, on paper, the geopolitics of it all, it's over, it's easing, but there's still a lot of economic consequences that are still making their way through the system. It just takes time for them to manifest in a way.
So how does it compare historically to COVID and Ukraine and the years of inflation? Because they're major food price shocks in history.
Yeah. So I'm not an economist by any means, so I'm not sure for certain, but I mean, I don't think we're looking at a repeat of the huge inflation spikes that we saw in the wake of Russia's invasion of Ukraine in 2022. But I would caveat that and say it's not necessarily the best comparison, because this time round we're already dealing with like a period where food prices have been quite high anyway. I mean, food prices in the UK, for example, they're about 40% higher now than they were in 2019. So even if this latest development only increases food prices a little bit, it's going to be landing on households that have already been dealing with budgeting and finance worries for some time. So I don't think the risk is another spike of really severe emergency inflation, but it's more just people who are maybe hoping for some relief are going to have to wait a little bit longer. But I think that's kind of what the story at its core explored. It kind of unraveled all of these global supply chains and showed that, yes, they are very interconnected and very globalized, and that can be a good thing. But in conflicts like this, it can make them vulnerable.
And of course, lower income households spend a higher proportion of their money on food.
Eleanor,
thank you for bringing us this story. It's Eleanor Thornberg's story, Bloomberg EMEA agriculture reporter, available on the terminal. We're going to take a break now so we can tuck into those croissants. This is Bloomberg.
most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode,
Ebola can be a risk for all of us. The solution is not to close borders. The solution is to provide sufficient support.
premieres June 26th, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:55 a.m. here in London. Well, we have been discussing Andy Burnham making his way back to Westminster, having won that special election in Makerfield. This is the impact on markets that we've been seeing, not just from the political uncertainty in the UK, but also from the Bank of England's latest moves. Relatively dovish. In fact, the pound set for its second worst week in a year. Goldman strategists saying that sterling is now the most overvalued G10 currency. So we'll keep an eye on cable all throughout the day. Risk events on the docket. We start off in the UK in just a few minutes' time. Retail sales at 7 a.m. We'll also get German PPI, and we'll be hearing from the ECB's Philip Lane at 3:30 p.m. London time. But that does it for Daybreak Europe. I'll be staying with you alongside Anna Edwards to take you all the way to the European cash trade beginning on the opening trade. It's up next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals.
every Wednesday at noon Eastern, only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg. Good morning. It's Friday. It's June the 19th, and here's what's on the agenda. Andy Burnham is heading back to Westminster after a big win over Reform UK. JD Vance's Swiss trip is delayed as we wait for 60-day talks between the US and Iran. And the US says China may have some of ASML's top tech. ASML says it doesn't.
Well, Anna, sentiment is souring as we head into the weekend. If you take a look at the equities picture, we've got the Juneteenth holiday stateside, so volumes are thin, but Eurostoxx 50 futures down 0.5%, so tracking the losses that we already saw in the Asian session. Brent here floating around $80 a barrel, up now 0.4% as we keep an eye on the progress when it comes to that US-Iran deal. Flows coming back to the Strait of Hormuz, and also the pound very much in focus this morning. You mentioned the Burnham victory. We are down 0.1% at $1.31 on cable right now. Many strategists saying stay well clear of the pound for all the political uncertainty. The countdown to the opening trade starts right now.
I do say to my own party, this is a final chance to change.
That's Andy Burnham, the outgoing now Mayor of Manchester, soon to be Member of Parliament once again in Westminster, this time for the constituency of Makerfield. And why does that matter to international markets, Lizzie? It's because it gives him a chance then to challenge Keir Starmer, the Prime Minister, for the leadership of the Labour Party and to become Prime Minister of this country, such is the way that the system works here. Let's just take a moment to reflect on the scale of the win against Reform UK. More than 20 percentage points in it, he beat them by. And even if you add in everything that Restore got, the Conservatives got, and everybody else on the right got, he still won by a substantial margin. And so this tells us something important, perhaps, about the UK politics, but it doesn't answer questions about timing. And I think for markets, that's really going to matter. If Keir Starmer is on his way out, we're watching betting odds for what that is worth. Not much volume in it, but we're watching those. What do we know about the timing? Well, very little. We're waiting to hear materially from the Prime Minister and from Andy Burnham about his plans next.
Yeah, I was just talking to Simon French about the possibility that Andy Burnham could call a general election to try to get his own mandate, not something that Simon French thinks is likely. When you look, though, as you say, at the split between, when you look at between all the parties here in Makerfield, he didn't win because the right was split between Reform and Restore. He comfortably beat their combined vote. So a bad night for Reform, because this wasn't the only by-election that was happening in the UK. You had wins for Labour, the Conservatives and the SNP, but not for Reform. What does that say on a national scale if there were to be a general? And then, as you say, you've got to think about how to trade all of this. So, you've had Goldman saying that sterling is now the most overvalued G10 currency.
In a sort of medium-term sense, that is, isn't it? Not necessarily reflecting these developments, but yes, that is absolutely their view, yeah.
But it could get worse, because Crédit Agricole saying that the pound could extend the losses on the political and fiscal risk. So we need to see what Burnham's policy is going to be, and indeed, if the bond market is just going to keep him in a straitjacket and he looks much the same as Keir Starmer.
Yeah, absolutely. So maybe we get volatility, but maybe for that very reason, about that bond market straitjacket, maybe we don't see a huge amount of movement on the fiscal side. He's already committed to the fiscal rules. Who would he want to bring in as Chancellor? I mean, maybe we're getting a little ahead of ourselves because he's not the Prime Minister yet. There would be, one assumes, a competition, but if it looked like a coronation, that might please the markets because it would be less volatility, but that might not please the Labour Party. And he's trying to obviously speak to a number of audiences. Let's talk about what's been going on in the Middle East then, Lizzie, because there too we have news of what's not taking place.
Yeah, so JD Vance is not going to be heading to Switzerland, but he says that the 60-day clock has started ticking on negotiations between Iran and the United States. The US declaring the end to its blockade on the Strait of Hormuz, so shipping starting to return there. That's what the market cares about. Oil, though, set for a big weekly loss, about 9%, even if it's about higher, 30% for the year. An energy trader is still saying that it's going to take months for flows to get back to normal when it comes to oil and gas. We're just going to have to keep watching it for the 60 days.
Absolutely, and we're showing here a chart that shows these tankers coming through the Strait of Hormuz in higher number than they have been recently, but absolutely no return to previous levels. But at least they are increasingly turning their transponders on, which means that this data starts to matter a bit more, starts to mean something. But as you say, oil down 9% this week. We continue to watch it, of course, because of the listed companies here in London, and actually it's back above $80 right now, so 80.27 as we see this delay, and now announced this delay by the Americans to talks.
Well, yeah, perhaps one of the reasons why you've seen a little spike in oil here is because we had the news earlier on this morning at about 6:30 a.m. that the IDF, the Israel Defense Forces, said it struck throughout the night and continues to strike Hezbollah militants in Lebanon. And so, of course, this is one of the points that underscores the fragility of the US-Iran deal.
Yeah, the MOU set out how it wanted to be binding on America's partners, but America's partner, Israel, in this, has said that it is not bound by the MOU, and so that is a tension that still exists right here, and you're right to point to that. Interesting that J.D. Vance himself has been talking about the role of the Strait of Hormuz and about how keeping it open is crucial to whether a deal can be struck here. He said there will be no final deal, and that's what the 60 days or less of talks are, or more, in fact, are all about. But there'll be no deal if the Strait of Hormuz is not open. He pushed back on the idea of tolls because that's been something that the Iranians have talked about in the period after these 60 days, and it seems the Americans are not fans of any kind of tolls being introduced. Let's talk about what's going on in tech, and specifically ASML, because here this involves the American administration as well, but bringing it back to sort of European corporate agenda. And let's talk about ASML and its EUVs, its extreme ultraviolet lithography machines.
Where's Tom when you need him?
Yeah, absolutely. Used by many chip makers around the world to make chips. And Commerce Secretary Howard Lutnick has said that they suspect the US administration, they say they have evidence that ASML is not acting in good faith and that at least one of these machines has ended up in China. Now, ASML says this is not true. ASML says that this has not happened. The first Trump administration put limits on ASML's ability to send machines to China, and ASML says it's never sent any EUV machines to China. Now, US sources tell Bloomberg they have evidence of export parts going to China, which suggests that there is a machine there. So there's clearly some further investigation needs to happen on this. Meanwhile, Bloomberg reporting that ASML is in crisis mode. It's put out a document that says, look, there are 314 machines, 26 have been decommissioned. We monitor them. We can detect what they're doing. We can see if they're moved. They require lots and lots of maintenance by our teams. So all of that leads them to conclude that there are none in China. But it does play into these wider concerns, of course, around transatlantic tensions between Europe and the United States, and indeed the use of trade as a tool of global diplomacy by the United States as well. So all of that very much in focus.
Yeah, and it's just not clear what the Trump administration actually wants from ASML here, what the ideal situation for the Trump administration would be, what prompted these questions from Howard Lutnick. But of course, it goes on to something that's been going on for years. ASML saying that they've faced increasing limits on its business in China. Where do we end up for this? We'll watch the stock of the open.
Yeah, absolutely, we will. Let us tell you about some of the conversations we have coming up during the programme then. We'll be speaking to Ella Good, BNY Investment Newton fixed income head, so good time to check in on the fixed income story given the results out of the UK, and we'll do that as we go through the programme. We will also talk to Eric Whitetennis, JP Morgan Private Bank EMEA Head of Investment Strategy, with the news out of the UK and out of the Middle East. How is his investment strategy shaping up? We'll also check in with David Zahn, Franklin Templeton European fixed income head. He's lots of views on the gilt market, which we've talked to him about in the past, but interesting that he's got lots of views also on the arrival of kilts into the fixed income space. So we'll talk about that as well.
Not into the football. Now, coming up, EU President Antonio Costa defends his outreach to Vladimir Putin. So we're going to go live to Brussels as European leaders hold talks there. Plus, the US opens a Section 301 investigation against Germany over its pharmaceutical industry. So we'll keep an eye on those stocks at the European Open as well. But up next, we'll be joined by Sonali Punani, who is the UK economist at Bank of America. Plenty to discuss on the ramifications of this Makerfield special election and the BOE decision yesterday, of course. So if you've got any questions of your own for our guests, please do send them to us this Friday on IB plus BBTV Go. Good morning from London. This is Bloomberg.
fixed income fix. Watch Bloomberg Real Yield now at its new time. Thursdays at 12 p.m. Eastern, right here on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Next week on Leaders with me, Francine Lacroix. I speak to the outgoing chief executive of BHP, Mike Henry, about his do's and don'ts for making deals.
You don't want to be setting strategy in the middle of a transaction.
Changes he made at BHP.
We needed to make sure that we had a portfolio that was fit for the future.
And how to ensure smooth leadership transitions.
Day one, succession starts now.
So tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Guys, buckle up.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs, they have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
This is a final chance to change. There will be no second chance. But it is a chance now, from this result tonight, to build a new politics based on unity and hope, turning away from the path that takes us to a divided, dark politics of the kind we see in the United States.
That was Andy Burnham, the newly elected Member of Parliament for Wakefield in northwest England. His win in a special UK election paves the way for a challenge to Prime Minister Keir Starmer for the top job. And we can speak now to our London Bureau Chief, Ruth David, for more. Ruth, good morning. So an exciting 24 hours here. What's next? Is Starmer going to resign? Should I be packing my bags for Downing Street?
The most consequential by-election in the history of Britain's politics. It's interesting that both Burnham and Starmer are talking about hope and unity in the immediate aftermath when the Labour Party is clearly very divided, right? I mean, in the aftermath of the May elections and the way that the Labour government did there, more than a quarter of Labour's 400 MPs wanted Starmer to resign. We're hearing that Burnham's allies are trying to see if Starmer can resign himself before he launches a leadership contest. I mean, remember, we've also heard Wes Streeting saying that he might want to launch a leadership contest, even though it doesn't seem like he has enough of the support. But this really is paving the way for a new leadership. And Starmer's G7 appearance could be potentially his last.
Yes, so this changes things internationally in that sense. It changes things for markets too, doesn't it, Ruth? Because we've been in a limbo where we knew we were making our way towards this by-election date and that would give Burnham probably a path to number 10. But until we were through it, a lot of people waiting to see what happened. Now we know what happens, but we don't have a sense of timing, do we? We don't know how quickly all of this is going to develop. And I suppose for markets, for those watching gilts and the pound, that's going to be something we need to bottom out.
Absolutely. Gilt markets open at 8 a.m. and everyone will be watching closely. Burnham doesn't have a very good track record with gilt investors, given the comments that he's made in the past. But we and others have been reporting that he's got a whole raft of advisors, from the former chair of Britain's budget watchdog to a former Goldman Sachs economist, that he's kind of using to make a stronger case for his economic policy, which was seen as, one of the things that may not be as strong as some other leaders. I think it also, remember when Rishi Sunak was Prime Minister, he was not elected.
Yeah.
It makes it much harder for Burnham to govern, even if he gets the premiership.
Yes.
And that means that we're probably going to see slightly more limbo, uncertainty, and that having an effect on policy making happening in the UK.
Yes, so a lot of unknowns. And interesting pointing out there the advisors he has, including many with a lot of City background. Jim O'Neill, for example. I mean, an advisor, more like a super fan as well. Such has been his praise for Andy Burnham as mayor.
Well, come on, they're both Northerners, and they work closely together on the Northern Powerhouse
Is that
project.
all it takes to unite, Lizzie?
Well, we Northerners stick together. But let me say, I do have to wonder how soon Burnham would call a general election, Ruth, because you pointed out the size of Starmer's mandate. It doesn't look like Burnham could get that again when it was so predicated on 14 years of Conservative rule right before, surely.
Absolutely. I mean, but I think first we need Burnham to come into power and then see what he can actually do. He's now been making all of these comments about they are going to stick to the fiscal rules, but they also need to ensure that debt is at reasonable levels. They want to keep investors on side. They're talking about nationalizing some key British businesses, but there's also this whole wealth tax angle looming in the background. It's very ironic when you are tracking UK politics. We came out of the European Union saying Brexit would make us more nimble, and Brexit 10-year anniversary next week would make the UK a much more attractive destination for investment, would help the economy grow faster. I don't think we've seen any of those things play out. And if Starmer steps down, it'll be, the 5th Prime Minister in less than 4 years. That is quite something.
Yeah, more change then, perhaps. Ruth, thank you very much. Ruth David, our London Bureau Chief, with us on set this morning at 7:17 here in London. Let's continue the conversation about the UK then. We're joined now by Sonali Punhani, who is the UK economist at Bank of America. Sonali, nice to speak to you. In a sense, what changes for the UK economy overnight? I guess the question really is what freedom to make change will Andy Burnham have if he manages to make his way to number 10?
Yeah, look, I think one thing to see is that there's already a lot of policy uncertainty and political uncertainty. And, if you look at the latest PMIs, we've seen that the sentiment data has already been hit by some of this policy uncertainty. So that's sort of the very short-term impact, because we don't know what policies are going to come next. The second key question is obviously what's going to happen with fiscal policy, assuming that we have a new Prime Minister and Andy Burnham is that Prime Minister. I think whoever is the Prime Minister, the fiscal space is fairly limited. The headroom that the Chancellor had in the previous budget was close to 24 billion. We think that 10 billion of that headroom has already been eliminated by the fact that, we're going to see higher gilt yields, higher bank rate expectations, as well as potentially high inflation and lower growth. So the headroom already looks pretty small for whoever is the next Chancellor and the next Prime Minister. And then on top of that, obviously, there are quite a lot of ambitions to increase public spending, utilities. There's obviously pressures on increasing spending on defense, et cetera, et cetera. So clearly, it's a very tough fiscal landscape for whoever is Chancellor. Andy Burnham has reassured markets for now that fiscal rules are likely to be met, which is obviously keeping markets on side. And I think we expect that in the near term, because any potential adverse market reaction to tweaking the fiscal rules could be not met very well. So I think the options are either to raise taxes or do anything within the confines of the fiscal rules.
OK, and how does the Bank of England policy weigh into your thinking then, Sonali? I know going into the Bank of England yesterday, you were expecting, I think, 2 hikes from the BOE. Do you still see that, or is the dovish data that we've had recently and the fact that developments are moving quickly in the Middle East, does that lead you to expect fewer hikes from the BOE?
Yeah, I think our call that we have of 2 hikes is subject to quite a lot of risks now, given the developments that we have seen over the last few weeks. I think the Bank of England's, first is the Bank of England's reaction function, right? When we made this call, we thought that the bank is going to be much more proactive, given the fact that, we've seen above target inflation for the last 5 years, and would try to rein in these inflation expectations quicker than before they start taking into account. But it does look like the bank is much more comfortable allowing for above target inflation for a short period of time because of the weakness of the economy and the weakness of the labor market. And now that, we've got a peace deal, there is some signs that the shock is probably going to be less prolonged than what we were expecting a while ago. I think that also gives the BOE some cover to wait and watch and assess whether these second round effects actually do materialize. So we do think there's been a shift in the reaction function, and I think that means that the risks are that either there is a delayed hike. I mean, I think it's possible that we get potentially a hike later in the year, or there is also a risk of a look-through scenarios if those second round effects are indeed, contained by the fact that we have a weaker labor market and an economy versus what we had in 2022.
Well, how much does the hawkishness of the Fed and the ECB play into how limited the BOE can be in its dovishness when, you've got inflation coming in below expectations, as you say, oil prices dropping on the end to the Middle East war potentially? How much is it constrained by what others are doing?
I mean, it looks like the Bank of England is taking a slightly different course, right? Because we've already seen that the ECB has raised rates last week, and the Fed is obviously talking in a more hawkish direction, whereas the Bank of England is probably more comfortable taking a more wait-and-see approach. So, I mean, maybe the pressure on them could materialize, if say the Fed starts raising rates for good reasons, right? So if global growth picks up and there is stronger growth coming from there, which in turn leads to a stronger UK economy, then they might feel some pressure to raise rates. But my sense is that, their thinking or their views on whether to raise rates will depend really on the underlying conditions of the UK economy and potential for second round effects. And if they remain contained, then, they could look through, even if the Fed and the ECB were hiking rates.
And Sonali, to come back to the politics, you talked about if Andy Burnham were to become Prime Minister, how fiscally squeezed he would be, just like all of his predecessors in recent years. So that would be the bond market controlling him from being too fiscally lax. He'd also have the pressures on him from the left wing of the Labour Party, keeping him in really a fiscal straitjacket. So ultimately, would he look just like his predecessors? Might he as well keep Rachel Reeves as the Chancellor, and how would the market react to that?
Yeah, I mean, look, I think that's the point that we've been making for quite a long time, that, whoever is the Chancellor is fiscally constrained and would face the same pressures. I think it's very hard to speculate on who the Chancellor could be. There's been some questions about whether, Rachel Reeves will continue or not. So we need to wait and watch where that goes. But I think the key point really remains that whoever is the Chancellor is going to be, fairly fiscally constrained and would have to, meet those rules and try to make difficult choices in the midst of those rules.
Sonali, just briefly, with that in mind, what is the best hope for growth in the UK to give growth a kickstart? What would your economist's suggestion be?
I mean, look, I think the main question is obviously the issue the UK has been having is clearly low productivity. So, I think higher investment in whether more so on the private sector, if we improve confidence, if we improve, policy certainty and we keep policy continuity in the economy, I think that's going to give businesses and consumers more confidence that we are going to spend and to spend as well as invest. I think having a closer relationship with the EU is also one of the big factors that can unleash growth. And I think if we can reduce some of the regulations there, that's very important. And yeah, I think I do agree with the fact that public investment also needs to increase in the economy. And that's the path I think Rachel Reeves was taking us down. Obviously, it takes some time for that to materialize, but I think it's important that the government's focus on those slightly longer term supply, longer term policies that improve the supply potential of the economy, because that's the one that's been holding the UK back.
Yeah, Andy, if you're listening, you can write that down. Sonali, thank you for joining us. That's Sonali Punhani, UK economist at Bank of America. Thank you very much.
Here's what else you need to know then this morning. The US has launched a fresh tariff investigation into Germany over what it calls persistent underpayment for innovative pharmaceutical products. The Section 301 action comes in response to Germany cutting costs in its healthcare plan, which seeks to curb drug spending. US Trade Representative Jameson Greer calls it a serious step backwards, but says the issue can be resolved through talks. Accenture shares plunged 20% in New York after its revenue forecast came in lower than expected. It marks the worst one-day drop on record for the professional services firm. Investors have shared holdings in professional services companies this year, sending stocks plummeting on fears of disruption from AI. And Bloomberg has learned that bankers for SpaceX are preparing to hold calls with investors to discuss a potential bond offering of at least $20 billion. Sources say those calls could begin as soon as Monday. Elon Musk's rocket, satellite and AI conglomerate has received ratings in the BBB tier from all three major bond graders, paving the way for cheaper borrowing after its record IPO. And, you know, this feels like just sort of taking care of loose ends then. $20 billion in the context of everything else that SpaceX has done.
Chicken feed.
Over the last two weeks or so. And our reporting does suggest, you know, this is just the start of their fundraising. They have a lot of money that they need to spend if they're going to put these data centers in space.
Yeah, seemingly just getting going. SpaceX shares ending their first week of trading up 37% from the IPO price, and it looks like we're only just beginning. Coming up on the programme, we'll get the latest on the bond markets with Ella Good, head of fixed income over at BNY. So stay with us for that conversation. It's coming up next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Minutes from the start of the opening trade. This is the futures picture this morning. We are seeing a risk-off mood around the world, but thinner volumes given it is the Juneteenth holiday stateside. We've had European futures tracking Asian stocks lower, down about 0.3% for Euro Stoxx 50 futures. The exposure in the UK, we're not so bad. We're only down 0.1% at the moment, partly because of Germany being more targeted by this US tariff probe, so that weighing down the continent more by comparison, and also perhaps because here in the UK we've got a more defensive sector mix on the FTSE, so a bit of a buffer against that hawkish Fed, Anna.
Let's have a quick look at what we've got in terms of the bond market story. The movements have been a lot to do with oil prices of late, of course, and then we see not a huge amount of movement then this morning coming through, a bit of selling on European bonds, and yields going a little bit higher, up by around 3 basis points or so. Of course, we're without the US today. There's been no trading, it seems, through the Asia session, and we won't get any later in terms of the fixed income story. So we might be a little in the dark around treasuries, but we've learned a lot this week. Let's talk about European politics. European Council President Antonio Costa has defended his recent outreach to Russia during the latest EU leaders meeting in Brussels. The exchange comes as the EU remains disjointed on its attempts for renewed peace talks with Russia as the Ukraine war stretches into a 5th year. We're joined now by Bloomberg TV's chief European correspondent, Oliver Crook, who is with us with some analysis. And Ollie, why has there been some reaction, negative reaction to Costa's outreach then? Talk us through some of the dynamics there.
Yeah, absolutely. And I mean, we're here at the European Council. We're waiting for the leaders to walk in now every sort of moment. They had dinner and sort of conversations last night, and it seems like a large part of that conversation was actually governed by this story that we at Bloomberg reported, this scoop about the Antonio Costa reaching out to create a sort of back channel with the Kremlin to sort of pave the way eventually for a diplomatic effort, collective from the European front with the Russians. As you will remember, Anna, I mean, from the very beginning, there's been a sort of taboo on having that sort of diplomatic contact between the Europeans and the Russians. There have been a few attempts by a couple of the leaders. Emmanuel Macron was sort of early in that. We had the last Chancellor of Germany, Olaf Scholz, at one point made an attempt. The UK has also made an attempt, but nothing has really sort of proven anything. And ever since, particularly the last few months when the United States has effectively stepped out of the diplomatic process, Donald Trump basically withdrew from the peace negotiations after it proved a little bit too difficult to make any progress with the Russians. The Europeans have been thinking really seriously about what their diplomatic options are. And there have been sort of ideas about getting an emissary forward to represent the European position. There have been talks about potentially Angela Merkel, Mario Draghi, but I caught up with one of the leaders of one of the Baltic nations, the president of Lithuania, yesterday about how he felt about that, and you'll remember that these will be sort of the more hawkish voices. Have a listen to what he had to say.
I welcome all the efforts, and especially the efforts of the U.S. President Donald Trump to step in and to assist in this process of peace negotiations. But first of all, Russia and Russia's dictator should come to this conclusion himself, that this war cannot be won, and the Russians are not prevailing anymore. And probably for him personally, it's the best time to look for the compromise and for the consensus.
And really interestingly, over the last couple of days, at the G7 meeting, we've been hearing from President Donald Trump effectively saying that the United States is ready to sort of re-engage in that peace process, that they'll do whatever they can to try to bring the war to a close. That being said, I think there is a dawning realization on the European side that that is not something that they can necessarily rely upon. So you have this spirited debate about who the right person should be to represent European interests in negotiations with Russia. Antonio Costa making the argument that it really should be him as the sort of shepherd of the EU27, as a European Council president. But I think this is a debate that is going to gain some pace over the next few months.
So, Ollie, you were covering the G7 meeting for us in Evian in France. Now you're back in Brussels. What else have we learned from the latest leaders' meeting?
Yeah, so today really the focus is going to be in part obviously on the question of Ukraine. There's going to be some other issues discussed, including the sort of consequences of the potential end, or at least the sort of the cessation of the sort of more dynamic and kinetic parts of the war in Iran, and sort of securing the Strait of Hormuz. Remember, the Europeans have said they will be active potentially in that sort of mine-sweeping operation within the Strait, so I'm sure that that'll be something that they'll be discussing. But another thing they'll be discussing is, of course, China. Now, if you think people are divided about this sort of approach on Russia, you should ask them about the approach to China, because there you really do not have consensus within the European Union. You have the sort of traditional dichotomy here. You have those that have been a little bit more hawkish, those that have been sounding the alarm bell, potentially, you know, like the French and Emmanuel Macron, and then those that are sort of in the middle, like the Germans, who are very economically dependent on China, who have been more reticent to take a more aggressive approach. But again, I think there's a dawning realization here. You have the Germans sort of pivoting on this, that the economic threat posed by China is something that they can't ignore anymore. So one of the conversations that's going to be very active today is how do you deal with some of the trade issues. Now, you should say that the trade deficit with China for the Europeans has basically hit €1 billion a day. That is something they can't ignore anymore. They do not want to use the nuclear option, the anti-coercion instrument. This is the sort of trade option that is the most radical that they can use. So what they've tasked the Commission with doing is trying to sort of develop some more less aggressive trade measures that they may be able to deploy. That being said, I would say we're still in the sort of negotiating moment of that right now. We're not going to get a huge amount, I think, of trade action against the Chinese here. They're not even mentioning the Chinese by name, but it's something that is going to be a much more active conversation, certainly over the next few months.
Oliver, thanks very much. Bloomberg's Oliver Crook there, live on the ground at that EU Leaders Summit as they try and grapple with relationships with Russia and with China. Let's get to the markets conversation around European debt and other products. Let's speak to Ella Good, who is head of fixed income at BNY Investment Newton, but also covers other asset classes to some degree. Ella, really nice to have you with us. I was looking at European fixed income a moment ago, just before we heard from Ollie there, and we saw yields going a little bit higher. Then I look, because of recent developments, I look at the oil price, and we're up by 1%, but we're back above $80 a barrel. What is going to be the thing that drives European government bond markets from here? Do we still just reflexively watch what's going on with oil prices? Is that still the story, or is it going to get more complicated?
Well, obviously energy is important, given that Europe's an energy importer, and, that probably has been, if you like, the headwind for the cycle year to date. So if we take the more extreme tail risk, which was this, much higher or spike in oil prices, certainly you take that tail risk away for Europe. So the growth side becomes a little more benign, but not great, right? So certainly on a relative basis, still doing less well compared to the US. So I think that story remains in play. What's interesting is perhaps it frees the ECB from its more hawkish stance as well. So the ECB has been very quick to jump on the hawkish side, given the experience from 2022, when inflation overshot. So they're very keen to keep their sort of hawkish credentials. So I would see this situation as sort of like softer growth combined perhaps with an oil price that's stabilizing around the 75 to 80 level, which would be our expectation. Then I think there's less need for the ECB to hike, and therefore bonds in Europe perhaps can take a bit of a breather now, at least for the next quarter or two.
Yes. Do hawks find safety in numbers, Ella? I'm thinking about the Fed and what we heard this week from the Fed. Quite a pivot, really, to a more hawkish stance coming through from the Fed. What does that mean for Europe? Does that mean that the ECB is more or less likely to stick to that sort of hawkishness?
They have a single mandate, right? The ECB has an inflationary mandate. The Fed has employment and inflation. So it's a little bit of a tricky situation, right? But for the ECB, they've shown that they're very keen to jump on the hawkish side and defend their inflation stance. So I think from here, the market has sufficiently priced hikes. I think our stance was previously that it probably priced a bit too much. So we've been, if anything, covering shorts on that part of the world. But going forward, I think I'd be a little bit more constructive on the European side. In the US, it's a different story because the growth dynamics are very different.
OK, just staying in Europe before we go to the US, on the UK, I do wonder how much the Burnham win was actually priced in already when it comes to gilts as we head towards the gilt open.
Quite a bit, right? Because if you look at the relative performance of gilts year to date, even with the outperformance over the last month or so, we would argue the shape of the curve curve, the steepness, the inflation premium, all of that tells you that quite a bit of that was in the price. Now, having said that, we don't know the exact policy mix that will be coming, if we indeed get a new government. But our expectation would be that the message from bond markets has been loud and clear, and what we see from the type of advice that he is receiving, it seems to be of the kind that is very cognizant of this dynamic that's playing out in interest rates. So I wouldn't expect any major surprises there, but of course, to see is to believe.
Well, yeah, we've had the former Health Secretary Wes Streeting congratulating Andy Burnham. Huge congratulations, he says. There could be a leadership contest now. You also cover currencies, not just fixed income. Do you see more pound weakness to come if this instability, this leadership contest continues and hots up?
I mean, we are in a bit of a dollar rebound environment. We would probably expect more range bound, so that's probably the bigger driver of what's happening in currency markets. So it's interest rate differentials, as we discussed, so more expectations on the Fed, perhaps a bit less in Europe, so I would lump the UK in that. Having said that, over the last 5 days, sterling has underperformed the euro, so that's probably the best way to compare it, but not significantly, about 40 basis points or so. So that tells you there's a bit of this political premium at play, or a bit of that growth dynamic at play. I think that's about right, so you need a little bit more premium given the uncertainty. But I think, let's not forget, we are trading closer to the bottom end of the range for sterling for this year. So can you get ultra bearish here? Unless we see some radical policy shift, I probably would say we're probably around the bottom of the range for now, yes.
Yeah. Ella, I think sticking with the FX theme, and because it's a US holiday, I'm going to ask about the yen, because we're at 161.36, and sometimes we see intervention or talk of intervention or speculation that there might be intervention on days where the US is out and maybe Japan has more control over what the dollar yen is doing. Are we getting to a place where we see something radically different from the Japanese, or is it just more of the same?
It has been more of the same. I mean, we had the recent central bank meeting. Obviously, the hike came through. It was very much priced. They remain behind the curve. Financial conditions are very easy. Real rates are still negative. It's perhaps one of the few places in the world, particularly in G7, where rates remain deeply negative, and that's been explained by the fact that, Japanese equities are doing so well. So they have a bit of a cyclical tailwind together with very, very supportive policy from a monetary and fiscal side. So bond markets, I don't think, will rest until actually the BOJ catches on or the cycle swings the other way.
And intervention does nothing in the meantime, really?
It doesn't, yes.
Stops it weakening too fast? Is that the best it can hope for?
Going above that 160 level, which, I think investors like ourselves are watching pretty closely, because it's been well defended, and yet over the last 2-3 days it hasn't. So that's if you let that barrier go significantly, I would expect that further momentum traders come into that.
Okay, good to see you, Ella. Thank you for coming in. Ella Good, the head of fixed income at BNY Investments Newton. Thank you. Well, Europe, meanwhile, is laying plans to boost tech sovereignty, targeting greater independence from the US and Asia.
When we speak about our digital atmosphere and environment, we want to make sure that it's fair and democratic and safe. And of course, this is benefiting greatly European small businesses if we are making sure that nobody is creating monopolies to our tech environment. And for example, our Digital Markets Act is very much about that. So we don't want that the big tech companies who are having very dominant market position, that they are misusing their market power and blocking new innovations from the market.
That was the EU Tech Commissioner Henne Verkunen speaking to Bloomberg on the sidelines of the Viva Tech conference in Paris. And we'll get more on the tech story coming up next. This is Bloomberg.
anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market, you can get that from a bank, you can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
The markets have passed a major test, right? I mean, if the Hormuz Strait is going to be shut for 3.5 months and the oil prices sort of peak at 120 and then settle at about 80.
That's success.
That's success. Look at earnings, right? I mean, it's certainly better than any of us around the table would have thought.
Here we are with earnings having been upgraded and with corporates showing resilience. So, we're thinking about this world where effectively the more chaotic the politics becomes, the more governments spend. Fiscal stimulus is driving growth. That's driving corporate profitability.
I'm not sure that we're going to see a return to the pre-conflict pricing. I think there will now be always an inherent risk premium attributed to Gulf barrels. To any barrel that has to transit through the Strait of Hormuz, Iran has shown how effectively it can use that mechanism to control the market and to affect not only supply but pricing.
Whilst the conflict has been occurring, fuel prices have been incredibly high. The short term, we might see some sharper pricing, but I think that what we are going to see is that the market will normalise quite quickly.
I thought we had probably 6 to 8 weeks after the war started before we would start to see visible rationing in Europe once the ships stopped arriving. And the reality is households, businesses, markets have made numerous incremental adjustments.
Just some of the guests that we've spoken to this week as investors monitor activity in the Strait of Hormuz and take stock of where we've got to on the Iran story and where we go next. Let's turn with that in mind to today's markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore. Mark, good morning to you. Things pretty quiet today, aren't they, I suppose, with the US out, which means we take stock of where we've come in the week. And it's been a really big week in terms of central bank policy. We've heard from the Fed, new chairman at the Fed in the shape of Kevin Warsh, and some new hawkishness for markets to digest. Do you think that that's still having an effect? I see European bond yields are a little higher this morning as oil prices tick higher. Are we still dealing with that Fed hawkish narrative?
I think so. I think people are really registering that, it wasn't just the FOMC that was hawkish. Kevin Warsh himself was hawkish in terms of his focus on inflation was very key. I think one of the big takeaways was the restoration of Fed credibility, which has been undermined since Donald Trump came to power for his second term, or at least perceived to be under threat. And Kevin Warsh kind of gave a message that he cares about inflation, and therefore, the Fed wasn't going to be slacking its inflation fighting mandate. And that is a whole message for a regime change in US real yields. For the past 18 months, we've priced that Fed policy will be easier than orthodox monetary policy should, or orthodox monetary theory would suggest. And instead, he's going to go, no, we do care about inflation, and that means we're going to have to shift back into a higher US real yields regime. And that has consequences further, actually. It's very bullish the dollar. It's bad for speculative assets that depend on weak dollar and lower real yields. Precious metals are a perfect example. So I think that those kind of dynamics have more to play at. I think the dollar can strengthen, has more to play at, this kind of strength. It'll take a little bit of time to go feed through. It won't be a violent move. It'll be a slow readjustment. And I think we have more downside in precious metals like gold and silver.
Yeah, you wonder how long it'll take for that credibility to become a benefit in these markets. Mark, what do you think it is that's driving the sour sentiment as we head into the weekend? Is it just because we've got the thin volumes?
So I do think, we do have low volumes, not just US holidays in a bunch of places in Asia as well. So it's been low liquidity. I think that hawkishness is an issue, that kind of ongoing hawkishness, that move in yields, that move higher in the dollar. That is a tightening of financial conditions for the rest of the world. On top of that, of course, we've had a little bit of negative sentiment that the next stage of talks between the US and Iran aren't going to proceed immediately. And also with the IDF still hitting in Lebanon, there's I think a little bit of concern about the deal, especially given the amount of criticism the deal has got from previous Trump allies. I think there's a little bit more worry about how sustainable the deal is going into the weekend. So people are just taking a little bit of profit after a great run.
Okay, so it sounds as if, we've got US futures, but you're not going to see cash trading today. US futures are pointing weaker, suggesting that things could be difficult for Monday. But there's a long way to go. A lot of football, perhaps, for everybody to watch over the weekend. Mark, what are we missing that we're not talking about in markets that we should be giving more attention to, just briefly?
I think before the weekend, it is UK focused. So to me, the big move today is we're going to care about UK assets, how they're going to cope with the Burnham victory, and of course then precious metals we need to watch, because I think there's much more downside there.
Bloomberg Markets Live Executive Editor Mark Cudmore. Have a good weekend, and remember you can get up-to-date analysis and insight from Mark and the team by going to MLIV Go on your terminal. Now let's turn over to our stocks to watch this morning. Charlie Wells has got them for us. Charlie, what are you watching?
Good morning, Lizzie. So what I'm watching today really is some of these political risk factors on both sides of the Atlantic potentially spilling into these equity markets here in Europe. Let's start with ASML, right? They've had a really good ride, but Bloomberg has learned that Trump administration officials have expressed concerns that one of the key machines of this Dutch chip equipment maker may have made its way into China. Now, that would be in violation of U.S. export controls, and there's concern, though. The company has pushed back on these allegations, but what this Bloomberg intelligence analysis shows is that whether or not this is the case, what we do know is that the U.S. has increasing concerns over Chinese technology, and we could see this put pressure on a lot of these European semiconductor stocks in the future. So again, let's flip and take a look at some more pressure from Washington here in Europe, looking at that German pharmaceutical space, because U.S. Trade Representative Jameson Greer said yesterday night that the U.S. was opening a trade investigation into Germany over some legislation that it is looking to reduce spending on healthcare. Now, again, this is under Section 301, and this could hit some of these German pharmaceutical stocks, particularly Bayer, because they have about a third of their revenue last year came from the U.S. So potential tariffs there that could come from this investigation could hit the likes of these pharmaceutical companies. Now, again, these tensions can be resolved through talks. They take a long time to sort through, but this is putting pressure from Washington on these European companies. Now, let's end with UK home builders, because we have that by-election victory for Andy Burnham. The question here is, what is this housing policy going to be? What direct implications does this have for a lot of these companies, and what indirect implications as well for that bond market? These are the political factors that I'm going to be watching when markets open.
Charlie, thank you very much. Charlie Wells with a look at some of the sectors and stocks in focus. He was mentioning house builders there, Lizzie. We could add into the mix utilities. There could be implications there if we get a new Prime Minister. We could be watching the banks as well. Could there be taxation on the table, further taxation on the table for that sector? So we'll watch all of that. We also take into account the fact that European bond markets have started soft, and so we have slightly higher yields in Europe. which means however the market wants to reflect the Burnham win, we have to take into account the fact that yields might go higher anyway for reasons not attached to that.
Yeah, and when you look at the pound, you know, we are slightly weaker this morning, but you've also, as we were just hearing, got to factor in the dollar side of that. You could compare the pound to the euro as well, but these are really minor moves, in fact, that we're seeing right now off the back of this, and perhaps, as you say, not potentially completely to do with the politics.
Yeah, absolutely. We'll keep an eye on stocks, of course. At the market open, Goldman and Barclays strategists raising their targets for European stocks. A longer-term story about the US-Iran peace deal. We'll keep an eye on all of that this Friday, the 19th of June. The market open is coming up next. This is Bloomberg.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
Ebola can be a risk for all of us. The solution is not to close borders. The solution is to provide sufficient support.
Premieres June 26th, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Lisa Abramowitz in Rio de Janeiro, and this is Bloomberg.
Next week on Leaders with me, Francine Lacroix. I speak to the outgoing chief executive of BHP, Mike Henry, about his do's and don'ts for making deals.
You don't want to be setting strategy in the middle of a transaction.
Changes he made at BHP.
We needed to make sure that we had a portfolio that was fit for the future.
And how to ensure smooth leadership transitions.
Day one, succession starts now.
So tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome back to Friday's edition of the opening trade. A few minutes to go then until we get cash equity trading for this Friday morning here in Europe. We are trading here in Europe, not everywhere, but most parts of Europe, or many parts of Europe at least, are still trading. We've had some trade through the Asia session, but a number of key markets there are closed. And of course, the US is largely closed later on. So volume's not what they usually are. Perhaps that puts us slightly more in the dark. Perhaps that leaves us vulnerable to some price action that isn't all that convincing. We were certainly hearing that from Mark Cudmore on the Markets Live blog. So with all that said, this is the picture from yesterday over in the United States. it looked positive, didn't it? But that doesn't mean that we're going to go higher at the start of trade here in Europe. We are expecting to go a little bit weaker. Is this to do with the slightly higher oil price? We're back above $80 a barrel. That can cause some nervousness, certainly for European bond markets. We've seen European bond yields ticking just a little bit higher, maybe attached to that a delay to the start of the talks between the US and Iran as they continue from here. That seems to be something that the market is keeping in focus. And so futures, Lizzie, they are flat to negative this hour. What do you see in the individual stocks?
Well, I'm watching ASML because of this Bloomberg scoop that the US has told ASML it is concerned that China may have its hands on its chips tools. And ASML pushing back on the Commerce Secretary Howard Lutnick's suggestion, but we need to keep an eye on ASML at the open nonetheless. In Amsterdam, we have Prosus expecting a surge in profits on e-commerce, its growing e-commerce business, and it's increased its value in the stake it owns in China's Tencent, so watch them. And then here in Europe, in the UK, of course, we have the Burnham win in Makerfield to factor in. We also have retail sales rebounding in May, a boost, surprisingly, for the UK economy, so watch the likes of B&M and Currys, Anna.
OK, so we watch the UK retail landscape. We could also watch the UK banking sector, UK utilities. Could there be policy implications for those sectors? From Andy Burnham, if he can chart a course from Makerfield back to Westminster, that bit seems to be done. But does that take him to number 10? That's a story. Well, we'll watch it unfold over whatever timescale it unfolds. For the moment, though, let's focus in on the start of the European trading day. And we see a little bit of movement on the FTSE 100, but really not very much. Pretty range-bound. Stock 600 flat to negative. The FTSE 100 flat to negative as well. So we're watching all of those UK dynamics. We've seen a number of broker notes this week talking about the longer-term, medium-term maybe impacts of what we've seen in the Middle East. And if the peace can hold, upgrading expectations of what that means for European stocks. Certainly Goldman and Barclays have been talking about that this week. So we watch that. Are we still factoring in a bit of the hawkish dynamic from the middle of the week from the Federal Reserve? That's the view over on the Markets Live blog, at least in places. So we've got a number of dynamics as we end the week, perhaps a little more quietly than it started, Lizzie. A lot to say about UK politics, but broadly speaking, we're without a lot of global players in this global stock market.
Yeah, well, as we break it down by sector across the continent this morning, Anna, energy is the best performer. That's up more than just about 1% at the moment because we've seen oil ticking higher as traders have been assessing what is happening in Hormuz as flows are getting back to normal, but also the lingering tensions that we were discussing earlier on, the attacks on Hezbollah by IDF forces in Lebanon. So you're looking at Brent currently up just a touch, up 0.1% at $79 a barrel. But elsewhere in the sectoral basket, healthcare, consumer products and services doing well. Basic resources, bank and travel down at the bottom of the basket. Just under half of sectors in positive territory. Now we get to the gilt open as well, because of course you've talked about the politics, Anna, and the 2-year gilt yield's up 4 basis points at 4.22%. We're also up 4 basis points on the 10-year at 4.79%. At the long end, again, up 4 basis points at 5.49%. So clearly the Burnham victory perhaps was not fully priced in, that we're seeing yields going a bit higher. But it is a broader European story that bonds are dropping because we have seen, as I say, oil prices rising at the open.
Yeah, absolutely. Yeah, that oil price rise being factored into European bond markets and then also overlay the UK politics adds a little bit more fire perhaps to that gilt story this morning. Let's have a quick look at some of the movers then. We've got Novo Nordisk to the upside. We've got LVMH, Total Energies, BP. So there's the oil price moving higher, having that impact. ASML we've discussed, and that story is cutting through. That stock is down by 2%. You can see on your screen there, UBS, HSBC, so some of the banking names also under a little bit of pressure this morning. Let's talk about where we go in these markets and talk about what this all means for European stocks and European investment strategy. We're joined this morning by Eric White-Ennis, JP Morgan Private Bank EMEA Head of Investment Strategy. Eric, nice to speak to you this morning. It does feel as if we've got the UK politics to talk about, but absent that, we're sort of limping into the weekend in a sense. There's not quite so much news flow to get our teeth into as there was earlier in the week, but we have had plenty of it, haven't we? From Iran to the Fed, and now with the UK politics, I guess. What have we learnt this week that has changed your view on European stocks, if anything? Because we've covered Goldman's and Barclays turning a little more positive on the European stock front.
The overall trajectory of the global economy looks sound. We've had a positive cycle of earnings growth that's mostly been led by the U.S. We're also seeing positivity here in the region. And I would say that while there are fragmentation and instability-oriented aspects of some of the picture of the overall globe right now, there is still a positive impetus of business momentum. There is an innovation cycle that's occurring. There's a tremendous earnings growth pattern that is mostly being led by the U.S. And I think that positivity in terms of risk appetite, sentiment is starting to feed through a bit more globally. We think it's a good time to be rather front-footed and be well invested.
Okay, so be well invested. The profit story matters to you then, the earnings story from some of these big players within the AI space. What's the best way for that to broaden into Europe then? Obviously there have been plays around electricity, energy providers, that sort of theme, connecting the dots with some of the air conditioning providers, pipeline providers, all of that kind of infrastructure, AI in industry. That is an area that Europe has been focused on. What's the best play for the AI trade into Europe?
Exactly. The powerful nature of this AI theme is genuinely expanding in terms of a lot of the enablers of that cycle. So industrial companies here in the region, those that are helping to provide power, infrastructure, data centers. There's a bit of an increased focus on so-called neo-cloud providers in the data center space that can ideally provide the data center capacity that the tremendous compute demand that AI needs, ideally sourcing power at the same time with a sustainable lens if possible, and then delivering that all the way up through the orchestration layer. That's one of the spaces that looks interesting, is part of that enabling component of the AI ecosystem. And again, it really does mostly come down to the earnings delivery that has been coming through. There is a genuine illustration of proof of concept of the returns of what AI is helping to deliver. It's this very effective formula of a decrease of costs, an increase of efficiency of companies that are utilizing AI, translating into productivity, profitability, and earnings.
And you're seeing that proof of concept already?
Yes.
Yeah.
But that's in the longer run, surely. We're not underestimating the inflationary cost of building AI in the shorter term.
That's a great question, because there is a sensible narrative in our view that over the longer run, AI can have some deflationary aspects to it.
As Walsh has argued.
He has indeed. And there was certainly a bit of a spicy Fed meeting earlier this week, which I'd be very happy to talk about. But in the near term, yes, you're right. There is a demand for power of all kinds of different types. One of the things that's a little bit interesting about this is partially due to that fragmentation-oriented topic that I mentioned earlier. There's an increased focus on sourcing energy of all types. And it does seem as though it's providing a bit of a tailwind behind the sustainable space, because you have traditional forms of energy. Yes, they'll probably still be here a lot longer than many people expect. But sourcing energy a variety of other different ways is probably a component of this broader AI theme.
Okay, so leaning into renewables as part of that build-out when it comes to AI. Let's talk about the Fed then, because there is this debate about whether the hawkishness of the FOMC under Kevin Walsh outweighs the benefits of the credibility that we seem to be finding now when it comes to the impact on stocks.
Sure. So some thought that this would be a bit of a nothing burger, so to speak, of a first initial meeting, that he would maybe move at snail's pace, so to speak, in terms of easing into things. But there were some changes that were a little bit notable. The taking down of forward guidance, a statement that was 60% shorter than previously, the announcement of various different task forces and things along those lines. So he is clearly looking to put his stamp on things to a degree. And I would argue on the credibility point, it's probably pretty healthy that he came in, looked at the data. Yes, there was a bit of a hawkish tilt to some of the narrative and what the expectations are of some of the members. But given the fact that there were some questions out there about the degree of independence of the Fed and what was going to guide their ultimate decision making, he seems as though he's being guided by the data, focused on ensuring price stability, which is one of the two halves of the Fed mandate. And that's probably a responsible and a healthy thing.
So that's the backdrop then when it comes to rates. And Eric, you mentioned in your notes, and you've referenced this word fragmented a couple of times already whilst we've been speaking. And one of the big examples of that this week has been around AI and the way that AI sovereignty has suddenly become part of the narrative narrative since policy developments over last weekend from the US. How do you turn that AI sovereignty into something that doesn't just create political tension and inflation and cause Europe to fall behind? How do you turn that into an investing opportunity?
So I'm enthusiastic about some of the headlines that have come out about our country here this week in terms of the AI innovation and, the new companies that are coming forth, the amount of new startups that are happening right here in the UK. Ideally, there's a bit more that happens there in terms of the continent, and no doubt the US is leading, China is competitive, but there are some good burgeoning stories about what's happening here in the UK. And I think that part of the way to address exactly what you're talking about, that sovereignty issue, is where can you source power, where can you source data centers, and where can you help spur and encourage innovation, and ideally for various countries doing so at home while still being participants in the global story.
But across Europe, do we have enough tech to outweigh a hawkish central bank?
So the ECB moved in a bit of a inflation battling direction, and that is their mantra, to always be focused on prices. But the subsiding of energy prices should be helpful in terms of what they ultimately have to do on a multi-quarter basis. Same with the Fed and other major central banks. Take the U.S. story for a bit of a corollary to that. The propensity for energy prices to lead U.S. retail gasoline, the price at the pump lower, is something that is playing out. Similarly, if energy prices continue to subside, that should help some of these price pressures and then alleviate some of the requirement upon these various central banks to be too hawkish. Ideally, they don't need to be all that hawkish.
Eric, we've been talking a lot about the UK politics this morning, and I wonder if that throws up any thinking around UK assets for you. Is there a sort of wait and see dimension to this if we don't know exactly where the UK political story, the fiscal story goes around either gilts or stocks or the pound?
So my perspective on this is that it feels as though it was widely expected that we would have the result that we had overnight. The pound has done, I don't want to say nothing, but very minimal oriented move overall. Yields globally were moving higher in recent months, but they are definitely a good distance off of their highs here in the UK. So it is a bit of an era of fragmentation and political winds of change and things along those lines. And I do think that the market is attuned to that and prepared for it. Don't think it should have a huge factor on where one decides to ultimately invest.
Not even sectorally, because you've got JP Morgan talking about, buy utilities because the nationalisation narrative's overdone. Stay away from house builders because he might do a rent freeze. Do you just not want to bet on policies like that because we just don't know which Andy Burnham we're going to get, the Brownite, the Blairite, the Corbynite?
So I think that focusing on what the private sector is doing on its own merits is typically the best way to invest. It's definitely an era of eventful geopolitics, but trying to see through that over the long run is typically what we think is the best type of approach, whether it's here in the region, globally, or otherwise. It is a pretty consistent pattern over time that geopolitical change and different events, they tend to have shorter term impacts, and taking the longer lens view tends to be more effective in our approach.
Okay, Eric, good to see you. Thank you for coming in. Eric, why tennis? JP Morgan Private Bank EMEA Head of Investment Strategy. Thank you. Well, let's take a look at the core six this morning. As we say, it is a day of thinner volumes, but here's what you're seeing across these six stocks. We're weaker on Schneider Electric. ASML, as you would expect, down 1.5% off the back of that Bloomberg scoop that the US has told ASML it's concerned China may have its chip tool. But you're seeing gains across the others on our board. LVMH, for example, up 1.9%. Perhaps a bit more relief when it comes from the Middle East conflict, Anna.
Let's get some individual stocks to watch, shall we now? Charlie Wells joins us with a briefing. Charlie, good morning.
Good morning. So we're taking a look first at ASML. Given those concerns that the Trump administration, Bloomberg has learned, has expressed concerns that some of those machines may have made their way into China, those chip-making machines. ASML down about 1.5% this morning. That could be related to some of those potential allegations there. Let's flip, though, and take a look at Vestas. That is the Dutch wind turbine company. They're up some 3.5% this morning. JP Morgan sees some positive catalyst potentially potentially coming later this summer on a potential increase in guidance there. They see strong momentum coming from a number of their business units, both onshore and offshore, so up about 3% this morning. Let's flip and stay in the same country, looking at Novo Nordisk, because they also got an upgrade this morning. And again, we have news, so they're up about 3.8%. We've got news that they are opening obesity drug incubators across Europe. So this could help them diversify. We know that key for them have been those weight loss drugs, finding new ways to develop those, really giving some positive uplift to Novo this morning. Let's take a look at Fresenius, because this is related to some pressure coming from the United States. This is that German pharmaceutical company, down a bit. And what we had been wondering about was how some of these German pharmaceutical stocks could start to digest these Section 301 investigations, this Section 301 investigation from the U.S. into Germany over some healthcare spending legislation. So watching that space, seeing that down just a tad. And let's end with Unite Group. That is the UK student housing, student accommodation company, down some 4.6% this morning. Now, a major shareholder has been offloading stock. We know that this is a company that's trying to focus their portfolio more. They're trying to focus more on high quality, but that big share supply this morning hitting that stock.
Charlie, thank you very much. Charlie Wells with details of some stocks that are moving this Friday, the 19th of June. Coming up, we'll delve into one of the companies we've already mentioned a few times this morning on the tech agenda. We'll be taking a look at that story about ASML as the US raises concerns that China may have one of the company's top chip-making machines. ASML says it doesn't. We'll bring you the latest on that scoop, though. That's next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs. You know, they have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Welcome back to the opening trade. 17, 18 minutes, let's say, into our European trading day. And overall, not going anywhere really on these European stocks. The German market getting the best of the gains of the major markets, up by 0.2%. We see a little underperformance coming through on the Dutch market as a result of ASML, which is heavily weighted. Now, Bloomberg understands that the US has expressed concerns that one of the top-of-the-line EUV machines made by the Dutch giant ASML has made its way to China. That would be a violation of US-led export restrictions. ASML, for its part, says they've never shipped an EUV machine to the country. We're joined now by Bloomberg's Sarah Jacob, who is in Amsterdam and was involved in this story. Sarah, good to have you on the programme. So talk us through why exactly this is a big challenge for ASML.
Good morning. And, to just put it into context, ASML is the only maker of these sophisticated lithography tools that they use by some of the biggest chip makers. They're crucial to making advanced chips. This particular machine, the EUV machine, the extreme ultraviolet lithography machine, is the size of a school bus. It can cost about 200 million euros and requires constant upkeep by ASML employees. So for the context, ASML has never been able to ship this tool to China because of curbs imposed by, the US-led government, and because the US government seeks to curb China's advances in the semiconductor industry. And US has pushed its allies, including the Netherlands, to limit sales of, these sort of equipment to China. So we've told that the Commerce Secretary outlined concerns to ASML senior leaders that, an EUV machine may have made its way to China, which, would be a significant violation of export, restrictions if this were true. China, ASML, of course, denying that it has ever shipped such a machine to China.
Okay, and what else has ASML been saying to this kind of accusation then, Sarah?
Yeah, basically ASML's been, we have heard that they've pushed back against this. We've heard that they've also, circulated a document saying that they have never shipped such a machine to China. And, it's a very difficult machine. It's taken them years to make. It's not something that, can be easily moved. It's, as I said, it's the size of a bus. And they say that they have, clear visibility on where their machines are. And they've really pushed back against this.
And thinking about the utility of these EUV tools then, Sarah, and what they can do for countries who are able to buy them and to import them. If China doesn't have these EUV tools from ASML, is that a key constraint then on Chinese companies?
I think the fact is that, like I said, this machine, it's taken ASML years to make this machine. We haven't seen a comparable machine anywhere else. And it's a critical tool without which you can't make advanced chips. So we have been hearing from China, from Huawei, that they are making progress without an EUV chip machine. It needs to be seen what happens with that. But again, it is critical. And that's kind of the reason why we've seen these export-led curbs to sort of from the US administration and pushing allies to do the same to stem China's advances in the semiconductor industry, because they have huge implications for the AI boom and their applications in the military space as well.
Okay, ASML shares down 1.7% at the moment. Sarah, thank you for bringing us this story. That's Bloomberg's Sarah Jacob. Now, it is 10 years this month since the UK voted to leave the European Union, and contrary to some forecasts, the City of London has hung on to both jobs and its contribution to the broader UK economy. The underlying story, however, is more complicated as the missed opportunities of a lost decade start to stack up. We're joined now by Bloomberg's Laura Noonan, who co-authored today's big take on this very subject. Good morning, Laura. So just walk us through how London has withstood the initial challenges of Brexit.
Good morning, Lizzie. Thank you for having me on the show today. So, as you said, initially the impact hasn't been as dramatic as some feared. So as those who were following this 10 years ago would have seen, there were fears of tens of thousands of jobs leaving London, particularly the large banks just like mass transplanting a lot of people to the continent. That hasn't happened, but what we have seen is key functions moving to London or moving from London. We have seen the steady erosion of London in certain businesses. We have seen London's equities market, so the number of initial public offerings done in London has really fallen quite significantly. So there has been an impact. It's just very hard to isolate the impact from Brexit, also from the impact from other things which the UK has done since it left the EU. So there's also been changes to taxes for individuals. That has driven a lot of people out of London. It's hard to say that's directly a Brexit consequence, but it is something which has made London more attractive for some of the most senior, most wealthy people who were living in London. And I think the thing about the numbers is not everyone who left was an equal contributor to the UK. So if you have not large numbers of people earning less leaving, but you have a high number of the really wealthy people leaving, that can have a bigger impact, obviously.
Yeah, that can have an impact on the statistics, at least. So is it just the case then, Laura, that, OK, so the UK may not have lost out to Europe as much as feared on some fronts, but maybe it's just lost out to other places like New York instead? And, I mean, has Europe got its act together to try and create what it lost in losing London within the EU?
So there's a lot there. In terms of the US, I think in terms of other regions, I think the US has a lot of energy around its financial centre now. Now, the US financial centre has become more dispersed, so it's not just New York. We have a lot in other cities. We have New York, we have San Francisco, we have increasingly Texas, Florida, other places. But there's certainly a lot of energy in the US, a lot of growth in the US. Some of the Asian markets, some of the Middle Eastern markets are growing very strongly as well, and they are really targeting new areas of finance as well. So some of the fintech space, some of the stablecoin space, some of the private market space, particularly in the US, has grown very strongly. In terms of Europe, Europe has been on a long journey to try to build a proper capital market within the EU, and I think there is a feeling that they are finally getting some momentum behind that journey, which will allow them to really build out their own capital markets. And if that happens, I think that will see the centre of gravity for some activity move to Europe. So one of the big questions has been around the clearing of euro-denominated instruments, and the EU has so far allowed that to continue in London for all kinds of mostly operational reasons. Now, there is a school of thought, and people talk about it in our piece, that if the EU's own capital markets were to become broad and deep and capable of creating a proper clearing infrastructure, then you could see a move to take the euro clearing from London back to the EU and to actually do that, and that would also be quite a significant loss for London were that to happen.
Laura, thanks so much for bringing us this big take. That's Bloomberg's Laura Noonan. Thank you very much. Well, speaking of the UK, let's just check in on gilts, shall we? Of course, we had that victory for Andy Burnham in the Makerfield special election. There is a little bit of underperformance for UK bonds this morning across the curve. You're looking at the 10-year gilt yield up 6 basis points at 4.8%, for example, compared to the 10-year Bund yield up 3 basis points. But, Anna, this is a European move because we've got oil prices rising this morning. It seems like a lot of the movement in gilts, I mean, the Burnham victory seemingly priced in quite a lot.
Yes, there's sort of evidence of a Burnham effect, but also evidence of other things happening in the European bond space. That seems to be where we are. And we've got oil prices, as you say, back above $80 a barrel as we watch the Iran story unfold. We will talk more about fixed income markets, though. We'll be joined by David Zahn, who'll be with us from Franklin Templeton. We'll talk about the gilt story and other things as we head into the weekend. This is Bloomberg.
In case you missed it on Bloomberg Deals. Can you rival the size of those? I mean, I know it's a very different model, but do you see yourself growing to a size of a Blackstone, of an Apollo?
Over time, for sure. We'll have 25 to 26 billion of fee-paying assets.
Does the way you invest need to change then? Because these are huge platforms that have many different types of assets they invest in.
The beauty of our strategy, we invest in the largest companies in the world, kind of large cap, mega cap companies, mostly based here. If you look at Berkshire over the last 60 years, it's built most of its value running and becoming effectively an insurance holding company. That's what Buffett has built over time. Right. And it was his successful management of the assets. When you heard Buffett buying Apple, it wasn't Buffett buying Apple. It wasn't even Berkshire buying Apple. It was the Berkshire insurance subsidiaries buying Apple. And we're going to do the same thing. The goal of Howard Hughes is to build a long-term, diversified holding company akin to what Buffett has done over a long period of time.
Don't miss Bloomberg Deals live every week.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
Ebola can be a risk for all of us. The solution is not to close borders. The solution is to provide sufficient support.
Premieres June 26th, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It is Friday morning. This is the opening trade, 30 minutes into today's session here in European equity market terms. And we're pretty flat, actually, going nowhere very quickly, entirely unchanged on the Stoxx 600 here in Europe. We do have some divergence, though. The German market doing OK, up by 0.3%. Really no politics impact that you can discern on the FTSE 100. It's pretty flat right now, in terms of the overall movement, at least. The CAC 40 is up by 0.1% or two. And we do see some movement in some of the underlying names. ASML is in focus. That's weighing on the Dutch market. But Lizzie, overall, not a huge amount of movement on these European stocks. We're without quite a lot of players globally from Asia to the United States today, and perhaps that's having an impact.
Yeah, and you can see that when it comes to the volumes, we're down 53% compared to the 20-day average, partly because we've got the Juneteenth holiday stateside, so thinner volumes around the world this morning. And we're pretty balanced when it comes to the moves higher and lower on the Stoxx 600 this morning, hence that flat benchmark that you were just showing us. Let's take a look at some of the individual leaders then for a bit more action. One of them this morning is Novo. It's been raised to buy at Nordea, up 4.3% this morning. Vestas in the wind sector also up 5.2%. And we are watching as well Pandora because of silver prices falling drastically this morning. So actually up 1% on that stock. Now, if we flip over to the laggards, we've been talking about that Bloomberg scoop on ASML. The US telling the company that it's concerned that China may have got its hands on its top chip tool. So those shares down 1.6% at the moment. Charlie Wells flagged Unite as one to watch for us, the student housing owner. They've got investors offering shares at a price range that's a discount to yesterday's close. So Dow down 4.1% off the back of that. And LSEG, the London Stock Exchange Group, also in focus, actually set for its worst week since 2022, down about 9% across the week, down about 0.25% this morning, Anna.
Lizzie, let's get up to date with some of the other news flow that's on our agenda this morning. The US Vice President, J.D. Vance, is not going to Switzerland for negotiations with Iran today. Despite the delay, Vance told reporters that the clock has started ticking on the 60-day countdown to reach a more permanent agreement. He also added that he believed the technical talks would begin at some point this weekend and that he would eventually travel to Switzerland. Bloomberg has learned that the U.S. Commerce Secretary Howard Lutnick outlined concerns to ASML's senior leaders that one of its top-of-the-line machines may have made its way to China in violation of U.S.-led export restrictions. ASML says they've never shipped an EUV chip machine to China. And Greater Manchester Mayor Andy Burnham won a decisive victory for the ruling Labour Party in a by-election that delivers him a pathway to try to challenge Prime Minister Keir Starmer for his top job. Lizzie.
Well, we're not seeing too much of a gilt move off the back of the politics, Anna. It seems like the Burnham victory in Makerfield was priced in. We're just seeing the 10-year yield up 5 basis points at 4.8%, which is just a touch higher than elsewhere what we're seeing in Europe, because, of course, we also have higher oil prices, and so this is a broader European story this morning. But let's get a view now from David Zahn, Head of European Fixed Income over at Franklin Templeton, who can talk to us more about these bond markets. Do you think then the Burnham win was already expected? Are we going to see yields spike further if we get more developments when it comes to a leadership challenge, perhaps?
Well, I do think it was priced in. We will see, I think, more volatility in gilt yields as we move forward with, are we going to have a leadership contest? When is it going to be? Is it going to be a coronation? Is it going to be an outright fight? And then the other thing we still don't completely understand is what all the policies are. Yeah. We've heard lots of different things and other ones that counteract that. So it's really going to be what are his true policies, and then we'll have to go forward from there.
I mean, how bad would it be for the gilt market if, one, you didn't have Starmer just resigning and it was a protracted leadership challenge, and two, if Burnham were to be the Prime Minister, if he called a general election to get his own mandate?
Well, I think on the, how much of it is a fight of Starmer pulling out or, we have an outright fight, I think markets really hate uncertainty, and so just not knowing what's happening will be difficult. The chance of a general election, given how well he did, I think is a possibility. And if that's the case, then we do have to think about when would he call that, and also, what platform would he go on? And there's lots of rumors going around of what would be his key points, but most of those would move spending higher and push the government more to the left. So I think that would be a concern for the gilt market.
If anybody in his team is watching, David, and they're looking at what kind of fiscal room for manoeuvre exists from a gilt market perspective, and we rely on the kindness of strangers, I suppose, is the phrase that's often used to describe the UK gilt market. So what kind of room for manoeuvre is available? We have these fiscal rules. They're created by government. They can be ripped up by government, but gilt markets like something to hang on to. So what kind of room for manoeuvre is there?
Unfortunately, there's not a lot of room to maneuver. I mean, we've seen that in the past budgets, where if they want to do any spending increases, then they have to increase taxes. So I think we'll have more of that. But I also think the UK is getting close to its top tax take, and it's really, if you do much more, you start actually hitting the economy and slowing growth. And so I think from that perspective, they don't have a lot of room to maneuver unless they cut spending elsewhere, which at least up to date they've not been willing to do.
And if they want to get super creative and maybe not increase the tax take but change drastically where it comes from, do gilt markets have a view on that, or they just care about the reliability of the take forecasts, I suppose? I'm thinking here about if they tax income less and wealth more.
I don't think the gilt market cares as much as long as the revenue is coming in, but obviously the more you start going after things that aren't income, it's not as predictable, and so then that I think would be an issue for the gilt market.
Is the gilt market kind of right about predictions for the BOE pricing this year?
Yeah, I think the Bank of England, their main goal would be to do absolutely nothing this year, and actually just get to the end of the year the same where rates are right now, because they have, we have weak growth, we have a job market that isn't doing great, we have inflation that the last number was a bit better, but it's still a bit sticky, and also we have all this political uncertainty, and so we know that the government in general will spend more, which means that they probably don't have to do as much as cutting, but really they need to be helping the economy, not hiking up rates to actually cut it off. So I think in general they'll just try to get to the end of the year and say we've done nothing.
But how much is that because of the Fed and the ECB being hawkish, that it can't move to cuts, so it just sticks in the middle?
Well, I think for them, they're in that really difficult spot that growth is slow, and they have sticky inflation. Inflation has come out better than expected, but I think from that perspective, they're just trying to walk this tightrope, and I think that they just kind of hope they don't have to touch anything and let the other central banks kind of move to their more hawkish stance.
David, we wanted to speak to you this morning about gilts, which we've done, but we also wanted to talk to you about kilts, which is something new, or will be new, perhaps, within 6 months, 9 months maybe. So we are expecting at some point that the S&P, which now has a majority, is going to debut raising its own funds via international bond markets and kind of building up that credibility, I suppose, on its own. What kind of spread over gilts would you want to see to make this attractive as a buying opportunity?
Yeah, I think it will depend on how they bring it forward, what disclosures they give, is what their tax regime is going to be going forward, because they have higher taxes north than they do in the south, and we would expect probably 50-60 basis points over gilts, so a meaningful premium. But the other thing we have to be cognizant of with gilts is if we get any hint that they're talking about having another independence referendum, then that will be your barometer of how well it's doing. And so I think that we saw that in Spain with Catalonia when they had their discussions of that. The spreads on the local debt went up a lot. So I think that's something else they kind of need to keep an eye on, because it's not a zero-sum game. They will be giving something more to the market as far as disclosure.
So is there a time horizon that you'd be comfortable holding gilts for? Because that's a bet, surely, from what you've said, on when there could be independence or an independence referendum. And I'm thinking about the by-elections overnight. Reform didn't win any of the three, but surely if they did win a by-election, every time they did, there would be this sense that Scottish independence could be closer. You have more nationalist sentiment.
I think it will be really over the next year or so, or 2 years. I think that'll be in the background. But as we see more of this build and we start to see, does the S&P take back more seats at the next general election, then I think you could see that really start to come back in the forefront, and that's when it would be interesting to watch what that spread does.
And from a fixed income perspective then, David, I mean, this is because ratings agencies have said that these ratings are based on the UK holding together. Yes. This isn't just because the bond markets have decided they think it's important. But what's the rationale? Why does that matter quite so much, do you think, to these ratings agencies? Why have they made that a condition of these ratings?
I think it's really because a lot of money flows from England to Scotland, and actually there is a net benefit to Scotland to being part. And if all of a sudden, yeah, exactly, I'm going to make them very popular. But as long as that maintains, then it helps with their credit rating. But if all of a sudden that was to disappear, if they were to go independent, then they'd have to figure out how do they fill that. And I think that would be the question that the rating agency would bring.
But then that comes back to the Burnham victory, because if, for example, he gets to be Prime Minister, he's just been the King of the North, Greater Manchester Mayor. Surely he's got to push more devolution if he were the Prime Minister.
Well, he can do more devolution as long as everybody stays together. Is when they start saying, actually, we want so much devolution that we're actually going to go our own way. And I think that's when the market would get very concerned about that.
David, thank you very much. Really interesting conversation, no doubt one that will continue. David Zahn, Head of European Fixed Income at Franklin Templeton. Just wanted to, as we were talking about central banks briefly in the midst of that conversation, just worth flagging, we are hearing a little bit from the BOJ this morning. The BOJ Governor, Kazuo Ueda, has been discharged from hospital, so that is good to hear, of course. This was notable this week because, of course, he was not at the BOJ's most recent policy meeting.
Yeah, and we're told he's going to be back to work on Tuesday while continuing his hospital visit, so we wish him a speedy recovery. But coming up on the programme, the US and Iran have postponed the start of their negotiations over a permanent peace and restricting the Islamic Republic's nuclear programme. We'll talk about that next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced. where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Energy prices have come down quite a lot, but they're still above where they were before this conflict started. Inflation is higher than we expected it to be. I really believe we would have been back at the 2% target by now, but it is good news. But of course now what we've got to do is get it back to 2%. I think holding is the right position to be in at the moment for that. So I think it's a sensible decision in the light of the news. I'm encouraged, but we've now got to get inflation back down to 2%.
Bank of England Governor Andrew Bailey speaking there after the central bank held interest rates yesterday, and how the geopolitics is feeding into the domestic UK economy. Well, let's turn to the Middle East then, shall we? The US and Iran having postponed the start of their negotiations over a permanent peace and restricting the Islamic Republic's nuclear programme. It's unclear why the talks, which were meant to start in Switzerland today, have been delayed, although Israel and Iran-backed Hezbollah militants have clashed overnight in Lebanon. Let's get the latest now with Bloomberg's Abir Abu Omar. She joins us now from the region. Abir, this cancellation seems a bit abrupt. Do we have any idea why the meeting was called off?
Good morning, Lizzie. All we're going with right now is a statement that we got from the Swiss government that said that the meeting was cancelled without giving any clarifications on the reasons behind that. Now, we were expecting Vice President J.D. Vance and the Parliament Speaker of Iran, Ghalibaf, to be in Geneva later today to have the official signing ceremony. We're just bearing in mind that the official MOU, the 14 provisions of those that Bloomberg had reported on earlier this week, had already been signed on Wednesday by Pezeshkian, the Iranian president, and President Trump in the United States. And so we're going by the fact that the clauses in those, the wider negotiations, have already taken effect. We're certainly seeing a trickle of movement in the Strait of Hormuz, and that is the major clause in that MOU, the reopening of it. So Central Command from the United States side had already said that the naval blockade has been lifted. We're hearing similar remarks from the Iranian side as well, and we're seeing ships linked to GCC countries, including Qatar, including Saudi Arabia and Kuwait, making their way either in or out of the Strait of Hormuz laden with oil shipments and LNG. Now, the main issue here, the one that we are considering, the one that is being reported on, is those clashes in Lebanon. Overnight, the IDF has hit southern Lebanon, again, particularly the village or the town of Nabatiyah. Over a dozen people killed in Lebanon, 4 IDF soldiers soldiers killed. And look, Lebanon has been a sticking point for the Iranian side, with Iran refusing to go into wider negotiations unless those hostilities against Lebanon cease. What we're getting from the Israeli side, officials there, including National Security Minister Ben Gvir, saying that this is quite inflammatory, but I quote him saying the entirety of Lebanon must burn, and that Israel will not cease its hostilities against Lebanon because it has to bear in mind its own national security concerns. So it's difficult to say at this point how those two sides are going to square up. That's the United States and Israel. J.D. Vance saying that President Trump is bearing in mind the American interests in this, telling Israeli officials that they have to bear in mind that the United States is their only friend at the time being. So it's not quite clear how this will carry on into the weekend, or if it has a wider impact on the 60 days of negotiations. But oil prices this morning were going down, Lizzie, and then at the news of this visit to Geneva being postponed, you see them ticking up slightly afterwards at $80 a barrel or so when it comes to Brent prices. So developments there, not sure if we've hit a wall, but it seems that for now the main concessions when it comes to the Strait of Hormuz and the 60-day period of negotiations about Iran's nuclear program seem to be still very much intact.
Abia, thank you very much. Bloomberg's Abia Abu Omar in Dubai with all the latest dynamics around Iran and indeed Lebanon. The closure of the Strait of Hormuz has sent shockwaves throughout the global economy, of course. We've talked a lot about fuel prices. We've talked a little about fertilizer costs. And Bloomberg has been tracking the food supply chain and how higher costs could hit consumers. One of our EMEA agriculture reporters, Eleanor Thornper, joins us now on set. She's been taking a look at this story. Eleanor, very good to have you on the programme. Thanks for being with us on the opening trade. So we've seen shocks for the consumer in a number of formats over recent years. Ukraine, of course, that led to incredible inflation in parts of Europe. So is this shaping up to be another major food price shock? How does this compare?
I mean, it's difficult to tell. I mean, I'm not an economist per se, but I would argue that this isn't... I don't know if we'll see a repeat of quite the dramatic spike in food prices that we saw after Russia's invasion of Ukraine in 2022. But I would caveat that and say it's not necessarily the best comparison, because the bigger issue now is that consumers are already coming into this period having dealt with high food prices for quite some time. So if you look at the UK as an example, food prices now are about 40% higher than they were in 2019. And, you know, often research shows us it's quite rare for food prices to climb back down to pre-crisis levels. So even if the latest disruption here is, you know, only results in minor increases to food prices, it's landing on households that have been dealing with higher prices and having to adjust their spending for quite some time. So I don't know if the risk is another emergency inflation situation, but if you're someone that was hoping for things to come down,
don't hold your breath.
Yeah, you're going to have to cling on a bit longer.
Now, Eleanor, you've been looking up at a particular case study, the pan au chocolat, and I know that there are some floating around this studio, but they're nowhere near me. Well, tell us the story of this through the pan au chocolat.
Yeah, I mean, it's interesting. I think most people don't fully appreciate how food and energy markets are kind of interconnected. So what we found with reporting on this story is that every layer and every ingredient had been impacted by the conflict in one way or another. And you don't need to look super hard to find examples of that. I mean, farmers, as you say, they need fertilizer, they need diesel. Millers are very energy-intensive operations. Trucks, they need diesel in their tanks to kind of drive food around, right? So even less obvious things like plastic packaging that a lot of our food comes wrapped up in, that's all tied to petrochemical markets. So while the headlines have kind of been focused on oil and gas, it's not that food has kind of got away scot-free from this. Oh, here they are. So yeah,
they have arrived.
Yeah, by the time that a croissant reaches a cafe or a London TV studio, you know, it feels like the conflict is thousands of miles away, but the actual impact of it is going to feel closer to home because the impacts are going to start being baked into the price of one of those.
Baked home. Eleanor, thank you very much. That's Bloomberg's Eleanor Thornberg. We've got 3 pan au chocolat on the table, but we've got 4 of us around the desk, so I don't know how we're going to share those.
Well, I'm not fighting a pregnant woman, so I'm just saying that. Eleanor, thank you very much. Eleanor, thank you for joining us with that story. Talk of food and inflation takes us closer to our next conversation, perhaps. Let's talk about the markets with Adam Linton from our Markets Live team. Adam, where do we want to start our conversation today? Should we start on the let's start on the events overnight around the victory for Andy Burnham and what we've seen there? Because, I mean, it is having something of an impact on markets, maybe, but you kind of have to squint to see it because oil prices are higher, so bond yields are broadly higher anyway.
Yeah, you're definitely right to point that out. If you look at your charts, it looks a lot more dramatic than it is. So, the downside we've seen in gilts, that's just more a mechanical byproduct of what we've seen in the energy markets. So things actually do look a little bit more steady in that respect, but it's early days here. This is a long process which could play out over time. I think from a market's perspective, obviously I don't want to speculate exactly how this will play out, but the thing I'm looking out for now is, OK, we're going to get a leadership race. What form does this take? Do cabinet resignations mean that PM Starmer steps aside and it's effective coronation for Andy Burnham? Or is this going to be a more protracted leadership race in which there's a bit of a risk Burnham may need to veer a little bit more towards the left, and that could unsettle the gilt market? But also, it's not just Burnham's position that's important, OK? The appointment of Chancellor, that's crucial. If you look at, intraday moves in gilt yields over the past year, the biggest intraday rise was Burnham entering the race. Number 2 was when Starmer didn't back Rachel Reeves in Parliament. So her position is important. But ultimately, we are kind of flying blind a little bit here. We know he's going to respect the fiscal rules, or at least he says he is. But ultimately, his constraints are kind of pretty tightly binded. We saw the borrowing data this morning wasn't good. So in the end, we may see a policy mix which is relatively similar to what we have now. But the fine line that he needs to tread means there are risks ahead for the gilt market.
Yeah. OK, well, yeah, that UK borrowing figure coming in this morning, the deficit of £23.3 billion in May, the redhead. I just want to turn broader because, in the context of a big week, geopolitical news, huge, the memorandum of understanding between the US and Iran. We had been warned that this would be the moment that you'd get the rotation out of AI in the US into the European trade again and EM as well. But then this morning, Goldman's saying the AI trade's alive and well. Do we just forget about the rotation?
To me, this market kind of seems a little bit similar to kind of what we saw in early April, and then throughout that, whereby that ultimately sentiment was kind of buoyed as long as we're kind of heading towards something which resembles a final peace agreement, and the market acknowledging there will be some sort of disruptions along the way, and the tail risk of military escalation is relatively small. So I think until you kind of get over that final line, I think it's harder for Europe to rally materially. They may close some of the performance gap, but ultimately dictating anything at the moment is just this tech trade. I mean, we've seen a hawkish FOMC this week. Yes, we saw a bit of selling pressure on Wall Street on Wednesday, but ultimately, in terms of what we've seen throughout the week, it's still a pretty healthy tape.
A healthy tape, but it's interesting to think about how central bankers are thinking about this evolving dynamic around oil prices, isn't it? Because we've got oil prices up at above $80 a barrel for the reasons that link to the story that we've just been talking about. But Andrew Bailey just yesterday saying he was encouraged by events, but the pressure from the Iran war is still in the pipeline. We've been on a long journey on this story, and we're back down to 80, but that's not where we started, is it? And that matters.
Yeah, exactly. I mean, I think, if you look at central banks that we've seen over the past week or so, the Bank of England is a bit of an outlier in a dovish direction. They're already pretty reticent to hike rates anyway, and, the recent events we've seen pullback in crude prices does kind of stand to serve that. I think until we do kind of get that final all clear, that kind of, final 25 basis points of hikes that are priced by year end and a bit more, that'll be a little bit harder to scrub, and the conversation towards rate cuts isn't going to be happening anytime soon.
Yes.
But I think for UK assets, I think, you've got political risk, you've got a more dovish BOE compared to the ECB, which is still continuing to talk tough on interest rate hikes, and a hawkish Fed. I think the pound could potentially lag a bit. OK. Well,
we're getting closer to the weekend. I was going to say we're close to the weekend. That feels a bit premature at not even 9 a.m. on a Friday morning, but we're getting closer to the weekend. We've got a list of all the things that you could be doing over the weekend, Adam. Do any of these appeal to you? Royal Ascot, some cricket, summer solstice?
World Cup is a standout for me. So Scotland, Morocco tonight. My dad is Scottish, so for his sanity and my family's sake, hopefully they get a win.
Excellent. Is that earlier than the Brazil game? Because I don't think I've got it in me to stay up for Brazil.
11 p.m. So for us early risers, it is tough going, but I'm sure he'll be watching anyway.
That's an early night for the Scots starting then. I've loved watching the Tartan Army on the telly. Right, speaking of the weekend, I cannot take my mind off these croissants that are in front of me, but be sure to catch up on the Bloomberg Weekend newsletter. We'll get you all our interviews, ideas and stories that explore all the fascinating places where finance, life and culture meet. But that does it for the opening trade. Anna stays with you for the pulse next. This is Bloomberg.
this week on Leaders with me, Francine Lacroix. I speak to the outgoing chief executive of BHP, Mike Henry, about his do's and don'ts for making deals.
You don't want to be setting strategy in the middle of a transaction.
Changes he made at BHP.
We needed to make sure that we had a portfolio that was fit for the future.
And how to ensure smooth leadership transitions.
Day one, succession starts now.
So tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Get your fixed income fix. Watch Bloomberg Real Yield now at its new time. Thursdays at 12 p.m. Eastern, right here on Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Guys, buckle up.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs. You know, they have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Guys, buckle up. Newsmakers and market movers. This is The Pulse with Francine Lacroix.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in Paris, and these are your top stories. The UK Prime Minister Keir Starmer faces new calls to step down after potential leadership rival Andy Burnham comfortably wins a special election to return to Parliament. Well, the U.S. Vice President delays a trip to Switzerland as face-to-face talks with Iran are postponed. Plus, Bloomberg learns that the U.S. government believes one of ASML's advanced chip-making machines has made its way to China. ASML pushes back against the claim. So there's a lot going on. Happy Friday, everyone. It's been quite a week. Global stocks actually ending a pretty strong week on a little bit more of a cautious note as relief over this interim peace deal between the U.S. and Iran actually gives way today to concerns that there are significant hurdles that remain to secure a lasting agreement. Now, global markets also wrapping up this pivotal week, not only because of this landmark between the U.S.-Iran agreement, but also stocks in general showing resilience, buoyed in part by the frenzy around artificial intelligence. Euro dollar, you can see 114.49, Brent crude 80.21, and then gold 4,157. Now, if you look at European markets, I'll be with you for the next 2 hours. From Paris, a lot of the queue will really be on what's happening with the price of oil. We're seeing green on the screen for the moment. And then, of course, the UK, very focused on what comes next politically, with Andy Burnham sealing a pretty decisive win to secure a seat in Parliament. So the UK Prime Minister is facing fresh calls to step down after the Mayor of Greater Manchester was comfortably re-elected to Parliament. Well, Andy Burnham's victory in a special election paves the way for a challenge to Keir Starmer for the top job.
But I do say to my own party, this is a final chance to change. This is what people said directly to me on the hundreds of doorsteps that I stood on. We must hear it. We must act upon it, and we must get it right. There will be no second chance.
Let's get more from Ruth David, our Bloomberg London bureau chief. Good morning, Ruth. I mean, this has big ramifications. What are the implications, of course, for UK leadership going forward?
A great night for Andy Burnham, a bad night for Nigel Farage, and a terrible night for Keir Starmer. I mean, we were looking at the gilt markets, which are trading in line with the rest of Europe. And I think one of the reasons is because they are more focused on the price of oil. But there is a sense that investors, for now that Burnham is actually in power, despite the track record of, what he said around bond investors, it seems like investors are shrugging at the moment and waiting to see what comes next. I mean, I think what is clear is that Burnham's victory was the margin of it was what nobody saw coming. And now, you have all these pollsters talking about his chances of becoming prime minister this year are 90%. Whereas if you look at the other contenders like a West Streeting or Angela Rayner, they're at close to 1%. So it seems like the markets, it seems like voters are thinking this could be the next leader of the UK.
Tell us a little bit about these voting patterns, because, I mean, as you say, the Lib Dems and the Green votes pretty much collapse.
Absolutely. I mean, the Conservatives got less than 3%. Reform's vote was split with Restore. And so that means that we are seeing a splintering of the right-wing vote, which is good news for the Labour Party. And it's better news for Burnham because he can make the case that he is Labour's only chance to stopping Nigel Farage's ascent to number 10. And that is the case that Labour wants to make. In fact, when Keir Starmer this morning congratulated Burnham, he was talking about how they have chosen Labour and they have chosen it over the politics of division and hate. And they are talking about unity, though clearly the Labour Party itself is not united, based on the fact that as soon as Burnham won, he is talking about what his party needs to do next. And the implications are clear that his party needs to back him as leader. But one thing that we are seeing very clearly is that whoever comes to power next, right, their fiscal room to do much is so limited. The UK is dealing with a high debt burden. Interest rates costs are really high, so the cost of servicing their debt has gone up the most that it's been in any May in the last 6 years. We're also seeing the continuing impact of the war. The economy is growing at a pace that is quite tepid, and this is a country that has the highest borrowing costs in the G7 nations. There's a lot to unpack here for a leader, especially one who would be coming in without the kind of elected landfall majority that his predecessor had.
Ruth, as always, thank you so much. Our Bloomberg London bureau chief, Ruth David. Now, Terminal subscribers can also follow all of the developments through the day on UK politics and much more, but UK politics is where you want to be, and you can just use the function on your Terminal T-Live, T-L-I-V, go. Now, US President J.D. Vance has delayed his departure for Switzerland, where he was scheduled to lead face-to-face negotiations over Iran's nuclear program. Now, the delay comes as both sides begin a 60-day countdown to transform the newly signed interim ceasefire into a permanent peace agreement. Now, for more, I'm joined by Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. Abir, good morning. So how significant is the delay?
Good morning, Francine. All we know for the time being is a statement by the Swiss government saying that the talks that were supposed to be hosted later today in Geneva have been postponed. It didn't give any further clarifications on the reason behind this postponement. What we're going by, the assumption we're going by for the time being, is that the MOU and its clauses are still in effect. It was signed on Wednesday by President Trump and President Pezeshkian of Iran. And so the two main concessions of it, the reopening of the Strait of Hormuz, is happening. We're seeing a trickle of movement in the shipments there. And the other concessions is the 60-day period of which the ceasefire would be extended. And that, according to both sides, is also happening. Now, according to our reporting, what we're seeing happening, and one main clause that is being violated, is Israel's hostilities in Lebanon. To be sure, Israel did say that it will not end its hostilities against the southern part of Lebanon and the militant group Hezbollah. But overnight, we've seen clashes that ended up killing dozens over a dozen Lebanese people and 4 IDF soldiers. And so that remains a very sticking point. Lebanon remains a sticking point that we will continue to monitor, Francine.
Abir, thank you so much. Abir Abu Omar, and then we'll see if we get back on track and in what kind of time. Now, global stocks closing a little bit of a strong week with a cautious note ahead of the long weekend in the U.S. We're now joined by Mark Haefele, Chief Investment Officer at UBS Global Wealth Management. Mark, you are the man I want to speak today, given everything that's been going on and equities and treasuries. So what is the market exactly pricing in right now?
Well, I think that right now, we're seeing some relief on the geopolitical front and the oil front. And, we also think that the big message around the Fed is that they're on hold, and we think they're going to stay on hold. And that's going to be good for equities the rest of the year.
Mark, what did you learn from Kevin Warsh this week? Again, there is so much going on. We're seeing inflation picking up. Is the only way forward actually a hike?
Well, I think that the first thing to remember, and I know, Francine, because we've been through this together, is that when you get a new Fed chair, there's always some wobbles around the communication style, and I think we should expect that. But I think Chairman Warsh did something of a masterful job with a little bit for everyone, focus on price stability, but also launching these task force, which are going to look at productivity, going to look at the data, which may in fact decide what the actual inflation numbers are. So a lot of that is potentially up in the air at the moment. And, when you look at the dot plot, there's that center of gravity moves up, but then it starts to move down again. So I think take Mr. Warsh at his word, be more data dependent, and that's where we're trying to focus, both on the Fed but also in the rest of markets.
Mark, I know you put it very simply, which is always a good motto, which is focus on fundamentals rather than headlines. And for you, that remains key. I mean, talk to me about AI fundamentals. I mean, does it actually, are you worried about a correction, or do you think overall earnings will stay at these levels?
Yeah, I mean, as you mentioned, we've got the strong earnings. And when we look at this CapEx spend in AI, we see it going close to $1 trillion in 2028. We don't see any signs of abatement there. We do see this kind of shortages in the memory persisting for a little bit yet. Obviously, there are risks. I mean, when you're dealing with innovation at this scale and this speed, certainly things can happen, and this kind of wall of demand for tokens could go away. But we don't see that in the foreseeable future. And we've also got this, massive rush for capital as these very large companies that were returning capital are now desperate to deploy, CapEx and need more capital. But we do think that this is going to be absorbed by the market, whether it's the IPOs or in the bond market. And so that leads us to see a base case scenario where the S&P 500 can be at 8,200 by the middle of next year.
Mark, give me a sense of what that means for the price of oil. I mean, when you look at your pretty optimistic view of markets going forward, is the baseline that actually there is a U.S.-Iran agreement, at least that holds until the end of the year?
Yeah, well, I think this is a key point. And what we said is, the geopolitical headlines are one thing, but oil is probably smarter than we are, and we really had that kind of $100 a barrel on the forwards as something we were watching closely, and the more time it spent above that probably was going to be destructive to the economy. Now that it's fallen below that, we're getting more breathing room, and I think that we saw the markets able to go higher even when oil was higher, because the demand destruction, the economic impact of oil is really just so much smaller than this massive wall of AI CapEx and AI demand right now. And so, I think it is really something where you do need to look at the fundamentals and realize just how big a wall of money is going towards AI right now versus what the destruction is from the oil side. So we think that the president clearly does not want to go back to war. He never moved ships into the region where he could go back to war. So while the idea that there's going to be a nuclear deal in 60 days seems unlikely, we think this is going to get pushed out, and eventually oil can fall again as the strait opens up, which is something that many nations around the world want to have happen. And I think also Iran realizes that their ability to keep it closed, is degrading as we go forward from here.
Mark, give me a sense of then how you allocate capital. How much do you put in U.S. versus Europe versus, for example, emerging markets?
Yeah, well, this is one of the most interesting things that we've found, and it's partially a distortion from the success of the AI trade, is when we look at our clients, 40% of them have the vast majority of their equity exposure in less than 10 stocks. And that's, even after you account for, say, strategic stakes that business owners might hold. And so one of our key messages is, yes, we do like the United States, but people have to diversify, because we do see this AI trade broadening out. We like North Asia, for example. We like EM markets here. So I think that's the thing that people have to focus on, is getting that benefit from equity and other diversifications now, because the world is certainly a more uncertain place.
Mark, given we've had, of course, SpaceX, there's a couple of other really big IPOs coming on the markets. How does that increase risk exposure overall? Does it actually change the nature of a lot of these markets because of the sheer weight of them and how big they are?
Well, I think that, over the short term, again, we think that a lot of this is going to be absorbed. But, over the longer term, it raises a question. If you have so much change and that change is effectual and is attracting more and more money because it's profitable, that level of change may mean that the multiples on other parts of the market should be lower because the certainty of those business models is lower. And I think that's a longer term concern that we're watching. That's why we're so focused on earnings. And of course, as we look out the rest of the year, what the Fed does, if the Fed starts to hike, that's going to be a big change, because typically it is Fed hikes that will kill a bull market rally. So I think, again, like the U.S., it really depends on these individual portfolios and what the concentrations are. The biggest thing is diversify away. Most of our clients do hold regional concentrations, as well as now maybe some industry concentrations. And so fixing that and getting back towards a more balanced allocation is probably the first move.
Mark, thank you so much. Mark Hefele, their Chief Investment Officer at UBS Global Wealth Management. Now, there was a lot to talk about, also a lot to talk about in geopolitics. Coming up, face-to-face talks between the U.S. and Iran are postponed. We'll discuss all of the implications with Laurel Rapp from Chatham House. That's coming up next, and this is Bloomberg.
minute-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode,
Ebola can be a risk for all of us. The solution is not to close borders. The solution is to provide sufficient support.
Premieres June 26th, only on Bloomberg.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Well, dozens of super tankers loaded with nearly 18 million barrels of oil are preparing to cross the Strait of Hormuz following the interim deal between the U.S. and Iran. Well, for more, we're joined by Al Nightingale, who leads Bloomberg's coverage of oil trading in Europe. Al, I mean, there's a great story, actually, which is the first thing I read this morning, saying, look, the Hormuz traffic is really thinning as ship owners are just erring on the side of safety. Like, what are they thinking right now?
Very good question. I think, they're not one homogenous thing. Some are very risk averse, some are more willing to kind of chance things, but the ones who were risk averse are still risk averse. The ones I've spoken to, or some of the owners I've spoken to, just say that really there hasn't been that much of a change since before the peace MOU. So they're just waiting to see how things shake out. We're not seeing cargo bookings happening for next week yet, which, that should be happening if people have faith that things are going to go smoothly. So, yeah, things still need to happen before we can start to have a bit more confidence that flows are going to really resume in the way that they were going previously.
Yeah, I mean, it's true. Significant safety and security risks, of course, to shipping remain out. Great reporting. I urge everyone actually to go and read the story because it's quite granular. And you can really see also by speaking to captains that they're concerned about the safety of their crew. Al Nightingale. Now, the 60-day countdown to to a permanent U.S.-Iran nuclear deal has officially begun. But U.S. Vice President J.D. Vance has delayed his face-to-face talk with Iran. Well, let's get some analysis with Laurel Rapp, director of the U.S. and North America program at Chatham House. Thank you for joining us. Laurel, look, there's quite a lot of doubts emerging on what happens next, on whether the U.S. and Iran would be able to work out some of these contentious details. But is there anything surprising in this? Were you worried that actually the two sides are not meeting face to face?
Look, I wouldn't overread this delay. Of course, it's not a good sign to be out of the gate delaying a visit to start these conversations. But look, this is going to be a very long road. As you recall, the last round of talks the U.S. engaged with Iran on lasted nearly 2 years. So these are going to be very technical talks. The MOU states that there will be a conversation narrowly on nuclear matters. There was a broader question of whether this would also tackle ballistic missiles, regional proxies, even the nature of the regime itself. These were the issues the Trump administration identified as problems for the U.S. as it started the war in the fall or in the early spring. It looks like there's going to be a much narrower conversation in Switzerland when those talks do begin.
Laura, how's the Republican Party, but also the Democrats actually back home? How are they feeling about this? Is President Trump getting a lot of pushback across the political spectrum?
The only real proponents I've seen of this deal within the U.S. so far are the administration officials themselves. They are out on a tour to explain to the American people and to the world why this is in U.S. national interest. J.D. Vance is the tip of the spear on this one. He was, of course, somebody very reportedly opposed to going to war in the first place. And so he is now the face of this diplomacy. So it's very high stakes for him and his political future. But across the political spectrum on the right, Republicans saying this is a bad deal. It gives too much to Iran, sanctions relief, a potential reconstruction fund eventually. This is not the way to maintain pressure on the regime as the U.S. negotiates. You know, and many on the left, they say, what is the U.S. getting from this deal? This was worse terms than the JCPOA in many ways. And I should say I was involved with that deal from the State Department. I will tell you, these are very complex and detailed negotiations. This initial MOU offers a very thin basis for negotiation that leaves out a lot of questions about where the U.S. will able to effectively leverage its ability to shape Iran's decision making. And it is going to be doing so with fewer partners and allies than 10 years back.
So, Laura, what's the way forward? What do you think happens in the next 6 months?
So look, there needs to be a resolution on Iran, and I do believe the nuclear file is the right way to start. The American people have also said that is one of the issues that matters the most to them on the hierarchy of regime change to ballistic missiles to regional proxies. The nuclear issue has always been a major concern for the U.S. and would give Iran enormous leverage. And so that is a red line in many ways for the U.S. And so that is the nature of this conversation. But look, there's a mismatch in timelines here. There's a mismatch also in who might want this deal more. Trump has said that the economic catastrophe is something that he's seeking to avoid here. He's looking very closely at the midterms and how badly this war has played with the American people over the past months. So my prediction is there's going to be a muddling through. There's going to be many rounds of talks, likely inconclusive. The Iranians are very adept negotiators at extending timelines, in drawing out processes to then forestall further military action. I think there's a collective view that the U.S. is now going to be less willing and less interested to use military force if these talks go off the rails in any way. And the big question ahead is whether Hormuz will be a toll route for a lot of commercial shipping. That is, it's toll free for the next 60 days while this deal takes shape. But after that, it's an open question.
Laura, in the 45 seconds we have left, where are the European leaders in all of this? I mean, because of the G7, because there was also the MOU signed in Versailles, it feels they're getting a little bit more of a space or face time between, the President Trump and even Iran.
That's right. So I was fascinated to read the G7 communique. These are documents we negotiate as diplomats at the lower level, send them up the chain. The G7 communique directly in the same sentence links progress on the Iran talks with more sanctions pressure on Russia, right? So the big thing the Europeans went into the table on was to push for greater Russian economic pressure in the oil and gas sector. You saw Zelensky sitting at these meetings over the past couple of days, and the Europeans got Trump to sign off on more pressure in the sanctions regime for Russia. That is a big gain and something that they have not been able to do to this point. The big question will be, will the U.S. actually reimpose those sanctions on the Russian oil and gas markets now that the pricing is going to be coming down on Iran?
Laurel, thank you so much, as always, for joining us. Laurel Rapp there, the director of the U.S. and North America program at Chatham House. Now, coming up, has China got hold of one of ASML's most advanced chip-making machines? That's what we discuss next, and this is Bloomberg.
look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The UK Prime Minister Keir Starmer faces new calls to step down after potential leadership rival Andy Burnham comfortably wins a special election to return to Parliament. The US Vice President delays a trip to Switzerland as face-to-face talks with Iran are postponed. Plus, Bloomberg learns that the U.S. government believes one of ASML's advanced chip-making machines has made its way to China. So sticking with that story, that big and important story, ASML is pushing back on those concerns, saying it has never shipped any of its EUV chip-making machines to China. Well, let's bring in Bloomberg's Sarah Jacob in Amsterdam. Sarah, this is a Bloomberg scoop. I know it's been thoroughly researched, so talk us through exactly why this is a big challenge for ASML.
Good morning. Yes, so ASML is the only maker of these most sophisticated tools. It's called the Extreme Ultraviolet Lithography Machine, and some of the biggest chip makers use them to make advanced chips. So we're thinking like TSMC, for instance, uses it to manufacture processors for NVIDIA. So an EUV tool is the size of a bus, a school bus. It costs about 200 million euros, and it needs constant upkeep from, ASML employees. So what we've been told, and we've reported in the story, is that the Commerce Secretary has, raised concerns that an EUV tool may have found its way into China. It's important to note the context of this. ASML has never been able to sell these tools to China because of the U.S. government's, the U.S. administration's push to sort of stem China's advances in the semiconductor industry. And basically, if this were to have actually happened, it would be a significant violation of export-led curbs, and I think would present a big challenge for ASML yet in this current Trump administration.
So what has ASML's response been to these suggestions?
Yeah, we're told by sources that ASML has pushed back on these suggestions. Our report said that ASML has begun circulating a document in Washington, which is basically titled that there's no indication of any ASML EUV tool in China. ASML has basically said that in that document, they've said that they can detect any interruption and they have a clear visibility on their machines, the number of machines that exist that are in circulation, the number that have been decommissioned. They kind of know if there is a loss of connectivity in any of their machines, and that you can't really remove, a particular or transport any of these or relocate any of these systems without ASML involvement, because this involves specialized equipment. And the spokesperson, of course, telling us on the record that, they have never shipped a machine to China or even components.
Is the lack of access to EUV tools a key constraint for China's companies, Sarah?
Yeah, EUV machines are critical, like I said earlier, to make these most advanced chips, and ASML has a monopoly in that. It's taken ASML decades, several decades to fine-tune this machine, to work with their supply chain, to work with customers, to build it up, and it's not easy to replicate. We haven't actually seen any comparable machine out there yet. We did hear recently from Huawei that they are making innovations in this space, but without the use of an EUV machine. Yet it remains to be seen, what progress they make there. So it's going to be I think important to see how this all plays out.
Sarah, thank you so much. Sarah Jacobs there. I urge everyone, again, it's great reporting. It's an important piece of news. Go on the website, go on our terminal, and read the latest on ASML. Now, European leaders have been holding talks with tech bosses over access to their most advanced AI models after the US moved to block foreign access to Anthropic's Mythos model. Well, the European Union says it's also in talks to secure access to the latest tech. Well, Tom McKenzie spoke with Henna Virkkunen, the EU's top technology official at Vivatech in Paris.
With the AI service providers, I think we have good dialogue in the European Union, because here again we have legislation. So we have our AI Act in the European Union, and it means that when the AI service providers, when they are coming to our markets with very capable models, they have to notify that to our AI office, and also they have to assess the risks. And also now from August we will have also the enforcement power, so it's also possible for us that we are also making requests for them to mitigate the risks or give access to the model.
If Europe does not have access to Mythos, what are the cybersecurity vulnerabilities? It leaves Europe exposed if we do not have access to this model.
That's why it's very important that we are also working at global level and with our partners to address those risks. So I think with those companies who are having with the very capable models, I think we have also good dialogue with them, but we can expect that there will be coming more that kind of models in the coming months, and maybe not everybody coming from USA. So it's very important also that we are well prepared when it comes to our cybersecurity, because we know that these very capable models, they are able to really identify in few hours that kind of vulnerabilities in our cybersecurity environment. And that's why in few weeks' time we will also adapt our action plan on cybersecurity, where we are looking at what kind of new measures are really needed also in the European level.
France is removing and replacing Palantir software. The German military has done the same. Is that a measure that you welcome? Should Palantir be removed in other nations? Is it a risk?
All the member states, that they are assessing now the risks what they are having with their services. And of course, when we speak about very critical services, like for example, defense industry and defense information, we are also sharing that opinion in the European Commission side, for example, that in cloud services, we should use only European service providers when it's about defense. So when it's about very critical sectors of our society, external, internal security, law enforcement, defense, in that kind of services, it's very important that we are controlling the technology from Europe.
Palantir is a vulnerability then if it's used in European defense systems?
We haven't assessed that in the European level, but now some of our member states, they have done risk assessment on that, and they have made also their decisions based to that.
Is the US still a trusted partner after all of this?
USA is a very important partner for European Union when it comes to field of security, defense and technologies.
Is it a trusted partner?
It's important also for Europe to look that we don't have risky dependencies, also that we are not too dependent in critical sectors of one country, of one company, and that's what we are now doing, in the same time when we are, of course, cooperating with our partners.
Bloomberg's Tom McKenzie there speaking with Henna Virkkunen, the EU Tech Commissioner. Now, the President of the European Council, Antonio Costa, has been defending his reaching out to Russia after EU leaders voiced their frustration at the move. The exchange really reflects the bloc's disjointed attempts for peace talks with Russia. Well, we're now joined by our Bloomberg chief European correspondent, Oliver Crook. Ollie, good morning. So what's the problem with Costa actually reaching out to Russia?
Yeah, this is a piece of actual Bloomberg News, a scoop that we reported earlier this week that's actually really setting the agenda and the conversation at the European Council meeting here today. We have all of the leaders now sitting around the table, and one of the issues that has been very prominent in the conversations that began last night is this piece of news that the European Council president, his team, reached out to the Russians to try to sort of establish a back channel, a diplomatic channel between the Europeans and the Russians for the time and the eventuality in which a negotiation that would be led by the Europeans would be appropriate. There's obviously been a lot of divided opinion about the fact that he did this. There's been a lot of pushback from a number of important European nations like the French and the Germans. There are others, on the other hand, that are actually more all right with this initiative. That being said, Francine, I think it puts into prominence this debate that we're going to be having much more here in Europe after the Trump administration effectively abandoned their diplomatic efforts to try to bring the war in Ukraine to an end. After those sort of high-profile meetings with Trump and Putin, there is a real question about the Europeans, since they have no diplomatic avenue, and they also do not want to have to miss their place at the table. This is a conversation that I had both with the Latvian Prime Minister and the Lithuanian President yesterday. Have a listen to what the President of Lithuania said about this move from the European side.
I welcome all the efforts, and especially the efforts of the U.S. President Donald Trump to step in and to assist in this process of peace negotiations. But first of all, Russia and Russia's dictator should come to this conclusion himself, that this war cannot be won, and the Russians are not prevailing anymore, and probably for him personally it's the best time to look for the compromise and for the consensus.
So a real mix of opinions there, as you can imagine, Francine. The Baltic nations, the ones that neighbor Russia more proximately than other nations within Europe, really take issue with engaging with the Russians in a point when they don't feel that there is a real dialogue to be had. That being said, we're now in the 5th year of the war, so there's a lot of sort of legitimate questioning of what is Europe's diplomatic plan. There's a question about potentially putting forward a single diplomat to be in charge of those relations with Russia, with that dialogue. There has been some reporting in the past that Angela Merkel might be one person, Mario Draghi might be another, but I do think that there is a dawning realization here in Europe that they do need to have a united front, someone who speaks for all the Europeans, because you've had a few sort of side missions with some of the European leaders trying to reach out to Russia. You'll remember Emmanuel Macron tried it, Olaf Scholz tried it. We've had a couple individual initiatives, and that is something that really many of the nations within Europe are uncomfortable with. The real question is Antonio Costa the right person to do that? He says, and his office says that he is, because as the sort of voice of the European Council, the representative of the EU 27, that is the appropriate person to spearhead that effort. And of course, that's going to be one of the main conversations here. The other is one that is perhaps divides opinion even more, and that is the path forward on China. Real questions about the sort of trade deficit, how to push back against it. There is a growing conversation now that the Europeans might have to get a little bit more serious with their trade measures on China. That being said, they probably won't act today, but it's something that you're going to be listening to a lot of over the next few months.
Ollie, thanks so much. Oliver Crook, there, Bloomberg's chief Europe correspondent. Now, coming up next, well, how does the supply chain of the chocolate croissant shed light on the impact of the Middle East war on food prices? We'll have plenty more on that next. You don't want to miss that next section. I promise you. This is Bloomberg. Next week on Leaders with me, Francine Lacqua. I speak to the outgoing chief executive of BHP, Mike Henry, about his do's and don'ts for making deals.
You don't want to be setting strategy in the middle of a transaction.
Changes he made at BHP.
We needed to make sure that we had a portfolio that was fit for the future.
And how to ensure smooth leadership transitions.
Day one, succession starts now.
So tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs, you know, they have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
But it is a chance now, from this result tonight, to build a new politics based on unity and hope, turning away from the path that takes us to a divided, dark politics of the kind we see in the United States. We must now take this path and put this country back on the right path and bring people back together and get things working properly again.
Andy Burnham there, the newly elected Labour MP for Makerfield in Greater Manchester. And we'll have plenty more on the implications of this win in a moment. Now, the conflict in the Middle East and the subsequent closure of the Strait of Hormuz sent shockwaves through the global economy. Eleanor Thornburg, our EMEA agriculture reporter, has also been tracking the ingredients in a chocolate croissant to show how the war's impact on food prices will linger. Eleanor, it's a really great piece. So when people hear about the conflict and the impact it's had on the Strait of Hormuz, they think of oil tankers, they think of energy supplies and fuel prices. Why should they also be thinking about the price of a croissant in London?
Well, Francine, I think it's mainly because food and energy are a lot more interconnected than perhaps the average consumer realizes. So when we were doing the reporting for this story, what we found is that every ingredient and every layer had been touched by the conflict in one way or another. And you can think of lots of examples. I mean, farmers, they need fertilizer, they need diesel. Millers, very energy-intensive operations. Truckers, they need fuel in their tanks to deliver food around the world, right? And even things like packaging materials are impacted by petrochemical markets. So it's not as if food has gotten away from this scot-free, even though a lot of the headlines have kind of focused on oil and gas. So, yeah, by the time a croissant reaches a cafe in London, the war itself is, yes, thousands of miles away, but I think the impact is going to start feeling a lot closer to home because it's all going to start being baked into the price that you pay for one.
Yeah, it's just a brilliant story. I mean, look, for research, Eleanor, I did have a croissant. Someone ate all the chocolate croissants in the Paris office. I won't mention names, but it's brilliant because it really comes to life, right, how it impacts inflation and our day-to-day lives if we're lucky enough to have croissants, chocolate croissants in London. Now, the Strait of Hormuz is reopening. There's this interim deal in place, but why is the story not over?
I think it's because food supply chains don't really recover or maybe bounce back in the way that financial markets can. So even though in theory there's this interim deal and the strait is meant to be open for business, many businesses have already dealt with months of disruption. And when you're in agriculture, you have to think about planning, investment, producing, and they've done all of that factoring in this disruption. So fertilizer shipments delayed, energy costs higher, freight rates surging, all of this. And food manufacturers often operate on long-term contracts, which means that it can take a bit of time for all of this to work their way through the system. So one economist we spoke to said it could be about 6 to 12 months before all of this finally reaches supermarket shelves. So in theory, I suppose on paper, the geopolitical crisis is over, but it's not like the economic consequences have disappeared overnight. They're still very much making their way through the system.
So, Eleanor, just going back to the croissant, because I can't get it out of my head, you basically traced the journey of a single pain au chocolat from farm to cafe. So what does that journey really tell us about how food inflation works in 2026?
I mean, it's interesting. I guess food inflation, it can feel like a shock or maybe a bang that comes out of nowhere. But what our reporting showed us is that it's really about a lot of these very small increases accumulating over a very complex supply chain and how they kind of build up from there, almost like a wave that forms. So by the time that a pastry reaches a cafe, all of these businesses along this international supply chain have had to deal with higher costs. And I think that's why inflation at the moment in particular, it's felt so persistent, because yes, some things get resolved and some crises ease, but realistically, a lot of things linger. They linger in shadows and corners. So I guess the story at its core is kind of about how interconnected global food supply chains are. And yes, that can be a strength, but in moments like this, it can also make them very vulnerable.
And consumers, of course, have already lived through COVID, the war in Ukraine, and years of inflation. So is this really shaping up to be another major food price shock?
I mean, it's difficult to tell. I'm not an economist per se, but I guess what I would say is I don't think we're looking at a repeat of the huge spike in inflation that we saw after Russia's invasion of Ukraine in 2022. But I would caveat that and say that it's perhaps not the best point of comparison, because this time, well, the issue is that consumers have already dealt with high food prices for some time. So, for example, in the UK, food prices now are about 40% higher than they were in 2019. So even if this results in very small incremental food price increases, they're going to be landing on households that have already dealt with this for some time. So the risk isn't necessarily about this crazy inflation emergency, perhaps. It's more the people who were hoping for some economic relief are unfortunately going to have to cling on and wait a little bit longer.
Brilliantly said, Eleanor. Thank you so much. I mean, it's just a great piece of reporting by Eleanor Thornburg, Bloomberg's EMEA agriculture reporter. Now, let's get more on Andy Burnham's return to Parliament and the implications for the UK Prime Minister Keir Starmer with Jane Green, politics professor at the University of Oxford. Jane, I mean, there's so much. I mean, just to put it very simply, it feels like Andy Burnham has a bit of an aura. I mean, how difficult is it for Keir Starmer to stay in power?
So Andy Burnham he does have an aura, and he does have, a slight edge in leadership polls when compared to Keir Starmer. But what he has, of course, is credibility and a reputation in the Northwest that has allowed this election victory to be significantly easier for him in what has boiled down to a two-party race in Makerfield between Labour and Reform. The challenge now, though, is that there's twofold. One is that he has, I think, approached the kind of strategy of winning elections as focusing on the cost of living and trying to win support across ideological divides. He's shown that he can win an election where Keir Starmer has, of course, been losing elections consecutively, local elections, by-elections, since 2024 and losing support in the polls. However, he then has to try to take that credibility that he has in the Northwest and now earn it if he becomes Prime Minister in the country as a whole. And that's going to be far more difficult. And he's going to be subject to the kinds of buffeting, the kinds of declines that governments very, very frequently experience in the polls in periods of government that, if he's Prime Minister. So he has that credibility in the Northwest. That's helped him in Makerfield. But can he do that nationally? Keir Starmer is going to be making the argument that he won't necessarily be able to do that. And Labour MPs, obviously, who are backing Burnham, are clearly going to think that he can.
Yeah. Professor, I mean, there's a lot of questions that stem from that. One is, I mean, also, Andy Burnham is not tested in the markets. So if you look at some of his fiscal policy, I don't know whether he goes more back to the center and whether a market wobble could actually decide or make Labour stick with the current Prime Minister.
So I think, what's the big kind of question for Andy Burnham is that here he is, somebody who people are talking about as the next Prime Minister of this country, without a manifesto, without a clear economic agenda, but with that credibility that he's gained in the Northwest of the country. Now, you're right that it's going to be extremely important for him that he reassures the markets, not just for the markets, not just for the economy, that of course he hopes to then benefit from a more buoyant economy, but also because the poll ratings that Labour has are going to be very sensitive also to whether or not Burnham is trusted on the economy. And of course, that's why he's building an advisory circle around him, including the likes of Andy Haldane, that I think is not just about learning, but it's also about signal sending. It's also about reassurance. It's also about saying, look, I'm advised by and taking heed from the kinds of people that the markets trust. And I think that's very, very, very purposeful, exactly to your point.
Professor, why exactly is there, I guess, a want in the Labour Party to, replace Keir Starmer now? I mean, he's been 2 years in the job. Could he not have a resurgence ahead of a general election? And is there a danger that Andy Burnham comes in, he feels the need to call a general election, and then it doesn't go his way?
Well, Keir Starmer has really, since coming into power in 2024 with a huge majority, but nevertheless historically low vote share for a party governing alone, what has happened since 2024 is that Labour's support has been eroding very, very, very substantially. They lost around, in the opinion polls, around half of the support that they had compared to 2024, and that support already started very low. So Keir Starmer has been Prime Minister in a period where Labour MPs are just terrified, frankly, about losing their seats, but also much more existentially terrified about the possibility that Labour's lack of popularity and Keir Starmer's lack of popularity, because his leadership ratings have been extremely negative, historically negative, that's going to open the way for a reform victory. So I don't think it's true that Labour MPs have particularly wanted a change of leader, but I think they have been extremely concerned about Labour's ratings in the polls, Labour's performance in the local elections, in consecutive by-elections, and then, essentially feel that they're in a situation where, for many of them, not all of them, but for many people, they feel like they have no choice now but to change leader in the hopes that they can win support again going into another general election. But that is very risky. And that's risky because Labour's majority in 2024 was built on the basis that the left coalesced and that the right vote was very split. Now, we've seen some indications of a split vote in Makerfield because Reform have, very likely lost some votes to Restore. Restore got 7% of the vote in Makerfield. But that isn't a split as the right vote was in 2024, where it was the Conservative Reform contests that were mainly splitting the right votes and helping the Labour Party win. And so it's risky because the right vote needs to split and the left vote needs to coalesce for Labour to win another majority. And obviously, what is very likely to happen is that an incoming new Prime Minister, if that indeed is what happens, will be watching those opinion polls very, very closely to see whether or not there's the kind of bounce that Andy Burnham is obviously hoping for, whether that is both large and also persistent. And that's very much yet to be seen, of course.
But, Professor, very quickly, what will you watch out for in the next couple of weeks? I mean, Andy Burnham will have to talk to Labour voters. He'll have to meet with people. He'll have to, I guess, keep the, give the sense that the economy would be stable under him. Are there 2-3 key moments or people that you're watching out for?
I think the key thing to watch out for now is how smooth a transition could there be a smooth transition where Keir Starmer essentially steps aside and allows Andy Burnham, with the backing of a potential new cabinet within the Labour Party, to take place? Does that transfer take place smoothly and calmly and the market's reassured? Or are we going to see Keir Starmer digging in and there being a leadership contest and just another period of instability? And of course, the markets are not going to respond well to another period of instability and also of uncertainty. And so that is the critical question in the weeks ahead.
Yeah, Professor, thank you so much. Beautifully said. Exactly what we needed, to the point. Jane Green, their politics professor at University of Oxford. Now I'll be back very shortly with Bloomberg Markets, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Tariffs, I think,
are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome, everyone, to Bloomberg Markets. I'm Francine Lacqua here in Paris today. Now, U.S. markets, of course, closed for Juneteenth holiday, and here are your top headlines. Washington and Iran delay their nuclear talks as the conflict in Lebanon intensifies. In the UK, Andy Burnham wins a decisive victory in Makerfield, paving the way to oust the Prime Minister Keir Starmer. And U.S. Commerce Secretary Howard Lutnick reportedly expressed his concerns to ASML about China's access to the firm's top machines. So first thing is first, let's get you started for the day ahead with a market check from around the world. Here's Alice French with the latest from Asia. Hi, Alice.
Slightly mixed day here in Asia, mostly South Korea and Japan markets open. Today we started quite optimistically with some gains in tech, but I think caution around that US-Iran situation really sort of weighing on sentiment towards the afternoon. The Nikkei, though, despite a slightly weaker day today, has still seen its biggest weekly gain since August 2024. I think the Iran deal, of course, helping sentiment there. But look, most of the focus has really been around the yen, which is still hovering close to 4-decade low against the dollar. Of course, that hawkish tilt that we saw from the Fed earlier in the week not helping things there. We did have a sort of verbal warning from the finance minister earlier today that saw a little bit of strengthening, but we haven't really held those gains and we're still in the danger zone territory for intervention. So let's see what happens through the weekend and into next week.
Thank you so much, Alice. Now to London for a look at what Europe's doing. And here's Justina Lee. Hi, Justina.
Good morning, Francine. Now, interestingly, we're seeing like stocks Europe 600 bucking some of that weakness in U.S. stock futures, and actually a lot of those cyclical names, you know, like car makers that kind of suffered a bit earlier this week is actually bouncing back. And now, before I move on to the U.K., of course, today we're seeing oil coming back up again, and that's being reflected in a lot of the bond yields all across Europe. Now, when it comes to the U.K., like interestingly, now of course, like some of the special election results have been priced in already, but we're actually kind of seeing the pound bouncing back against the dollar, perhaps because the dollar has also kind of weakened a little bit over the past hour or so. But what is actually reacting to those election results is the long end gilt yields. Now we're seeing, like, you know, the 30-year gilt yields kind of rising about 5 basis points right now, and that is, you know, increasing more than the rest of Europe. And now I think what all investors are watching is kind of how this challenge to Prime Minister Keir Starmer is going to play out, and what other messaging are we going to get from Andy Burnham about his position on kind of fiscal policy, and whether he still thinks that, you know, the government should be kind of in hock, as he has said before, to the bond market. Francine.
Justina, thank you so much. Now for some stocks to watch, here's Chloe Melley.
Good morning, Francine. So, of course, the U.S. market is closed today, but SpaceX is a little bit weaker this morning on Germany's Tradegate exchange, essentially extending the losses of the last few days. But it is worth noting that despite that share price volatility of the last few days and since that IPO debut, there has actually, the stock has managed to actually finish that first week of trading higher. So that's definitely worth noting. Moving on to Novo Nordisk, which is higher this morning after being upgraded to a buy rating by Nordea analysts, with those analysts saying that there was a good chance that the weight loss pill sales would beat expectations, and that the upcoming clinical trials could be also some positive catalysts for that company. So we are up about 5% for Novo. And finally, ASML is down after the US expressed concern that some of its cutting-edge machine, or one of its cutting-edge machines, has made its way into China, which of course would be in violation of export restrictions. But ASML has pushed back against that. So this is very much an evolving story that we'll be keeping an eye on. But in the meantime, we're seeing a little bit of weakness on the back of that for ASML.
Chloe, thank you so much. Chloe Melley there with the stocks to watch. Now, the U.S. and Iran are postponing the start of negotiations that were set to begin today in Switzerland, as clashes in southern Lebanon between Israel and Hezbollah are continuing. Well, Vice President J.D. Vance insisted that President Trump will see the deal through.
He believes in this deal. He is going to see it to completion. And if the Iranians don't comply, we still have every single tool and point of leverage that we have today. That'd be message number one, is have a little faith in the president's ability, given that he's got us this far, to take us the final step.
Well, Bloomberg's Al Nightingale joins us with the very latest. Al, there's also an absolutely brilliant story that basically says, you know, there's not much traffic in the Strait of Hormuz simply because ship owners would rather be cautious given all of the uncertainty. What have we learned?
Well, what we've learned is that, yeah, owners we're speaking to are pretty cautious. They're really saying that there hasn't been a great deal of change. Yes, there's been an MOU, but they're looking for details, and the details are severely lacking at this time. If you look at what's being booked in terms of cargo loading, that's quite a telling detail. There's really nothing being booked for next week or, you know, the coming days. Now, why is that? If you've got a deal, if things are in place, if everything's normal, why aren't the oil companies hiring ships to load fresh cargoes from the Persian Gulf? That's a really important question, and I think the fact that they aren't shows you that there's perhaps not the greatest risk appetite.
Yeah, so Al, I mean, it's really about the two sides, basically, the U.S. and Iran trying to work out some of these contentious details, right? So if you're a ship owner, I mean, do you worry, you know, about it not being safe in the next couple of weeks, or do you actually also worry longer term that then Iran effectively has control of the strait and can also ask for a toll?
Both. Certainly, you can see from the lack of cargo bookings that there is some short-term concern. And a lot of the owners that we speak to just, yeah, I would say they've just got the sense that it's not clear how you bring a lasting security now to the Strait of Hormuz. You know, is Iran going to leave everything alone, stop ships from feeling harassed and those sorts of things? What protection is going to be needed? What protection is going to be provided for these ships for kind of years to come?
Yeah, and now we do kind of forget, you know, these ships have like, you know, thousands of crew members on board. They've been stuck there for actually quite some time. So what concretely, because I know you speak to a lot of these ship owners, what do they need to see to be able to move through?
Under the terms of this MOU, I think you have to be clear about the insurance. The insurers have to be clear about lots of things. You know, is it mined? The central channel, the one that used to be constantly used, is widely thought to have been mined. So owners are either going through a US route or a northern route. So no clearance. Iran has to really unequivocally say we won't be attacking any ships. And when they say something like, I don't know, there's got to be no Israeli connection to a ship, that would make a lot of owners nervous because that spectrum can actually quickly become quite wide. So there needs to be a real blanket assurance that navigation is safe from Iran, and you know the US has to be very clear that navigation is safe too, and it has to be unambiguous and public. And at the moment, it doesn't feel like that's there.
Al, thank you so much. Really terrific briefing, and also there are some great stories on the Bloomberg terminal. Al Nightingale, they're going through the Memorandum of Understanding, but especially what's going on in the Strait of Hormuz. Now, weighing in on the bond market, Jeffrey Yu of BNY Mellon was writing, some relief is on the way if the ceasefire proves durable. Well, Jeffrey joins us now with the very latest. Jeffrey, thank you so much for joining us. I mean, again, I don't really know what the way forward is. So when you look at, good morning, I don't know if the Memorandum of Understanding means that we're going to have pullbacks and push through, but it's more stable than a couple of months ago, or whether it's just words without much actions because the two sides are still quite far apart.
Well, I think if you look at these markets, especially in carry trades and FX or high-yielding bond markets and EM, it is a question of where do you go from here? I think it's cautious optimism right now. And by relief, we're really looking at balance of payments relief. So import bills shot up for many countries. If you look at Southeast Asia, for example, Indonesia, they've had to do emergency hikes. So if there's relief on that side, then their import bills will start to come off, and you're going to see a corresponding movement in currencies as well. Also, real rates. If inflation's going to come off, there's pass-through there, then globally that can provide some improvement for risk appetite. But as you say, it's still a very, very precarious situation.
So what do you think is priced in at the moment? Oil at what? Is 70, 80, or is it priced in a little bit higher?
So let's look at short-term versus medium to longer term. I think shorter term, certainly some relief, but what's not priced in, I think, certainly is a return to the pre-conflict status quo. So there's lower ends of numbers, 70, 80 range. I think that's still to the lower side because you have to take into account how people are hedging themselves, protecting themselves against a further surge. Now, that, I think, is reflected in very well-owned energy stocks that we're seeing in our data right now. But also you have to consider where the dollar is. That is a new equation, because when oil was quite low, that corresponded to a period where there was a lot of hedging in the US. But now things have actually turned around. US yields are higher, US rates are higher, and also the dollar we're seeing in an overweight position as well. So those are things you have to be cautious about. Any relief is welcome. So I go back to the balance of payments angle and the financial account. That clearly is helping EM right now.
Jeffrey, I mean, it was a big week just because it was the first time we heard from Kevin Warsh. What did you make of his first Fed meeting? What did you learn about where he wants to go in interest rates? It feels like the bond market is really telling him, look, you need to hike, but will he do it?
So a few things there. I think we need to distinguish between the short-term policy path versus the medium to long-term vision for the Fed. So on the latter, there's some key points. These are working groups so that he has laid out. I think markets will absorb that over time and factor it into their reaction functions. In the near term, certainly, if I look at pricing right now, it's not just hike once on a precautionary basis, but maybe more about 1.5 priced in heading towards the end of the year. But I query that in terms of why are you hiking, right? So is it because of the supply shock, input costs and being passed on, or is it because of a robust US economy? If it's because of the latter, that need not be detrimental to risk appetite, especially if real incomes can rise, thanks to productivity gains and the like. So hikes not the full story here, but going back to the US exceptionalism story, dollar movement, that certainly is all helpful, from where the Fed stand and in a risk-on matter. I think that's the main takeaway. Higher Fed rates heading into year-end need not be detrimental to risk for now.
But we understand, especially because of who Kevin Warsh is, that he has maybe a bias towards cutting. If you look, he looks at it through the AI kind of impact on productivity longer term. So do you think if there were to be a hike, it would be a mistake this year from the Fed?
So I don't think so. And, clearly, vis-a-vis the situation with growth in Europe, the US is, completely on a different growth plane right now. And I think the main reason there is, if you look at asset allocation into AI, into semis, that theme is seen as secular. In April and May, when we saw those markets rebound, not just in the US, but the associated stocks in the likes of South Korea and Taiwan. So these were economies facing very high import bills and supply shocks. We were talking about helium, yet stocks rallied strongly because it was seen as a medium to long-term story. Almost like costs became inconsequential, and costs, I would include interest rate costs. For example, if financing, if the cost of capital is higher. So in that lens, I don't think you would be too concerned. Now, if, however, the US growth does become more dependent on other segments beyond AI and infrastructure and hyperscaler build-out, then it's a different situation. But I think the market is sticking to the secular AI theme for now, and the Fed is going to try to lean into that.
Jeffrey, thanks so much. Jeffrey Yu there of BNY joining us on the markets. Now to other top stories trending on the terminal this morning. And we start with the U.S. Launching a tariff investigation into Germany's pharmaceutical pricing policies. Now, U.S. Trade Representative Jameson Greer says that Germany's push to curb drug spending unfairly burdens American innovation. The inquiry could be resolved through talks, but it risks reigniting trade tensions between the U.S. and Germany. Novo Nordisk is launching a $69 million network of research incubators across Europe aimed at creating breakthroughs in obesity and diabetes treatments. Well, the incubators will host promising university research projects and develop them into therapies or startups. It opens its first location in London this month. Former President Barack Obama's $850 million presidential center opened in Chicago in a ceremony held Thursday. Obama gave a speech calling on Americans to remain politically active, even in the face of cruelty and bitterness. Notable attendees included former Presidents Bill Clinton, George W. Bush, and former German Chancellor Angela Merkel. Well, the center opens to the public today as the U.S. marks Juneteenth, the holiday that commemorates the end of slavery in the U.S. Coming up, the U.S. voicing concerns that one of ASML's top-of-the-line machines may have made its way into China. We'll have the details next, and this is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
For bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs, they have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
This is Bloomberg Markets. I'm Francine here in Paris. Now, let's get on to some more top stories. And U.S. Commerce Secretary Howard Lutnick has told ASML's senior leaders that he believes the company's extreme ultraviolet lithography machines, very, very important machines, have made their way into China in violation of export restrictions. Now, Bloomberg is learning that the Dutch company pushed back against the claim, saying its top chip tool is heavily monitored and has not been sent to China. Well, joining us now is Bloomberg's Neil Camplin. Neil, this is a huge deal, right? Because this is basically a top chip tool that then China could use. What do we know about the allegations and the rebuttal from ASML?
Yeah, it's interesting because in fact the machines have been, well, the leading edge machines have been banned for export to China since 2019. It's been a very long time. That was extended 2 years ago to cover more of the technology machines. So it would be a surprise to find one that had turned up, if true, in China for sure. It does appear that China can't yet bridge the technology gap because their companies internally can't mass produce the most advanced chips, which are known as sub-5 nanometer chips. So they are only really produced currently by Samsung and TSMC, and in South Korea, in Taiwan, and in the US at their facilities. So clearly it would undermine Western export controls if it was true. And it will also have a side effect of potentially threatening the market dominance of Western tech giants if there was found to be these machines there. One caveat I would say is that if there were, these machines are so sophisticated and require a lot of software tooling as well. And so I think that also, if they had machines there, there would also be an opportunity for a kill switch. In other words, ASML could potentially remotely disable some of the most advanced tools there. So I think we need to watch the situation, but actually it's part of an ongoing battle, if you like, between China and the US in the wider scheme of things in terms of looking for tech IP and in terms of who wins out in AI leadership generally. So it's an ongoing situation as part of a much wider IP battle, I would say.
Okay, Neil, thank you so much. Bloomberg's Neil Camplin there with the very latest on this pretty extraordinary story that's top right on the Bloomberg terminal. Still ahead, Andy Burnham, historic victory clears the way for a UK leadership challenge. So we'll have all of the implications of what it means for the current Prime Minister as well. This is Bloomberg.
case you missed it on Bloomberg Surveillance.
What is the worst Fed's response mechanism to inflation that is ticking, inflecting upward, given the fact that this Fed has been incredibly dovish? Are they going to wreck the party? I mean, ultimately, it's easy to be a skeptic, but I might as well join the party and not be so, skeptical, because you're not paid to be skeptical. You're not paid to poke holes. You are paid to just go with the mob.
Have we got that breaking news whoosh that drives across the screen? Can we play that now? Sort of breaking news.
It's the job. Come on.
Bramo, I think, going to look to confirm this, but I think Bramo just turned bullish. Is that what just happened?
I think that it just doesn't pay to be skeptical. You take a look at every single different benchmark.
Okay.
I mean, it's sort of, what are we trading people? We are trading them that you cannot lose, and that seems to be the way to go.
Bulls everywhere this morning, getting very nervous following that.
Don't miss Bloomberg Surveillance, live every weekday.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Well, this is Bloomberg Markets, and I'm Francine Lacroix. Now, Andy Burnham clinches a decisive vote victory for the Labour Party, paving the way to challenge the Prime Minister, Keir Starmer. So that was yesterday. Bloomberg's Rosa Prince joins us with the very latest. Rosa, when you look at how much he won in Makerfield, are we looking at the next Prime Minister of the UK?
You know what? I think we are, yeah. I think this vote has changed things, actually, because although Burnham kind of expected to win, the scale of the victory is so emphatic that it really makes that case that only he can now turn Labour's fortunes around, and particularly that he can beat Reform UK, the kind of MAGA-style upstart right-wing party. Keir Starmer still says he's going to cling on, but I think that if he can't be persuaded to go nicely, I believe that members of the Labour Party will turn on him. Perhaps even cabinet resignations this weekend. Things are going to move quickly. And yes, I think we will have Andy Burnham as the next UK Prime Minister sooner rather than later.
Yeah. So, Rosa, very quickly, what are you looking for in the next couple of weeks?
The cabinet does. If they turn on Starmer, it could happen quite quickly. Labour MPs are a factor too, and those markets. So far, the pound seems relaxed about Andy Burnham coming in. I think they were factored that in already. Anything that changes that, like an unexpected chancellor appointment, I think that's what's going to be key going forward now.
Rosa, as always, thank you so much. I'm looking forward to all of your columns. Rosa Prince, who, of course, writes on UK politics, but also UK markets. Look, if you look at exactly what the UK political landscape looks like now, there's a lot of focus on the current Prime Minister, Keir Starmer, just saying that he will not walk away after Burnham's special election win. A couple of things that we're watching for is, of course, the markets in the UK. Look, the markets in the past have given us a little bit of an inkling into maybe some of the fiscal concerns or everything that's happening in the UK. Gilts falling on the back of, Andy Burnham's win. Oil prices also down. Again, a bit of fiscal concerns, but nothing huge for the moment. Coming up, the latest on efforts to end the war in Iran. We speak to Lindsay Newman of King's College London. She joins us next, and this is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome to Bloomberg Markets, everyone. I'm Francine Lacqua here in Paris. Now, U.S. markets are closed for Juneteenth holiday, and here are your top stories. Washington and Iran delay their nuclear talks as the conflict in Lebanon intensifies. In the UK, Andy Burnham wins a decisive victory in Makerfield, paving the way to oust Prime Minister Keir Starmer. And U.S. Commerce Secretary Howard Lutnick reportedly expressed his concerns to ASML about China's access to the firm's top machines. Now, let's check on the markets. Of course, a lot of the markets are closed in the U.S., but the focus worldwide is really on what we're seeing across the board. So, look, stocks in general are sliding. Certainly, they are a little bit. They were in Asia after a very strong week. And this is because there's a cautious note after the week there where there was an interim peace deal between the U.S. and Iran, which today now gives way to a focus on the hurdles that remain to secure a lasting agreement. So that's the picture across the board. You can see, sterling at 0.8662. We're looking at gilts. We're looking at what's happening in the UK because of that Andy Burnham win in Makerfield, and the FTSE 10,384 points. Now let's get straight to the stocks to watch. Here's Chloe Melly. Hi, Chloe.
Good morning, Francine. We are seeing SpaceX down this morning on Germany's Tradegate exchange, and that is really extending losses for a third consecutive session for SpaceX. So we've seen a fair bit of volatility since that blockbuster debut last Friday, but it is worth noting that the stock did end its first week of trading higher, but we are a little bit weaker this morning. Moving on to Novo Nordisk, and we are up this morning actually fairly strongly for that pharmaceutical company, up about 4% after getting upgraded to a buy rating by Nordea, with the analysts saying that the sales of the weight loss pill by Novo would potentially beat expectations, and that there were also a bunch of late-stage clinical trials which would have results that could be potentially very positive catalysts as well for that company. So we're up there. And finally, ASML is seeing a bit of weakness after the US said that one of its cutting-edge chip-making machines had made its way into China, which of course would be a violation of US export restrictions on that chip-making equipment. ASML has pushed back against this, so we're at a bit of a standoff now, and this could further strain the relationship as well between the US and the EU. So we'll be watching out for any developments there as well.
Chloe, thank you so much with the terrific update. Now, U.S. and Iran postponing the start of nuclear talks. The U.S. has lifted its naval blockade on Iranian ports, but the Strait of Hormuz is seeing very limited traffic today, as still doubts emerge over whether or not a permanent deal will come through. Well, Bloomberg's Al Nightingale joins us now with the very latest. So, Al, what do we know about how much traffic there actually is in the Strait?
There's not much visible traffic. You never know what you don't know. A lot of the ships have been turning off their transponders in the run-up to the MOU that was signed on Wednesday. So there's always a possibility that there will be some kind of flows that emerge in the next few days that we can only see then when the satellite images come through. But the visible traffic does look thin, and from what we hear from owners, there's still a very high degree of caution about what the peace deal has really changed.
So, Al, just give me a sense overall of what you're looking forward to. I mean, are there any signs that it becomes easier to pass through the Strait?
The shipping and insurance industries are pretty cautious at large about what the peace deal has meant. And I think, to sum up, what they're looking for is very unequivocal assurance from Iran especially, that it's not going to attack merchant ships. You know, even if you go by the Oman coast, which is the route that the US is trying to protect and promote, you've still got to know that that's safe if you're a ship owner, and you've still got to be confident that you're not going to have a missile in your hull. And a lot of the owners that we speak to aren't that confident. Some are, some are willing to take the risks, others aren't.
Al, I know there's been some conflicting, information about it being mined. Do we know anything about, anything on the seabed?
Well, that's the million-dollar question for the shipping industry. They want assurance as well that there are no mines. What we think is that the central channel was mined, the one that was most commonly used before the conflict, which has forced ships to go either close to Iran or close to Oman. But the central channel is the one that they want to see back to normal, and that's where they want the cargoes to flow through. But at the moment, as I say, the ships are being forced to either go by the kind of US defended route or close to Iran.
Al, thank you so much, as always, for your reporting and also the briefing. Al Nightingale with the very latest on traffic passing through the Strait of Hormuz, which is very limited still. Now, Lindsay Newman of King's College London is writing, this is an MOU that rests on very little mutual understanding and a lot of ill will, doubts and misalignments. Well, Lindsay joins us now. Professor, thank you for joining us. Look, I guess what I'm trying to understand is that there's an MOU. We saw that pretty striking picture of President Trump signing the agreement in Versailles, but then there's no face-to-face talks. Is this pretty much as expected? It's like 2 steps forwards, 1 step backwards, because the two sides don't trust each other? Or is this a big setback, the fact that they're no longer meeting in Geneva?
Thanks, Francine, for having me. Ever since February 28th, when this conflict actually kicked off, the question on many of our minds was, how is the conflict going to end? And now the question for us is the MOU actually that ending? Is this the end of the conflict? Is this the resolution? And the answer seems to be no. I expected the answer to be no. The MOU is just a memorandum of understanding. And as you suggested for my piece this week for Chatham House, I wrote, it's a memorandum of little understanding, because we've known for the last year that the parties involved do not see eye to eye. They're talking about different issues. There's a willingness to talk about only a certain limited set of issues on the part of Iran. And now here we are overnight with the news of more kinetic activity along the southern border with Lebanon. No surprise there. The MOU is a document that was signed between the U.S. and Iran, but has constrained, and it purports to constrain behavior and activity of Lebanon and Israel and, of course, the terrorist group in Hezbollah. You can't have a contract or a deal or a memorandum of understanding even where parties that are not a party to an agreement are expected to change their behavior. So this is an inherent vulnerability, it's an inherent tension of this document. And we're just as likely now to see this die on the vine over the first initial 60-day period as we are to see further extensions of the 60-day additional ceasefire that the MOU contemplates and a real fundamental deal reached. It seems very unlikely. That seems like the outside downside scenario that we see a final deal reach that is contemplates all the terms that are set out in the MOU and really resolves all of them.
Yeah, so Lindsay, what kind of time frame are we looking at? Is this going to be, again, in this kind of, let's see, we're not sure for quite a long time, or at some point, as we get closer to the midterms, President Trump just has to lock something down?
The timing question is really interesting because we know, first of all, that Trump has said that we're going to know within the next couple of weeks whether Iran is really serious here, whether they are committed to this MOU and the next pathway forward. And if not, we can just go right ahead and bomb. But we know that that's not really this is a bit disingenuous on the part of President Trump, because what we've seen over the last month is that Trump has tired of this conflict. He's become burned out on the conflict. He's in fact made it clear he was not willing to pay the cost of further military action. And because of that, sort of the stick has come off the table and only carrots were left. And that's why that's why we see the sort of the contours of the MOU, which allows Iran to have assets unfrozen, contemplate sanctions waivers now and in the future, and of course the Economic and Development Fund. The other point that you're raising about the midterms elections is a critical one, because we could think, November is sort of 10 dog years away in the cycle of this U.S. administration. But in reality, as we're just discussing about the Strait of Hormuz, this is not going to be an instantaneous alleviation of the traffic through the Strait of Hormuz, which means it's not going to be an instantaneous alleviation of the pressures on energy and on the global economy. So if you want to backdate from November, you need to start moving now, which is why, in fact, we see this MOU coming right now. Again, a lot of this is about U.S. domestic politics and who has the leverage.
Yeah, so let's leave, of course, a nuclear question to one side. I mean, last time it took years to negotiate that. But now there's something, one of the big questions is who will control essentially the Strait of Hormuz. I mean, do Europeans have a voice in this? Does the U.S. really care, or are they thinking actually it's a problem for tomorrow?
This is exactly the right question. And it's the question that has sort of propelled the MOU forward, because while the U.S. administration went into this conflict with a host of objectives, it really came down to reopening the Strait of Hormuz and, as you say, the nuclear question and ending the war. We know for now that the Memorandum of Understanding contemplates that the U.S. will immediately end its blockade, and that blockade needs to be done by 30 days from now, and that Iran needs to use its best efforts, very much legal language, to open the Strait of Hormuz from its perspective, and to not charge any fees for that initial 60 days. But thereafter, the MOU contemplates that there's going to be conversations, including with Oman, about the administration of the Strait of Hormuz. It doesn't talk about conversations with Europe, for sure. I'm sure that Europe and the U.S. will try to weigh in, but we are in a different world on the Strait of Hormuz. I'm sorry to say, we're not in the same world that we were prior to February 28th. This is not going to be an entirely unconstrained passageway anymore. And we are likely to see that shippers and all of those transiting through the Strait of Hormuz are going to have to most likely accept some sort of fees or costs, whatever the language is, that's going to be imposed by Iran and perhaps by Oman, if that's what the administration if that's what the mechanism is. And that's going to be the new state of play for the Strait of Hormuz.
Lindsay, thank you so much, as always, for joining us. Lindsay Newman there, professor at King's College London. Now, coming up, European leaders remaining divided over taking a tougher stance towards China. Well, Oliver Cook joins us from the EU summit next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode,
Ebola can be a risk for all of us, The solution is not to close borders. The solution is to provide sufficient support.
Premieres June 26th, only on Bloomberg.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Next week on Leaders with me, Francine Lacroix. I speak to the outgoing chief executive of BHP, Mike Henry, about his do's and don'ts for making deals.
You don't want to be setting strategy in the middle of a transaction.
Changes he made at BHP.
We needed to make sure that we had a portfolio that was fit for the future.
And how to ensure smooth leadership transitions.
Day one, succession starts now.
So tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts. Well, Lithuanian President Gitanas Nausėda says the EU should not rush into peace talks with Russia. Bloomberg's Oliver Crook spoke with the Lithuanian president Thursday.
I always say that the moment or appropriate moment for such kind of activities is when Russia understands that they have to make some concessions too. If they will show some willingness or some positive signals that they want to start the peace negotiations, then it might be probably the right moment to start these activities. And another very important factor is that European Union have to speak one voice. We had a lot of the efforts and attempts of different leaders of individual member states to start to talk with Putin, and they all failed. So I think this time we have to learn those lessons of the past and to speak one voice, and it would be much better for European Union.
Do you think it would be wise then for the Europeans to establish who that voice will be, what that voice will be? Because we've had some suggestions. It could be someone like Angela Merkel, Mario Draghi. Do you think there are any sort of serious contenders in order to get that process moving?
Well, I cannot say the name, but it might be. Of course, this person should play an important role in international politics. Maybe this might be the former politician, but I don't think that right now it's a time to start the negotiations with Putin, because Putin does not want to see us at the table. Putin respects the strength. Putin respects and is afraid of United States. Is he so afraid of European Union? I have my doubts. Yes, we imposed 20 packages of sanctions. Yes, we have certain leverage to make harm for Russian economy. Is it enough for Putin to see us at the table? I have my doubts.
And thinking about sort of the other geopolitical event that has really dominated the world for the last few months, obviously it's the war in Iran, the great many consequences that has had over across the world, including the energy prices and inflation here in Europe. I'd like to just get your assessment on kind of where we stand now. It seems there is this memorandum of understanding. How active do you think this will be a conversation at the Council, particularly around what Europe's role could be in the Strait of Hormuz in securing it and to make sure there is a free passage of ships?
We have to support United States' efforts to find a solution, diplomatic solution. I hope we are at this point where we can find a sustainable solution and free the traffic in the Hormuz Strait. And for Europe, of course, we have to support the United States activities, and probably there's no need to talk about the war, which does not affect us or something like that. For us, it's very important to keep this region stable, to keep the traffic, maritime traffic stable, because as you rightly mentioned, it has huge impact on the oil prices, on inflation, and probably this another lesson we have to learn from this.
Well, that was the Lithuanian president, Gitanas Nausėda, on Russia, Putin, and of course the Iran war. This comes as EU leaders gather in Brussels to discuss trade imbalances with China. And Bloomberg's Oliver Crook joins us now from Brussels. So, Ollie, how much of the discussions will actually focus on Europe and how to deal with China, but also how you start having these relationships with Russia when a large contingent doesn't want to talk?
Yeah, that's right, Francine. I think this is going to be one of the very big blends of the conversations. And as contentious as the issue of Russia is, of course, the issue of China is not any easier. I mean, incidentally, we actually have the president of Lithuania standing about 10 feet away from me now, giving an interview. He's been in the meetings all morning. Suspects he's been making his views known about whether or not it makes sense to have diplomatic outreach with the Europeans, from the European side with the Russians. Of course, this is a story that we broke, and it's really been a huge part of the narrative over the last 2 days of European leaders' meetings of whether or not it makes sense for the European Council President Antonio Costa to have those direct contact, those direct links with the Russians. You'll have to see that in the last couple of months there's been a real shift in Europe about how they should approach Russia diplomatically, particularly after the efforts of Donald Trump and his diplomatic efforts effectively failed, and he sort of came out of those conversations. Now there's a question in Europe, if they do engage with the Russians, what is the appropriate way of doing it? We've had a couple of outreach from individual leaders. Generally speaking, here the Europeans are of the opinion that if it is somebody that's speaking to the Russians, it should be one voice from the Europeans. Who that voice would be is still an open discussion. On the question of China that you mentioned there, Francine, I think there's a growing recognition that the economic threats that China poses to the European Union, there has always been a lot of division about how exactly to deal with the Chinese. You have those on the sort of Spanish side of the spectrum that say, actually, we should be forging closer ties with the Chinese. The Germans, who have been a little bit in between, who have really sort of an economic dependence on the Chinese. Unfortunately for the Germans, I think there's one fact that they can no longer ignore, is that the trade deficit with the Chinese has come out to about $1 billion a day from the European side, and that is something that they're going to have to address at some point. So those are going to be the center of discussions today. Of course, there will be also potentially a conversation about the role of Europe in the Strait of Hormuz, the demining mission we've heard a lot about. But again, it all comes down to the thing you've been talking about all morning, Francine, is how solid is this MOU.
Yeah, so interesting. Ollie, thank you so much. A lot going on, of course, at that summit in Brussels with our Oliver Crook, who'll be, of course, keeping us up to date to any new developments. Coming up, SpaceX getting investment-grade bond scores from major bond graders. Details next, and this is Bloomberg.
In case you missed it on Bloomberg Surveillance.
We should be basking in Nick's glory right now.
I think you are basking. There is quite a bit of basking.
It was just incredible.
You could feel it through the entire city.
I was there.
I mean, you're just waiting for it.
I saw Patrick Ewing. I saw everyone.
It has been an amazing moment where even a Yankees fan and a Mets fan can come together.
This is why it's so incredible for New York.
And have enthusiasm for New York City.
Everyone can coalesce around the Knicks.
Don't miss Bloomberg Surveillance live every weekday.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Joe Matthew on the South Lawn of the White House. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets.
I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Well, this is Bloomberg Markets. Now, of course, a lot going on in the world of tech. We look at tech, we look at SpaceX. SpaceX getting investment-grade ratings from Moody's, Fitch, and S&P. SpaceX is preparing to raise at least $20 billion from a debt sale following its blockbuster IPO. Well, joining us now with the very latest is Bloomberg's Neil Campling. So, Neil, not only is there demand, but actually they want to move quite fast and do $20 billion in bond sales.
They're getting the investment grade, so the sooner the better. Whilst there's appetite for AI bonds, there's been a lot of appetite actually from other companies as well, including Alphabet, as we saw recently. So it's good timing for them. It's also necessary timing, I think. And by that, what I mean is they had obviously huge ambitions to invest on the AI side. To put it into context, if you look at the CapEx calculations from consensus estimates that are out there today, then there's about $45 billion of CapEx expected to be spent by SpaceX this year. By way of comparison, the hyperscalers are on track to do closer to $800 billion of CapEx on the hyperscale AI side. And maybe even actually Goldman's estimate more than $1 trillion next year. So SpaceX is kind of playing fast catch up, but it needs to because it's very early stages in terms of its AI ambitions. And the whole idea really of putting data centers into space, which potentially could be significantly, much more energy efficient than the ones that we are developing today. That takes a lot of funding. So the sooner the better, I think, for SpaceX, and clearly there is appetite for these kind of issues.
Yeah, so Neil, we understand, from what I understand, is that the proceeds of the bond offerings then will go into refinancing a bridge loan that matures in 2027. So are there other loans coming up? Like, do we have an idea of how many bonds will be offered in total?
I haven't seen any details yet of exactly how many bonds, Francine, to be honest, but I suspect we will expect to see a range of types of instruments coming to the market over the course of the next few months. Investors I've spoken to are expecting post lockup expiry down the line from the IPO, we'll actually probably see more equity raises from the company as well. So I think it will take advantage of the range of debt and equity available to it. Partly, obviously, as you mentioned, to refinance bridge loans for much better terms. And with its investment grade type ratings, clearly, that's going to be much better in terms of those costs. And of course, we're looking at the long-term nature of the build out of these of data centers and AI infrastructure as an industry. Then obviously these are 10, 20-year type plans, and obviously very, very reliable recurring revenue streams once they're built. But they cost a lot in the first place, clearly.
Neil, thank you so much. Neil Campling there with everything to do with tech, of course, one of our market strategists. Now, coming up in the next hour, Guy Johnson has more on the U.S.-Iran nuclear talks, plus, of course, a wrap-up of this week's big central bank decisions. If you look at the markets, look, they're poised to finish the week okay. A lot of U.S. markets, of course, are closed. The main point is that stocks are sliding a touch today compared to the very strong week that they've had, and that's really on a cautious note, because they worry about this interim peace deal between the U.S. and Iran. This is Bloomberg.
Now, some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it, you don't need the money.
So we're a bank, and then for the bank it's super important to have trust, and then public companies are trusted more compared to private companies.
To the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Bloomberg Markets. I'm Guy Johnson. I'm in London. US markets, of course, are closed today. It is the Juneteenth holiday over in the United States. Got plenty going on, though, so let's work our way through the top headlines. Uncertainty is emerging now between the United States and Iran. They have postponed the start of their negotiations in Switzerland over a permanent peace deal and the restrictions that could be applied to Iran's nuclear program. Andy Burnham wins big, becomes a member of Parliament, and will now challenge Keir Starmer for the leadership of the Labour Party and the keys to 10 Downing Street. Keir Starmer says not so fast. Gilts drop on that news. And ASML's stock is also down as the US Commerce Secretary Howard Lutnick warns of a possible violation of US export restrictions. What does this all mean for the markets? Let's work our way through the price action that we are seeing this morning. Brent, interestingly enough, despite what we're seeing regarding the talks in Switzerland between Iran and the United States, is down today. We're trading at 79.36. The interesting story around what is happening in the UK is that gilts are down, but the pound is up, 132.35. So we are seeing a little concern in the debt market, but not in the currency market. We are broadly looking at a euro-dollar rate that is flat this morning. Stock 600, stocks are doing nothing in Europe right now. We've got the US out for the day. That means the volume pretty much evaporates from this point forward, and we are likely to see a fairly quiet afternoon. But it has been a turbulent week, and we will debate that. The key story, obviously, this week has been the meteoric rise and then fall of SpaceX. We have TradeGate pricing this morning. Let me just show you what is happening. I think we are now down for a third day. SpaceX currently trading down circa 3%. But let's get back to our top story. US stock futures under a little bit of pressure this morning. This on the news that the US and Iran have delayed their nuclear talks. They were scheduled to take place in Switzerland. This as Israel and Lebanon, Hezbollah, continue their fighting. Abir Abu Omar of Bloomberg News, joins us now from Dubai to give us the latest. Abir, talk me through why these talks have been cancelled and the significance of that.
Good morning, Guy. So look, we've been hearing since the morning, the latest we heard from the Swiss government saying that the talks have been postponed. As you remember, J.D. Vance, the Vice President of the United States, and Ghalibaf, the Iranian parliament speaker, were set to go to the official signing ceremony of the MOU in Geneva later today. That was postponed. The Financial Times earlier reporting, citing 3 sources familiar with the matter, that this is due to the IDF strikes on southern Lebanon overnight. And not just overnight, we've been seeing seeing those hostilities carry into just about a couple of hours earlier, killing over a dozen people in Lebanon, particularly in southern towns like Nabati and also in Baalbek. We've seen people killed from the Lebanese side. 4 IDF soldiers were also killed in those hostilities between Lebanon and Hezbollah. So the Financial Times is reporting that this is due, or the postponement is due to the hostilities carrying on in Lebanon. Obviously, Lebanon has proven to be a sticking point for Iran over the past 2-3 months, Guy, and it was an explicit clause in the 14 provision MOU that Bloomberg News was able to get a hold of. President Trump saying that he has to figure out an end to the situation in Lebanon. That was met with pushback from Israeli officials. The National Security Minister Ben Gvir in Israel saying this morning that the entirety of Lebanon needs to be wiped off. I paraphrase him there. So pretty inflammatory statements from the Israeli side that has not really been privy to this MOU, that does not accept the terms of this MOU, and that says that Iran is set to win way more concessions than the United States in this MOU that is set to open up the way for 60 days of ceasefire, where wider negotiations over the Strait of Hormuz and Iran's nuclear program are set to take place. Look, for the time being, yes, oil prices are reacting to this news. U.S. futures, as you had mentioned, are reacting to this news, but we're not yet saying that we've completely hit a wall, because the MOU has been signed by President Trump and Pezeshkian, the president of Iran, on Wednesday, and we had seen a trickle of movement in the Strait of Hormuz yesterday by some GCC tankers. Now, this morning, our colleagues are reporting that outbound movement from the Strait of Hormuz has been quite limited this morning, so we wait and see over the weekend and certainly into next week, Guy.
Abir, it's going to be an interesting weekend, isn't it? And we'll watch very carefully what happens here. Abir Abu Omar of Bloomberg News joining us out of Dubai. Let's turn attention to what is happening here in the UK. Andy Burnham has won a decisive victory for the ruling Labour Party.
But I do say to my own party, this is a final chance to change. This is what people said directly to me on the hundreds of doorsteps that I stood on. We must hear it, we must act upon it, and we must get it right. There will be no second chance.
Andy Burnham, MP, he now has his eyes on 10 Downing Street. He wants to be the leader of the Labour Party, and by extension, he wants to be the Prime Minister of the UK. That obviously pushes the UK's current Prime Minister, Keir Starmer, very hard. Is he going to go quietly? Is Burnham going to get the job? Or will Starmer fight? This is what Starmer has to say on that matter.
There isn't a leadership contest.
But when there is,
at
it's
the
imminent,
moment.
Prime Minister,
there isn't one at the moment. But as I've said on many, many occasions, I don't think that's a good thing for the country to plunge us into chaos. I would also add that now that Andy has won, which is really important, really good, he's a huge asset to us, then now will inevitably be a Manchester mayoralty by-election starting straight away. So it's important that we pull together for that. But if there is a contest, just to be clear with you, then yes, I will run, I will stand, and I've said repeatedly, I'm not going to walk away from that.
OK, here we go. Who's going to be the next Prime Minister of the UK? Is there going to be a contest? Is there going to be a contest, or is there going to be a coronation? Rosa Prince, Bloomberg Opinion, joins us now to talk about this. Rosa, so what do you think? We now have Andy Burnham MP. Is it going to be Andy Burnham PM? And how does he get there? Coronation or competition?
I think that the emphatic size of his victory makes a coronation a bit more likely than it was yesterday. And I think that's because he's really proved two things. One is that he's a winner. The Labour Party hasn't felt like that for a while. And two, that he can defeat Reform UK. You know, he can really kind of arrest Nigel Farage's path to number 10, which is what all this is about. Now, as you say, the slight sort of fly in the ointment as far as Andy Burnham is concerned is that there currently is not a vacancy in number 10. And how do they get Keir Starmer out of Downing Street if he continues to cling on? Now, I think could get quite messy over the weekend. You could see a kind of coup in the form of cabinet ministers perhaps resigning. You could get Labour MPs saying that they no longer have confidence in the Prime Minister. Or what I wonder if might be more likely is that Keir Starmer is made to see that these things could happen. People might whisper in his ear and say, look, isn't it better that you go in a more dignified manner, that you're able to really set out a timetable, avoid the chaos, make that your legacy. So I wonder if that will happen. If not, I think that you could see a contest, a challenge, and ultimately I still think the end result is that Andy Burnham becomes Prime Minister.
OK. Did Andy Burnham win in Wigan, or did the Labour Party win in Wigan? Because the answer to that question is quite significant in terms of what happens next. Does he go, if he becomes Prime Minister, to the country? Can, as you point out, he beats Nigel Farage in Reform? So did he win, or did the Labour Party win?
I think, you have to give people the credit where credit due. I think that Andy Burnham will be able to claim this as a personal victory. And the reason that we know this is because there were local elections that covered the Makerfield area just a few weeks ago, back in May, and Reform won every single council seat in the area. So it was an election for Andy Burnham. And I was up in Makerfield a few weeks ago. In people's windows, there were posters, not for the Labour Party, the word Labour wasn't there. It was Andy Burnham with that kind of cartoon image of him that's become quite prevalent. So yeah, he does have a personal popularity, and I think that's why he's going to say, look, I'm the guy who can turn Labour's fortunes around. And you're right, does that mean there might then be a general election to follow? I don't think he needs to straight away, but he might want his own mandate, particularly when there are some tough decisions to come about things like, does he stick to Keir Starmer's fiscal rules?
OK, so can I therefore extend the majority that he has won to the nation? If there was a general election, what would polling look like? And what is the implication of this for Reform and for Nigel Farage?
That's such a big question and impossible to say at this point. But I think what we're seeing today is that an Andy Burnham party is much more popular than a Keir Starmer Labour Party. Now, until today, it looked like Reform UK was going to win the general election. It doesn't have to come for another 3 years, actually, but still, he's been leading in the opinion polls for well over a year. All the momentum was with him. He seemed to have killed off the Conservative Party. He seemed on his way to doing the same thing for the Labour Party. Now, this could be the moment, as Andy Burnham said, when all that turns around. Reform should be winning seats like this if they do want to become a national party. And I wonder if it suggests that there's a kind of ceiling for Reform, that they can do pretty well but never get past that 20-25% figure. And I think a lot of that actually is because Reform's rhetoric has got quite dark in recent days. They really campaigned on a kind of anti-immigrant, white rights the platform. Their candidate refused to apologise for remarks that were pretty unpleasant and sexist towards women. One of their other MPs made a really nasty sexist joke on polling day itself. And I wonder if people are saying, we don't like this. This doesn't feel English to us. This doesn't feel British to us. And this could be the moment when Reform sort of hits that ceiling and cannot move on to become a national party or a party of government.
It was interesting to see how well the Conservatives did in Scotland overnight as well. Rosa, thank you very much indeed. Rosa Prince of Bloomberg Opinion, thank you very much indeed. Let's talk about what is happening in Brussels. There, EU leaders are gathering at the European Council building following the G7 summit in France. One of the goals is to address the deepening trade imbalances with China while not provoking a damaging conflict with Beijing. Bloomberg's Oliver Crook joins us now. Ollie, this is the kind of the takeaway summit from G7 in many ways, but also folds in the China narrative as well. What is the takeaway, first of all, from the G7 if you apply it to the China story?
Yeah, I think that for the takeaway from the G7, and we roll it into this UCO meeting here, their leaders are meeting as we speak at the European Council, is that there is, some solidarity on some issues, not just among the G7 and the Europeans, but also they can kind of bring in the United States on at least one particular issue, and that is on critical raw materials. That is a place where you've actually found the United States willing to work in a multilateral fashion. We know that multilateralism isn't exactly the mantra of the Trump administration, but that is a place where they certainly feel that they can actually benefit, and the Europeans, of course, feel that they can benefit. But I think that for the UCO and for the Council and the leaders meeting today, there's a lot of unpacking to do. There's the China angle, right? There's still a big division in Europe about how to deal with China. I think that there is a dawning realization, though, for some of those that are a bit on the fence, like the Germans, who are very dependent on the Chinese economy, but are realizing that the deficit is really unsustainable. And a lot of their companies, their businesses are not really expanding anymore in China. So it's something that they're more alive to. So for the European leaders, they're going to find different tools potentially to address that trade deficit, which we should say, Guy, is now basically €1 billion a day in the favor of China. That is something that they're not comfortable with. There will also be a very active conversation on the subject of Ukraine. The fact that the European Council President, Antonio Costa, we understand, reached out to the Kremlin to sort of establish those back channel chats. That's something that we reported earlier this week, and that has been a very active part of the conversation, we understand, last night and into today, whether or not he is the right person to sort of lead the diplomatic effort on the Russian front, which, Guy, obviously is now a more intensifying debate, right? Because the Trump administration at the beginning of the presidency said they're really going to go in, they're going to resolve this situation in Ukraine. Obviously, they've backed out entirely of those negotiations over the last couple of months. So now the Europeans are faced with the question, how do we engage diplomatically with the Russians? There's obviously been a lot of pushback from a number of the Baltic countries. We spoke to 2 of those leaders yesterday, but then there are some that are sort of warming to the idea that we actually need to put a single representative from the European Union, from the Europeans, to actually engage with Russia.
Ollie, thanks for the update. We'll come back to you throughout the morning to continue our coverage of what is happening there. Oliver Crook, our Europe correspondent. What are we going to do next? We're going to catch up with Emery Toussaint of Energy Aspects. Oil actually a little softer this morning, despite the fact that we do have these talks in Switzerland suspended, postponed. We'll figure out why next. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it, on Bloomberg Brief.
When we were talking about it originally, we thought that this was going to be a very short war. We thought that the energy price hike or increase would be just a spike up and down, but it's been persistent, and that's the concern that we continue to have, because we're starting to see a little bit of fragility in the consumer. If we look at consumer inflation expectations, they're much higher than what the market is pricing in.
Don't miss Bloomberg Brief, live every weekday.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
16 minutes past the hour. This is Bloomberg Markets. Quick update on those markets. Let's just show you what is happening. So what is interesting here is that Brent is lower despite the fact we have the talks between in Switzerland between the US and Iran as being postponed, but oil continues to drop. The pound is up, but gilts are down. So Andy Burnham looks like he's on track to become the next Prime Minister of the UK. Sterling is up. Elsewhere, actually, there is a little bit of dollar weakness out there, so just be aware of that. And S&P futures are dropping a little bit. Remember that it's the Juneteenth holiday, as a result of which we don't have cash equity trading a little bit later on, but futures are a little bit softer. Maybe one of the factors behind that is what is happening in Switzerland or not happening in Switzerland. We were expecting Iran and the United States to be talking today, debating the future, trying to figure out what kind of a deal we are going to be looking at. Crude is softer, so Brent is still sub 80, 79.39 is where we're trading. It's a little higher in the United States. I would look at the top line there, not the bottom line there, maybe as the kind of read of what is happening here. We are waiting, obviously, for further details. The Strait of Hormuz is currently theoretically open, though we're seeing a cautious approach being taken this morning. AMH, Anne-Marie Jourdain, spoke to Chevron CEO Mike Wirth about the impact that the Iran war has had, particularly on oil inventories.
It's a little hard to explain. We really are seeing markets tighten, inventories draw, demand for products around the world still very strong. I think there's this belief, and we're experiencing it again the last few days, that the end is near, the conflict is nearly resolved, and flow through the Strait will resume very quickly, and that has kept the back end of the curve lower than it might otherwise have been. And I think the psychology of the market has been this is closer to the end rather than the beginning.
But what about the physical world? When will inventories be at the very bottom?
Before long. We are steadily drawing inventories down on products, on crude, in locations around the world. I think June and July are going to be critical months, and you can see the trajectory of these inventories in the data, and it's concerning.
Do you see any physical shortages right now around the world?
We do see some in some Asian markets, and we've seen some rationing. We've seen work weeks adjusted, other demand measures imposed in some of the countries in Asia. Markets are very efficient at moving products and barrels to where they're needed, and we haven't reached a crisis point yet. But the inertia in the system is very, very strong, and turning that is not easy.
One of the main sticking points the U.S. has when it comes to negotiating with Iran is this idea of the tolling. Would Chevron consider paying a toll?
No, we wouldn't.
Do you know how people are paying a toll?
I've heard reports of people using cryptocurrency in various countries. I think the Treasury has come out this week and sanctions the new authority that has been put in place to oversee transit through the Strait. It went from a toll to a navigation fee to something else.
Would you pay a navigation fee?
A copy. I don't know enough about any of these things to say definitively. But look, freedom of navigation through international waterways is a very well-established principle. And anything like this would begin to say that countries adjacent to an international waterway can charge some sort of a transit fee. There are many other places in the world where that principle could be applied, and not just to energy products, but to all freight moving through the Straits of Malacca, the Bosphorus. Pick your choke point, and so that's not a principle I think that most countries in the world would find acceptable.
That was, of course, Mike Wirth, the Chevron CEO, speaking to Anne-Marie Jourdain about what we have seen and what we're about to see and what the new reality could be like in the Strait of Hormuz. Anne-Marie Jourdain of Energy Aspects weighing in on this story, talking about the inventories, writing, quote, "We expect Saudi Arabia and the UAE to restore most production rapidly. Kuwait and Iraq will likely to be able to restart roughly 70% of output quickly, but the remaining 30% may take several months." Amrita joins us now. She's the founder and director of market intelligence at Energy Aspects. Amrita, good morning. Where are we this morning? What do you think the reality is? Oil is sub 80. Do we stay there on Brent?
I think, at least on our numbers, the medium-term floor for oil prices is now higher, so that you're talking about $80 to $90, everything Mike said. whenever we talk as well, it's very, very along the very similar lines that how low inventories are, and this is something we completely agree on. So therefore, the need to restock, which is going to continue for months and years ahead, is going to keep that floor higher. And let me just tell you, this is not going to be all the depleted inventories alone. Every country I've been through in Asia and the Middle East in the last month has said they're going to be building new tanks because nobody wants to have to go through this again. So you are going to see a bid for that storage. But look, short term, of course, headlines has been driving this. But I think there's a floor around that $80, even with these headlines of, traffic resuming and then so on and so forth.
Yeah.
But ultimately, when this settles, I think we'll realize how low stocks are.
I'm hearing talk of a glut. Why am I hearing talk of an oil glut?
You and me both. It's been a real eye-opener for me when I was just got back from the US and all the generalists there. So I wouldn't say these are the oil specialists, but all the generalists are like, oh, demand's been destroyed for by a few million barrels per day, and all the supply because OPEC's going to maximize production and US shale's going to go. And the IEA didn't do any favors because they've issued a report talking about 5 million barrels per day of oversupply next year. I really want to push back against that for two reasons. One, even right now as we speak, right? Remember, when Hormuz was supposed to be, quote-unquote, reopened, there was going to be a gush of oil coming out. And I'll say this to you guys as well. You really should be reporting a bit more on this. Where is that gush? There's been a trickle, at best, of vessels coming out. We are hearing from our contacts and our clients there aren't enough vessels, not physically not available. I mean, there's some shortages, but it's sky-high rates right now to go in. This is going to take a long time to sort itself out. And then the fact that Middle Eastern producers will take some time to come back, then there's replenishment of inventories that's required. China has been the biggest balancing factor in this market, just disappeared by 3 to 4 million barrels per day versus what it used to buy. They're not going to sit on the sidelines either. It will take time, but gradually they will come back. So to continue to think that the demand from China that we're seeing right now is permanent is really tricky at a time when we aren't even seeing flows from Hormuz normalize.
So, looking forward from here, we've got talks that were meant to be taking place in Switzerland over the next few days. They're not taking place. How do we work our way through the next few months if these talks are fragile, if we are uncertain about the future, if ship owners and insurers aren't willing to put tankers back into the Gulf? What kind of a state do you think we're going to be in for the next few months in terms of our visibility on where crude availability is going to be coming from?
But that's exactly the point, right? You don't have visibility, and like you said, talks are not going ahead. You've had Israel hit Lebanon as well. Pretty much everyone I've spoken to amongst our clients in terms of the majors, trading houses, everybody's even taking the 60 days with a pinch of salt. They're like, look, we're going to try and get everything out in the next 30 days because after that, we just don't know what's going to happen. Similarly, we are also hearing from ship owners that we need even longer clarity before we are willing to send our crews back in, right? So this isn't going to be pre-conflict flows. Now, I'm not saying we need to go back to pre-conflict flows because Saudi Arabia in particular will continue to operate that east-west pipeline and have those alternative routes. UAE will also have the alternative via Fujairah. So there is still going to be some of those piped volumes, but we are not going to have certainty on flows from within Hormuz for a very long time, because if we aren't seeing everything get out right now, when everything should be open and this is the least risky period in some ways, we are not going to see this in a month's time.
Amrita, always a pleasure. Thank you very much indeed for updating us. Amrita Sen of Energy Aspects. Still ahead, we'll return to the similar subject from a different angle. Anna Rosenberg of the Amundi Investment Institute will be joining us. We'll get a political angle, a geopolitical angle on what we are seeing here and what it all means. That's next. This is Bloomberg.
case you missed it on Bloomberg Deals.
Can you rival the size of those? I mean, I know it's a very different model, but do you see yourself growing to a size of a Blackstone, of an Apollo?
Over time, for sure. We'll have 25 to 26 billion of fee-paying assets.
Does the way you invest need to change then? Because these are huge platforms that have many different types of assets they invest in.
The beauty of our strategy, we invest in the largest companies in the world, kind of large cap, mega cap companies, mostly based here. If you look at Berkshire over the last 60 years, it's built most of its value becoming effectively an insurance holding company. That's what Buffett has built over time. Right. And it was his successful management of the assets. So when you heard Buffett buying Apple, it wasn't Buffett buying Apple. It wasn't even Berkshire buying Apple. It was the Berkshire insurance subsidiaries buying Apple. And we're going to do the same thing. The goal of Howard Hughes is to build a long-term, diversified holding company akin to what Buffett has done over a long period of time.
Don't miss Bloomberg Deals live every week.
Welcome back. How you doing? Hope you're having a good Juneteenth holiday if you are watching in the United States. Here in Europe, we do still have markets operating, but with lighter volume. Brent crude, interestingly enough, is still sub 80. We'll come to that story again in just a moment. The pound is up. Gilts are under pressure this morning. Andy Burnham won big last night in Wigan. He is becoming a member of parliament now. He is a member of parliament now. Does he become a prime minister? That's the next story that we're watching very carefully there. European equities are going nowhere in a hurry, which is interesting as well. SpaceX is a little softer. We're watching it carefully this morning when it comes to the TradeGate pricing, and we are seeing some weakness there. But equities are not where the action is this morning. It's really the bond market and what we're seeing in Brent. Let's turn our attention back now, therefore, to what we are seeing in terms of the geopolitics. The Russia-Ukraine war is a factor as well. The Lithuanian president says the EU shouldn't rush into peace talks with the Kremlin. He said that in a conversation with Bloomberg's Oliver Crook at the G7.
I always say that the moment or appropriate moment for such kind of activities is when Russia understands that they have to make some concessions too. If they will show some willingness or some positive signals that they want to start the peace negotiations, then it might be probably the right moment to start these activities. And another very important factor is that European Union have to speak one voice. We had a lot of the efforts and attempts of different leaders of individual member states to start to talk with Putin, and they all failed. So I think this time we have to learn those lessons of the past and to speak one voice, and it would be much better for European Union.
Do you think it would be wise then for the Europeans to establish who that voice will be, what that voice will be? Because we've had some suggestions. It could be someone like Angela Merkel, Mario Draghi. Do you think there are any sort of serious contenders in order to get that process moving?
Well, I cannot say the name, but it might be. Of course, this person should play an important role in international politics. Maybe this might be the former politician, but I don't think that right now it's a time to start the negotiations with Putin, because Putin does not want to see us at the table. Putin respects the strength. Putin respects and is afraid of United States. Is he so afraid of European Union? I have my doubts. Yes, we imposed 20 packages of sanctions. Yes, we have certain leverage to make harm for Russian economy. Is it enough for Putin to see us at the table? I have my doubts.
And thinking about sort of the other geopolitical event that has really dominated the world for the last few months, obviously it's the war in Iran, the great many consequences that has had over across the world, including the energy prices and inflation here in Europe. I'd like to just get your assessment on kind of where we stand now. It seems there is this memorandum of understanding. How active do you think this will be a conversation at the Council, particularly around what Europe's role could be in the Strait of Hormuz in securing it and to make sure there is a free passage of ships?
We have to support United States efforts to find a solution, diplomatic solution. I hope we are at this point where we can find a sustainable solution and free the traffic in the Hormuz Strait. And for Europe, of course, we have to support the United States activities, and probably there's no need to talk about the war, which does not affect us or something like that. For us, it's very important to keep this region stable, to keep the traffic, maritime traffic stable, because as you rightly mentioned, it has huge impact on the oil prices, on inflation, and probably there's another lesson we have to learn from this.
The Lithuanian president speaking to Oliver Cook in Brussels before the G7, I should point out. The US and Iran, it now seems, are delaying their negotiations for a permanent peace deal as clashes between Israel and Hezbollah reignite. Anna Rosenberg, the head of geopolitics at the Mundi Investment Institute, joining me around the table. Good morning.
Good morning.
Is this an Iranian flex? We've got all the power here. We've won the war. Is that what they're showing this morning by not showing up in Switzerland?
I think it is. Clearly, Israel and Hezbollah tensions are still ongoing, and Iran has insisted that this should be part of any deal. So since Israel isn't complying, Iran is saying we're not complying. And then there's a lot of details in this supposed memorandum of understanding that are probably still not agreed on. I mean, you heard Iran saying that they're still planning to charge fees for Hormuz passage. So there are still many fragilities, as we can see.
So what do we do with this uncertainty? Is it something we're going to have to learn to live with? Can we resolve it? What do you think the outcome is going to be?
I think it's going to be complicated for the next few months, at least. We have 60 days, supposedly, the ceasefire. Let's see if it opens the Strait of Hormuz fully. There are a lot of challenges still here. I mean, Israel is facing an election in October. Netanyahu is facing an election. This deal is not good for Israel. There's huge dismay for Israel here. Then you have the Iranians themselves. Right now, the deal is very advantageous for them economically, and I think that keeps them coherent and consistent behind it. But you have also rivaling power fractions within it that could start to unravel if it no longer is economically viable. And how much are they going to benefit from it economically? This is also still, there are many question marks. So there's still a lot of risks here.
But it seems for them, at least in the short term, that things kind of hold together. But we've got, as you say, the Israeli elections, we've got the US midterms coming up.
Yes.
The Iranians need to empty their tanks. They need to get a bit of money into the country.
Yes.
Once we've ticked all those boxes, then what?
Well, firstly, let's look at, there's an economic interest for both the US and for Iran to see the strait slowly reopen. We don't know if there's enough confidence to go back in for the shipping companies. We don't know how many mines there still are. So there are a lot of uncertainties there. I think we're going to see occasional disruption, drones flying around. So there'll be a persistent risk premium. What happens then really depends on a lot of factors. And we could see the US go back in after the midterms, because right now this is for Trump about not losing the House and the Senate. But what happens once these are out of the way? Is he really going to move on from the Middle East? I don't think that the reality is going to allow that, because the current deal on the table, if it holds, and if it turns into a permanent solution, makes Iran much stronger in the region geopolitically, which is a problem for the US and its allies.
China, how does it look at all of this? I keep hearing jokes that China's the big winner out of this. Kind of the US lost, sort of Iran won, but China's the big winner. Is that the kind of the real story here?
I don't think it's the only story, but it's certainly a story. I mean, the US has undermined a critical ally right now, and that makes any US ally now very concerned, firstly. Yep. Secondly, it shows how limited ultimately the military powers of the US are, how overstretched it has been in order for Iran to be able to walk out of this victorious with a massive respite. China is looking at this, and firstly, they are benefiting if the Strait of Hormuz reopens, because it's not good for China, for oil, etc. But ultimately, they are, still looking a lot more responsible in this context. And it also opens a lot of questions about what can and cannot be done in the South and East China Sea. Because you have a weaker military player causing huge global disruption with a few drones. Now, what can you do in the South and East China Sea with a couple of fishing boats?
Yep. Blockades, choke points. Let's just talk a little bit about those for a moment.
Yeah, well, this is exactly what I'm alluding to. You don't need huge military power to cause massive global disruption.
So what does that mean for Taiwan?
Well, I mean, the U.S. is fully dependent on China's semiconductor industry. When you look at on Taiwan's semiconductor industry, when you look at China's semiconductor industry, it's been consistently less dependent on external factors. And actually, China has been very actively reducing its global dependencies over the last 20 years. So I think we are not yet sure how this entire situation is going to land. But if it lands how it looks at the moment, with Iran emerging victorious, this is going to undermine power of the U.S. as a superpower. And we'll probably see a lot new alliances emerging, new security alliances, new defense alliances that are trying to de-risk from the U.S. over-reliance and to some degree also benefit China.
You advise a lot of people that run a lot of money. So let's talk about, what are you telling them about the tail risks that they face in terms of where they're going to put that money? Because U.S. financial markets are just basically going, this is in the rearview mirror, we're done. Let's move on. We can go, let's go.
Yeah, well, I mean, clearly it's still about diversifying in this environment, about understanding that persistent volatility is here to stay, that expectations are going to change very quickly on growth, on inflation. There's a persistent risk premium now. It's a very new investment environment right now. Geopolitics now shapes the macro backdrop. It shapes how policymakers make decisions, how they set interest rates. And it also provides opportunities, because if we're talking about Hormuz and rerouting, who are going to be the winners from this? They are going to be winners. So it's about looking at these as well. Who are the winners? Well, we will see how the regional infrastructure unfolds and where things are going to flow. We have new pipelines being built, so the companies involved in these infrastructures, for example, are going to be the winners in this environment. And anyone that's going to be able to divert attention away from risk areas is going to benefit from this. I think countries that have institutions that are still trustworthy, that includes Europe, that includes Asian countries, that includes Japan, are going to benefit from geopolitical rivalry.
Back to the choke points. Inflation. Is that the line? Is that just the takeaway from all of this? That inflation stays higher, that all of these risks basically add up to a more inflationary environment?
We analyzed geopolitical regimes since the beginning of the 20th century to understand what impact they have on markets. And there's a clear, the regime that we are in today has parallels to inflationary dynamics. And that makes sense, because we're in a world that is less efficient, where it's about building resilience, where it's about diversification, it's about control. That costs money. Building new supply chains that are not cheap, that are actually allowing you to have more self-sufficiency, costs money. So I think that that's an implication from the whole geopolitical environment that we are in. It's now a low trust world, and that is not anymore about cost reduction, efficiency. It's about control, and that has, I think, cost implications.
Anna, great to see you. Thanks for stopping by to see us here. We really appreciate it. Anna Rosenberg of the Amundi Investment Institute. Now, to the other top stories that we are watching so carefully this morning on the Bloomberg terminal. The US has launched a tariff investigation into Germany's pharmaceutical pricing policies. The US Trade Representative, Jameson Greer, says Germany's push to curb drug spending unfairly burdens American innovation. The inquiry could be resolved through talks, but it risks reigniting trade tensions between the United States and Germany. Staying in that space, Novo Nordisk is launching a $69 million network of research incubators across Europe aimed at creating breakthroughs in obesity and diabetes treatments. The incubators will host promising university research projects and develop them into therapies or startups. It opens its first location in London this month. And former President Barack Obama's $850 million presidential center has now opened in Chicago in a ceremony that took place yesterday, Thursday. Obama gave a speech calling on Americans to remain politically active, quote, even in the face of cruelty and bitterness. Notable attendees included former presidents Bill Clinton and George W. Bush and the former German Chancellor Angela Merkel. The centre opens to the public today as the US marks Juneteenth, the holiday that commemorates the end of slavery in the United States. Coming up, we're going to return to the tech story. TradeGate. Watching it carefully this morning because SpaceX is down. I think this is the third day that we are going to be down. It's extending its losses. This after the stock closed at the end of the debut week, which was short in November, by 37% to the upside. But we faded that quite considerably. We're going to talk about that and why. We'll do that next. This is Bloomberg.
You missed it on Bloomberg Insight.
When they say fair taxes, fair share, what do they mean? Like, I agree with the fact, if it were up to me, I saw Jeff Bezos, who I love, swashbuckling. I don't think the lower people making under a certain amount have to pay any taxes at all. And that's what people seem to want. They think that somehow being anti-business is going to help a city. It's not. So we all want to pay fair taxes. That's not the point. New York's booming, so you're not going to see it in this year's taxes, but a lot of people are paying billions of dollars taxes left. Why do you want that? How does that help the lower paid person in New York?
So what do you make of the beef Mamdani has with Ken Griffin? I mean, there's been a lot of pushback as well from...
My view is, I think vilifying people, simplifying arguments, even if you think it's politically, is a bad idea. And I think he probably realizes that was a bad idea. It's probably why he's seen a bunch of us now.
Don't miss Bloomberg Insight live weekdays.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs, they have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Oliver Cook at the G7 Leaders Meeting in Evian-France, and this is Bloomberg.
Okay, welcome back. 46 minutes past the hour. Let's talk about kind of what is happening out there. You're looking at a market that is closed in the United States. So you're seeing light volume here in Europe. Just be aware of that. But there's a fair few stories that are worth focusing on. Let's focus now on what is happening in the tech world and the landscape that we are watching. Alibaba's chairman, Joe Tsai, sees AI creating a $50 trillion economy. He spoke to Bloomberg's Francine Lacroix at the Viva Tech conference in Paris, along with the General Catalyst Managing Director, Jeanette Zhu-Furstenberg.
We always say when the world changes, you have to change. You have to change yourself. And we saw this coming, especially we're in the era of transformer models and generative AI. And we felt that this was definitely the direction, but it requires a lot of will, a lot of capital to be invested. And in order to do that and turn things around toward those, pretty heavy CapEx investments, you really have to have the will to do it. And we did. We decided that this was going to be the future. And I've said this earlier today, AI is not just about a technology that is going after the IT budgets or the software budgets of enterprises or consumers. It's going to be, the TAM in AI is a $50 trillion economy because it's all about human productivity and human intelligence. And roughly in the world, there's about 110 trillion GDP, and about 60% of that is labor, right? So AI is going after that segment, and it's going to be huge.
Jeanette, in this environment, I guess capital alone isn't enough. So what do you see the role of investor to be? Is it, build companies, or actually also instill a bit of competition between the regions?
Actually, I think what you said is really interesting. So if you look at the position Europe is in relative to China and the US, we have a different problem to solve. You're building a lot of, very strong AI capabilities, and so is the US. I think from a European point of view, exactly the service and the sort of the 50 trillion service market is something that we cannot afford to lose. If you look at the gap between European and US GDP is roughly 12 trillion, and that exactly is sort of the accumulated market capitalization of the big five, and that's only services. If we now think about labor, and we don't lean into actually owning our own destiny in terms of building all the technology from energy to infrastructure all the way up to the application layer, at least to some degree, then we will be seeing the largest involuntary transfer of wealth from Europe and, quite frankly, other regions of the world towards the US. So I think it's just something that, as much as I work with an American company, as much as I love the US, I kind of feel like we do need to do something about that. And so that's why I do what I do, and that's fundamentally where I feel like the direction of travel is and where the most ambitious founders are building towards.
And the role of investors. Joe, talk to me a little bit about, if you become of scale, a very, very big company like Alibaba, then the challenges also differ. What do you see as the biggest difference in changing direction or actually getting things done at a larger scale compared to a small startup?
Well, the difference going from a marketplace business, which is capital light, into AI. In AI, you have to deploy capital, and we've become a heavy balance sheet company pretty quickly over the last few years. But I don't think there's a fundamental difference in the sense that in both types of businesses, you have to make investment, and you're investing for the future, and you have to have a view of where the future is going to be. And if that view is very clear, then you could have a high degree of confidence on the ROI of that investment, whether it's investing in a capital light, software type capital light business, or you're investing into consumers and things like that, versus CapEx investments. I think it's financially it's the same thing, from an ROI standpoint. But I think that the biggest differentiator is you need to have a view of what's going to happen in the future.
Francine Lacroix in conversation with Alibaba Chair Joe Tsai and Jeanette Zhu Furstenberg of General Catalyst. Different views on the same issues. Let's talk about what is happening in terms of the narrative we're watching this morning. Big ramp up at the beginning of the week in SpaceX. That has now been faded, and you're looking at a position now where I think we're probably down for 3 days if I take the trading that we're seeing on TradeGate this morning as being real. We've also watched overnight news emerge that the company is also going to raise debt now and has received investment-grade bond scores from 3 major ratings firms. This as it prepares to raise $20 billion in a debt sale, having just raised huge amounts of money, obviously, via that equity issuance, though it didn't actually raise that much because the free float isn't that big. Moody's grading the debt of the firm at Baa1, Fitch at BBB+, S&P Global at BBB. Does that make sense? Let's try and find out. Neil Campling joins us now to discuss. Neil, what do you make of these investment-grade ratings that we've just seen applied to SpaceX?
Yeah, it's interesting, Guy, given, the balance sheet is better than it was, clearly, but they are going to obviously be burning through considerable amounts of cash. By getting those grade ratings, it obviously helps them in terms of coming to the market and trying to follow in the footsteps of other big tech peers such as Alphabet, who have successfully come to the debt markets as well as the equity markets recently. But SpaceX, in terms of this, is being used to refinance a bridge loan, but they're clearly going to, as you mentioned, with a low free float as well, they're probably likely to come back to the markets this year to tap markets for more cash, because the ambitions are huge and they need to try and play catch up on the AI investments. They're likely probably to spend around about $45 billion on CapEx this year. Now, to put that in context, Amazon is spending nearly 5 times that amount, and the 4 hyperscalers combined are on course to spend over $800 billion of CapEx. And I think Goldman's have come out and said that they expect next year's CapEx by the hyperscalers is likely to be $1.1 trillion and may even be as much as $1.4 trillion. So SpaceX needs fast catch-up. It needs access to as much cash as it can lay its hand on, in all honesty, through a variety of instruments, because it's got big ambitions, clearly, but it also needs to try and play catch-up, because it is, frankly, way behind in terms of its AI development today compared to some of the big cap peers.
Why go down the debt route? Why not go down the equity route, considering what is happening with the stock?
Yeah, I suppose. Well, they've obviously. Well, I think it's looking at what rivals have done, and there is clearly cross-asset appetite for exposure to the multi-year tech developments, if you like. It's we're looking at it's a different kind of industry currently. We're looking at kind of industrial tech, really, rather than the historic times of the past of being capex light, free cash flow heavy, as they're looking to build out these infrastructures in place. But I think they're going down this route because they have seen the likes of Amazon, of Microsoft, of Alphabet, and of course Oracle, quite famously in some respects, tap into various parts of the market. But where it slightly differs, of course, is that some of these other companies are generating huge amounts of free cash flow. So they have low leverage ratios and have really pristine balance sheets. It's difficult, really, to say that SpaceX has that today because, as I say, they're many years behind in terms of that build-out.
Does ASML have a Lutnick problem? The Commerce Secretary in the United States saying he's a little worried that one of their high-end machines has found its way into China.
Yeah, I think a couple of things. One, obviously, the export controls have been in place since 2019. It's been a very long time. ASML have been very compliant with all of those control laws. If there has been one that slipped into China, I think ASML ultimately would likely have a kill switch, in all honesty. There's only so much you can do with the tools without constant upgrades of the over-the-air software upgrades as well as the equipment. So I think the impact should be fairly limited, and you can kind of see that in terms of very limited stock price reaction in Europe this morning for ASML stock.
Neil, great stuff. Thank you very much indeed. Neil Campling of Bloomberg News. Up next, we're going to talk about the economic story that has developed this week. We're going to focus on the Fed. That's next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said,
Succession starts now.
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
Ebola can be a risk for all of us. The solution is not to close borders. The solution is to provide sufficient support.
Premieres June 26th, only on Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Next week on Leaders with me, Francine Lacqua. I speak to the outgoing chief executive of BHP, Mike Henry, about his do's and don'ts for making deals.
You don't want to be setting strategy in the middle of a transaction.
Changes he made at BHP.
We needed to make sure that we had a portfolio that was fit for the future.
And how to ensure smooth leadership transitions.
Day one, succession starts now.
So tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Okay, top of the hour. Welcome back. You're watching Bloomberg Markets. I'm Guy Johnson in London. US markets are closed today. It is the Juneteenth holiday. They will return Monday. So in some ways, a quiet session is developing. However, there are plenty of things that actually are worth focusing on this morning. We're seeing certainly significant uncertainty emerging between the United States and Iran. They have postponed the start of their negotiations in Switzerland over a permanent peace deal and the restrictions that could be applied to Iran's nuclear program. Here in the UK, Andy Burnham has won big. He's become a member of Parliament and is now likely to challenge Keir Starmer for the leadership of the Labour Party and, of course, the keys to 10 Downing Street. Starmer this morning saying, not so fast. Gilts are dropping on that news. And ASML stock is dropping here in Europe as the US Commerce Secretary, Howard Lutnick, warns of a possible violation of US export restrictions. OK, let's get to the markets. All of this with a caveat. The US markets are closed, therefore volume is light. Nevertheless, Brent is still sub 80, despite the fact that these talks in Switzerland are not taking place. The pound is up, despite the fact that we are likely to see a little bit of a contest for the keys for number 10 Downing Street. Gilts are under pressure. That's worth bearing in mind. European equities are going nowhere in a hurry. We are drifting sideways. We don't have the US to give us a volume boost this afternoon. And we're trying to calculate what is happening in the Strait of Hormuz and what that means ultimately for risk assets going forward from here. I also just want to quickly show you what is happening with SpaceX. Its stock is under pressure. This is TradeGate pricing that you are looking at here. But if accurate, we are basically seeing a third day down for SpaceX, and we are down circa another 3%. We will return to that story shortly. But first, let's deal with the details of what we are understanding around the talks that have not taken place in Switzerland today. Washington and Tehran delaying the talks that should have taken place in Switzerland. Israel and the Iranian-backed Hezbollah militants continue fighting in southern Lebanon. That looks like it is the reason why these talks are not taking place. Bloomberg Opinion's Mark Champion joining us now for more. Mark, what do you make of the delay to these talks? What do you ascribe it to?
Well, the Iranians have said that it's about Lebanon, and we have more fighting in Lebanon. The Iranians, through various sort of channels, media, some officials, and so on, have said that their interpretation of the deal is that Israel should withdraw from southern Lebanon. So they want it to withdraw. Israel is saying it won't withdraw. Whether that interpretation will stand is unclear, but at the moment, the key is that there's pretty heavy fighting in Lebanon, and the Iranians say that's in breach of the ceasefire, in breach of the deal that they signed, the memorandum of understanding, and until that stops, they aren't going to be doing any talking.
Financial markets seem to be assuming that all of this is in the rearview mirror, that we can reopen the Strait of Hormuz, that a deal will get done, that everything is going to be okay going forward from here. Does what we are learning, what we've just been talking about, what you've been talking about, maybe call into question that certainty that this is in the rearview mirror?
Well, yes. I mean, nothing should be certain. This is a very vague deal. There are a lot of questions around it and how it's going to play out. But for the moment, right now, what's happened in Lebanon has affected the schedule for the talks that follow on to try and get a more permanent deal, to get a nuclear deal. That it's affected those. It hasn't affected the Iranian commitment to open up the Strait of Hormuz. So that is that would be the sort of the big worry, the big weapon that the Iranians could pull, and they haven't done that. So that's kind of on track. It will take some time, but it's on track. It's really the talks that aren't, and we'll see how that plays out. Whether the Iranians, ultimately want the deal. Ultimately, they want to have the economic relief that they want to get into the talks. If they do, then they will find a way to agree on Lebanon. If they don't, then this really is, the deal is about them trying to get the leverage to end the war and get Israel out of Lebanon and to help Hezbollah. And it's really about a war by another means, if you like, for the Iranians.
Mark, thanks for the update. Thanks for the analysis. Mark Champion of Bloomberg Opinion. We appreciate it. Joining us now is Chuck Lieberman of Advisors Capital Management. Chuck, we've seen over the last few days a very big risk-on kind of move, and we've watched US assets in particular respond to the fact that we can now, they think, put the Iranian conflict in the rear-view mirror. We can move on and focus on other things. What is your assessment of the situation?
Well, there's no doubt that the Iranian situation is driving the markets. And so really, your question almost comes down to how is the situation with Iran going to play out? It's surprising to me that Trump made the concessions that he did. He's apparently under quite a bit of pressure from various Republicans and U.S. sources to not make these concessions. And it remains to be seen how that plays out. The Iranians are playing their cards very, very hard. They are trying to force Israel out of Lebanon, even though Israel wasn't a party to the negotiations. And Trump is sort of caught in the middle. So I don't know how he does this. But the markets, as you say, seem to be looking through it, hoping that this deal in one form or another does find a solution, and therefore the fighting ends and the straits remain open or reopen, and therefore the markets can move on.
If it doesn't quite work out that way, should I assume that we're going to continue to see inflation as being a problem? Like, it does seem that the takeaway, and all the experts I'm talking to at the moment, seem to suggest that the Strait of Hormuz is going to remain a choke point, that we're going to see volatility around it, that this is the new narrative we have to live with, that around the world, choke points are going to become a new reality. And as a result of which, this is all going to cost money, and inflation is going to be higher. Is inflation the derivative of this conflict?
It's not quite for the reason that I think you're thinking. So yes, oil prices moved up dramatically when the strait was closed, but the oil prices have come down quite a bit just on the anticipation that it's going to reopen. And I think part of that is because there have been a lot of ways to get around the choke point. So we've seen China cut back significantly on its imports of oil. We've seen other countries around the world step up production. And of course, given more time, they can step up production even more. So oil prices have not increased to the degree that was expected. There's something else that's also going on, which is the U.S. labor market is actually quite tight, and the economy is doing well. And if the Fed leaves policy where it is, then the labor market will get tighter, and that potentially increases labor costs. And we may or may not get enough offset from productivity and AI to compensate. And therefore, that's my concern. And I suspect it's also the Fed's concern. I think the market is more distracted by what's happened to oil prices, thinking that that's going to drive inflation. And that may not be the driver that a tight labor market will be.
Okay, so we should see the Fed hiking rates. The market's price for a couple now. Do you think that's the right call? Do you think Kevin Walsh will deliver those?
Well, I think Kevin Walsh may be leaning towards rate cuts, but he is very far from stupid. He understands that most of the Fed thinks that higher rates, there's a better case for higher rates than for lower rates. He can count votes, and he knows he doesn't have votes for rate cuts. He himself previously, but well before he was considered for the Fed chairmanship, was regarded as something of a hawk. He knows inflation has been high, and his statement after the FOMC meeting was unambiguous that he wants lower inflation. So he regards 5 years of exceeding the Fed's 2% target as really unacceptable and really counterproductive. So he may well be accept a vote for higher rates. But I don't think we're going to get higher rates quite yet in terms of policy. And that's because we don't yet have time to see the downward pressure on inflation from the decline in oil prices. Oil prices have gone from 100 to under $80 a barrel. And therefore, that will get a surge of downward pressure on inflation as measured. We will see declines in inflation. And we need to see the underlying trend. And so I think the initial position of the Fed will be give it time, no change in policy, leave things as they are, watch how the economy responds, watch how inflation responds, and then we may see the Fed raise rates at least once to send a shot across the bow of the markets.
How do you think Wall Street's going to cope without a forward guidance story emerging from the Fed?
Well, those are the good old days. I remember, I started my career as a Fed watcher, and you had to figure out what was going on in the economy, what was the Fed doing by examining its balance sheet. The Fed didn't tell you. These days, it's very easy being an economist on Wall Street because all you had to do was repeat whatever the Fed said. Now it's going to be harder. You're going to have to analyze the data, and the market is very good at that. They will look at the data as it comes in and will form its own judgment about what's likely. The market understands that there's more risk of upward pressure on rates than lower pressure on rates, and we've seen that happen in the marketplace. But the economy is rolling ahead, so that's very good for corporate profits, and that's why the stock market is near highs. So the market is good at figuring this stuff out.
Yeah, we used to watch the thickness of Alan Greenspan's briefcase. I definitely remember doing that. Chuck, thank you very much indeed. Chuck Lieberman of Advisors Capital Management. We greatly appreciate it. Let's talk about some of the other stories that are trending on the terminal this morning. The US has launched a tariff investigation into Germany's pharmaceutical pricing policies. The US Trade Representative, Jameson Greer, says Germany's push to curb drug spending unfairly burdens American innovation. And the inquiry could be resolved through talks, but does actually risk reigniting trade tensions between the US and Germany. Staying in the space, Novo Nordisk is launching a $69 million network of research incubators across Europe aimed at creating breakthroughs in obesity and diabetes treatments. The incubators will host promising university research projects and develop them into therapies or startups. It opens its first location in London this month. And the former president, Barack Obama's $850 million presidential center opened in Chicago in a ceremony held yesterday, Thursday. Obama gave a speech calling on Americans to remain politically active, quote, even in the face of cruelty and bitterness. Notable attendees included the former presidents, Bill Clinton and George W. Bush, and the former German Chancellor, Angela Merkel. The center opens to the public today as the US marks Juneteenth holiday, the holiday that commemorates the end of slavery in the United States. Coming up, Andy Burnham's return to UK Parliament could be paving the way for him to challenge Prime Minister Keir Starmer for the keys to 10 Downing Street. More on that story next. This is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
In case you missed it on Bloomberg Surveillance.
We should be basking in Nick's glory right now.
I think you are basking. There is quite a bit of basking.
It was just incredible.
You could feel it through the entire city.
I was there.
I mean, you're just waiting for it.
I saw Patrick Ewing. I saw everyone.
It has been an amazing moment where even a Yankees fan and a Mets fan can come together.
This is why it's so incredible for New York.
And have enthusiasm for New York City.
Everyone can coalesce around the Knicks.
Don't miss Bloomberg Surveillance live every weekday.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Friday the 19th, this is Bloomberg Markets. I'm Guy Johnson. I'm in London. It is 15 minutes past the hour. Let's check in and see exactly what we are watching when it comes to the markets. Crude is just below 80. We're off our earlier lows. We're trading at 79.74. The United States and Iran are not going to be talking today in Switzerland. So keep an eye on that one. The pound is actually a little bit stronger today, which I find interesting because gilts are actually under pressure. We'll come back to the UK politics story in just a moment and talk more about that. S&P futures, remember, obviously we have no cash trading today, are drifting sideways, but I can tell you that SpaceX on TradeGate is a little softer this morning, so just bear that in mind. Anyway, let's talk more about politics. Let's talk about what is happening here in the UK. So the outgoing Mayor of Greater Manchester, Andy Burnham, delivered a decisive victory for the UK's ruling Labour Party last night.
But I do say to my own party, this is a final chance to change. This is what people said directly to me on the hundreds of doorsteps that I stood on. We must hear it. We must act upon it, and we must get it right. There will be no second chance.
So the win in Wigan, adding big pressure, obviously, to the story around who is going to be the next Prime Minister here in the UK. Prime Minister Keir Starmer? Is he going to go quietly? Is he going to go with a fight? Are we going to see a leadership contest? He was asked that question a little bit earlier on.
There isn't a leadership contest.
But when there is,
at the
it's imminent,
moment,
Prime Minister,
there
isn't
isn't one at the moment. But as I've said on many, many occasions, I don't think that's a good thing for the country to plunge us into chaos. I would also add that now that Andy has won, which is really important, really good, he's a huge asset to us, then now will inevitably be a Manchester mayoralty by-election starting straight away. So it's important that we pull together for that. But if there is a contest, just to be clear with you, then yes, I will run, I will stand, and I've said repeatedly, I'm not going to walk away from that.
Traditionally, that's not how the Labour Party does it. Traditionally, somebody steps aside and then somebody steps into the role. Could we be about to see a little break with that? Are we going to see a contest or a coronation? Is Andy Burnham going to ease his way into 10 Downing Street, or is he going to have to fight his way to get there? Let's find out. Bloomberg's Ruth David joining me around the table. What do you think? Contest or coronation?
Your guess is as good as mine, right? I mean, it's not happened in the 126 years of the Labour Party, so it would be quite something. But it was interesting that when Burnham, in his speech, he laid down the gauntlet, right? When he said he's talking to members of the Labour Party that they need to change. They're not going to get a second chance.
Yep.
I mean, those broad outlines are very clear. It was also quite interesting that Starmer was saying, you know, voters have chosen the Labour Party, and so they've voted against division and hatred.
Yep.
But the Labour Party seems to be very, very divided. We're being briefed about, you know, could MPs start resigning over the weekend or in coming days to kind of force Starmer's hand.
Yeah.
And remember, just a few days back, the Defence Secretary quit, and that was really damning for the Prime Minister and the Chancellor. It looks like there's going to be quite a lot of uncertainty in the coming days, and that, I think, when Starmer spoke and Burnham spoke, gilt markets started getting a little bit more nervous because investors hate instability.
Yeah, hard to price. Let's talk about the win in Wigan overnight. It was big, it was massive. Burnham delivered. He smashed reform quite easily by the looks of things. Did Andy Burnham win in Wigan, or did the Labour Party win in Wigan? I.e., can I extrapolate this win onto the national stage? If there was a general election tomorrow, would Burnham be able to deliver the same sort of outcome? Because maybe some Labour MPs assuming that he could.
I think Burnham is definitely going to make that pitch, and especially to your point, you know, pollsters were not predicting such a big win. And if you look at how the reform vote was split between reform and restore, right? So the closest the next contender got was 35%.
Yep.
And if you look at the Conservatives, Lib Dems and Greens, less than 3%. I mean, I think Burnham can convincingly make the case that if voters are using the Labour Party as a proxy to maybe keep Nigel Farage from coming to number 10 Downing Street, he is the Labour Party's most effective, most potent candidate to do so. And I think after this victory, no one is going to challenge him on that point. Now, whether he has enough to be a national leader, I mean, well, we and others were reporting how he's tried to surround himself with advisors from former Goldman Sachs economists to former chair of the budget watchdog to get the economic perspective right, because he knows that that's where he's seen as weaker, right?
OK, so given that, and I read those stories with interest, and the first thought I had was, OK, so if he's doing that now, what does that tell us about potentially who he could pick for Chancellor?
Yes.
Or does he keep Rachel Reeves? Or does he go with somebody else?
Like Shabana Mahmood.
Or go with...
Has.
Yeah, precisely. Ed Miliband is being talked about as well, but the gilt market would probably take...
Yes.
...kittens if we were going to see that happen.
Let's not even speculate about that on air.
Yeah, but that's been talked about. But can I assume that because he's doing this, he's trying to figure that side out, that he would probably pick somebody more friendly towards the financial markets?
Yes, I think he's trying to surround himself with that. But I think we should also keep in mind that in recent days, he's reneged on some of the comments he's made, right? Not just about not being in hock to the bond markets, but also when he was talking about pension compensations, the idea of a wealth tax or no wealth tax. And then we know that, you know, he wants to nationalize some industries. And so how do you do all of that while also keeping the UK right and righteous on its fiscal fiscal deficit.
It's interesting because then you think about if he wants his own mandate, if he wants to do some of that stuff, does he need to go back to the country? And if he's going to go back to the country, some of that stuff could get really difficult, and he could get bogged down. And this leadership, this new Burnham leadership, could end up being unpopular again within 6 months, 9 months. We don't know. But so does he think, I've done well, reformer on the back foot, now's the time to go for a general election? Because there's some speculation around that as well, that we could see a general election early on next year.
That's possible. And I do think there is a case to be made that as a leader who has not been elected, his mandate and his ability to do the things that he wants to do, which are transformational changes, is not going to be much, right? And he's already potentially sticking to what Starmer and Reeves has said, that they have their fiscal rules and they are going to stay within them. But you have to wonder, when does the UK electorate get tired of this kind of musical chairs of prime ministers that we've had?
Yeah.
If Starmer goes, it'll be 7 in the last 10 years. I mean, do we have Brexit to thank for that or blame for that? It's hard to tell.
I know.
We're more nimble, arguably.
That's the positive spin. Thank you, Ruth. More nimble.
Thank you.
Let's look at it that way. Ruth David, thank you very much indeed. Let's go to Brussels. European leaders have been gathering for a 2-day summit following the G7 earlier this week. Bloomberg's Oliver Crook joins us now from the European Council. Ollie, what's the takeaway from the G7 into this meeting? What are they talking about?
Yeah, so they're going to do a little bit of a debrief from some of the things they discussed over at the G7. I think front and center, obviously, is going to be the war in Iran. There's not been a great deal of active role for the Europeans there. They'd offered a mission to demine the Strait of Hormuz. But, of course, Guy, from the very beginning, the French have said this, and everybody else involved in it have said this, that this needs to be a really stable, a sort of confident pact with the Iranians. This needs to be a peacetime operation to demine the Strait of Hormuz. If that is not the case, there's not really any active role that the Europeans can have in that process, who are very obviously keen to reopen the waterway completely and fully. Of course, the other topic is going to be Ukraine. We did hear from the President of the United States over at the G7 that he was prepared to potentially start to re-engage on the situation in Ukraine, trying to bring that war to an end. That being said, the Europeans, I think, at this stage are thinking about the alternatives, right? Because, of course, Trump said he was going to end the war in 24 hours. He was very sort of actively engaged in those discussions, holding a lot of those high-level summits with Vladimir Putin, and then effectively just completely abandoned the project. That left the Europeans asking, what is our role here diplomatically? We've had basically zero outreach with the Russians, and that comes to our story that we reported over the last couple of days, that apparently the European Council President, Antonio Costa, reached out to back channel with the Russians directly. Now, that has occupied a great deal of the conversation for the last 2 days here in Brussels about whether or not Antonio Costa, the President of the European Council, is the right person to do that. And if he is not, then who is? Because I think the Europeans are very cognizant of the fact that at this stage, if they want to get a seat at the table, they may need to begin re-engaging with the Russians diplomatically. I've spoken to a couple of leaders, namely the leaders of 2 Baltic states, Latvia and Lithuania, both of whom are extremely skeptical of those sorts of initiatives from the European side, because they say basically the Russians have no interest in talking, and that's pretty clear from their behavior. Of course, the last topic, Guy, is maybe even the most contentious topic, and that is how to treat China. There is a dawning realization, even by those that are less hawkish on China, like the Germans, who are very dependent on the Chinese economy, that basically the current arrangement with the Chinese is not going to be tenable. We're talking about a trade deficit between the EU and the Chinese that is reaching €1 billion a day. And so they need to talk about what possible trade measures they can take against the Chinese without inflaming them too much and creating a massive economic problem. So that is going to be front and center in the conversations here today. I doubt we're going to have a full resolution and a sort of final position on how to act with China, but that is something that for the Europeans is something that they can basically no longer ignore.
Oliver, thank you very much indeed. Oliver Crook in Brussels, our Europe correspondent. Just want to just bring you a headline. Iran is now saying that all vessels need to submit requests via the Hormuz Authority. Is the Strait of Hormuz really open? That is a big question. Ryan Sweet of Oxford Economics is going to be joining us next. We'll talk about the Fed. We'll talk about where we should focus next. That's the story that we're going to be watching. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield now at its new time. Thursdays at 12 p.m. Eastern, right here on Bloomberg.
In case you missed it, on Bloomberg Brief.
When we were talking about it originally, we thought that this was going to be a very short war. We thought that the energy price hike or increase would be just a spike up and down, but it's been persistent, and that's the concern that we continue to have, because we're starting to see a little bit of fragility in the consumer. If we look at consumer inflation expectations, they're much higher than what the market is pricing in.
Don't miss Bloomberg Brief, live every weekday.
Friday the 19th, Juneteenth. Let's talk about the markets. This is what we're looking at 1:30. You are seeing Brent begin to rise now. It's been down most of the morning. We are still sub 80, but look at that. We're beginning to climb back towards that 80 level. This is we watch a little more turbulence around the Iran-United States story. They're not going to have a meeting. The Iranians are saying ships need to ask them before sailing through the Strait of Hormuz. The pound is actually a little bit higher, which is interesting in the light of the fact that gilts are a little bit lower. This is we watch Andy Burnham win big in Wigan overnight and now try and make his way towards 10 Downing Street. European stocks, light volume today. The US is out, no cash trading. So we're kind of drifting sideways, to be honest. We are, though, wrapping up a big week when it comes to central banks. We've seen the Bank of England this week. Obviously, we're still digesting what happened at the ECB. But the big story out this week was really from what we got from the Fed. And this guy, Kevin Walsh, the new Fed chair, his debut. And he was absolutely front and centre this week. What is interesting is what he emphasised and what he didn't emphasise. He very much emphasised his commitment to price stability, fighting inflation, and a big overhaul at the FOMC. So what does this all mean? And where do we go from here? Ryan Sweet is the chief global economist at Oxford Economics, the perfect person to ask about all of this. It seems, Ryan, as if the new Fed chair is determined to bring inflation under control. It hasn't been under control for quite some time. Can we therefore assume that the Fed is going to have to raise rates?
Not necessarily. I think what the Fed is going to most likely do is sit tight, ride out the situation in the Middle East, because when you look at the U.S.'s inflation problems, it's not the labor market. The labor market is arguably neutral to a little bit disinflationary. The U.S.'s problems are on the energy front, which the Fed can't directly control. And AI in the near term is inflationary. Down the road, it will be disinflationary. But that's also generally outside of the Fed's control. So in the end, I think the safest thing for the Fed to do is most likely just sit tight for a while and kind of ride out these fluctuations in energy prices.
Yep. So market pricing is wrong, right?
Yeah, I think so. And the other thing, looking back at market pricing, just a couple of weeks ago, they were pricing in 2 rate hikes. If you run that through, our global economic model or even the Fed's model, that doesn't really cure the U.S.'s inflation problems. That shaves a couple tenths of a percentage point off inflation. So that's maybe a step in the right direction. But I would be surprised if the Fed does opt to raise interest rates, because typically when the Fed raises interest rates, things begin to break, in the financial markets or elsewhere in the economy. So I think the best thing for them to do is just sit tight for the foreseeable future. And that's what typically central banks do when they're in a cloud of uncertainty. They try opt not to go decisively in one direction or the other. They just sit on their hands.
What you're telling me is that you think that current inflation in the United States is transitory. Is that right?
Well, economists, we've been scarred by the use of the word transitory. We want to be careful. Economists, we need to have a lot of humility when forecasting inflation. Ever since the pandemic, inflation volatility has come back. We've been hit by persistent and frequent adverse supply shocks. and that's really caused inflation to be, higher than what I think many economists have been expecting over the last few years. This, so far, the situation in the Middle East is playing out very similar to your traditional supply shock. That generally does argue that inflation is going to be temporary, but why the Fed wouldn't ease into this or ease, in the next couple of meetings into a supply shock is because the scarring effects, the long shadow. I think inflation could be a little stickier going forward than what we have seen in prior supply shocks that the Fed's kind of either eased into or just kind of rode through.
Ryan, you talk about breaking things. Walsh also talks about the fact that he thought the policy was too tight for the housing market but too loose for financial markets. Do you think he's kind of going to push that line a little bit further? Because, yeah, we could see things breaking, but in some ways you could argue that the housing market is already broken and needs fixing, but the financial markets are on a tear and probably need slowing down. Can he do that?
Now, monetary policy it's a blunt instrument. It's one, using the Fed funds rate, it's going to affect the economy across the board. You can't sort of cherry pick who you want to be winners and losers when you're adjusting interest rates. And maybe the Fed, by talking the talk but not walking the walk, I think that's one thing that you'll hear from Walsh and other Fed officials is they're going to continue to sound very hawkish in an effort to potentially cause financial market conditions to tighten, which clearly that they wouldn't be against. And that would do some of the Fed's work for them. That would help slow the economy. If you see the stock market come down a little bit, in an orderly fashion, that would kind of take some steam out of U.S. consumer spending, given that the top 20% of the income distribution accounts for 40% of consumption. They're very sensitive to fluctuations in the stock market. So a little tightening in financial market conditions wouldn't, really upset the Fed too much. On the housing side, mortgage rates are more sensitive to what's going on the long end of the yield curve. And I wouldn't say that the housing market's broken in the U.S. I think it's, it's just frozen. And the housing market won't begin to unfreeze until you see that 30-year fixed mortgage rate get below 6%, which I don't think we're going to, we don't expect that to happen in the near future.
Ryan, do you think you're going to have to work harder going forward from here? No forward guidance. How's that going to work?
Harder. I mean, it's going to be more fun, and arguably, Fed watching is now interesting again. It's going to be, you're going to have to really challenge to read all the tea leaves, less forward guidance. My concern is that this is going to add more volatility in short-term interest rates in the equity markets. I'm not too concerned that this is going to make my job harder. It's probably going to make it more interesting and fun, but just less forward guidance is going to be a little bit of an adjustment for financial markets. Under
what do you think that, so how do you think that is going to work out? It is interesting. I think in some ways you could argue that forward guidance has suppressed volatility, and that was the objective. Walsh clearly doesn't want to have that volatility suppressed. He wants that to be there. If he assumes that is a feature, what does it bring to the Fed? If you do get that more that volatility coming in at the front end, what is the win therefore for the Fed?
No, I think it just keeps them guessing, markets guessing. I think this Fed under Walsh doesn't want to be as transparent as you saw under Powell, Yellen, or Bernanke. They don't want to paint themselves in a corner. I mean, the Fed traditionally never wanted to paint themselves in a corner and pre-commit to a path of monetary policy. Walsh is going back to where you're leaving markets guessing. I think the biggest adjustment, at least in the near term, is markets and economists. We got to figure out what the Fed's thinking with regards to their reaction function. Are they putting more weight? Clearly, they're putting more weight on inflation. But if the labor market begins to shift and soften, does that reaction function begin to adjust? And that's something that it's going to be. It's going to take time to adjust, and you kind of read the tea leaves of this new Federal Reserve.
Ryan, I'm trying to think about what the second half of the year is going to look like and into next year. We're likely to have a slightly lower oil price, though I don't know how much lower it's going to be. An AI build-out that still continues at pace, judging by the fact that SpaceX is going to raise even more money. But I'm wondering also about what is going to happen with the fiscal impulse. And also the kind of the second derivative around the fiscal impulse and also the AI build-out. Do both of those two things slow in 2027?
Yeah, they do. So the U.S. economy is some of the automatics or key stabilizers, which been AI, that will continue to. You're going to see strong investment, but that second derivative, as you pointed out, begins to fade. So that contribution to GDP growth, and to give you some numbers, AI has been adding roughly 0.5 point to GDP growth all in. That's including all the investment in equipment, software, R&D, stripping out imports. It's been adding 0.5 point to GDP growth in the U.S., which is a good amount. It's not the only reason the economy is growing, but it's a decent contribution. That fades next year, so you're going to in the following year after that. So that support to the economy begins to fade. Very similar with fiscal policy. We get a big boost to the economy this year because of the large tax refunds, which the timing was perfect because that more than offset the rise in gasoline prices. But that is also going to be fading towards the end of this year and into next. And it's not just on the spending front for consumers; it's also the business tax incentives on tax dispensing. All of that begins to fade. But overall, when you have inflation coming down in 2020, decelerating in 2027. You got the labor market that is going to remain fairly tight. The U.S. economy is going to continue to do well next year.
Ryan, great to catch up. Thanks for joining us on this holiday. We really appreciate it. Ryan Sweet of Oxford Economics. We're going to carry on the conversation around what is happening with the Fed chair. His debut, certainly you could argue midweek, rocking the Treasury market. Traders certainly ramping up rate hike bets. Let's listen to what Ed Yardeni, president of Yardeni Research, has to say on the Fed chair's first press conference.
It's very Greenspan. I mean, it's, not a lot of information, a lot of ambiguity, and, occasionally some surprises. He started right off the bat with a surprise. It's kind of like he had an interview with President Trump and yesed him, told him everything that he wanted. Yes, we're going to lower interest rates. Yes, AI is creating productivity. Then as soon as he got the job, it's like the old Warsh concerned about price stability. He mentioned price stability over and over again. And not only that, but he pretty much committed to 2%. He didn't finagle that too much at all.
Mike Reed of RBC said, by their count, inflation was mentioned by Kevin Warsh 19 times compared to 4 times where he mentioned the labor market.
Right.
Is this...
And the labor market's looking good.
Right, exactly. There was no mention of dual mandate or a sense that maybe there's some weakness there in conflict in the dual mandate. Is this all talk and not action, right? I mean, if you were skeptical, you would say this is somebody who wants to job on the market. You're seeing the move that he wanted in the flattening of the yield curve. And then he won't necessarily
Well, I think he's hoping that he'll be lucky because so far so good. I mean, the price of oil's coming down. As you mentioned, the price of gasoline's coming down. We are going to see the headline inflation news coming down substantially. And if he's lucky and the recent inflation surge doesn't spread into the rest of the inflation numbers, then he may very well just kind of sit back and let that all happen. And then he'll say, well, look, things are going in the right direction. We don't have to do anything. And at the same time signal that down the road maybe the productivity story will come back as a reason to lower rates. But right now, it may be a do-nothing Fed for a while. I think the economy has demonstrated its resilience. People have been kind of getting all bent out of shape about the bond yield being back up, but it's back to 4.5%. That's kind of normal. I think the bond yield is normalized. I think Fed policy is normalized. I mean, I think Warsh can just kind of leave things alone here for a while because the economy is performing just fine.
Those are two different things, though. Leaving it alone versus hiking rates, two different things.
Yeah.
And understandably, people are watching what he does, not what he actually says. At the same time, if you do think about hiking 2 times this year, which even Bob Michael of J.P. Morgan was talking about yesterday, how much does that infect potentially some of what we're seeing?
Look, when the payroll numbers came out real strong, we kind of reiterated our position that there was not going to be any rate cuts this year, and that the Fed would probably switch to a tightening bias at this meeting, which is exactly what happened. They didn't go from an easing bias in April to a neutral bias. They went right to a tightening bias, and so we got that right. But the thing that really surprised me is how hawkish that Warsh came across. If the Fed were in a position where they had to raise rates, it'd be a quarter, 50 basis points. It wouldn't be a big deal, in my humble opinion. And the bond market might actually rally on that. Back in 2024, when the Fed lowered the Fed funds rate by 100 basis points, I said, you know, I think you're making a mistake here because the economy is resilient and you haven't gotten down to 2%. And the bond market agreed with me, my bond vigilante friends. The bond yield went up 100 basis points. And even last year, they cut 35 basis points on the Fed funds rate, and the bond yield, where is it today? 4.5%. So they haven't accomplished anything. So lowering rates hasn't helped, but they may conclude. Look, the thing that really came across to me is that, and he said it, Warsh said, look, we haven't gotten down to our 2% inflation target in over 5 years. And he said he committed the committee to get down to get inflation down to 2%. So, you know, how are you going to do that without raising interest rates? So I think the market's got it right now when we thought that there would be a tightening bias, and there could be an increase. If the Fed really wants to get it down to 2%, that may be necessary.
Big focus on inflation, raising rates. Yardeni Research President Ed Yardeni speaking to Bloomberg on the back of the Warsh press conference. Let's take a quick look at what we're seeing in markets. It's Juneteenth. US markets are closed. Just be aware of that. But when you look across the board this morning, while you are seeing all of this with light volume, you are seeing equities in Europe a little softer. Stock 600's down 0.1%. FTSE 100's down 0.3%. Keep an eye on the all stocks there. Keep an eye on the politics as well. Euro sterling down by a little bit, which is interesting. Sterling is higher today. The gilt yields are under pressure. Brent crude, 79.68. The latest we have on that is that the Iranians are saying that if you want to go through the Strait of Hormuz, you have to go through their routes and you have to notify them first. This as we see the postponements of the talks that are taking place in Switzerland, or not taking place today in Switzerland between Iran and the United States. What we're going to talk about next, I want to take you back to the tech landscape and talk about what is happening there. The US government apparently expressing concerns that ASML's top chip machines may be in circulation in China. We're going to have more on what is happening here. That's next. This is Bloomberg.
In case you missed it on Bloomberg Surveillance.
What is the Warsh Fed's response mechanism to inflation that is ticking, inflecting upward, given the fact that this Fed has been incredibly dovish? Are they going to wreck the party? I mean, ultimately, it's easy to be a skeptic, but I might as well join the party and not be so, skeptical, because you're not paid to be skeptical. You're not paid to poke holes. You are paid to just go with the mob.
Have we got that breaking news whoosh that drives across the screen? Bramo, I think, going to look to confirm this, but I think Bramo just turned bullish. Is that what just happened?
I think that it just doesn't pay to be skeptical. You take a look at every single different benchmark.
Okay.
I mean, it's sort of, what are we trading people? We are trading them that you cannot lose, and that seems to be the way to go.
Bulls everywhere this morning, getting very nervous following that.
Don't miss Bloomberg Surveillance, live every weekday.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura. I'm Salar de Uyuni in Bolivia, and this is Bloomberg.
Minutes past the hour. Welcome back. This is Bloomberg Markets. I'm Guy Johnson in London. Let's talk about how energy and tech interact. The US Federal Energy Regulatory Commission is stepping in to heighten transparency regarding utilities costs tied to data centers. FERC Chair Laura Sweats spoke to Bloomberg's Kelly Lyons about her commitment to keeping prices fair.
Under my leadership, the Federal Energy Regulatory Commission is going to ensure that our grid, which is very slow moving and has many barriers to it, is going to be accelerating our country into the future. And that means faster study timelines, faster connection of data centers, faster connection of generation that will power these data centers. But we're going to do all of that while protecting the American ratepayer and ensuring that no American will pay an unfair cost for data center connection.
Well, so talk to us about how you're going to achieve that component. Who ultimately is the bearer of the costs here? Because there are costs associated.
Yes, there are billions of dollars of costs associated with the data centers. And this is something that is very personal to me. I am the daughter of a Vietnamese immigrant and a 40-year civil servant. And my parents realized the American dream. And I very much felt the stress of the cost of utility bills as I was growing up. And that is something that I am vigorously safeguarding as the head of this federal agency that is tasked with ensuring that the cost of electricity in America is fair. Now, the president led a ratepayer protection pledge, which many of the hyperscalers have adhered to or pledged to, and now it is upon FERC in our federal jurisdiction to ensure that the hyperscalers are held to that agreement that they made with the president. And we at FERC ordered today, part of our order in the markets across the country, which each received individual orders tailored to how they are run. We are requiring more cost transparency on what is required to connect the data centers and the generation that they need than we have ever required before. And that transparency will make it such that no one can point a finger and say, well, we don't know how much it costs to the data center. We don't know how much the hyperscalers need to pay. Now we are going to have all of the data that we need, how much it costs to upgrade the grid to connect them, and they will pay everything that is required to get them the power that they need. And the American ratepayer will not absorb that cost.
FERC Chair Laura Sweat speaking to Bloomberg's Kelly Lyons yesterday. Let's talk about what's happening in the chip space. I want to start with ASML. Not down by that much, despite the fact that we've had Bloomberg learning that the US Commerce Secretary Howard Lutnick has expressed concerns that one of the top-of-the-line ASML chip equipment machines may have ended up in China, despite actually quite stringent US export requirements. Bloomberg's Neil Campling joins us now to discuss this. Neil, can I assume, judging by I think it's down by 0.6 or something this morning, ASML, that the market isn't taking this too seriously?
Yeah, I think, Guy, the market is basically suggesting that if one chip tool has got into China, then it's a controllable situation. Because ideally, when you're looking at these very advanced technologies, they also require constant updates over the air in terms of software updates, etc. So ultimately, it's likely that ASML would have a kill switch if they needed to use that. So I think maybe if this has taken place, they'll clearly to be investigating that. But actually, one tool, one piece of equipment is not going to be able to produce much in terms of the very leading edge technologies in any case, because it would appear industry participants think that China is at least 3 years, maybe 5 years behind the advanced technologies we're seeing in the most advanced chips that are coming out primarily from South Korea, Taiwan, and certain states in the US as well. So I think maybe there's a concern, but I think it's well contained, in all honesty.
Neil, let's talk about SpaceX. Stock down again, third day down. The news this morning, though, surrounds what is happening in the credit markets. It looks like it's going to use IG ratings, which it's now got, investment-grade ratings, just that's worth pausing and thinking about for a moment, to raise quite a lot of debt. How much money is SpaceX going to need?
Just enormous amounts, because obviously they have enormous ambitions to. I mean, you're just discussing just now on the program about the costs of the electricity and the grid to power these data centers. Now, if the vision of SpaceX is to build data centers in space, the idea is it will be considerably cheaper in terms of the energy costs, which is potentially true. However, to actually build these data centers in space is clearly going to cost an enormous amount of money. The hyperscalers themselves, the existing hyperscalers, are on track to spend more than $800 billion of capex this year. So if the estimates of SpaceX spending shy of $50 billion of capex this year, they're going to need to come to market. They're going to need as much money they can raise as possible.
Were you surprised that Elon Musk decided to compare this company to Union Pacific, a company that in the late 1800s kind of built an awful lot of railroads, but didn't quite build them all the way and ended up in bankruptcy?
Yeah, it probably wasn't the best comparison to make, in all honesty. As you say, the original did go through bankruptcy. And so probably not the best example to use, but I suppose the vision he's trying to say is that this is a huge grand scale, and in terms of obviously what happened in terms of that rail network, it was a grand ambition and eventually got there, but obviously through multiple iterations. Well, one of the things we need to keep an eye on is the path of progress that this company makes in terms of not just the debt offerings, but what it will ultimately do in terms of revenue, free cash flow, etc. All those traditional metrics, which eventually, investors will command and expect to see. The likes of somebody like an Alphabet, who's generated over $70 billion of free cash flow over the last 12 months, means they can afford to come to the markets and across multiple assets and come to the debt markets as well to raise funds much easier. So SpaceX is at the start of its growth journey, but it's also going to need to make sure it manages the access to capital, but also to keep a lid in terms of those costs, make sure that there's no cost overruns to avoid history repeating itself in that respect.
Just in 30 seconds, it seems like some early Anthropic users are still accessing the models, despite the restrictions the US is applying. What do we know about that?
I think very, very crucially, the main models being used, which are in the preview models, are primarily, if you look, by companies like Cisco, who are using it on the cybersecurity side. They're trying to test the system out to find out if there are any cybersecurity flaws or issues in that space. So the tools are being used for the right reasons.
Yep. Neil, great. Thank you very much indeed. Always appreciate the catch-up. Neil Campling joining us on The Tech Story. Up next, Leslie Marks is going to be joining us, as will Caterina Simonetti. We're going to debate what's happening in this equity market. We'll do that next. This is Bloomberg.
I think the productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20, best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs, they have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg.
Friday the 19th, top of the hour. Welcome to Bloomberg Markets. I'm Guy Johnson. Remember, US markets are closed today. It is the Juneteenth holiday, therefore no cash equity trading. We're keeping an eye on futures. Let's talk about what we need to know, though, this morning. Uncertainty is certainly emerging between the United States and Iran. They have postponed the start of their negotiations in Switzerland. Iran now also adding this morning that all ships going through the Strait of Hormuz must get permission from its authorities to cross the strait. So things are getting a little trickier there. Andy Burnham winning big. He becomes a member of Parliament and will now challenge Keir Starmer, it looks like, for the leadership of the Labour Party and the keys to 10 Downing Street. Starmer this morning saying, not so fast. Gilts are under pressure this morning. And ASML stock is dropping. It is down. This is the US Commerce Secretary Howard Lutnick warns of a possible violation of US export restrictions. OK, US markets are out. Volume is going to be light in Europe this afternoon when it comes to equities and also probably the fixed income story. Brent has been oscillating this morning. We're now back up again. We're looking at talks in Switzerland not happening. We are looking at fighting in Lebanon. We are looking at the Iranians saying, you want to take your ship through the Strait of Hormuz, you've got to ask us first and you've got to go through our route. All of that, turning things around a little bit. Earlier on, we saw Brent down. It is now up. The pound is also stronger this morning, despite the fact we're seeing gilts lower. We're going to see a Burnham-Starmer fight, it looks like, for the keys to 10 Downing Street. Eurostoxx 600 equities down by 0.1%. We've really gone nowhere in a hurry today, and volume is very light. I just want to add on something to what I'm showing you on the screen at the moment, and that is the TradeGate pricing around SpaceX. We're down by circa 3%. It looks like we are going to see a third day down, effectively, for SpaceX, obviously peaking very strongly back into the last week, into the beginning of this week, and then we see the fade. OK, let's get back to the geopolitics. Let's talk about what is happening and what we know this morning. The market is definitely digesting news that the United States and Iran have delayed nuclear talks scheduled for today in Switzerland. We're seeing fighting between Israel and Lebanon. Meanwhile, Iran's newly established Persian Gulf Strait Authority is telling ships that want to cross the Strait of Hormuz to submit requests on its website and that they need to follow the Iranian designated routes. Bloomberg Opinion's Mark Champion joins us now to explore all of these. Mark, what do you make of all of this? It feels like the MOU is feeling a little bit more fragile. Should we have expected what we are seeing this morning?
I think we should. I mean, it always included a number of things that were going to be very, very difficult to work out. The primary one, the most important, really is Lebanon, simply because Israel wasn't involved in the talks. And the deal essentially says that there has to be a ceasefire in Lebanon. And the question is, it's an extremely vague deal. So the question then is, well, what exactly does that mean? The Israelis say, well, we're not leaving Lebanon. The Iranians say that they need to leave Lebanon. And then, of course, if one side shoots and the other responds, is that a breach of the ceasefire? Is that a breach of the MOU terms? The Iranians seem to have decided that the fighting that's going on in Lebanon at the moment does breach the terms, and so that's why this delay in the talks has happened. And then now you have added on to that the Iranians saying, that they're going to apply their control of the strait, which they were not supposed to do for 60 days at least. So we are in some trouble.
Some trouble, okay. Can I connect the Lebanon issue with the strait issue? Because there was always this suggestion maybe that actually the Iranians would never relinquish control. Once they had control of the Strait of Hormuz, it was very unlikely that they would allow that to slip from their grasp.
That's true. And what the Iranians have said, around the deal in the last few days was, we will be controlling the strait once the 60 days are up. So what's changed here is that they're imposing we call them restrictions, but their control immediately. And the U.S. is going to see that as problematic. This was always going to be a very difficult deal. It was extraordinarily vague. And the purpose was to get the strait open and then to shift everything else into negotiations that would follow. But in order to get the straits open, the U.S. had to make promises, and the key ones were on Lebanon and money. And the Lebanese one is going to be, quite difficult to work out because it does involve the Israelis.
Yep. Who are not quite so keen on all of this. Mark, thank you very much indeed. Bloomberg Opinion's Mark Champion. Let's turn to UK politics and talk about what is happening there. The outgoing Greater Manchester Mayor, Andy Burnham, is now a MP. He won a decisive victory for the Labour Party and himself, you could argue, in Wigan yesterday. Certainly adds pressure to Keir Starmer, the current Prime Minister. Starmer says he's ready for a fight. He's not going to go without a fight. Take a listen to what he had to say a couple of hours ago.
There isn't a leadership contest.
But when there is,
at the moment, Prime Minister, there isn't one at the moment. But as I've said on many, many occasions, I don't think that's a good thing for the country to plunge us into chaos. I would also add that now that Andy has won, which is really important, really good, he's a huge asset to us, then now will inevitably be a Manchester mayoralty by-election starting straight away. So it's important that we pull together for that. But if there is a contest, just to be clear with you, then yes, I will run, I will stand, and I've said repeatedly, I'm not going to walk away from that.
OK, Ruth David joining us around the table to discuss all of this. Is it inevitable that that is the outgoing Prime Minister and Andy Burnham is the incoming Prime Minister? Are we about to see a change of leadership?
Pollsters are definitely betting that could happen, right? Andy Burnham also, his popularity is much higher right now than Keir Starmer's, highest among any of the leaders. We're talking about the Prime Minister who had this decisive victory, this landslide win in 2024, and a lot of those gains and a lot of that voter support has been eroded. And in fact, if you look at the very public commentary that was happening, it came after the May elections, right? And the way that Labour did in those elections. So now you're kind of seeing Burnham telling the Labour Party and telling the country that I have scored this very decisive victory. I am your only way of keeping Nigel Farage and keeping Reform or Restore away from 10 Downing Street. So if you want a Labour leader to do that, come to me.
OK, so that's the politics. Let's talk about the economics. Is Andy Burnham going to spend more and tax more?
All indications are seeming like he's going in that direction, but this is also a leader who in recent weeks has said one thing and then reneged on it, right? So he was in support of pensioners a few weeks back and some of the claims that they were making. He went back on that. He pulled back from claims that he would support Britain rejoining the European Union. I mean, we know that he is pro-nationalization, and Thames Water, we've heard, might be something that comes up on that list. But he's also not going to have a lot of leeway if he's not an elected leader. And there is a country which has a precarious fiscal situation. Yep. And, you know, the cost of debt is only rising. You've got inflationary pressures from the war. Yep. It seems like there's a lot of challenges he'll have to overcome to do anything big in terms of fiscal policy.
Ruth, thank you very much indeed for updating us. We greatly appreciate it. Bloomberg's London Bureau Chief Ruth David. Let's kind of bring another factor which is just bringing more uncertainty to the markets. And that's what we're all trying to figure out right now. You've got Kevin Walsh at the Fed, uncertainty there. We don't know what's happening in the Middle East. No talks today. We're seeing, obviously, oil prices beginning to rise again. You've got the AI story, which there's so much going on, SpaceX IPO. How do you factor all of this in and try and figure out what happens next? Joining us now to discuss all of this on the geopolitical risk front and the price pressures we are seeing are Mackenzie Investments Chief Investment Officer Leslie Marks and Morgan Stanley's Private Wealth Advisor Caterina Simonetti. I'm going to basically broadly start with a kind of fairly simple question to both of you. Let me start with you, Leslie. There's a lot going on at the moment. What is your level of conviction around what happens next and where money is best invested?
Well, as you said, there's a cross current here of a lot of issues. And I think the geopolitical one is very hard to have conviction on. I mean, I think directionally, we see a de-escalation. We see oil prices, you know, maintaining the levels where they are today, but not going back to the high levels that we saw at the start of the war. So net, that's generally positive. It's positive for the economy. It's positive for the consumer. It's generally positive for earnings overall. So I think directionally, I think things are moving well on the geopolitical front, but I think that there's a new risk. It's not really a new risk, but another risk that may be emerging as more important when it comes to thinking about our outlook. And that's really about Fed policy. Because when we heard from our new chair, Walsh, earlier this week, it really gave us pause to say, you know, the U.S. economy is running hot. There's a big focus on price stability. And we think that now that the market is starting to price in more, a higher probability of one, maybe two increases this year, this is going to become more important when we're looking at the economic data.
OK, we're going to come back and we're going to talk about whether or not this means I should be risk on or risk off in just a moment. But Caterina, how do you see the world right now? You're kind of, it's a great opportunity, a day like today, a holiday, to kind of think about where we are. We've had a massive week. What's the level of conviction in your mind at the moment?
Guy, thank you for having me on the show. And of course, market at the record highs is a reminder to investors how quickly conditions can shift. And Leslie is absolutely right. You know, we have this amazing earnings momentum going on. We have the AI changing the world and changing businesses and the way we view profitability. And there's a lot of excitement out there. You know, we're talking about building, you know, data centers in space. At the same time, we cannot lose track of this very real risks that are affecting the market, like the geopolitical risks. And, you know, as we look at the deal with Iran, and we're so hopeful that the progress is going to be made, the bottom line, it's the actual activity in the Strait of Hormuz and the ships going through the strait and oil and fertilizers and other goods being transported. That's what's going to eventually signal the market that there is a positive development. And that's what everybody's watching for.
OK, so that sets the stall out very nicely. You've both given us an idea of what you're watching at the moment. Leslie, Caterina, stick around. We're going to take a short break. We'll be back in a moment. Coming up, we'll talk about that. We'll talk about the chip story. We'll talk about what is happening in the Strait of Hormuz. ASML's definitely in focus this morning. Anyway, more of the conversation we just started in just a moment. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode,
Ebola can be a risk for all of us. The solution is not to close borders. The solution is to provide sufficient support.
Premieres June 26th, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome back. You're watching Bloomberg Markets. I'm Guy Johnson in London this Juneteenth holiday. Let's get back to Leslie Marks and Caterina Simonetti to carry on the conversation we just started about kind of what you do with these markets and the huge differences that we are seeing in terms of potential outcomes when it comes to AI, what we're seeing in terms of the Fed, what we're seeing in terms of the Gulf. Let's carry on the conversation and figure out actually what we do with it and how potentially we make or don't lose money surrounding all of this. Caterina, let's kind of pivot to that point now and try and figure out what we do. Is this a risk-on kind of environment, despite all the uncertainty you laid out just before the break?
Well, Guy, it's definitely a very selective risk-on environment. And let's take the possibility that the rates might be going higher. For example, as Leslie mentioned, Kevin Warsh indicated, that they're going to, definitely wait and see. But we see market, specifically fixed income market, pricing in the possibility of the higher rates. Now, on that note, we need to separate the rate volatility, which market reacts to very negatively, and higher rate environment in which market actually functions quite effectively, and we see it historically. And there are sectors, parts of the market, like financials, for example, that actually benefit from the higher rate environment. The investors can benefit from a higher rate environment by picking up higher yields for their fixed income portfolios, by extending the duration. So there is opportunity in this market, and we absolutely need to bring risk on. We cannot abandon, the ship. There's definitely opportunity in this market, but we have to be very thoughtful and very selective about the opportunities that we take.
Thoughtful and selective. Would you agree with that, Leslie? Is it a chips on the table or chips off the table?
I think that's right. I think, when you go back to the fundamentals, the strength in earnings, it really is a chips on the table, a strong economy. I merely highlight a little bit of caution is warranted because we're moving into a different stage than we thought we were going to be in at the start of the year with respect to the Federal Reserve, that being more of a tightening bias throughout the rest of this year. We don't know if it's, 1, 2 hikes and then we move to a pause, or if it's 1, 2 hikes on our way to something bigger. So I think it is important to be selective. I think it's a time to manage risk. We've had a fairly narrow rally in stocks, very much momentum oriented. And I think there's an opportunity to reassess one's risk in their portfolio and say, where can I take some profits in some of these, big winners, and shift capital to things that are more attractively valued, things that are going to benefit from this big capex boom that we're experiencing.
I was talking, there's a note out from Torsten Slok, the Apollo chief economist, this morning, and I'll read you the top line. Leslie, strip out AI and energy and the S&P is down. Does the second half of the year change that narrative?
Well, I think the narrative, stays the same, but I do think that we would expect to see a broadening out of the S&P. And I think that's important to note. I mean, especially with respect to energy, what we're seeing on the geopolitical side. I mean, energy, we still think will have, an attractive future, but you're going to see momentum wane a little bit here as oil prices have come down from their peak. So I think the focus needs to be on other areas areas, like I mentioned, those in the industrial sector, those electricity, utilities, even materials, things that will benefit from this CapEx cycle that we think will continue throughout the rest of this year. And I think that will be a healthier market when we see a broadening out of performance away from those narrow sectors that you mentioned in that note.
Okay. Katerina, one of the things that I constantly hear at the moment is that equities are actually quite a good inflation hedge. That, yes, the Fed's going to be raising rates, and yes, that's a risk. And traditionally, it has had maybe the effect of ending the cycle. But actually, this time round, that equities have got growth momentum and earnings momentum, and therefore, in a nominally higher world, they will do well. Is that the right way of thinking about it?
Well, Guy, absolutely the right way of thinking about it. And most importantly, we have to look at why. Why are equities such an effective inflation hedge? And the story for this year are the earnings, and most importantly, is the earnings revision momentum. We see earnings revised to the positive. We see not only AI built up, which was something that we were so focused last year, but we now see the practical AI implementation across the businesses, across the spectrum, which of course is going to lead to the broadening out of investment opportunities. So we can be very thoughtful then on how we bring and most importantly manage risk in our investment portfolios, because inflation is real. And when we look at the situation in Strait of Hormuz, what it translates to is if the oil is going to become scarce, then the price of it is going to go up, and it will affect prices all across the board and will lead to higher inflation. And higher inflation, of course, is going to lead to higher rates. So for investors, it's a very real possibility. And going to equity markets, and not just tech, we have to be very, very conscious of the equity over concentration that we see all across the portfolios recently, but that broadening and the opportunities that we can see specifically. You mentioned that there are a number of several parts of the S&P that are actually down for the year. And instead of looking at them, that this is not where the money is going to be made, we need to all flock into the tech sector. We actually have to take opportunities in the sectors like industrials, like financials. And of course, you know, you have these fluctuations in energy. We do not advocate abandoning energy. We see a lot of opportunity in the space.
Okay, that's interesting. Leslie, what I've heard from both of you is the fact that there are risks out there, that equities probably will continue to move forward, that the earnings picture is going to be positive. What I'm wondering is, to be prudent, and you've talked a little bit about this, how I diversify my portfolio properly. Because recent history would suggest that bonds don't do it for me. And I'm wondering, therefore, as you look at a portfolio, as I construct a portfolio right now, how do I make sure that I've got some sort of cyclicality on the other, some opportunities on the other side, that if things go a little bit awry, that actually I'm going to be protected? How do I protect a portfolio right now?
Well, I think diversification is your best form of protection right now. And as Katerina noted, because of the concentration of returns, investors have naturally gravitated towards those sectors, technology being the most notable one. So there's lots of ways that one can diversify. You can obviously diversify across the market cap stack when it comes to equities. Small and mid cap names will benefit from a stronger U.S. economy. So we think that that's an attractive area to think about. In addition, thinking about international, when you think about, a lot of the industrial names globally, you see a lot of those names in Europe, also European financials, and then looking at Asian markets, which investors so focused on the United States have sometimes overlooked. But the strongest performance this year has come from markets like Japan, like Korea, like Taiwan. So these are, markets that people should be aware of and understand that they can play a role in their portfolio. You noted about the role of bonds. I mean, that's really dependent on the investor's risk tolerance, time horizon, thinking about structuring the portfolio. Most investors do have some aspect of fixed income in their portfolio. And in a healthy earnings environment where the economy is strong, credit actually is an attractive place to be and can offer you diversification while still offering some upside.
I'm starting to read a lot about buffer funds. It's something we've never really heard about here in Europe and are beginning to maybe emerge onto the landscape. We'll talk maybe about that another time. Guys, thank you very much indeed. Thank you for joining us this holiday. Mackenzie Investments Chief Investment Officer Leslie Marks and Morgan Stanley Private Wealth Advisor Caterina Simonetti. Thank you very much. OK, let's get back and talk more about what is happening in the tech world this morning. There's a couple of stories I just want to focus on, one of which is sort of concern around the Trump administration's push to control export activities of AI-related hardware and software. So you've got the whole Anthropic story, plus also now you've got the ASML story this morning as well, and the concerns that Looking has regarding the possibility the ASML machines are in China. Neil Campling joins us now on this. Neil, if I put these two stories together, what picture emerges? And I'm thinking about this kind of in terms of the geopolitical story. Is the US being effective in its control of tech software and tech hardware? I think Neil may have pressed the mute button. Get him to unmute it, and we'll carry on. Carry on the conversation. While he's doing that, and we've got limited time left, let me just give you a quick idea of what is happening in the markets. European equities this morning are under a little bit of pressure, but volume is incredibly light. The reason for that, quite simple. The US markets are out for the day. So the Euro Stoxx 50 is down by 0.3%. The FTSE's down by 0.3%. CAC and DAX are both lower. The DAX is down by 0.2% right now. You are looking, though, at a stronger euro dollar, which is interesting as well. But the key takeaway this morning is that Brent has bounced back a little bit this morning. We are watching Brent coming up. We are now up by 0.3%. When I came in first thing this morning, Brent was down, but it's now beginning to climb back. And the reason for that is pretty simple. You've got talks between the United States and Iran now hitting a buffer. The talks that were meant to take place in Switzerland today are not happening. You've also got ongoing fighting in Lebanon, which the Iranians are pointing to and saying that's the reason why we're not going to come and talk to you. But you've also got the Iranians out this morning as well, talking about the fact that they are still applying restrictions to the Strait of Hormuz, that if you want to go through the Strait of Hormuz in a big tanker, you've got to let them know and you've got to use their route. We thought that the Strait would be open by now. We were promised that by the US president, and it doesn't look like it's going to be happening. We'll come back to that story in just a moment to discuss it further. Brent is just creeping up on the back of that narrative. Anyway, we'll come back to it. This is Bloomberg.
week on Leaders with me, Francine Lacroix. I speak to the outgoing chief executive of BHP, Mike Henry, about his do's and don'ts for making deals.
You don't want to be setting strategy in the middle of a transaction.
Changes he made at BHP.
We needed to make sure that we had a portfolio that was fit for the future.
And how to ensure smooth leadership transitions.
Day one, succession starts now.
So tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
In case you missed it on Bloomberg Surveillance.
We should be basking in Nick's glory right now.
I think you are basking. There was quite a bit of basking.
It was just incredible.
You could feel it through the entire city.
I was there.
I mean, you're just waiting for it.
I saw Patrick Ewing. I saw everyone.
It has been an amazing moment where even a Yankees fan and a Mets fan can come together.
This is why it's so incredible for New York.
And have enthusiasm for New York City.
Everyone can coalesce around the Knicks.
Don't miss Bloomberg Surveillance live every weekday.
Morning, welcome back. Brent's creeping up right now. The reason for that is we've got no talks taking place between Iran and the United States in Switzerland. You've got fighting in Lebanon between Israel and Hezbollah. You've got the Iranians talking about the fact that they are still applying restrictions to the Strait of Hormuz. In so many ways, all of this kind of points to kind of Israel's role in this process. Not happy, apparently, with the deal. The US Vice President says that Israel is having a freak-out, quote, about what is happening here, but has basically said, your future is dependent on this. Keep quiet. Bloomberg Opinion's Mark Champion has written a fantastic piece about this morning, so let's having a freak-out, quote. Is that what's happening here?
Well, I mean, they are in a real state of shock. They went into the war. They were described as a model ally, and the war is now ending. And having achieved none of the goals that they went into it with the U.S. to do, and they were not involved in the negotiations, and the negotiations very much involved them. It isn't just, or even primarily, to be honest, about their continuing campaign in Iran and having to, take part in that ceasefire. It's about them having to include Lebanon in the ceasefire, and exactly what that means. And the Iranians are very much using this deal as leverage to get them out and to support Hezbollah, which would be seen very much as a defeat in Israel and as a victory by Hezbollah. And that's very concerning for the Israelis, who, unlike the U.S., Hezbollah is just across the border, and they moved the Hezbollah away from the border. Primarily to prevent them from firing and into towns on the other side, which have largely been emptied. So if they have to withdraw, which they're saying they won't, then they've lost their. The purpose for which they went into Lebanon in the first place.
So J.D. Vance is putting a lot of weight behind the MOU and putting a lot of his kind of political capital into it. But the Israelis, as you say, have got many reasons not to support this. So is J.D. Vance running a huge risk here if the Israelis decide that it's not worth backing this?
Yeah, I mean, I think he has presidential ambitions, and he owns this memorandum. He's the lead negotiator for the U.S. He's defending it, and it is very much dependent on Israel playing ball, and he's doing his best to kind of strong-arm them into doing as he says. And, in the interview he gave with the New York Times, some of what he was talking about sounded a little bit like a threat, saying that, you're at risk of alienating your only powerful friend in the world, the one that provided you with 2/3 of the defensive weapons that you've been using over the last 3 months during this war with Iran. Play ball.
Yeah, it's going to be fascinating to watch that one play out. Mark, thank you very much indeed. Fascinating piece available on the Bloomberg right now. Just before we get onto the next kind of phase of this conversation, I just want to kind of make note of the fact that we've got details coming through regarding UniCredit and Commerzbank. UniCredit saying that Commerzbank bid accepted by 12.5% after the first round of acceptances sort of come through. Remember, they already hold a big chunk, 26.8% of UniCredit. Kind of where's the momentum going with this one? As you can see, the market not really moving much on it. We'll come back to this story a little bit later. Let's get back to the politics now, though, and what is happening in Iran, what's happening in the Strait of Hormuz, and what is happening in Israel right now. Aberdeen senior political economist Lizzie Galbraith joining us. Lizzie, we thought we were making progress. We thought we were going to be getting talks today. It now doesn't look as if that's going to happen, and it looks as if the Strait of Hormuz is maybe tightening back up again. What is your assessment of where we are this Friday lunchtime?
I mean, I think that stop-start kind of process actually characterises what we've seen over the previous months as well. So in a way, it's not particularly surprising that this transition into a more diplomacy-focused stage isn't a particularly smooth one. So I think it's probably in line with expectations to expect quite a bit of bumpiness, quite a bit of uncertainty about whether or not this will hold, particularly in these early stages. And as you've been saying, there are still quite significant challenges here to seeing a durable deal maintained. The question that we've been asking throughout this conflict has always been, is the Strait of Hormuz open or closed? And that's going to continue to be the main question that we are asking as we pass developments. So far, despite the headlines, it does appear like ships are still moving in potentially lower numbers than we've seen over the past few days, but higher than in previous weeks. So if that holds, then I think we're still largely on a de-escalatory trajectory. Yeah. If we start seeing factors to impede that progress, then we're potentially looking at a more difficult outlook.
OK, so how should I read this morning the fact that the Iranians are saying that if you want to pass a ship through the Strait of Hormuz, you have to notify them and you have to use their shipping lane?
So I think it is in line with what we were expecting from the Iranians, which is they continue to see the Strait of Hormuz as a point of leverage. They're not happy about what's going on in Lebanon, and they're looking for ways to exacerbate the leverage that they do have, to remind the US that there are reasons for them to want to, push the Israelis into meeting the terms of the agreement that, of course, the Israelis did not sign themselves in the first place. So there are lots of complexities here, but I think it is a reminder that the Iranians are still looking to push that leverage. They do still view that strait as being a very key point of pressure that they can push when things aren't going the way they want in the sort of the broader region, and they're likely to continue to do that. And the terms of the agreement state that the Iranians will look to have future negotiations with Oman, with the wider Gulf states, about future management of the strait. So it's not a settled issue. And future management in that wording does imply that the Iranians do still see some role for them going forward. Whether that is acceptable to their neighbours and to the US is a completely different question that, of course, does have to be addressed further down the line and does represent a major hurdle to a more substantive agreement at the end of that 60 days or longer.
From President Trump's point of view, he needs gas prices lower, gasoline prices lower. Is it just important that he keeps the Strait of Hormuz open between now and the midterms, and what happens after it?
I think that is a key factor. I mean, gasoline prices in the US have dropped below that very, very important line of $4 a gallon. That's a really important metric that is going to be a key watch point in the midterms outlook. And over previous months, that of course have been far higher than that. And the pressure on President Trump to bring that down was starting to feel quite acute at some stages. So it is an important part of the immediate outlook. Of course, after you get past the midterms, then there maybe is a question as to whether or not President Trump has exactly the same incentives. But he is still a president that sees inflation and low inflation as being a really key metric of success. And of course, potentially that higher inflation is an environment in which the stock market is struggling. So there's no incentive, I think, for President Trump to sort of treat the midterms as necessarily a barrier or a date at which beyond that point he doesn't necessarily have the same incentives. I think they persist regardless, but the midterms is a very key watch point that he will have going into the next few months. And I think that is a clear incentive that the US has to want to keep these talks at least nominally in play over the next few months.
The president is tweeting, he's on social media right now, trying to push back on any criticism of the deal. Can Trump in any way claim this as a win?
I think if the strait remains open, then he'll be very keen to say, well, that's the win. The win is that these supply chain pressures that can abate, these inflationary pressures can abate, and we can move on and potentially start talking about more substantive issues. However, of course, to get that to happen, then he's had to make some quite significant concessions, at least in the short term, many of which are controversial within the US and, of course, among allies as well. So I think it is very much a question of whether or not this initial compromise can actually yield to a breakthrough further down the line, and, of course, whether this reopening of the strait is durable and allows for a more substantive normalization of traffic through the strait. At the moment, the levels that we're seeing, of course, are up on the past few weeks, but they're not exactly what you would call a full normalization. So there is still progress that needs to be made, I think, before you can see President Trump claim a win on that as well.
Yeah, the line is, we didn't meet out of desperation. Iran did. They're finished. We'll play out the 60 days. They get no money, not 10 cents. Do you think that really is the reality? It kind of feels to many people at the moment that Iran effectively is being paid to come to the table.
I think that's certainly the concern that you're starting to see among US allies, including Israel. There are certainly some critics of the deal as well within President Trump's Republican Party. The counter is, of course, would Iran have come to the table without some of those incentives, given that they'd already been able to, successfully curtail shipping through the strait. They've been successfully able to cause quite widespread destruction across the Gulf. So I think the counter that President Trump and his allies would push is that in the absence of some of the measures that are in this deal, you would actually have continued to see those supply chain pressures escalate, and there wasn't really a way to get out of that didn't involve some fairly ambitious sounding military proposals that weren't necessarily guaranteed to be successful. So a shift to diplomacy over military escalation, I think, is a welcome one. It's whether or not this can be maintained with the wider challenges going forward.
Some may argue that before the War, the Straits was already open, but maybe that's the history books talking. Aberdeen senior political economist Lizzie Galbraith, thank you very much indeed. Let's talk about some of the other stories we're watching so carefully on the terminal this morning. Boston Consulting Group is said to be amongst the biggest losers from Saudi Arabia's pullback in consultant spending. The Kingdom's sovereign wealth fund is curbing spending on outside advisors. It's also reassessing outlays on mega projects. BCG had received the bulk of the fund's management advisory business in recent years. The Bank of England says it will stress test private market markets against a doomsday scenario. It will feature 7% interest rates, a 35% collapse in UK share prices, and a 400 basis points rise in leveraged loan spreads, and widespread AI disruption. 46 firms have agreed to participate, including Apollo, Ares, Blackstone, and KKR. And Goldman Sachs has cut its year-end forecast for gold by $500 an ounce. The revised target of $490 implies bullion still is expected to gain in the second half of the year, but less than previously expected. Goldman has been consistently bullish on gold, telling investors to go for gold in 2024, correctly predicting the rally. What does this latest turn signal? We'll find out. OK, coming up, we're going to bring you an exclusive interview with the Lithuanian president. We will do that. Ollie Crook has been talking to him, I think, back last Thursday before the G7, talking about the changing nature of the battlefield in Ukraine and Europe's response to the war. That's next. This is Bloomberg.
In case you missed it on Bloomberg Deals.
Can you rival the size of those? I mean, I know it's a very different model, but do you see yourself growing to a size of a Blackstone, of an Apollo?
Over time, for sure. We'll have 25 to 26 billion of fee-paying assets.
Does the way you invest need to change then? Because these are huge platforms that have many different types of assets they invest in.
The beauty of our strategy, we invest in the largest companies in the world, kind of large cap, mega cap companies, mostly based here. If you look at Berkshire over the last 60 years, it's built most of its value running and becoming effectively an insurance holding company. That's what Buffett has built over time. Right. And it was his successful management of the assets. So when you heard Buffett buying Apple, it wasn't Buffett buying Apple. It wasn't even Berkshire buying Apple. It was the Berkshire insurance subsidiaries buying Apple. And we're going to do the same thing. The goal of Howard Hughes is to build a long-term diversified holding company akin to what Buffett has done over a long period of time.
Don't miss Bloomberg Deals live every week.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Joe Matthew on the South Lawn of the White House, and this is Bloomberg.
.46 minutes past the hour. Welcome back. You're watching Bloomberg Markets. Let's talk about another conflict. We haven't actually focused on that much this morning. That is what is happening in Ukraine. Russia has rejected Europe's latest proposal for peace talks with Ukraine. Its foreign minister, Sergei Lavrov, writing in what his team has said was an unpublished op-ed, saying, quote, trust cannot be restored, nor can dialogue be resumed through ultimatums such as the one issued to Russia in London. Bloomberg's Ollie Crook has been thinking about this and has been talking, he did say last Thursday, to the president of Lithuania about how the changing battlefield in Ukraine is now beginning to change the picture going forward from here, and how the EU should respond to this stage in the war. I want to bring you part of that conversation.
I always say that the moment, or appropriate moment for such kind of activities, is when Russia understands that they have to make some concessions too. If they will show some willingness or some positive signals that they want to start the peace negotiations, then it might be probably the right moment to start these activities. And another very important factor is that European Union have to speak one voice. We had a lot of the efforts and attempts of different leaders of individual member states to start to talk with Putin, and they all failed. So I think this time we have to learn those lessons of the past and to speak one voice, and it would be much better for European Union.
Do you think it would be wise then for the Europeans to establish who that voice will be, what that voice will be? Because we've had some suggestions. It could be someone like Angela Merkel, Mario Draghi. Do you think there are any sort of serious contenders in order to get that process moving?
Well, I cannot say the name, but it might be. Of course, this person should play an important role in international politics. Maybe this might be the former politician, but I don't think that right now it's a time to start the negotiations with Putin, because Putin does not want to see us at the table. Putin respects the strength. Putin respects and is afraid of United States. Is he so afraid of European Union? I have my doubts. Yes, we imposed 20 packages of sanctions. Yes, we have certain leverage to make harm for Russian economy. Is it enough for Putin to see us at the table? I have my doubts.
And thinking about sort of the other geopolitical event that has really dominated the world for the last few months, obviously it's the war in Iran, the great many consequences that has had over across the world, including the energy prices and inflation here in Europe. I'd like to just get your assessment on kind of where we stand now. It seems there is this memorandum of understanding. How active do you think this will be a conversation at the Council, particularly around what Europe's role could be in the Strait of Hormuz in securing it and to make sure there is a free passage of ships? We
have to support United States efforts to find a solution, diplomatic solution. I hope we are at this point where we can find a sustainable solution and free the traffic in the Hormuz Strait. And for Europe, of course, we have to support the United States activities, and probably there's no need to talk about the war, which does not affect us or something like that. For us, it's very important to keep this region stable, to keep the traffic, maritime traffic stable, because as you rightly mentioned, it has huge impact on the oil prices, on inflation, and probably there's another lesson we have to learn from this. In the long term or in the medium term, we have to get rid of the fossil fuel. And Lithuania is very successful in implementing the energy policy, which is based on renewables. Actually, right now, we cover about 73% of our needs by using renewables, and probably we will cover this gap by 100% in 2028.
And then we've had some comments from your ministers previously, earlier in this process, saying that Lithuania could join in, for example, the mine-sweeping process. This is an initiative that, the France and the UK have talked about. How active are those conversations? When do you think it would be a safe moment to actually have the minesweeping begin?
We send a signal from the very beginning to the United States and to our partners, France and Germany, that we are ready to participate, and we are ready to participate with very concrete demining capabilities.
The Lithuanian president in conversation with Bloomberg's Europe correspondent Oliver Crook in Brussels a few days back. Let's go to Brussels now. Our Brussels bureau chief is Suzanne Lynch and joins us now. EU leaders are gathering in Brussels. And Suzanne, I'm wondering what they're talking about in the light of what we learned at the G7.
Look, what we've just been listening to, this conversation about Ukraine and Europe's role in any peace plan, that has been a big topic of discussion here. But there's been quite a bit of pushback to the reporting we had this week that Antonio Costa, who's the president of the European Council, has made overtures to the Kremlin. Not all countries are happy about that. We're hearing reservations from some of the bigger member states like Germany and France, who don't particularly think this is a good idea. But other countries are more supportive, Italy, for example. So there was a lot of conversation, particularly in the dinner last night, about what role Europe can play in the peace process, but is it playing into Putin's hands by discussing opening up some kind of back channel to Kremlin at this point? Now, that is one of the themes. Other themes here are competitiveness and also the relationship with China. That's a big topic here at this summit.
What is the takeaway, though, about, in thinking about the fragmentation that maybe we're seeing around Ukraine, how united is Europe when it comes to the issue of the Strait of Hormuz right now?
Yeah, look, that's another issue, as we've been hearing there as well, the issue of demining the region. Also, this broader issue of what part Europe can play in this. At the end of the day, the role of Europe in this ongoing conflict in the Middle East has been quite limited. Even though the EU was very involved in the original nuclear deal with Iran, the JCPOA, over a decade ago, it has not been so involved this time. So what I think we're seeing is a little bit of fracturing here. Some of those bigger countries, it's known as the E3 group, for example, France, Germany and the UK, which of course is not in the EU, they are playing a more assertive role in this. They're the bigger countries and they have a lot more skin in the game on this. Other countries are happy to stand back a bit more. And of course there is this conversation that's happening here, was that this was a war that was not started by Europe. It was a war that some people see was very much the US war. So, you know, what is the wisdom of the EU getting involved in any substantive way at this point in any discussions on reopening that strait?
You mentioned China. Is the line hardening on China?
Look, we had been expecting a bit of a shift here at this summit. I think there has definitely, over the last few months, been a hardening of views towards China. Everyone in Brussels and around Europe agrees that EU has a China problem, in that there's issues of overcapacity, there's overdependence on China when it comes to critical minerals, for example. The difficulty is, though, is what to do about it. And we are seeing a range of views here at this EU summit about how best to approach the China issue. So we've had countries like Spain, for example, preaching caution, worried about retaliation if the EU is going to accelerate measures, for example, against Beijing. And we had been expecting a more assertive perspective from Germany in particular. That doesn't seem to have come through here. What we saw last night when EU leaders wrapped up that discussion of China was, yes, they kind of mandated the European Commission to look at further measures they could take, but not anytime soon, and it wasn't clear if they're really backing further action. So ultimately, I think they really kind of stepped back from the brink in terms of mandating or pulling the trigger on further action against China at this point.
Suzanne, thanks for the update. Really appreciate it. Suzanne Lynch, our Brussels bureau chief, joining us as we see EU leaders gathering to discuss. There's a lot on the agenda. I just want to bring you a headline that has just come through. We're getting it from Reuters, and it indicates that Israel and Hezbollah have apparently agreed a ceasefire. It will take place from 4 p.m. local time. We understand. This has been a key point around, obviously, the negotiations between the United States and Iran, and whether or not those take place over the next few days with this in place remains an open question. Quick look at the markets, just to kind of wrap things up, 55 minutes past the hour. You've got an equity market that's basically going kind of sideways at the moment. You are looking at gas futures sharply to the upside. The pound is fairly flat, but stocks really going absolutely nowhere in a hurry right now. Enjoy the rest of the day if you're here in Europe. Enjoy the rest of the holiday if you're in the United States. That wraps up the week. This is Bloomberg.
In case you missed it on Bloomberg Brief.
When we were talking about it originally, we thought that this was going to be a very short war. We thought that the energy price hike or increase would be just a spike up and down, but it's been persistent, and that's the concern that we continue to have, because we're starting to see a little bit of fragility in the consumer. If we look at consumer inflation expectations, they're much higher than what the market is pricing in.
Don't miss Bloomberg Brief live every weekday.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
In case you missed it on Bloomberg Insight.
When I say fair taxes, fair share, what do they mean? Like, I agree with the fact, if it were up to me, I saw Jeff Bezos, who I love, swashbuckling. I don't think the lower people making under a certain amount have to pay any taxes at all. And that's what people seem to want. They think that somehow being anti-business is going to help a city. It's not. So we all want to pay fair taxes. That's not the point. New York's booming, so you're not going to see it in this year's taxes, but a lot of people are paying billions of dollars taxes left. Why do you want that? How does that help the lower paid person in New York?
So what do you make of the beef Mamdani has with Ken Griffin? I mean, there's been a lot of pushback as well from...
My view is, I think vilifying people, simplifying arguments, even if you think it's politically is a bad idea. And I think he probably realizes that was a bad idea. It's probably why he's seen a bunch of us now.
Don't miss Bloomberg Insight live weekdays.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
There is a reality of a sharp disinflation in China.
President Trump continues his pressure on this Federal Reserve.
With Alexis Christoforous on markets.
We're seeing other chip stocks rally today.
And Michael Barr with news.
The Trump administration's proposal to end the war in Ukraine.
The best in economics, finance, investment, and international relations. Bloomberg Surveillance on Bloomberg Radio, Bloomberg Originals, and the Bloomberg Business app.
Good morning, everyone. Tom King, Paul Sweeney, Lisa Mateo with us, back from Knicks Nation parade yesterday. You survived. What was the single thing you saw worldwide here on radio and television? Explain that one moment you saw at City Hall.
It was just the excitement when the confetti came down. Everyone out there. Mandami gave a fantastic speech. The excitement. It was really good. It was very good.
There were 12 Republicans there, and they thought the mayor's speech was quick. I have to ask.
Yes.
Did you see Jalen?
I did.
I
saw everybody.
For those of you worldwide, we are recovering from Knicks Nation, a beautifully escorted parade. Paul, I think you mentioned this morning in our meeting at 2 a.m. The basic idea here that, boy, did the New York police, sanitation, boy, did they know how to do it.
Yeah, New York City knows how to throw these big events. The NYPD was awesome, as always. And then, as you know, seemingly immediately after the parade was over, a lot of that confetti was done. But I got to Penn Station yesterday, right as basically the throng of people leaving the
1 million people
descended upon Penn Station. It was
getting home was
tough, but everything worked.
We welcome all of you across America and worldwide. It's a special edition of Bloomberg Surveillance here on a national holiday. We decided the news flow may be a bit busy, and we came in. You get 3 or 4 days off. Lisa gets a month off.
Yeah, I know. Sure.
You're taking like a sabbatical because you're working today, something like that.
Trying.
Are you working Bloomberg this weekend?
Sure
this
are.
weekend?
Yeah,
Very good.
Right on
sure
through.
Are.
And what we have, folks, is titanic news flow for you. We're going to get to this in a bit. I want Lisa to do a news flash. But for those of you worldwide, the headline, this from Reuters, Israel and Hezbollah agree to a ceasefire starting on Friday. I looked at the Times of Israel this morning, and it's incredibly serious in Lebanon in the last 12 hours, with any number of killed on one side, Hezbollah, 4 IDF soldiers, including, I believe, a lieutenant commander, killed for Israel. It is a tinderbox over there. And just moments ago, this headline comes across, and it moves oil, Brent crude, all this is futures this morning. America's basically shut down. But, excuse me, Brent crude above $80 a barrel and slips down $1 on this headline across the Bloomberg. This again from Reuters. Israel, Hezbollah agree on ceasefire from 4 p.m. Paul, we have all of the news wrapped around Lebanon, wrapped around Iran, and then we didn't predict this in the planning for this show weeks ago. A London politics, a United Kingdom politics turned upside down.
Yeah, once again, we read into this, there's a race in the north of England here, and it went for a gentleman that may challenge Prime Minister Keir Starmer. So again, it just seems like we see news coming out of the UK really over the last couple of months about the difficult status of Mr. Starmer.
I look at this right now, folks, and, it's the mayor of Manchester.
Yes.
And the basic theme here is to give the North much more affection. I had the honor of talking to Governor Carney at the Bank of England about this before he went off to watch Canada win 6-0 in the World Cup.
Yeah.
And, Governor Carney and I talked about this immense division between London and the North. We'll touch upon that today and do as best we can with wonderful voices. Scheduled is Leslie Vinjamuri, now out of Chicago, and of course definitive at Chatham House. The data screen is actually surprisingly busy today for a national holiday from the Interactive Broker Studios, the Bloomberg Business Flash. Here's Lisa Mateo.
Yeah, we have global stocks ending kind of a strong week on more of a cautious note. The focus shifting to the Iran peace deal, delay in negotiations after fighting intensified in southern Lebanon. And now Tom mentioned that headline that just came out. So we look at the stock 600 right now. It's little change. The FTSE in London down about 0.2%. The CAC in Paris down about 0.1%. U.S. markets closed for the Juneteenth holiday, but futures are trading. S&P futures down about 0.2%. Dow futures down 0.1%. NASDAQ futures off about 0.2%. Markets in China, Hong Kong, Taiwan, they are shut down in observance of the Dragon Boat Festival today. We go to oil. It was on the rise. Now it's back down again with the latest headlines. Brent crude down about 1%, $78 a barrel. We have WTI crude at about $75 a barrel. Bloomberg reporting traffic through the Strait of Hormuz appears to be thinning. This comes just a day after the pledge by the U.S. and Iran to lift that dual blockage. We go to gold right now. Gold headed for a third straight weekly loss. It's trading below $4,200 an ounce. Currencies right now, the pound outperforming most of the other major currencies. The dollar held at its highest level since March. Now it's little changed. As far as Bitcoin falling for a fourth consecutive day. It's now down about 0.1%, though, at just above 62,000. Over to company news, we have Dutch chip equipment maker ASML Holding. They may be in violation of U.S.-led export restrictions. You have Commerce Secretary Howard Lutnick. He's outlining concerns at the company's senior leaders that one of its top-of-the-line machines may have made its way to China. And then separately, you have Washington turning up the pressure on Berlin over pharmaceutical pricing. The U.S. launched a tariff investigation into Germany over what they say is, quote, persistent underpayment for innovative pharmaceutical products. And that really sets the stage for possible levies on its goods in retaliation. And finally, sources telling Bloomberg SpaceX preparing for a potential bond offering of $20 billion or more. And that's a sign the company's fundraising campaign has only just begun, as Bloomberg says. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thank you so much. Paul Sweeney and Tom Keene with Lisa Mateo, special edition of Bloomberg Surveillance. We welcome all of you on Bloomberg Television worldwide, across the nation, the way you choose to listen to us on radio. A special good morning to Boston. I want to take the moment right now as we get ready here to look into 3 years. I do want to mention that Boston has lost a giant of journalism. John Yema was definitive at the Boston Globe and then went over to attempt salvation of a printed Christian Science monitor, taking it over to the digital world. He was one of the first truly in journalism to do that, worked with Marty Barron up at the Globe for years, and we have lost John Yema here at age 73. It is a loss for Boston journalism and indeed journalism across America. I wanted to mention that this happened in the last couple days. I got futures negative 14. I'm really not quite sure if they're trading. Are they trading, Paul? You're the sophisticate on this.
Some movement in the futures market, not a whole lot. So I'm assuming we're just going to status quo today, and we'll reload on Monday. We're
going to start with a quite good view here to get to June 30th on for the next 6 months. From ING, Annika Trian joined us, Global Head of Private Banking and Wealth, with her work out of the London School of Economics. Annika, have you written a mid-year review, or do you in the Netherlands have to rewrite it, given the news flow?
A mid-year review?
What
do you mean by a mid-year review?
In America, everybody in banking has to write a June 30, 12-page memo that is dead July 15th. That's the way it rolls. Have you written a mid-year review, or are you people smarter than us and you don't even do a mid-year review?
Well, we're not doing a long memo like that. No, we're fortunate, I would say.
So, Annika, what's the conversation you're having with your clients these days? I mean, there's the uncertainty surrounding the geopolitics over in Iran, not to mention Ukraine. What are your conversations like with your clients?
Yeah, I think it's a sad thing, I would say, because of all the human sort of tragedies going on around the world. But it feels like volatility is becoming increasingly normalized, and that's exactly what we see with our conversation with clients. And I mean, practically, you see it in markets, but we see it in parallel in clients' behavior. So, post-COVID, you saw a market reaction minus 30%, post-Ukraine, minus 20%, post-Liberation Day, minus 15%, and post the recent Middle Eastern conflicts, minus 10. So you see that clients are just increasingly resilient and steadfast with what they're doing, why they're doing it, and sticking to convictions.
So what is the conviction? One of the trades that we saw when the tariffs were initially put out last year was some asset flows out of the U.S. Into other parts of the world, including in a big way Europe. Is that still the sentiment out there, or is that reversed a little bit in your mind?
Well, it's really interesting. So I think two things. First of all, indeed, that happened, and I think Europeans were very excited because it's been a long time coming. We've been talking about systematic valuation mismatches between Europe, US, etc. But then something happened, and what happened was, of course, we've had this amazing earnings bonanza, and that's especially driven by the US companies, US equities. Again, year to date, it's been an amazing quarterly earnings season, and I think that is just reforged the notion that European companies are just not able to grow at the speed of US companies. So, 20% earnings growth for US equities this year is expected, 10, max 15 for Europe. So I think that makes things tricky. On the other hand, what's interesting, if you talk about Europeans and how Europeans are deploying their capital, number one, we're seeing a lot more Europeans start to actually invest, and this is a really important thing. And number two, you do see quite a home bias. You do see that Europeans like to buy Europe. We do notice this also this year.
Annika, I think this is a brilliant, brilliant statement. And in America, our understanding is that Europe believes in American technology. Europe believes in American initiative, innovation, and the rest. What's the first derivative of that right now? Is Europe leaning into America into 2027?
I think there's two things. First of all, We've waited for a long time for the continent of Europe to basically, I call it leaning into capitalism, right? Really putting capital to work. We have trillions lying in deposits, and the US versus Europe is a very different story, right? The average European household has less than a third of the wealth invested. The average US household, more than half. So number one, you're seeing that Europeans are really starting to invest. We don't have the 401k system that you have in the US. So these are deliberate choices that are being increasingly made also by younger populations, which is great. The feeling towards the US from Europe is talking about earnings growth. I think what's happening is we're in a world where, you know, we used to be very demand driven in the last decade. And I think what's happening now, supply is the new demand, right? So all these enormous supply constraints, the need for compute, the need for data centers, etc., all the AI technology, you see there are just these US champions, and Europe is just keen to get involved and keen to deploy capital in that way. So I think Europeans are very pro-US, constructive on growth that comes out of US companies, but they don't want to neglect their own continents.
Annika, one final question. I want to dive back to the economic history of the London School of Economics. The model is a war ends, and there's like celebration and all that, as there should be with any ending war. And then there's a vector of disinflation and at times outright deflation. Should we expect, given the headlines, that with an end of this middle war in Iran within the Eastern Mediterranean, that we're going to be surprised by some form of tone of disinflation?
You know, it's interesting because we've indeed been walking a disinflation path, then this conflict spiked up pricing, etc. We've even seen the ECB have to adjust rates in response. But indeed, if things are settling down, which they seem to be, that can bring us back to the path. What is interesting, though, AI, which I think we all believe will be a disinflationary force, it does feel like it's going to be inflationary before deflationary. And back to what I was saying earlier, there is a radical issue when it concerns supply shortages, shortage of power, shortage of compute, shortage of labor in a less of a globalized labor mobility world, etc. And this supply shortage, I do still think has an inflationary edge to it.
Annika, thank you so much. Really, really appreciate it this morning with ING on this special edition of Bloomberg Surveillance from Queen Victoria Street in London. Paul Srini and Tom Keene with Lisa Mateo. 3 hours of good conversation here. We thought it would be, a wandering week. Pause and talk to Lisa about the New York Knicks. Talk to Paul about a long weekend here in America with the Juneteenth celebration and remembrance. No, the news flow this morning is extraordinary. Annika Trian there with ING, and we continue to be fortunate with Janet Henry, Global Chief Economist at HSBC, and truly a wonderful student of the linkage of the United States with the continent and all of these events. Janet, you've got to rewrite your global economics overview, unfinished business, get James Pomeroy to work. How do you rewrite the HSBC mid-year review?
Like a lot of central banks, Tom, we have been thinking about the world with different scenarios. And for our base case scenario, I'd say we actually have a higher degree of confidence than we did just a month ago, because we've been working on the basis that the Strait would start to reopen in the course of June. We were getting nervous that might not happen, that we would be in our bad or our uglier scenarios. So yes, we still talk about scenarios, but the news could have been a lot worse. There's still a lot that can go wrong, but at least we can look towards some kind of gradual reopening at the moment during this 60-day ceasefire, and hope that during that time some progress is made towards some kind of a deal. So there'll still be fallout from it, but yes, we're still in a scenario overlay, but a little bit more confident on that central case.
What's amazing about this, Paul, I think we're staggering to day 59, the first day of the 60-day ceasefire.
Yes.
And the news has changed 3 times.
It has changed 3 times here. I'm not sure where we are. But so, Janet, given some of the crosswinds that Tom highlights here, how are central banks reacting? We heard from our Federal Reserve and our new Federal Reserve chief this week, but it seems like they're staying put, but they might be thinking about raising rates at some point. How do you see that?
I think that's absolutely fair. If we go back to even January of this year or even late last year, we certainly never expected the Fed to cut again. We thought there'd be 75 basis points of easing and that would be it. The US economy is pretty robust. And obviously we've got the tax cuts already. And relative to the rest of the world, and I do talk relative, it's relative winners and relative losers. And the US, obviously, an energy exporter and absolutely at the forefront of this whole AI boom that is underway globally, so is a relative winner. And no central bank at the moment is going to give any hint that they are not prepared to take the kind of action that they might need to take, because even in a positive environment, we haven't seen the lasting impact of it. At best, we're going to see a peak in inflation, but then get a hump for some time. They've got to keep all expectations very anchored.
Janet, I've got to go to these stunning elections that we've seen, a set of elections in the United Kingdom. The HSBC collapse of real GDP, 4% United Kingdom, 0.4% United Kingdom, maybe 1.4% out there in an inflation that goes from 9% down to 3% is, well, what kind of economy will the next prime minister, whether Starmer or Burnham, what kind of economy will they have?
Well, I think if we start the year looking back on the UK, things were finally getting to a slightly better place.
Yes.
We had a fairly robust start to the year. Without a doubt, without the spike in oil prices, we would have seen inflation below 2% as soon as April. We were certainly looking for some pretty big rate cuts in the course of this year. So unlike for the US, the outlook has changed considerably in the UK. So it's not an easy palette of choices that has faced any of our recent prime ministers in the UK, and we've had quite a few in recent years. The fiscal dynamics are not easy. Difficult political choices are going to have to be taken, and any prime minister is going to have to get people on board with making those necessary political decisions and to restore global confidence in the outlook for the UK. But actually, we now think that the Bank of England won't actually have to raise interest rates, even if they can't tell anyone that anytime soon.
HSBC has such a grasp of foreign exchange. What's your euro call here? Do we have weaker euro from a 114.63?
Yes, actually, we do now look for a slightly weaker dollar. Obviously, since the beginning of the war, the dollar's had the upper hand. It's been moving with the oil prices. And while some of the oil exporting currencies have actually weakened a little bit, especially the likes of Norway and others, actually, the US dollar has remained pretty firm on that whole AI exceptionalism story. So we look for a broad-based, firmer dollar, and that does include a slightly weaker euro, even from these kind of levels.
Dr. Henry, thank you so much. Janet Henry, I have to say it. She knows they hate when I say this. The Hong Kong and Shanghai Banking Corporation.
Yep, there you go.
It's so romantic. I mean, it's like, you got to say it.
Shanghai.
HSBC, thank you so much, Janet Henry. Futures, if you want to believe them, -14. The VIX is a solid under 17, 16.91. Maybe in oil, maybe in currency, we see it. And Paul, with this headline out of Reuters of some form of ceasefire, Hezbollah and Israel, we have oil down $1 from that 80 level.
Exactly. And Israel, we've heard from Israeli officials they're not particularly happy with this memorandum of understanding, but at least as of this reporting, they're perhaps ready to move forward here.
Headlines out just moments ago from Israel. Lebanon, this is the IDF spokesman. We are permitted to act to thwart threats. Again, we will act to protect the citizens of Israel. A special edition of Bloomberg Surveillance worldwide on television, on radio, always worldwide on YouTube. This is Bloomberg Surveillance.
In case you missed it on the China Show, We're just over an hour away from that Trump-Xi meeting. Outside the Forbidden City is our chief North Asia correspondent, Stephen Engel.
So much is in store in a very short amount of time. Obviously, he's going to only really have about 36 hours.
Overwhelming coverage of the Trump-Xi summit.
I believe he is waiting. There he is in the blue suit. President Xi Jinping is waiting for Donald Trump, of course, to step out.
There he is, there, walking towards Xi Jinping. It's 36 hours. That's really not that long of time for the president here in Beijing. The two men. This is quite historic, Dave.
So definitely a warm welcome. Obviously, the real negotiation is going to begin now.
Definitely, the president has brought the A team there. I mean, that's an all-star lineup, and it's very impressive. I think you guys did the math there on $30 trillion worth of market cap.
Don't miss the China Show live every weekday.
In case you missed it on Bloomberg Surveillance.
We should be basking in Nick's glory right now.
I think you are basking. There is quite a bit of basking.
It was just incredible.
You could feel it through the entire city.
I was there.
I mean, you're just waiting for it.
I saw Patrick Ewing. I saw everyone.
It has been an amazing moment where even a Yankees fan and a Mets fan can come together.
This is why it's so incredible for New York.
And have enthusiasm for New York
Everyone
City.
can coalesce around the Knicks.
Don't miss Bloomberg Surveillance live every weekday.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
For the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, in markets, they wrapped up a busy week filled with talks of a U.S.-Iran peace deal, Federal Reserve Chair Kevin Warsh's first policy meeting, and also the early days of SpaceX as a public company. Stocks closed higher on Thursday trading. The markets closed today for the Juneteenth holiday. Futures trading, not much going on. S&P futures and Dow futures both down about 0.1%. NASDAQ futures falling about 0.2%. Global stocks mostly lower. That's after that fragile U.S. peace deal. Facing pressure, negotiations delayed. Right now, the stock 600, little change with the FTSE in London down about 0.1%. CAC in Paris down about 0.2%. Oil, Brent crude, $79 a barrel, down about 0.5%. WTI crude, $76 a barrel. To currencies, the pound outperforming most other major currencies. The Bloomberg Dollar Spot Index is little changed. In company news, some early users of Anthropic's Mythos, well, they still have access despite a U.S. order that led to the total shutdown of other versions. Sources telling Bloomberg businesses, including banks and also tech firms, they're accessing Mythos Preview through Project Glasswing. Now, Anthropic uses that system to hunt for cyber vulnerabilities. Cisco Systems actually confirmed it did retain that access. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is your Bloomberg Business Flash. Tom, are you okay over there?
Okay.
What's going
We're
on?
on television today, so I had the girls come in. They're using Kylie, they told me.
Oh,
it's the new one. Kylie
yes,
is
the new makeup line.
They
Okay.
got it over at Sephora there.
Yeah.
We do it. That'll be enough, ladies. Thank you. They get paid by the brushstrokes, so you got to watch that. Sort of like tokens. We say good morning to all of you worldwide on Bloomberg Radio, on YouTube as well. On television, we thought it would be an interesting day of mid-June conversation. And Paul, we're decidedly wrong. The news flow today, extraordinary. We were fortunate to have Mr. Dowling with us.
Absolutely. Mark Dowling joins us. He's the CIO of RBC Blue Bay Asset Management, located over there in London, Bishopsgate, right near the Bloomberg HQ as well. Mark, talk to us about kind of how your bond market is interpreting and reacting to our new Federal Reserve Chairman and kind of what we heard this week from the Fed.
Well, good morning. Pleasure to be with you. So it's obviously been a very interesting week in terms of sort of the Treasury market, obviously with a profound sort of flattening of the yield curve. I think in many respects, it's interesting to observe now that we've fully priced a hike in for September and also a second hike in to March. And so this is obviously a big change to where we saw markets pricing the trajectory of rates at the beginning of the year. I think up until this point, we've tended to be ourselves more looking for rates going higher. We'd been more sceptical earlier in the year about the whole idea of rate cuts, just because the US economy looks strong to us. But now with 2 rate hikes priced in, I think that's looking pretty fair. But I think when it comes to the Fed, I think Kevin Walsh is going to enjoy keeping us guessing, isn't he?
Yeah, I think so. And I think what we've seen is a flattening of the yield curve. And the people, smart credit people like Lisa Bromwitz, tell me I have to pay attention to that. What does a flattening of the U.S. Treasury curve tell you?
Well, I guess on the face of it, it suggests that the market believes that Walsh is going to be serious in fighting inflation, bringing inflation down. It suggests that he's not going to be scared or deterred in the idea of putting up interest rates in pursuit of that particular objective. And from that perspective, if you're quelling medium-term inflation concerns, that's obviously something that's benefiting longer-term bonds. But look, the question on inflation here is it's easy to try and talk inflation down. It's not necessarily as easy to get inflation down without actually taking some heat out of the economy. So we'll have to see how that progresses over the course of the coming months. We'd still be a bit more given to be a bit more sort of concerned about the inflation dynamic, largely, as I say, because a lot of people have had this chat around AI bringing inflation lower. And indeed, that may be something that we see over the medium term. But certainly for us, in the short intermediate term, while we see this big build out of AI infrastructure, this looks inflationary in our eyes.
Mark, I just worked off the Excel spreadsheet of HSBC with Janet Henry, and it showed me a pretty good nominal GDP for the oddities of politics and economics within the United Kingdom. At RBC Blue Bay, do you just assume there'll be a sustained global and particularly American nominal GDP to keep the party going?
Yeah, so, I mean, Tom, I think the point there is when you talk about nominal GDP, obviously a good chunk of that is coming from inflation.
Yeah.
Now, in the US, obviously, we've got robust inflation, pretty strong inflation, currently sitting at 4%. But at the same time, we're blessed with growth that's looking close to 3% in terms of a real growth trajectory. So that gets you to a nominal GDP of 7. You can imagine how corporate earnings grow if the nominal GDP is doing 7. This is the reason why stocks are doing as well as they are.
Exactly.
And corporate earnings are doing as well as they are. In the UK, in Europe, it's a different story. We've got nominal GDP growth, but nearly all of that is inflation. And actually, the real growth is much, much weaker. In Europe, it's a much weaker growth story. We don't have the AI benefit. We've got energy costs that are too high. So our economies, relatively speaking, are struggling. The US is doing very well, which is why the dollar is riding high this morning. We're at the highs for the year on the dollar today.
You know, but Mark, I get that, but a 7%, even if it's 6% nominal, it's like we're running a banana republic nominal GDP in America. From where you are, again, looking at fixed income assets and all that, is the stock market here just a fiction of a banana republic oomph?
Well, I'm not sure that I'd call this a banana republic. I mean, it's real growth. I just think the one thing that you would highlight here is that if you've got this degree of nominal GDP growth, there would be some who would be arguing actually interest rates to actually bring the economy back more into balance probably need to be a lot higher than they are today. Interest rates don't just need to be 25 basis points or 50 basis points higher, but 1 or 2 percentage points higher. And I think therein is kind of the conundrum. I think that the AI dynamic is so strong in the US, you're going to see strong growth regardless. A lot of this is price insensitive. So I do think that you're going to see this protracted inflation overshoot, and it's going to be difficult for Powell to, I said Powell, I mean Walsh, of course, it's going to be difficult for him to do too much to really talk inflation down and restore price stability. So I think the one vulnerability for the stock market, of course, is if we do end up with the economy overheating, if inflation's more entrenched and rates need to go up more, then that clearly speaks to more of a boom-bust cycle on interest rates. And at some point, if not in 2027, maybe in 2028, then we have to start fearing an economic slowdown, maybe a recession. But that's still further out. We're not worried about that at the moment.
Mark, thank you so much for joining us today. Special edition of the show. Thrilled to have you on. Mark Dowding is with RBC Blue Bay Asset Management. I think we need to summarize the news flow here and drag Lisa in as well. Lisa Mateo with us today. We thought it'd be a quiet day, and we have just endless headlines at this moment out of the Eastern Mediterranean.
Yeah, I mean, I think we're just thinking about Lebanon, Israel. They're talking about a ceasefire here, which with Hezbollah, and that would be certainly good news. And that's supposed to be 4 p.m. local time over there, and that's according to Reuters. And that is a little bit of a rebound from kind of what we saw with some fighting and some concerns about this memorandum of understanding. And would it actually stick? Vice President Vance canceled or postponed a trip scheduled for today to begin negotiating.
But then these headlines, since they canceled the trip, the Associated Press publishing moments ago, Cunningham, Gambrell, and Madani, Israel and the Hezbollah militant group agreed Friday to renew their ceasefire after fighting postponed the talks Paul was talking about in Switzerland. This is 3 officials say there was no comment from Israel or Hezbollah. AP treating it as breaking news. And of course, we'll have Dan Williams with us from Bloomberg News here later along in our special edition this morning. And then in the United Kingdom, which we alluded to with a number of our first guests here, I don't know what to say other than I would suggest the tenure, the government of Mr. Starmer is under serious threat into the weekend.
And from his own party, Greater Manchester Mayor Andy Burnham won a decisive victory for the ruling Labour Party that delivers him a seat in Parliament, and with it, a pathway to challenge UK Prime Minister Keir Starmer for his job.
But the problem is he's the mayor of Manchester.
Yep.
And like Carney, the Prime Minister of Canada, he's in, is it Everton or Everton? I think it's Everton.
Everton, I think Everton.
He's an Everton football fan.
Oh, is he? Okay.
That's like being mayor of New York and being a Red Sox fan.
I don't know how that works.
I don't get it.
No, but they're tribal over there as for their soccer.
They are. They're very tribal.
That's
good. Supporters. Winning fans, Paul, in the United Kingdom this morning. Lisa Mateo with us as well, surviving her special team coverage of the Knicks parade last night. What do you have on Bloomberg this weekend? And I know you guys, it's a national holiday for everybody but Guru and Fenian. Mateo, what do you got planned for this weekend?
We have a lot, but what we're looking forward to is, July 4th, we're actually reporting live on the Intrepid. So we're taking the show on the road.
Very cool.
We're going to be live on the Intrepid.
Can I come?
You're more than welcome.
Oh, my word.
Intrepid
This is
awesome.
like in the Hudson River.
Yes.
Yeah.
And do you know where I'll be?
Where were you?
At the Nathan's hot dog eating contest.
Of course you will.
They mentioned John Farrell last year at the Nathan's hot dog contest.
That wasn't going to work.
It's huge. Bloomberg surveillance.
case you missed it on Bloomberg Brief.
When we were talking about it originally, we thought that this was going to be a very short war. We thought that the energy price hike or increase would be just a spike up and down, but it's been persistent, and that's the concern that we continue to have, because we're starting to see a little bit of fragility in the consumer. If we look at consumer inflation expectations, they're much higher than what the market is pricing in.
Don't miss Bloomberg Brief, live every weekday.
In case you missed it on the opening trade.
We're holding our breath, and our economists put it very nicely in their recent research note. They're saying, for now, you got the support of tax refunds, so you had the fiscal support. This is running out right now. The real test for the consumer starts here.
How are you going to hold your breath for?
I'm holding my breath in two different ways. The first question is complicated.
Unpleasant.
Well, that's what you have to do as a market strategist. It's unpleasant, complicated, but also exciting, I would say. So we're holding our breath and saying, are you going to reopen that strait? Then secondly, if you don't reopen it, how long can you keep running down oil inventories to make up the shortfall? The equity market's pricing 90%. Prediction markets are saying it's a 30% probability that you reopen it by the end of June. And then if you don't get these supplies back soon, then within the next 3 months, you should start to see macro weakness, not just in Europe, not just in China, but also in the US.
Don't miss the opening trade, live every weekday.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Global stocks taking a bit of a step back. This is after talks on a permanent deal between the U.S. and Tehran that were supposed to be held in Switzerland today. Well, they were delayed. Comes after Israel, Iran-backed Hezbollah militants clashed overnight in Lebanon. Now, Reuters reporting Israel and Hezbollah have agreed to a ceasefire from 4 p.m. local time. U.S. markets closed for the Juneteenth holiday. We do have futures trading, not much movement. S&P down, NASDAQ futures all down about 0.1%. The stock 600 heading over there, little change. We have the FTSE in London and the CAC in Paris both down about 0.2%. Brent crude down about 0.3%, $79 a barrel. WTI crude $76 a barrel. Bitcoin falling for a fourth consecutive day. It's now just above 62,000. Let's head over to some company news. We'll start with Mercedes-Benz Group. They are set to discuss more costs with labor representatives. Now, those talks, they come as Mercedes faces growing pressure from U.S. tariffs, also slumping sales in China as well. Take a look at shares in Germany. They're up about 1%. And Netflix under contract to buy a historic Los Angeles movie studio space that was seized by Goldman Sachs. Now, sources telling Bloomberg the price for Radford Studio Center, it's set to close at $400 million. Now, that's a fraction of the 2021 $1.85 billion sale price. The movie lot, though, it's been the home to a lot of popular TV series over the decades, including Seinfeld. There you go. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. This is a treat. We never speak to him because, you know, it's like, talk to us. He's too busy in the United Kingdom. When he was a kid in Birmingham, James Wilcock decided he liked politics.
Really?
Like way early.
Okay.
And he's been totally steeped in the United Kingdom politics. Won some huge award, National Student Television Association. He was like 12 years old.
Okay.
Like, you know, the whole thing. And it's real, and it's just carried forward to his fabulous coverage for Bloomberg News. Mr. Wilcock joins us this morning. James, I'm going to cut to the chase. Is the Prime Minister's days numbered?
Yeah, I mean, I wish I knew what the number were, Tom, but look, Polymarket says there's a 90% chance he's replaced by Andy Burnham by the end of this year. It's not difficult to get more clear-cut than that. The reason why I say that, because as a journalist, you really shouldn't say the Prime Minister's days are numbered unless you know what you're talking about, is because Andy Burnham, the Mayor of Greater Manchester, has just won his by-election, the special election here in the UK, by such a big margin and such a surprise victory that the Prime Minister, who is very unpopular in the country, his own MPs, his own lawmakers now wonder why they're keeping him around.
So what has caused this challenge for Mr. Starmer? What's gone wrong?
It's a great question. You could answer it a number of ways depending on your politics. You could say the economics have been very difficult. The UK's growth is flatlining. You could say that you might be personally not a fan of Starmer. He's very, very unpopular. It's been the fastest slide in the polls of any Prime Minister in modern UK history. Or you could say that his policies aren't right. Now, the thing about this is that Andy Burnham has an answer to all of those. He says that he would make things run like Manchester, where he comes from, which he says is the fastest growth rate in the UK. He's far more personally liked than Starmer. And also he's seen as bringing in this kind of new wave of left-wing Labour voices. Now, the question is has he got the gumption to actually challenge the Prime Minister? And are there other people in the mix? Like, it's not a done deal, but where we stand this morning, I have to say the scale of this by-election victory is massive.
I mean, and James, I saw it on, I think it was on Twitter. It was a wonderful detailed YouGov's thing that says there's a lot of regret about Brexit. So the Conservatives are basically dead, except south of Aberdeen. The Reform Party, Farage, is there. There's a group to the far right of the Reform Party. I get all that. But is it just basically a nation with great regret over Brexit? Is that the backstory?
Not quite. I mean, it's interesting you point it out like that, because what has been fascinating about this election is we've been talking over here about the end of two-party politics. Like this idea, as you were saying, that Labour and the Conservatives, the traditional two parties, are no longer the sort of main parties of UK politics anymore. There are five. There are Reform, the Greens, the Liberal Democrats as well. What is interesting is those Brexit voting blocs stay the same. If you go to Makerfield and you compare, which is where this by-election was, and you compare the voting blocks then to who just voted for Labour and who just voted for Reform now, they are near identical. And all that is happening is they are reforming around different names. So although we have polls showing there is some regret about Brexit and that moods are slightly shifting, when it comes to electoral politics, the split that Brexit drove through UK society is still 10 years on, showing up behind what parties they're backing.
So is there a path forward that is maybe middle of the road for the UK in general? And is there any candidate that's willing to to lead down that road?
So this is what me and my colleagues on the UK government team are spending like the rest of the weekend trying to figure out. This is the messy bit. We know that Burnham is now an MP. To be a prime minister in the UK, you have to be an MP. So the path has now opened up for him.
Okay.
We don't know what he's going to do. We don't know how he gets rid of the Prime Minister, Keir Starmer. So this morning, Keir Starmer has told reporters that he is staying in the job. He's going to fight. That's going to be messy. We don't know if Burnham were to win, would it be uncontested? We know that Wes Streeting, the health secretary, former health secretary here, I should say, would fight him if there were a challenge. This could all get really messy, guys. And as well as that, we don't yet know what policies that would be. We know big economic figures, Goldman's Jim O'Neill, the former Bank of England chief economist Andy Haldane, the former Office of Budget Responsibility chair Rob Hughes, they are all advising the Burnham team. We broke that story last night. Those are names the bond market will recognize over here.
Right.
We don't know who the chancellor would be in a Burnham government if one were to exist.
Before we let you go, James, as simple as I can, the knowledge base of Americans on Birmingham is they watch Peaky Blinders. I mean, I'm sorry, James, but we're that uninformed. How separate is London, the beautiful people of London, like Francine Lacroix?
Sure.
How separate is London, James, from the rest of England, and particularly to Burnham's Manchester and your Birmingham?
So the wonderful Francine Lacroix, if we use her as an example, she is more stylish. She has higher property prices, but she has seen better wage growth for the past 20, 30 years, give or take, than any other part of the UK in London. And so whereas the constituency Andy Burnham has just won has seen almost nothing in wage growth, almost nothing in productivity growth. Big factories have closed there. Since the Industrial Revolution, there has been nothing. Now, Andy Burnham has talked about reversing the past 40 years of neoliberalism. That is the challenge and what has made him appeal to people in the north, to bring out some of the growth that London has seen to the rest of the UK. And in Birmingham, I'll give it, Birmingham voted 52-48 for Brexit. So it is a highly diverse city. It is a very young city.
Right.
But it is also a city that really struggles for growth. And it represents, in many ways, the engine that they have to get going if they want to get growth in the UK.
You're just a beast. I learned a lot there. James Wilcock, thank you so much. Really, really appreciate it. Driving so much of our political coverage for Bloomberg Media and for Bloomberg News as well. Two quick headlines here. It is a blur this morning. Yep. Paul and I thought we'd slide in and talk U.S. Open. Mr. Netanyahu has agreed to renew the ceasefire. This according to Axios. Israeli officials says there is a ceasefire in Lebanon. That from Army Radio. Lots of different headlines. We'll keep you abreast of that this morning. Futures, if they're trading, improve -20 to -11. A better tape. Oil's the real deal, 79.68 down fractional. Oh, why are you here? You should be out at Shinnecock.
I should be out at Shinny. Yesterday, the story was the wind, Tom. Just gusting hail wind, particularly in the earlier part of the day. Scores reflected that. No, it's just kind of blowing really crazy. It laid down a little bit towards right at the end of the day, and we saw some low scores at the end, but it's playing tough, as everybody knew it would be. And there's a lot of big names that are there, so it's going to be a great weekend, great weather weekend,
I think the Knicks will show up. Can you imagine?
They're everywhere.
A couple of Knicks walk out.
They're everywhere. I see them all over. Yeah, they could be there. Why not?
To see. We'll have some updates for you across Bloomberg Radio here. And good morning to Bloomberg 1130 in New York, 99.1 FM in Washington, Nathan Hager Radio. Good morning as well here on Juneteenth. I'm putting out on Twitter and on LinkedIn a 152-page jewel on this Juneteenth. It is, for so many Americans, a new holiday. And I just can't say the public service Annette Gordon-Reed did. She's a scholar of the Texas vintage, I believe. Her book on Juneteenth is a short, required, terse read of 1865 and 1866. I'll get that out on Twitter and LinkedIn. It's a special edition of Bloomberg Surveillance on radio, on YouTube, on television, worldwide. Do you like my makeup?
Yeah, they were.
You know, I got Kylie Jenner did it.
tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
In case you missed it, on the China show.
We're just over an hour away from that Trump-Xi meeting. Outside the Forbidden City is our chief North Asia correspondent, Stephen Engel.
So much is in store in a very short amount of time. Obviously, he's going to only really have about 36 hours.
Overwhelming coverage of the Trump-Xi summit.
And I believe he is waiting. There he is in the blue suit. President Xi Jinping is waiting for Donald Trump, of course, to step out.
There he is, there, walking towards Xi Jinping. It's 36 hours. That's really not that long of time for the president here in Beijing. The two men. This is quite historic, Dave.
So definitely a warm welcome. Obviously, the real negotiation is going to begin now.
Definitely, the president has brought the A team there. I mean, that's an all-star lineup, and it's very impressive. I think you guys did the math there on $30 trillion worth of market cap.
Don't miss the China Show live every weekday.
Next week on Leaders with me, Francine Lacroix. I speak to the outgoing chief executive of BHP, Mike Henry, about his do's and don'ts for making deals.
You don't want to be setting strategy in the middle of a transaction.
Changes he made at BHP.
We needed to make sure that we had a portfolio that was fit for the future.
And how to ensure smooth leadership transitions.
Day one, succession starts now.
So tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Do you just ignore all the noise that's out there right now?
What happened with tariffs? How did they impact the economy?
With Alexis Christoforous on markets.
We're talking about inflation not really being under wraps yet.
And Michael Barr with news.
The latest city to be targeted for immigration enforcement.
The best in economics, finance, investment, and international relations. Bloomberg Surveillance on Bloomberg Radio, Bloomberg Originals, and the Bloomberg Business app.
Good morning, everyone. A special edition of Bloomberg Surveillance. Paul Sweeney and Tom Keene. Lisa Mateo with us as well this morning. We wanted to squeeze this in right now, an important conversation with Julian Lee, driving all of our oil coverage out of Queen Victoria Street in London, definitive in academics, and also in just figuring out the next 5 years. The next 10 years for oil. Julian, I saw in the Zeitgeist today, and I've read in a little bit, on a 46-mile Panama Canal-like canal, the Arabian Canal across the United Arab Emirates, is a shortcut to go bypass the Gulf of Hormuz. After this war, will there be new canals, new pipelines, new distribution, or is it just temporary because we have a war?
I think there will certainly be new pipelines and bigger pipelines. Whether a canal will ever get dug, I'm not quite so sure. I'm not convinced that offers a particularly significant degree of protection from going around Hormuz. It's still going to be very close to Hormuz wherever you dig it. But it would certainly be, feasible. But I have little doubt that Saudi Arabia will boost its capacity to export through the Red Sea. We know Iraq is looking at alternatives to shipping through the Persian Gulf. Goodness knows it had a 3 million barrel a day pipeline to the Turkish Mediterranean coast up until sort of the early 2000s. It will certainly want to look at reviving that. Prior to that, it also had pipelines across Jordan and Syria, and it may well look at reviving those routes. The other country I think that is really going to be looking at alternatives is Kuwait. Their difficulty is they're going to have to cross either Saudi Arabia or Iraq to bypass the Persian Gulf.
Julian, what do we know about some of the damage to the infrastructure in that region of the world?
We know a little bit. I mean, I think, we know the big things that we've seen. We know there's been some damage to some of the UAE oil and gas fields. We know there's been damage to the Qatari liquefied natural gas processing, or some of it. We're less clear, I think, on how much, if any, damage has been sustained to facilities in Kuwait or Saudi Arabia. It looks relatively small if there is. We also believe that the shutdowns and the scaling back of production rates in those countries was done in a very controlled manner, which means that it should be relatively straightforward to open those fields up again. Iraq says it's already boosting output from its southern fields. So, there's obviously, in the fog of war, there's a lot of uncertainty, but things do seem to be moving. One of the biggest issues is going to be getting enough empty ships into the Gulf to move more oil out.
All right, Julian, thank you so much. Appreciate that. Julian Lee, he is an oil strategist for Bloomberg News. And looking at oil time, got a little bit lower here. I think one of the questions for a lot of people, we all see the same video of these, dozens and dozens and dozens of tankers just sitting there at anchor in the strait. And the question is, when can they feel like they can safely get through this strait? And it's going to be tough. Some
movement yesterday, but I agree with the headline. I mean, folks, we're literally looking here in New York at headlines. Like if I look, we have beautiful search engines. Thank you, Mr. Secunda, for the search engines that we have. But, I have, here's Associated Press. Urgent talks between U.S. and Iran are called off. That's a little delayed. U.S. says more than 20 vessels used Omani Hormuz route overnight. Right. That's a headline 7 minutes ago.
Yeah.
So it's going in real time here. We'll give you those headlines here at the show opening of the next hour. It is a special edition of Bloomberg Surveillance. Good morning.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
WBOS HD1 Brookline, Boston, WNBP Newburyport, and Sirius XM Satellite Radio Channel 121.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the process forward to choose in AI?
Where is value out there in the fixed income world?
With Alexis Christoforous on markets.
The stock up 47%.
And Michael Barr with news.
The president spoke to reporters on board Air Force One.
The best in economics, finance, investment, and international relations. Bloomberg Surveillance on Bloomberg Radio, Bloomberg Originals, and the Bloomberg Business app.
Good morning. morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, Alexis Christophorous. It's so confusing. I can't keep up.
I know. We're keeping up here. But I mean, we thought it'd be a nice, slow day, but news doesn't stop. It just
I don't know.
coming.
Alexis Christophorous was shutting down a bar last night with the Knicks. They called up Lisa Mateo at the last minute. Thank God Lisa's here, getting ready for Bloomberg this weekend. It's a special edition here on radio, on YouTube, the way you choose to listen to us. Good morning on Bloomberg Television worldwide. Paul and I, we had our teams in without the interns a couple days ago, and we said, let's slide in on Juneteenth, a national holiday here in America, and let's, have a nice quiet day talking about the open, catching up with Lisa. You survived the parade, right?
I did. It was quite an experience. The energy was amazing. I got to tell you, it was a fun time.
And now we're sending her to the, what is it again?
Nathan's hot dog eating contest.
Only to the biggest events do we send our A team.
The A team.
That's my life.
For those of you around the world, there's a hot dog event that is just extraordinary. It will be team coverage for Bloomberg.
I watch that
this weekend.
It's amazing.
We'll have to see.
It's amazing.
But so we thought we'd come in, folks, and seriously, the news flow is extraordinary. Wonderful conversation with James Wilcock out of London on these tumultuous elections and the politics of the United Kingdom. It is not out of order to say, are the days of Prime Minister Starmer limited here into the future? And then with the war and with the set of headlines, we went to bed and we awake with a whole different tone. This is within the last 12 minutes. This from the United States Navy. U.S. forces will continue to operate in the Hormuz area. U.S. CENTCOM, vessels in Hormuz should have freedom of navigation. We say more than 20 vessels use the Omani-Hormuz route overnight. Axios cites U.S. official on Netanyahu's complete agreement. In the last hour, a supposed truce, Reuters first reporting this. A truce, is that the right word? Ceasefire? Between Hezbollah and Israel. And this, as I read the Times of London in the last 12 hours, 4 soldiers, including a lieutenant commander, lieutenant colonel, I stand corrected, killed of IDF, and over 10 Hezbollah types killed as well. So the news flow this morning is extraordinary. The limited futures work that we have, Paul, I have Brent crude under 80. Yep. What else do you see on the screen?
Yeah, I see just, a lot of quiet here because I think we see the euro moving. We see the dollar continues, the DXY index stays above 100. So we'll keep an eye on that.
Let us sum here on a Friday from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
Yeah, those mounting tensions really threatening to throw a U.S.-Iran peace deal off course. We have Switzerland's foreign ministry saying that talks have been, quote, postponed. That was following those overnight clashes in Lebanon. And Tom mentioned a lot of headlines coming out. We have Reuters reporting that Israel, Hezbollah have agreed to a ceasefire. Axios reporting that Israeli Prime Minister Benjamin Netanyahu has agreed to renew the ceasefire. Markets in the U.S. and China, they are closed for the U.S. holiday. U.S. futures are trading a tick up a little bit lower for Dow futures, down about 0.2% now. S&P and NASDAQ futures still down about 0.1%. Global markets mostly lower. We go to the stock 600. Little change. The FTSE in London down about 0.2%. The CAC in Paris down about 0.2%. In Europe, Greater Manchester Mayor Andy Burnham, he won that seat in Parliament, setting to push that path for him to challenge Prime Minister Keir Starmer for his job. We go to currencies. We have the British pound, mostly a little changed right now. It was up about a 0.1%, stronger by about 0.1%. Oil right now, Brent crude $79 a barrel, WTI crude $76 a barrel, up about 0.2%. Gold headed for its third straight weekly loss. It's trading below $4,200 an ounce. Goldman Sachs actually cut its year-end global forecast by $500 an ounce, a revised target of about $4,900 an ounce for December. Over to some company news. Dutch chip equipment maker ASML Holding, they may be in violation of U.S.-led export restrictions. Commerce Secretary Howard Lutnick, he outlined some concerns to the company's senior leaders that one of its top-of-the-line machines may have made its way to China. And separately, Washington also putting up that pressure on Berlin over pharmaceutical pricing. The U.S. launched a tariff investigation into Germany over, quote, persistent underpayment for innovative pharmaceutical products. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. There's some future activity this morning with dollar over 100, yen 161.31. It's completely off the radar, but you wonder what Japan's going to do. Kursuchi Ueda is hospitalized. We note that illness. Joining us now, last time she was on Spectacular, Vanya Stavrakova joins us here from the London Business School with all sorts of other good affiliations. Behind it is prodigious mathematics from Franklin and Marshall. I want to talk, Vanya, about, as you say, a view from 60,000 feet on inflation persistence, slowing growth, geopolitics. The fact is, looking backwards, Vanya, I have a central bank regime, particularly the Fed, at a 3% range, nowhere near a supposed 2% range. Are we in an era where we're losing 2% and we're going to a higher inflation regime?
So thank you so much for having me, and it's lovely to join you from the London office. I do believe Kevin Walsh is laying out a completely different playbook for the Federal Reserve, which in many ways I do believe is a positive change. So we are in the beginning of a regime change that acknowledges that effectively the Fed has to regain control over inflation because it needs to be prepared for a fiscal dominance regime. And I believe that his first speech that we witnessed just a couple of days ago was precisely about that. Now, the job is not going to be easy because even though he emphasizes the importance of regaining control over the broad money supply, so effectively the balance sheet of the central bank, which is front and center in his view of how central banks should conduct monetary policy, one thing that he kept mentioning during that speech is that at the moment, the fact that we have such high stock valuations is probably an important driver of the inflation that we're seeing, right? We have a K-shaped growth in the U.S. economy. So the higher the stock market is, the more demand there is by these high-income consumers that also hold the stock market. And even if you hike interest rates to the extent that the stock market is driven by this AI boom, you might need to hike by a lot in order to put a dent in stock market valuations, which will in turn put a lot of pressure on housing markets, clearly the cost of borrowing for government. So it is a very difficult situation he finds himself in, given that getting the stock market under control is not something that is easy to do or he might be willing to do, but it's an important driver. This wealth effect is an important driver of the inflation that we see in the U.S. at the moment.
Professor, we know you have some political issues there. The Prime Minister does with the election earlier or yesterday up in Birmingham. Talk to us about the divergence between kind of the path of economic growth in the U.S. versus the U.K. What is it, all AI, or what else is going on?
Well, sadly, the UK has been hit by a number of negative productivity growth shocks. So first of all, the global financial crisis impacted London and the UK much more negatively than the US, granted that the financial sector was the main driver of growth in the United Kingdom. We never recovered from that, and you can see it from the pound, right? The pound is a very good barometer of the state of the economy, and after the pound depreciated with the onset of the global financial crisis, it never really recovered against the dollar. And the second big shock was Brexit. So essentially, the UK hasn't really had much of a growth since the global financial crisis. The US is a very different story. We have, of course, the higher taxation, the higher tax burden, which doesn't help with innovation, creating new job, retention of companies, startups, attracting high-talent individuals. So yeah, the UK is in a much more challenging position than the US in that sense.
So here, one of the other phenomena over the last several years has just been the decline of globalization, the onshoring, maybe the friendshoring, and some concerns that structurally will push global inflation higher. Do you ascribe to that thought?
Well, what's interesting is that, yes, we have seen inflation being higher, and probably a big chunk of that inflation is because of deglobalization, if you wish. But also what's surprising is that the global economy has remained quite resilient. It is possible that a lot has been absorbed by firms lowering markups in sectors and industries that are essentially more competitive. But I'm not seeing the main issue with inflation around deglobalization, at least as of yet, because the de facto tariff rates are not as high yet, and hopefully will not be.
Vanya, I'm sure at Franklin and Marshall you crushed your first exam on dynamic stochastic general equilibrium theory. Clarida told me that.
Oh, okay.
He said Vanya's down at Franklin and Marshall just killing it.
Yep.
Vanya, when you look at the mathematics of all this, is the Warsh Fed going to be as ex post after the fact is the Powell Fed? Is the bottom line is they're just going to have to wait to see what the data is, like mere mortals that put their pants on one leg at a time?
I mean, they will look at the data, but I think they will try to use completely new set of tools. They will try to push unconventional monetary policy to a completely new level. I'm not talking about forward guidance, quantitative easing. This is old news at the moment. I do believe he is going to try all kinds of new instruments, and it's no surprise that he favors the old regime where we had required reserve ratios that could be used to manipulate the money supply, etc. He's a fan of essentially regaining control of the broad money supply. So in principle, is that useful? Yes. The more tools you have, you don't have to use a single blunt instrument. Having said that, it's not easy to achieve. So we'll have to wait and see. And it's one thing to say, I want inflation to go down to 2%. It's another thing to deliver. And you would have to show some actions behind that intent.
Right. Got to dash to breaking news. Dr. Severkova, thank you so much for joining us today from London Business School. Really appreciate it. The headlines on a national holiday in the United States are front and center, one of the busiest days of the year. Moments ago, the Iran Foreign Ministry denies Strait of Hormuz has been closed. To say it again, Iran denies the strait has been closed. This is Ismail Bagai from Telegram. We're trying to source everything we can at Bloomberg, and we'll correct any headlines that we have to, obviously. But by the minute-by-minute move, the headlines are just, I don't know what else to say, just tick by tick extraordinary. I'm not sure we're getting good prices on oil. Brent 79.85 in the vicinity there as we can. This is arguably our interview of the day. To have Leslie Vinjamuri with us is a privilege. Her service in England for years and now in Chicago at the Council on Global Affairs. I must digress, Dr. Vinjamuri, to see the videos, to see the celebration of former presidents. In your Chicago, the opening of the Obama Library, what have you witnessed?
I mean, it's been extraordinary. And I have to tell you, Tom, because we, of course, have had a close relationship, known that this was coming, we actually planned our America at 250 Global Forum to take place at the same time. Many of our guests were going back and forth from the many different activities at the Obama Presidential Center to the Chicago Council, and it's just been a phenomenal few days. But you know, while Chicago's celebrating, it's also watching the world on fire. You know, many former ambassadors, negotiators who have been involved in Iran negotiations, you know, since 2015, if not before, watching this deal. And so the geopolitical focus, not only on America's 250th, on Obama's opening, but on the war, has been really extraordinary here in Chicago.
What is the best practice right now for a fractured Israel?
I mean, this is, you know, the one thing I think we heard over the last several days was fracture everywhere, fracture in the U.S., no unity in Europe on how to deal with this moment. Obviously, fracture between the United States and Europe. And Israel, sort of, you know, is Israel going to come on board this deal, or are the United States and Israel actually going to pull apart? And yeah, I think the number one question for many people is whether, you know, J.D. Vance and President Trump are going to use America's leverage over Israel to get it to come on board this deal that already seems to be, you know, struggling. And that, you know, if you look at our Chicago Council polling, Tom, you'll see that Americans now are very divided over the U.S. relationship with Israel. That didn't used to be the case. It's partly generational. Younger generations don't have the same level of support, but a lot of it is down to U.S. policy, obviously to the war in Gaza, and now it's sort of igniting again. So this is a very important thing to watch. It's a structural relationship almost at this point, but it is a key question.
Leslie, from your discussions with, your colleagues over the last several days in Chicago, what's the consensus on this memorandum of understanding and, I guess, the path forward here?
Well, I mean, I will tell you, as people from all over the world who've been here in Chicago talking about it. So I, talked with David Sanger extensively about the MOU. He took the phone call from President Trump not so long ago, several hours. I think the view is skepticism. I think many people feel that the United States is getting a worse deal and a much more uncertain deal than it had in the JCPOA, that original Iran deal. Everybody wants to see the Strait open. There's grave economic considerations, concerns, but there is a real feeling that this is demonstrating the limits of a very powerful state, which is to say the United States, in translating its phenomenal capabilities into actual outcomes, and Iran having an upper hand. And really, there's just so much uncertainty. How much money is America going to pay? Is Iran going to try to charge a toll for ships to go through? We know that that's not clear yet. Businesses are very concerned. Insurance companies are very concerned. I think there's a real skepticism about whether the actual nuclear part of these talks will come to fruition. But I did hear, somebody said, in fact, on the record, so I can share it, and this was David Sanger. I said, what is your sense of President Trump? What does he actually really believe? And he said, and I have to say I agree with this, that he believes that President Trump won't admit it, but understands that the United States has overreached. And that there will be the overriding drive will be not to have a return to war.
I got to get this in, Leslie. We're running out of time here, and I know you've got to get off to meetings with the Institute in Chicago. Vali Nasser, you gave a wonderful blurb to him. Folks, the Vali Nasser one volume on the history of Iran is extraordinary. And the key phrase, Paul, throughout all this is the phrase sacred defense. Leslie Vinci-Murray, does Iran in its disarray, with its new ascendant military, is it still just a sacred defense?
Look, Iran knows Iran is strengthened, it's doubled down, it's survived, and it understands the upper hand that it now has to play. And it's got a national security calculation, as do many states. It's not, driven purely by ideology. And I think that is one of Vali Nasser's main points.
One final question. Are the Chicago White Sox playing better because of former President Obama or present Pope Leo?
I think the Pope, undoubtedly. But, it's a big Chicago time, so we'll root for all of them.
Dr. Vinci-Murray, thank you so much. Greatly appreciated this morning in Chicago there in huge meetings. It's really a treasure to have her slip away from those meetings. Leslie Vinci-Murray, the Chicago Council on Global Affairs. My head's spinning. I thought you promised me this would be like,
I know.
I thought
we're going to just kind of waltz through this thing, but there's stuff going on. The world moves. I think what we're learning here is just the Middle East with this memorandum of understanding out there. It is just so fluid. I'm not sure. I think both sides are trying to really get a sense of what it means and what's the next steps as it relates to 60 days, getting some negotiations on the nuclear side, which a lot of folks say is going to be the really tough thing to do. And then in interim, can I sail my ship through the Strait of Hormuz? If I'm a captain, I'm not sure I have much more clarity. If I'm an insurance agent, insuring that ship, I'm not sure I have much more clarity. So here we are.
Well, here we are, commissioned in August 1943, the USS Intrepid, CVS 11. And Bloomberg this weekend will be on the Intrepid. Lisa Mateo, are you going to be on the deck?
David and Christina will be on the deck. I will be somewhere else. But yes, they are going to be on deck because, you know, that's when the ships come down the Hudson and it's this whole beautiful spectacle. And it's actually an extended show. It's going until 11 a.m. So it will be a 4-hour show.
It's fun.
So
On
a little
the deck
bit more
is,
time.
I mean, you're right there with all the fighter jets.
But it's a
and all the
beautiful,
airplanes.
it's
awesome.
Beautiful
People
spectacle.
rave, like people like, yeah. And then you go down the West Side Highway, and there's where Lisa works out 8 days a week.
Yep.
Where you get your golf game back into the service.
Yep.
All the beautiful Tribeca women are walking their dogs over to the water and that. And then there's this ginormous aircraft carrier, folks, hung out in the Hudson River.
And you can go into the bowels of it, and there's also a submarine anchored right next to it. You go into that.
I've
That's
been in
even
there.
Very cool.
Oh,
With
I was
4
so
kids, I've been there so many
claustrophobic.
times.
Yes, me too.
Bloomberg this weekend, David Gura, Christina Ruffini, and Lisa Mateo at the Intrepid. Look for that. Special edition Saturday and Sunday as well. From New York City, a special edition of Bloomberg Surveillance.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
Ebola can be a risk for all of us. The solution is not to close borders. The solution is to provide sufficient support.
Premieres June 26th, only on Bloomberg.
Bringing you up to the minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Ordern in Guayaquil, Ecuador, and this is Bloomberg.
In case you missed it, on the opening trade.
We're holding our breath, and our economists put it very nicely in their recent research note. They're saying, for now, you got the support of tax refunds, so you had the fiscal support. This is running out right now. The real test for the consumer starts here.
How long are you going to hold your breath for?
I'm holding my breath in 2 different ways. The first question is complicated.
Unpleasant.
Well, that's what you have to do as a market strategist. It's unpleasant, complicated, but also exciting, I would say. So we're holding our breath and saying, are you going to reopen that strait? Then secondly, if you don't reopen it, how long can you keep running down oil inventories to make up the shortfall? The equity market's pricing 90%. Prediction markets are saying it's a 30% probability that you reopen it by the end of June. And then if you don't get these supplies back soon, then within the next 3 months, you should start to see macro weakness, not just in Europe, not just in China, but also in the US.
Don't miss the opening trade, live every weekday.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Global stocks ended a strong week on a little bit more of a cautious tone. The focus shifting to the Iran peace deal with a delay in negotiations after fighting intensified in southern Lebanon. Now the latest headlines leading toward a possible ceasefire in Lebanon, but we will keep you updated on that. Let's go to the stock 600, down by about 0.1%. The FTSE in London down 0.3%. Same for the CAC in Paris. Markets in the U.S. and China closed for the holidays. We do have U.S. futures trading. Right now, not much a move movement. S&P, Dow, and NASDAQ futures all down about 0.1%. Over to oil, we have Brent crude at $79 a barrel. WTI crude $76 a barrel. Bloomberg reporting traffic through the Strait of Hormuz appears to be thinning. Meanwhile, you have Iran's Persian Gulf Strait Authority. They're saying ships that cross the waterway need its permission to pass, and those that do, well, they're going to need mandatory insurance policy. Gold headed for a third straight weekly loss, trading below $4,200 an ounce. Over to currencies, the Bloomberg Dollar Spot Index, little change with the British pound up about 0.1% at 132.19 against the dollar. With the Japanese yen 161.28 against the dollar. Bitcoin falling for a fourth consecutive day right now. Actually, it's up just a tick. It just changed up about 0.1%, but still above 63,000. Over to company news, and sources telling Bloomberg SpaceX preparing for a potential bond offering of $20 billion or more. And that's a sign the company's fundraising campaign only just begun. And finally, Amsterdam-based tech investor Prosus expects core earnings to surge as much as 28% in a year ended March 31st. That's on the back of its growing e-commerce business, also an increase in the value of its stake in China's Tencent. Prosus is actually the Chinese company's largest shareholder. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. A special edition of Bloomberg Surveillance worldwide on television, on radio, and on YouTube. Of course, Paul Sweeney and Tom Keene on this national holiday for America, Juneteenth. We are honored to bring you now a gentleman who perhaps more than any American spans Robert D. Kaplan's The Loom of Time, from Morocco over to Persia. Ambassador Puni Talwar was former United States ambassador to Morocco and was directly involved with many negotiations with Iran. Ambassador, thank you so much for joining Bloomberg this morning.
It's great to be with you both.
Ambassador, I look at this moment at hand, and I want you to take it back to Albert Harani and his definitive one volume on the history of the Arab people. Is the Arab world, from your Morocco to your Iran, is it blown up?
The Middle East has been in a period of incredible turmoil for at least a century, especially following the collapse of the Ottoman Empire. So what we're seeing today is really a continuation of this cycle that has been going on for many decades now. It's intensified, it's quiet for periods of time, but it has been largely in this period of disquiet and unrest for a long period of time. And of course, as you know, Persia is not Arab, but they have a significant influence on parts of the Arab world, especially through their ties to the Shia communities and their support under this ideological Iranian regime for non-state actors like Hamas, Hezbollah, so including non-Shia groups.
When you look at Iran and you take it from the span of the '79 revolution to their horrific war with Iraq, and the balance between the theocracy and maybe a middle class in Iran, where does the theocracy of Iran place right now versus the military that seems so dominant?
That's a great question. And that still has to shake out a little bit. Prior to this war, the Islamic Revolutionary Guard Corps, the defenders of the revolution, if you will, have had the upper hand in the Iranian decision-making process. And that has only been strengthened through this war, the campaign of assassinations, the taking out of the supreme leader, who is a theocrat, the chief theocrat, if you will, in Iran, has been replaced now by his son, who's still untested. And what we've seen is that the IRGC is in a more dominant position. So the hardliners have been strengthened through this war, and we have to see how this shakes out. And whether the theocracy and the clerics will actually take more of a, not a backseat, but maybe not having as dominant a position as they once did in the past.
Ambassador, can you give us an assessment of the Memorandum of Understanding? What's your view?
Sure. I think it's not a very good deal, but I think it reflects a reality of a war that was started on faulty assumptions. The assumption that Iran was so weak following those massive protests, which killed thousands of innocent protesters, that a quick military operation could essentially either topple the government or force it to capitulate. And neither of those things happened. So a war that started on that premise actually has resulted in an Iran that is in a stronger strategic position. And this memorandum essentially will, for 60 days, reopen the Strait of Hormuz, restoring it to the way it was. After 60 days, it seems to contemplate the potential for Iran to collect fees. And if Iran is unhappy with this at any time, they can continue to regulate the flow of traffic. It's not necessarily an on-off switch. And they're getting a significant amount of upfront sanctions relief, which will undercut, I think, the leverage that the administration will want for the second phase of this deal to get into the nuclear discussions.
So I guess that begs the question, it seems like we're no better than we were before the war, maybe worse off if this strait is now weaponized in the future. How does the U.S. move from here?
That's a good question. We are worse off. I think Iran certainly has been set back in terms of its conventional military capabilities, its defense industrial base, but the United States has now lost two key pieces of leverage. It's the use of force is no longer credible because we've shown the limitations of that. Right. And Iran has withstood this powerful assault. And the oil sanctions, which were our most powerful piece of leverage on the sanctions front, those are being waived at this point. And so what we have to go back to is really the drawing board and what the administration can offer now to get to that nuclear deal that we all want to see to constrain their program. And to prevent them from getting a weapon is essentially incentives of over $300 billion in a reconstruction fund. And we have to try to rebuild our alliance structures as well, which are in bad shape in many parts of the world.
Ambassador, to span this from the Arab Spring in Tunisia, in Cairo, and bring it over to your Morocco, where you were our representative in Marrakesh and in all of the King's Morocco. How does this war destabilize the distant Arab world? How does this war destabilize Morocco and Mohammed VI?
Well, Morocco, I don't think is fundamentally destabilized by this. Morocco is actually, this is our 250th anniversary we're going to be celebrating this year. It's actually a moment to remember that Morocco was the first country to recognize American independence. So this is an old, long-standing relationship. Morocco is an incredibly stable country. It's one of two countries in Africa that has reached investment-grade status, and it's going in a great direction under a very progressive king. Now, that said, they're having some influence from this. What we're seeing is that sulfur, for example, which is necessary for fertilizer exports, the biggest export earner for Morocco, those have been affected. And as a result, Morocco's fertilizer exports will be hurt this year. Moreover, Morocco is no friend of Iran. They've broken relations with them twice. They actually have no relations right now. Part of that goes back to the fact that they actually hosted the Shah after he was overthrown. And so they have no love lost. And they're probably very concerned, just like many other of our allies in the region, that Iran is apparently emerging from this in a stronger position. They want to see Iran put in a corner and not have the ability to expand its tentacles all across the region.
Ambassador Talmar, thank you so much for joining us today. Paul Sweeney and Tom Keene here at Bloomberg. The former ambassador to Morocco, Puneet Talwar, with us at Talwar Global Strategies and, of course, with the Council on Foreign Relations. Paul, what an extraordinary conversation.
It is. I mean, he's got
his
all
public
the
service to the nation it literally is the span of Robert D. Kaplan's book.
Yeah, exactly. And his notes today, just assessing the MOU. He's not impressed. What's next? Negotiations. He does highlight the fact that the direct negotiation is a positive as opposed to indirect costs. He compares the memorandum of understanding to the JCPOA. You know, I think he kind of feels like the MOA, as we understand it now, is not up to snuff, but maybe that's subject to negotiations. We'll have to see.
There's no headlines in the last 10 minutes here on a quiet Friday. It has been just nuts. There's no other way to put it. It's a special edition of Bloomberg Surveillance this morning here from 9. We'll stretch into the 11 o'clock hour as well. Lisa Mateo with us, Paul Sweeney and Tom Keene on this national holiday. A political upset in the United Kingdom. Headlines furious out of Israel, Iran, and the United Arab Emirates as well. Please stay with us from New York City on television, on radio, on YouTube. Bloomberg Surveillance.
Weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
In case you missed it, on the China Show.
We're just over an hour away from that Trump-Xi meeting. Outside the Forbidden City is our chief North Asia correspondent, Stephen Engel.
So much is in store in a very short amount of time. Obviously, he's going to only really have about 36 hours.
Overwhelming coverage of the Trump-Xi summit.
I believe he is waiting. There he is in the blue suit. President Xi Jinping is waiting for Donald Trump, of course, to step out.
There he is, there, walking towards Xi Jinping. It's 36 hours. That's really not that long of time for the president here in Beijing. The two men. This is quite historic, Dave.
So definitely a warm welcome. Obviously, the real negotiation is going to begin now.
Definitely, the president has brought the A team there. I mean, that's an all-star lineup. And it's very impressive. I think you guys did the math there on $30 trillion worth of market cap.
Don't miss the China Show live every weekday.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Markets wrapped up a busy week filled with talks of a U.S.-Iran peace deal, Federal Reserve Chair Kevin Warsh's first policy meeting, and also the early days of SpaceX as a public company. Stocks close higher in Thursday's trading. U.S. markets closed today for the Juneteenth holiday. Futures still trading. S&P futures down about 0.1%. That's after the benchmark posted its best week since the end of May. Dow futures down about 0.1%. Same for NASDAQ futures. Global markets under pressure. Stock 600 little change. The FTSE in London down about 0.3%. The CAC in Paris down about 0.3% as well. Over to oil. Brent crude $79 a barrel. WTI crude $76 a barrel. That's up about 0.3%. As far as currencies, not much movement right now. The Bloomberg Dollar Spot Index is little changed. To gold, COMEX gold lower by nearly 2%, $4,166 an ounce. Spot gold $4,149 an ounce. Over to company news. Microsoft's Azure and Amazon Web Services, well, they face a tough EU antitrust law. That's after an initial probe into their power over the cloud. Sources telling Bloomberg the European Commission set to unveil its preliminary findings as early as next week. And they state that AWS and Azure, well, they seem to meet the requirements to face the bloc's Digital Markets Act. We shall see. And the World Cup, minting big prediction winners and multi-million-dollar losers. Over $5 billion traded across Polymarket and Kalshi. One of the painful losses, that included a bet gone wrong on Belgium to beat Egypt. It cost one Polymarket user nearly $9 million. That is your Bloomberg Business Flash. Paul and Tom.
Best World Cup time I've ever had was in a Belgian bar.
Oh, yeah?
On like 3rd Avenue or 2nd Avenue.
Yep.
It was great. It was really spectacular.
Well, they had those stories out of Boston saying that the Scottish are taking over the bars.
Huge. Like,
it's crazy.
I would editorialize that no other city has the impact been so charming and wonderful as Boston.
Yep.
I'm sure other cities would disagree. We make note of the Prime Minister of Canada enthused last night as well. Let's do this. We'll talk the World Cup here in a minute. A special edition of Bloomberg Surveillance, welcoming all of you around the world, particularly in Paris, the home of BNP Paribas. We say good afternoon to you. Paul Hollingsworth with us, head of Developed Market Economics, trying to piece it together, Markets 360 at BNP Paribas. Paul, an important question at June 30, mid-year, on the global economy of these developed economies. Is the glass half full?
Yeah, we think it is half full. Now, this was a year where we entered the year feeling quite optimistic about the outlook. We, of course, have had to face a lot of uncertainty about the geopolitical backdrop. But when the conflict first began, I think the question we were asking ourselves is this a story of resilience derailed or resilience dented? And our argument is that it was really a story of resilience dented. We think there are some underlying supportive factors within the economy. Globally, the fiscal policy is quite stimulative in a number of economies. Financial conditions, when I look at it overall, are still fairly supportive. And you have a number of structural tailwinds to growth, things like AI investment, also things like the increase in defense and infrastructure spending that we're seeing in Germany and other European economies. And so we think it is still a story of resilience. And as you put it, glass half full.
So, Paul, we heard from the U.S. Federal Reserve and the new chairman this week. What did you take away from that?
Yeah, a few things. So early June, we switched our call to now expect 3 interest rate hikes from the Fed beginning in December. And that view, if you like, has been predicated on this assumption that the U.S. economy is in a strong cyclical position, that the labor market would be on a gradually tightening trend over the course of the year, and fundamentally that the current setting for monetary policy is not consistent with that outlook. We think monetary policy is slightly too accommodative. So the way that we've been framing things is that we're expecting the Fed to raise interest rates and, if you like, unwind some of the insurance cuts that were delivered during 2025 when concerns about the labor market were particularly strong. We don't think those were justified. Now, what did we take away this week? Well, I think overall it seems as if it was relatively hawkish. And many members of the FOMC seem to be of the mindset to increase interest rates. I think we also learned, however, that we can, for forget about forward guidance for a while. I think forward guidance is going down, and that in turn creates more volatility and I think more uncertainty about the potential timing that we may see the next move from the Fed.
It's like tariffs. When was the last time they mentioned tariffs?
I know.
The Red Sox won 2 games in a row. I look here, Paul, at the K-shaped economy, and I think people are ignoring with all these distractions. We're still very K-shaped, aren't we?
I think that's absolutely right. And when it comes to tariffs, our view there is that we are structurally in a higher tariff environment, certainly not at the heights that we saw during the peak of the tensions. But fundamentally, that pass-through into consumer prices is incomplete. And I think where you're getting at there is that a number of people still feel that there are many pressures in the economy. And if I bring it down to the situation in the Middle East and what we're seeing with oil prices, yes, our view is that oil prices will fall a bit further once the Strait reopens in earnest. But we are still going to be in a world of structurally elevated energy prices compared to where we were prior to the conflict. So there's a number of pressures here on the overall level of prices, which I think feeds into this. And this matters for the Fed because it tells us that long-term inflation expectations, particularly those of households, are probably not well anchored at the moment. There's a number of these pressures that are still there, even if headline inflation gets some respite from oil prices coming down. And that should be something that concerns the Fed.
Paul, you mentioned some of the investments being made by European countries into their defense, into their infrastructure. I think most people felt like, yeah, Germany, I can buy that story, maybe even Poland, but the rest of Europe, I'm skeptical. What are we actually seeing?
I think there's 2 elements here. So the first is that in Germany, the money is now flowing. So I think if we go back to last year, that was really a story of announcements. This year is really about the implementation. At the end of last year, it seemed as if the government was underspending. That is historically what has tended to happen. But so far, at least in 2026, the data seems to suggest that the government is beginning to spend. And we are seeing this filter through, for example, into the order books of defense firms, into industrial production in defense-specific sectors as well. But what's important is that this is not only happening in Germany. And what I mean by that is that there are spillovers to other countries. France, if you look at the industrial production in defense sectors, that is also growing quite strongly at the moment. So there are wider spillovers there. But I think your point is that there is not, let's say, the same degree of fiscal space in some European economies compared to Germany. And that's absolutely true. And I think there's 2 elements that will play out here. The first is that countries will have to prioritize. So if they feel that they need to increase the defense expenditure for national security reasons, then the question will be, well, where do you cut elsewhere? And this is something that will be increasingly important as we move into budget season in the autumn of this year.
Fabulous brief. Thank you so much. With BNP Paribas, Paul Hollingsworth with us today, head of developed market economics. Going to have him back here as we stagger into July. Okay, Lisa, help me here. Paul, help me here. Mrs. Keen's at home, and she's expert on the dynamics between Panama and Ghana in World Cup. We've all become instant experts, haven't we?
Well, we try to. I think, barstool experts, maybe, that kind of thing. But we got the USA playing today at 3 o'clock against Australia. That's cool.
Seattle.
Socceroos. Yeah.
Like, you never know where they are. Seattle.
Yeah.
Turkey, Paraguay, Santa Clara, California, Levi Stadium.
Oh, that's nice.
Where they covered the Levi sign. That's un-American.
Yep.
Brazil, Haiti. I think Brazil's favored there.
I think so.
And Philadelphia. Balchunas, I think, will be there.
Probably.
He's such a hitter.
Might be Ira as well. Ira Jersey's going to Philadelphia.
Yeah, I would. But the game for me, good morning, 92.9 FM Boston, and good morning across all of New England on television. Scotland and Morocco sounds really cool.
Yep.
Like, Lisa, help me here. You're the expert.
Well, have you filled out your BRKT?
No,
have you filled out your bracket?
No, with the NCAA, I go by color. And Paul, I cheat. I ask Paul. And it's in my agreement. It's like page 4, paragraph 8. I must always have Purdue win. It's like in the agreement. Yep. I have none of that in World Cup. I'm ignorant.
No.
I didn't do a BRKT because
I did one.
Did you?
How's it look?
It's 32. Is that good or bad?
I don't know.
Nobody knows.
And my sleeper pick, Netherlands. They play tomorrow against Sweden.
Are you in BRKT Go?
No.
But you like Netherlands, you said.
I've always liked Netherlands.
They play tough.
Yeah. They have like a handful of people in the country, and they're all great soccer players.
Yeah.
I don't know how they do it.
Mrs. Keene's gaga over England. She thought just the Harry Kane delivered the goods, and you know, they had a couple of wonderful goals. Rashford came off the bench and did better than good. They don't play today, but I'm sorry, Scotland, Morocco. I will actually watch that. Very good. I think it would be that good. Your World Cup team coverage is the worst worldwide here on Bloomberg. Where's John Farrell when we need him? Anyways, we are here on television, on radio, on YouTube as well. It's a special edition of Bloomberg Surveillance. Please stay with us. Good morning.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every Wednesday at noon Eastern, only on Bloomberg Television.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs, they have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
When news news breaks.
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Joe Matthew on the South Lawn of the White House, and this is Bloomberg.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, a special edition of Bloomberg Radio, an eclectic set of conversations on this national holiday with a real focus on exceptional news flow out of the United Kingdom and out of the Levant as well. We just spoke to the United States ambassador to Morocco, all of his experience over to Persia. And now we will go interior into Israel. Galit Alstein joins us with Bloomberg News, working with Ethan Bronner in Tel Aviv. And she has a unique place because for years she worked at Israeli Army radio. Galit, explain to us now the cacophony of headlines we've seen in the last 6 or 7 hours, the state of the Israeli military as they're buffeted by these headlines of Hezbollah, Lebanon, Israel, and the United States.
Yeah, so there is a lot going on. Let's start, I think, with Lebanon, because a lot of eyes are on what is happening there, because that is connected to the negotiations between the U.S. and Iran. We've heard today that Iran has delayed peace talks between its representatives and U.S. representatives in Switzerland because it said Israel is not withholding the ceasefire that it should be withholding in Lebanon. So we did see a lot of fighting overnight in Lebanon. We had 18 to 20 dead casualties on the Lebanese side, and we had 4 soldiers, Israeli soldiers, who died. One of them, a high-ranking officer, a lieutenant colonel, who was a battalion commander. And this is an unusual death toll for a single night of fighting. So it was intense. The IDF, the Israeli military, retaliated by attacking about 80 targets, Hezbollah targets in Lebanon, it said. And the last thing that has happened is that about 2 hours ago, we're being told, and I think Reuters were the ones to report this, that the sides have agreed on a ceasefire. So it is quiet for now, and that's as far as what is happening on the ground goes.
Galit, how was the memorandum of understanding between the U.S. and Iran? How was that received in Israel?
Well, there was, a very negative response all across, across the political spectrum. Now, the interesting thing is that government officials, Prime Minister Benjamin Netanyahu and others have been keeping kind of silent, and that is being read as them being wary of perhaps criticizing Donald Trump. But some ministers, especially far-right ministers like Itamar Ben-Gvir and Bezalel Smotrich, they have openly criticized this MOU, saying that it was a very bad agreement, that it was kind of abandoning Israel's security interests. And just last night, we saw polls here in Israel that also reflect that a big portion of the Israeli public thinks that either Trump, I think it was 71%, so over 2/3 think that Donald Trump, will abandon Israel's security interests. Moving forward with Iran.
Galit, thank you so much for the brief. Really appreciate it. Working with the Ethan Bronner team in Tel Aviv for Bloomberg News. Galit Alstein in her late afternoon. Futures improve here through the day. I don't know what to make. Do I trust futures today? I'm not smart enough to know.
Yeah, I'm not. I'm just saying, everybody's everybody's on the beach or on
oil
the golf course.
Back above $80 a barrel, fractionally $80.08. So a lift there among the tension. And what I do, folks, in the great search engines that we have here on the Bloomberg Professional Service, I go NI Israel.
Yep.
And I don't see immediate headlines, but lots of summaries by news around the world. I think I have to say sirens sound in north, suspected hostile aircraft. That from the Israeli military. That was about an hour ago as well. And then I come over to NI Iran, and not much there. We have a presidential tweet, which is out in the last 8 minutes as well. The President of the United States saying Iran's military capabilities severely reduced by war. It is a special edition of Bloomberg Surveillance on television, on radio, on YouTube. Again, subscribe to us at Bloomberg Podcasts. It's Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the process forward to choose in AI?
Where is value out there in the fixed income world?
With Alexis Christoforous on markets.
The stock up 47%.
And Michael Barr with news.
The president spoke to reporters on board Air Force One.
The best in economics, finance, investment, and international relations. Bloomberg Surveillance on Bloomberg Radio, Bloomberg Originals, and the Bloomberg Business app.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo with us as well.
She is.
On her way to Nathan's Hot Dog Safari here, July 4th. That'll be a special edition of Bloomberg This Weekend, but she said get it ready for the show. We welcome all of you across America as well. Paul and I have not really talked about what matters.
No.
And that is, I mean, you look at the Red Sox, the way they've blown up the season. I mean, to see Arnoldus Chapman come back to the Yankees?
Oh,
I mean, come on.
Still throws hard.
It's like Ruth, just a few years ago. August 3rd is the trade deadline.
Yeah, and the Yankees are playing great baseball. I'll say very good baseball. They're best in the
I'm thinking of the good of baseball. I mean, first of all, Chapman can't go to the Dodgers. That would be un-American.
They can certainly afford him.
Okay. Do you know that Mookie Betts is with the Dodgers longer than he was with the Red Sox?
Yep.
I'm depressed.
Yeah, that was a tough trade. Tough trade for you guys. I have a question for Lisa Mateo. When was the last time you ate a hot dog?
Maybe a couple of weeks ago. No, hot dogs are good because you put the sauerkraut on top of it, and that gives you
I would never guess that you would eat a hot dog.
You need the sauerkraut. That's the main key of it.
Whoa. We got to stop the show here. This is too...
I was not expecting that.
David Sowerby can wait on this. Are you eating like a hot dog, or are you eating some chicken gluten-free piece of air from Costco?
No, a real beef hot dog.
Really?
Yes,
okay.
yes. But the sauerkraut, because you need the prebiotics. It gives you, all that good stuff.
The difference is singular, and when you're talking beef hot dogs with me, we're talking plural.
Yes.
We said good morning. We do a data check here. Help me here in the control room. Is that the interns are all in there? They've had a little too much. Am I going to Lisa here, or am I going to David Sarman? I think I'll go to Lisa here from the Interactive Broker Studios, and we thank Interactive Brokers for their foundational support. We do need a Bloomberg data check, and it is a business update with Lisa Mateo.
You got it. Yeah, global stocks kind of under pressure. This is Iran delayed the start of negotiations over that permanent peace deal with the U.S. after fighting intensified. Southern Lebanon killed about 4 Israeli soldiers. Now a few headlines stating there may be a renewed ceasefire between Israel and Hezbollah as of 4 p.m. local time. So we'll start with Stock 600 down about 0.1%. The FTSE in London down 0.3% now, as well as the CAC in Paris. Markets in the U.S. and China closed for the holidays. Futures are trading, not much movement. We have Dow futures down about 0.1%. Over to oil, Brent crude now $80 a barrel, up about 0.3%. WTI crude $76 a barrel. Gold lower, COMEX gold $4,169 an ounce. That's down nearly 2%. Bitcoin ticking higher, up 0.1% at just above 63,000. In company news, Mercedes-Benz Group, they're set to discuss more cost cuts with labor representatives. The talks come. Mercedes has been facing that growing pressure from U.S. tariffs, also slumping sales in China. Their shares are up about 1% in Germany. And Netflix under contract to buy a historic Los Angeles movie studio space that was seized by Goldman Sachs. Sources Sources telling Bloomberg the price for Radford Studio Center close to $400 million, and that's just a fraction of the 2021 $1.85 billion sale price. The movie lot, it's been to home to many popular TV series, including Seinfeld. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciated. One of our most fun guests. People love when David Sowerby's on, and we're thrilled he could join this morning with Encore. And he always comes with individual stock ideas, obscure little things that usually go from, as Mr. Gartman would say, the lower left to the upper right. David Sowerby, middle B, M-I-D-D, Elgin somewhere. Elgin, I think, Illinois. Let me look again here. I can do this, Paul, off the DES screen as well. Elgin, Illinois, 8,800 employees. Why is it going to go up now after going nowhere?
Because people want to cook, whether it's commercial or residential, ovens, mixers, pizza ovens, you name it. They make the multiple products, valuation compelling. It's been a stock we've owned on and off over the years, but own it today. It's positive as of late. And it's in that small mid-cap area where there are fewer analysts who follow it, with a market capitalization less than $10 billion, for a part of the market that consumers want to spend, and they want to do it commercially or residentially on cooking.
How charming, Paul. It has a PE under 20.
Yes. You don't see those every day. So
always to be of interest, yes.
David, one of the, I think, bigger trades out there, most popular trades out there is long semiconductors, short software. How do you think about that?
I think it's been, in my career, 30 years, one of the most extremes I've seen. If you go back to 2000, Paul, and you just look at the ebb and flow of semis software. Software always more steady, semis more cyclical, usually traded at a lower valuation. It's the exact opposite today. Semi valuations are 2 to 3x what software is, but software is still generating 20 to 30% free cash flow margins. I don't know when the rubber band is going to be stretched so far in favor of the semis, which I'll own, but I want to sure be looking at software names that look more attractive today. You feel like we're probably in baseball terms, you talked about the Yankees and the Mets, middle of the 8th inning for how far the semi-software trade is extended.
How about this market? I mean, I hadn't thought about it this way, but in your notes, you kind of bring it front and center. 17 years without a prolonged, meaningful drawdown. That makes me nervous. How about you?
It does if the usual culprits of what kills a bull market, too much leverage, excessive valuations throughout the entire market, unfettered inflation and interest rates, none of those are present today. So we have to acknowledge, yes, it's been a 17-year run with compound annual growth rates of 15% or better. What it likely means is we'll settle into a more modest 6 to 7% annualized growth rate in the stock market over the next 3 years. That's still better than bonds. And I'll look for a market that's much more broader, greater participation, greater number of stocks rowing a boat than this extraordinarily narrow market that I have not seen in 30 years that we're witnessing in the last 12 months.
What do you make of the AI trade here, David? It's been one that's been evolving over the last 3 to 4 years. How do you think about it these days?
It's the microcosm of long semis, short software. I really think about it real briefly in 3 buckets. The hyperscalers, who I think are, Microsoft will still be a beneficiary, which falls in a hyperscaler software bucket. Direct beneficiaries, like a Broadcom or an Eaton, which is an electrical components company in Ohio. But then the third component that still has to play out is how much are hotel stocks I own, like Marriott and Wyndham, benefiting from AI productivity, General Dynamics, Honeywell, Home Depot. You might not think of them immediately as the AI beneficiary, but they are, and productivity will improve their profit margins.
What are we doing in the bond market here, David? I could sit here in a 2-year U.S. government bond and get paid almost 4.2%. Do I take credit risk above and beyond that?
But net of inflation and taxes, you're certainly less than 2%, which makes, even in my thesis of a 6% or 7% annualized stock market return, where stocks beat bonds, I think you don't need to necessarily reach for speculative high yield, but if you look at the collateralized loan obligations, AA, single A, you can get yields of 7%, which look attractive in the bond market. Frankly, since pre-COVID, Feb of 2020, bond returns annualized are still roughly flat.
Finally, here we're taking a look at. We had our first look at the new Federal Reserve Chairman this week. What was your takeaway from the statement and maybe from some of his comments?
I think he'll be an effective chairman. When I watched the press conference, I'd give him a solid B+. He really focused on the Fed's primary mission, which I believe is always price stability or at least 2% inflation. Maybe the market didn't quite embrace it in the near term, but I think he'll be an effective chairman. Just watch out. Usually early in their chairmanships, whether it's Greenspan, Bernanke, he will be tested. I don't know what's going to test him, but something will test his early tenure as the chair.
Yeah, absolutely brilliant. This seems to be always the way it is. David Sowerby, thank you so much, and congratulations on a real faith in American investment in this great bull market. On this special edition, we're bouncing here and there across the Atlantic, and we do that now moving from David Sowerby's view of mid-caps, small caps, across all of America to Marina Zavlak, Chief European Equities Strategist with Morgan Stanley, and it is just an incredible team out of London. There, Marina, thank you so much for joining us this morning on Bloomberg Television, on radio, on YouTube.
Thanks for having me.
As well. I guess the nominal GDP of Europe just isn't the oomph of America. Can you be long European stocks?
You can, because European stocks are not the economy. Europe's exposure to Europe and the UK, as far as the equities exposure to Europe and the UK, has never been this low. It's been declining for decades. A lot of the European companies have been investing in the US. They've been investing in Asia and some of the growth areas. So to kind of give you a number, 40% roughly of Europe's exposure is actually to Europe. And a lot of that is banks, which is very attractive.
So, Marina, here in the U.S., the AI theme has just been the dominant theme for this market. Talk to us about how that plays out, if at all, in Europe.
It is the dominant theme over here as well, even though we don't have as much AI as you guys. So we calculate about 15% of the weight of the European index is exposed to the AI capex trade, and is doing very, very well, and is the majority of our returns year to date. But yeah, it's a problem that the AI trade is so dominant from a relative perspective, because I think when Americans look at, should I spend my time looking at European stocks? At the moment, they're thinking, I have enough going on in the U.S.
Is there a change into a more Anglo-American business model? I mean, you're hugely qualified for this with your academics at Notre Dame and all the work you've done with Morgan Stanley and EM and in Europe as well. I mean, Marina, if I look at the model of Unilever, Nestle, and others trying to right size, is Europe becoming more like America in terms of management?
I think we are, but it's more. We have a lot of CEO changes we've had in the last 5 years. The multinational large caps are getting bigger and bigger. I mean, as you have in the U.S. And these multinationals, they're not, like I was saying, they're not really that European anymore. They're very global. So like a comment I get all the time is, we're not adopting AI as quickly as Americans are. That may be true for the mid cap. It's not true for your big multinational that dominates the index. We are adopting AI very rapidly.
Marina, we saw this war in Iran highlighted that the exposure various parts of the world have to Mid-East oil. And I think we all kind of learned who is exposed, who is less exposed. What is the Morgan Stanley energy call these days?
The Morgan Stanley call for Brent is flat 80. That was a view that's recently been changed from our oil strategist. And for us in European equity strategy, just this morning, we downgraded energy equities to neutral. We were overweight before. I think the thing that I'd highlight most notably behind that call is earnings revisions breadth for that sector have peaked. They're at highs, and they're starting. Your leading indicators are showing those are coming down. And if you look at past geopolitical escalation periods, once you pass peak oil prices, energy equities just start to, in a kind of downtrend pattern, they start to underperform for many months.
Can you correlate that into a disinflation vector, and that, you know, coming off a war, if energy comes in, we get I mean, I don't want you to be, you know, I don't want you to do an Ellen Zentner on me, but, you know, basically, do we get disinflation as a new regime?
I think that will take time. We do a lot of bottom-up mapping in my team. We did it for tariffs. We've done it for Strait of Hormuz disruptions. And what I'm finding in my mapping is that because some of the after effects take time to feed through, many companies are hedged, for example. Yeah. So they're only starting to pass on those price increases. So I think it will take months before you see the disinflation from where I'm sitting.
Is France a bargain?
Yes, but France is dominated by the luxury sector. We're underweight. There's a lot of interest in the luxury sector because of you guys, Americans, because there's this, the K-shaped consumer. Eventually, all this money people are making on AI stocks, they're going to spend on luxury goods. We're not seeing it in the data yet, but if that were to start to happen, that starts to filter down into luxury goods, then it is definitely a bargain. France, and then more specifically luxury.
Let's talk about the earnings story out there, Marina. We just came through the first quarter earnings in the U.S. were north of 20%, 25%, really, really strong earnings. Talk to us about earnings in Europe. What's the driver here?
Earnings growth in Europe for this year, consensus has 16%. So it's pretty decent. The problem we have is, for this year, that's consensus. I know it's surprising.
That's nuts.
Yeah, it's because of energy. So we've had a 400 basis points increase in consensus because of energy. I mean, everybody thinks about Europe as being short energy, and we're going to have all these downgrades. That's actually the case when oil comes down, not when it's going up, because energy is a big sector in Europe. So that's driven the upgrades. It's a big part of the earnings pie. And then I'm pretty constructive for the next quarter as well, even with energy prices softening a bit. Because we have loads of real assets. We have the banks that benefit from inflation. We do have some compute. And if you add those three things up, that's 60% of the earnings pie. Whereas the things you probably think about that are weak, like autos, discretionary retail, they're very, very small in the weight of the index at these days.
Marina, when you talk to corporates across Europe, how do they frame the technology story? Because I'm just, as an observer, I'm shocked that Europe has virtually no tech sector, except a handful of companies. And now we've got another revolution in technology, which is AI. And again, I'm not seeing much activity from Europe. When you talk to corporates over there, how do they frame that discussion?
For the most part, Europe's much more exposed to adoption than they are to, as you mentioned, enabling the AI, although we do have exposure. We have the semi sector, we have a monopoly in the semi sector, we have cap goods, which is exposed to AI bottlenecks, we have copper in Europe. So like I said, 15% of the index is exposed, but I think the real kind of upside risk for Europe longer term is when we see more of the ROI coming through. And what I've been framing is that in Europe, we have low productivity, we have demographic problems, we have a lot of low-hanging fruit for AI productivity to drive higher margins.
Marina, thank you so much. Marina Zavalek with us, the Morgan Stanley. She gets to work with Andrew Sheets.
Pretty good.
It's like too much.
Good. Yep.
Thank you. Really appreciate that. Chief European Equity Strategist, Morgan Stanley, this morning. There are lots of good comments. I just saw a headline in the Blur here. I mean, I thought I'd slide in today. Like I was going to go dress cash.
Yeah, no.
Without a bow tie, and I'm glad. I just couldn't do it, Lisa. I just had to, like formal. Yeah. Headline: Oil super tanker turns back on voyage out of the Persian Gulf. How do you turn around one of those puppies?
I don't
Do they
know.
use tugboats?
I have no idea.
It's just, hard to starboard.
Yes, exactly.
It's what the headline says,
I saw
folks.
an M&A trade cross the tape here. People are working out there. AbbVie, close to a nearly $11 billion deal to buy Apogee Therapeutics. Again, in my next life, I'm coming back as a healthcare M&A banker. Those guys get paid every single year. There's always stuff to do there. So if you can't build it in the lab, I guess, you go buy it.
You got to go buy it.
Yeah, I
there's
guess,
no other
okay.
way.
That's how they do it.
About this very seriously here in the last 10 minutes. Further Israeli defense headlines, the IDF, they say the incident ended. See a report of identification of 2 suspicious aerial targets. Report came from alerts a short time ago. This is in northern Israel. The incident ended with no unusual findings. Nice of them to close that loose. That gives you a sense, folks, of the cacophony we've been dealing with in the morning here in New York, and of course in the late afternoon across Levant. It has been just a chaotic day, to say the least. Our best guess here is Brent Crude was 79. It's edged up here, $80.24 on Brent Crude. West Texas 76.85, and where it'll be in a week, I just can't.
No. We'll see.
even
I mean,
begin to
I think
guess.
if you talk to the commodity strategists out there, they say there's nothing. The supply and demand favors a lower price. I mean, Mike McGlone at Bloomberg Intelligence, he's talking 40s, 50s is kind of where this thing's going.
Well, this is the analog
He's
I
been
keep
right.
bringing up here. As Robert T. Kaplan says, he says it's a middle war. It's like, with great respect for our men and women in harm's way, it's not like a ginormous war. And so do you have the typical analog of a disinflation after the shock and the spending on war, or not? And that seems to be a huge raging overlay here
Yeah.
that Mr. Chairman Warsh has to deal with.
Yeah, but he was pretty clear that I think he's going to be data-driven, maybe some different type of data, some more real-time data, which a lot of critics have been calling for. But
Got rid of the dot at least. Major shout out, Richard Berner, formerly with Morgan Stanley. I asked him to write a blurb. I recopied that out, I think, on Twitter or LinkedIn. Richard Berner, thank you for that note on Chairman Warsh.
In case you missed it, on the opening trade.
We're holding our breath, and our economists put it very nicely in their recent research note. They're saying, for now, you got the support of tax refunds, so you had the fiscal support. This is running out right now. The real test for the consumer starts here.
How are you going to hold your breath for?
I'm holding my breath in 2 different ways. The first question is complicated.
Unpleasant.
Well, that's what you have to do as a market strategist. It's unpleasant, complicated, but also exciting, I would say. So we're holding our breath and saying, are you going to reopen that strait? Then secondly, if you don't reopen it, how long can you keep running down oil inventories to make up the shortfall? The equity market's pricing 90%. Prediction markets are saying it's a 30% probability that you reopen it by the end of June. And then if you don't get these supplies back soon, then within the next 3 months, you should start to see macro weakness, not just in Europe, not just in China, but also in the US.
Don't miss the opening trade, live every weekday.
In case you missed it on Bloomberg Surveillance.
We should be basking in Nick's glory right now.